Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and hopefully it'll be an exciting day. So much happening outside the markets, which is more exciting and eye-popping.
Why do you say that?
Everyone yesterday thinking about Kunal Shah.
The most expensive CEO hire of all time.
No, but what a move! What a move from running your company, fundraising. It was supposed to be going into IPO, and then stepping down to, at the end of the day, work for someone else.
Yeah.
I know it's heading WhatsApp globally, but what a move!
Well, I think it's a serious bump up, right? With all due respect to what credit has been able to do,
100%.
to be able to head what is arguably the most, in a lot of countries, if not all, the most used communication app. I mean, that's quite something. Really.
Yeah, but founder is founder when you're running your own company.
$900 million have been pumped in for 20% stake. There is no board seat that Meta has gotten. It almost seems like that stake acquisition is incidental to acquiring Kunal Shah.
Or that if you want
No, but then
Kunal,
that
you
is-
put in this money.
Yeah, that's
and
exactly the point
but
that I'm
then
making.
That also like bumps up Kunal's own, aura a lot more. So here's what's happened. Kunal Shah, of course, is Indian entrepreneur, angel investor, prominent startup voice. He's a key figure in India's digital payments and startup revolution. He's actually dropped out of MBA course to pursue entrepreneurship and founded Cred in 2018, which is a credit card rewards and financial services platform. So he's put out his whole history and his journey on all his posts yesterday, and he's talked about the company he's backed and the things he's done. Now he's transitioning to Meta's global leadership. He's been appointed as a new WhatsApp chief and will replace Will Cathcart as in that position. He will also step down as Cred's CEO, and move is part of Meta's 900 million investment in Cred. It also tells me how important India has become to WhatsApp, if I want to look at it that way. You have, there are two journeys of Indian CEOs of large companies. One is, of course, what the Pichais of the world do. You study in the top schools in India, then go and you work your way up. This seems to be another way in that snakes and ladders. You jump several steps, you found your company, sell a big chunk of it, and then transition to becoming one more Indian CEO for global venture.
Yeah, I mean, it is of course, it's a pitch for Kunal, but in a sense, no surprise, right? China is off limits. 150 crore, 140, 50 crore, whatever number you peg it, that's the populace which uses WhatsApp predominantly. I mean, no brainer. It may not be the most profitable venture for WhatsApp, as they have said enough number of times, but it's certainly the most used.
No brainer that India is important.
India is so important.
But it's likely also the reason why he's been brought on, because the work that he's done with Cred and the ability to capture a premium audience, an audience that uses credit cards quite a bit. If you are looking to monetize WhatsApp in a country where you need to understand premium, then this might
I don't
be
know
the
if
guy.
Watson is a premium product. In
No,
India?
no, I'm saying
Because
who
they'll
would
not be
pay?
able to be
That's what I'm
very
saying.
profitable.
Okay.
Maybe you want to now go down that path.
I don't know. I wonder what the job interview / investor pitch looked like. That would be interesting to see. All right, here's what's happened with US markets though. They've closed mixed as investors rotate out of tech stocks. And you saw the NASDAQ taking a bit of a hit across the board. And one of the things which is bothering big tech companies is also this poaching, right? You have top executives from Google leaving for other shores, and you have big moves happening at the C-suites in some of these companies. That's also weighing on some of those stocks. So you had the NASDAQ down about 1.5%. If you pull up futures as well, a bit of a mixed bag because following actually pretty much the same trend. Look at the NASDAQ futures, about 1% down. Bond yields have risen ahead of PCE data, which will be out later this week. That's personal consumption expenditure data. That's important from the Federal Reserve's perspective. It's an inflation gauge that they look at very closely. The 10-year was at 4.5%. Oil prices have stayed range-bound as U.S. issues licenses for sale of Iranian oil. I thought this was important to mark. This is the first time since 2018 that Iran can openly sell its oil. The U.S. will also be a buyer of Iranian oil, and that transaction will happen in dollars. The Brent is at $78 mark. Asian markets, let's pull up Asian markets for you, and a bit muted actually, the Nikkei down about 1%. Let's look at India futures very quickly before we move on to what Trump is saying. The latest completely flat, about 8 points down. But after the kind of strong day that we've had yesterday, though you had some weakness at close, it's going to be a bit of a muted opening. But let's listen into what US President Donald Trump has been saying. It's a warning to Iran on the newly established 60-day temporary ceasefire.
As long as they respect us, we're going to be fine. If they don't respect us, things wouldn't be good, but they have a lot of respect. Don't forget, we had presidents that should have done this for 47 years. Nobody did it.
The sanctions on Iranian oil today.
Well, I'm going to have to find out exactly the status, but if the sanctions go out, money's going to be put into this country. All that money's coming back in the form of purchases of food, which they desperately need. They have 91 million people. They can't feed them.
Okay, Cameron Brand, Director of Research at EPFR Global, joining in. Cameron, great speaking with you today. I'm actually not going to start with what's happening geopolitically. I want to ask you about what you make of the AI trade. And a lot of voices coming in recently talking about whether it's overdone, whether it's a bit of a bubble, whether the capital expenditure on some of those data centers is worth it. Do you think the smart money is going to be following that trail?
Well, you're certainly right that there's been a lot more kicking of the tires, at least verbally, in recent weeks. However, what we've seen is that whenever those doubts bite a bit and pull down valuations, that money jumps in. The technology sector funds that we track have had back-to-back weekly record inflows, though I don't think that's going to carry on into this week. It's certainly been pushed pretty far. I do think that as we approach the midterm elections, that some of these headwinds are going to build. There's certainly aspects of the rolling out of AI infrastructure, which any good populist politician can jump on. The big data centers needed to run it, and the energy and water that they use, where the power to run them is going to come from. So you're right that as some of the questions are certainly being raised more frequently and loudly, but I don't actually see sort of a tipping point just yet. As I said, modest corrections are still being treated as entry points.
Okay, all right. So let me ask you then, Cameron, what do you think about flows at this juncture and heading into the remainder of the year? Because seemingly the tension in the West Asia region is settling a little bit, and crude oil has come off quite dramatically, so that commodity play maybe is dissipating somewhat. What about risk assets, though, and specifically the Asian market, specifically India?
So what we've seen with India actually is flows are still more often than not negative, but they're improving steadily. And it's almost in recent days been a direct correlation. As oil prices grind lower, so do the redemptions from the India equity funds that we track. I'm not going to sort of wave the flag just yet. There's certainly, as I said in the earlier segment, AI is still the dominant theme, even if people are treating it a little more circumspectly. India is not seen as an AI play in the emerging market space the way that, say, Korea is. But the oil price dynamics are certainly supportive for India. Been pretty heavily sold, and I'm sort of seeing a modest and positive shift in sentiment. It's not, I think, going to bring huge amounts rushing in, but it does seem like the latest bout of redemptions has bottomed out.
Quick last question on flows into the debt markets in India based on changes that have been instituted. We've already seen upwards of 37 to 40,000 crore rupees come through in the month of June on account of the scrapping of capital gains tax for foreign institutional investors. Do you see that accelerating the rest of the year? But do you have a figure that you might have considered?
So I don't have a figure just yet, but we are beginning to see some increased interest in dedicated India bond funds. So I would say perhaps the next time we talk, I'll have a little better handle on it. Investors tend to be a little slow, certainly in the mutual fund space, to responding to things like that. But, the early signs are positive.
Cameron, I'm just wondering, from a global market or an emerging market perspective and from an India perspective, and you talked about the AI trade not really being there, what is looking interesting? Is it all about G-Secs and bonds right now, or do you think global investors will start looking at pure plays like financials, etc., which have been favorites?
I think the sort of next area of focus is actually going to be industrials. The defense and rearmament play has been on the back burner for a bit, but given the geopolitical winds, I don't think that's going to go away. You've had the huge excitement around the SpaceX IPO, which touches a fair number of sectors, but is predominantly viewed as sort of an industrial defense play. So I think that as sort of interest broadens a bit away from AI, industrials are probably next. Financials are getting some interest, but it's still an open question in a lot of markets as to where the central banks will go. And certainly here, while the economy and the headline numbers look good, there's a fair amount of evidence that the American consumer remains under strain, which obviously impacts a fairly large tranche of the financial sector.
Right. Well, on that note, Cameron, thanks so much for taking the time, and pleasure speaking with you.
Good. Take care.
You too. All right, let's talk about what happened. Actually, you wanted to mention something on SpaceX, didn't you? The fact that it's now trading below.
Yes. So SpaceX stock, the latest SpaceX stock, actually is the price is at 150. and is actually below its opening price of 150 in overnight trade. So just thought I'd mention that very quickly from the point of view that, this is actually a trend that you see. This is something that you talked about, Neeraj, on day one, that most of these mega IPOs very quickly pare down from their opening price, but this was quicker than one anticipated.
Yeah, and I think during the course of the year, the deterioration in pricing is much more sector agnostic. So let's see what SpaceX ends up doing. 154 and from the highs of 220 odd, right, that they reached intraday, and the intraday was 220. That closing price that day was 201. It's now at 154, quite something.
And they've also done a significant debt raise overnight, right? Or they announced it, a very significant one, but certainly something to watch. By the way,
the other small thing, on the global piece as well, because I just saw it. NVIDIA is saying that now for their factory usage, the data center usage, they may not need water anymore because they moved to 45 degree C cooling method, which doesn't use water at all. So this whole conversation around why there's so much of water wastage or water usage
for data centers.
For data centers, NVIDIA is saying that hey, the new generation chips won't need it. So
that's significant.
That's significant.
And by the way, Hynix is now South Korea's most valuable company.
Today, incidentally, is also the day when the regulators, MSCI regulators, will decide if South Korea gets the graduation to a developed market status from an emerging market status.
Okay, so much that's happening around the world. But let's focus in on what happened in trade yesterday. And it was a pretty good start to the trading week. You heard Cameron Brandt speak about the flows from India or into India. He says that things are getting better, and that is in evidence because the FISL numbers are not very high. It was still at 636 odd crore rupees. That was matched by domestic institutions, which bought to the extent of 1,036 crore rupees on a net basis. Gains were across the board for Indian equities at the start of the week. You had the Nifty 50 that gained and held above 24,100 at the end. In fact, that settlement at the end is what pushed it above that level. That was aided by heavyweights. You had the benchmark that lost ground at the end of the session as Reliance Industries, which was one of the key contributors through the session, slid. Reliance Industries, in fact, closing about 1.4% lower from the day's high. Cipla, though, was a stock that held through the session. It was a top gainer after Citi's positive note. The IT pack also gained ground, but it eased off towards the end of the session. The Nifty IT ending with gains of about 0.7%. The Nifty Bank keeping pace with the benchmark and gaining about 0.4%. Where was the outperformance? It was in the broader markets, and that continues. The Nifty Small Cap Index and the Mid Cap Index have now gained in 7 sessions on a trot. In fact, the small cap index gaining as much as 7.25% during that time frame, and the mid cap index about 6.2%, which means that from the lows that were hit at the end of March, I've taken the start of April, guess what? The small cap index is up 25%. The mid cap index is up about 18.7%. Most sectors gained on Monday, led by defense, pharma. Kirloskar Oil, you have to mention that, was up as much as 20%, was a stock of the day on account of that data center breakthrough.
Yeah, well, interesting day, and yet another interesting day. I would presume that it actually charted out just the way we had spoken about it in the morning, right, yesterday. So let's see if today is still the same. I mean, my presumption is that the markets still have the legs to inch higher, so don't be surprised if that were to happen. If not market-wide, then at least from a specific cohort perspective. Oil prices do tell us that the conflict is maybe closer to the end than to the beginning, and it's not a surprise. And therefore, yes, follow the oil prices. If the oil prices are saying that there is risk capital likely to come in, then risk capital will come in. Capital or good order books will likely swell following multiple orders from various states. And I think it was a point that maybe Nilesh Shah was making on Editor's Cut, or somebody else was making, that now that the government doesn't have to keep aside as much gunpowder as was believed when the conflict was in full rage, maybe, just maybe, the propensity to do capex might come back. Early days, don't know that as yet. But individual states, for example, West Bengal doing what it is doing, Maharashtra and Gujarat doing what they are doing, might mean that select capital good players might actually have their order book swell, and the book to bill ratios and thereby the multiples might help. So keep an eye out for cap good names. Some of them have taken a beating, might be interesting to watch ahead as well. So, yep, sector specific.
Yeah. You know, I'm going to come to the overall mood of the markets, but I'm just wondering, this $900 million investment by Meta in cred, and I know we're talking about it in a light-hearted fashion, saying what a price to pay for a new CEO or a top exec that you want. Will it cause a relook and a re-rating at some of your top financial listed players like a Paytm, etc., in our space? The fact that serious money is looking at platforms that can give differentiated financial products with an underlying tech platform. So I wonder if you could see some re-rating there, because that's serious money coming in one way or the other for an unlisted player in a very niche market.
So, that's a fabulous point, right?
That's actually a good point.
Because what does credit bring to the table aside of everything else? User base.
Yeah.
User base. And
there are larger ones out there.
yeah, precisely the point. So if there is a user base out there, if I'm a global giant who's benefited immensely from my valuation, if I can pay pennies to my valuation to acquire user base in the most populous country in the world, why not?
Yeah.
That's a fabulous point.
They don't get access to data of cred users though, as part of the deal. It's very clear that Meta will not get access to data of users, but
maybe the future deals could have some tweaks here and there. Never know.
So that's one to look out for. The other factors, the market mood is of course bullish but range bound. The Nifty continues to face supply around 24,150 to 24,200. A weekly expiry is on today, so that may increase intraday volatility. The RSI remains in bullish territory at 59.65. You have the India VIX, which has also eased to 12.84, indicating low volatility. Immediate support sits firmly at the 24,000 mark. Crucial positional support is at 23,800. On the upside, immediate resistance at 24,200. Crossing it now opens the path to 24,300 to 24,500. For the Bank Nifty, it remains one of the strongest segments of the market and continues to outperform the broader benchmark. Immediate support at 57,500 to 57,400. On the upside, near-term targets at 58,500, followed by 59,100. Just talking a bit about the macro, this is Macquarie's take. They're saying implied inflation and fiscal hit from oil now looks contained. They're quoting the CEA, the Chief Economic Advisor, Dr. Nageswaran, as saying that he expects current account deficit at 2.0 to 2.2% of GDP. Fiscal slippage risk was not in focus. The government remains committed to the 4.3% deficit target, aided by oil pass-through and lower fertilizer prices. Concerns remain related to the state's fiscal health now due to elevated welfare spending. Key investment implication is that India's macro risk has shifted from external price shock to domestic weather shock. This is a less severe but more consumption-sensitive risk. And you saw that playing out in consumption stocks yesterday in the markets, and that's really what pulled the mood down towards the end. But let me go across to Puneet for the F&O setup this morning, and of course it's the expiry in focus.
Well, most certainly, and as we continue to look at Tuesday, of course, being the Nifty expiry, you've seen yesterday about almost just a tad below 100 point uptick on the Nifty 50 as we've continued to have a positive bias over the last few days. The Bank Nifty, though, has been the area of strength for the markets at this point of time, very close to that 58,000 mark again. We've highlighted key areas within that 58,800 odd mark that you have to watch out for the Bank Nifty. But all the current signs indicating a positive uptick as we go into the Q1 update, as we mentioned yesterday as well, will be very important for the banks to watch out for. In terms of the cash markets, also you've seen yesterday was a buying figure for foreign investors, and the selling intensity is also much reduced at this point of time. So 635 crores versus the 2.5 to 3,000 crores average per day selling seen by foreign investors has of course been reduced. And the index long too, while it still continues to be lower at 13.1% odd, we have seen 87% shorts positions being built in. That's much lower compared to the 92 that we were at the start of this month. So a lot has changed in that. still there needs to be follow-on buying, something to watch for foreign investors as well. But the open interest distribution is showing a clear trend now that at 24,000, you've seen the highest amount of call open interest being built in. And subsequently, all the put open interest, the short positions have actually been reduced materially. So there could be signs of consolidation as well as an upward move from here. And that's a good sign for the markets as well. In terms of stock-specific action, you've highlighted, Vari as well as Dixon Tech continue to be in focus. Open interest change though was minimal to former trend. We'll continue to monitor these. And of course, for Dixon Tech, that big news continues to be an approval awaited for the Vivo JV will be very crucial to watch out for this counter. And in terms of what we've seen for Oro Pharma as well as AB Capital were the other two counters in the open interest loser side of things as well. But the last few days, the story has been about benchmarks, but watch out for these individual names as well. Alice Solver, Kirloskar, and there are much others in the small cap to watch out for.
I think let's talk about some of those stocks that should be on your radar. Here's the first three on my watch list. I'm starting off with JSW Infrastructure. So what's happening here? The company has launched a 7,502 crore QIP. This comprises a fresh issue of about 6,555 crores and an offer for sale for 947 crores. The promoter family is also participating in that offer for sale. The indicative issue price is 285 rupees. That's 7% discount to the current market price. And the fresh issue will lead to a dilution of about 9.9%. Now, the OFS, that's the offer for sale, comprises 1.4% of the equity. Why are they doing this? Well, A, that they have to because of regulations, and the second, that the fundraise will be used for capex, prepayment of debt, and acquisition. Now, why the thumbs up? SBI Capital, JM Financial, Amendus Capital, Citigroup, HSBC Securities, and Jefferies are bankers to the deal. And the fundraise is being done to also meet the SEBI promoter holding requirement. Promoter currently holds about 83.62%. Post this transaction, holding should drop to around 73%. And dealers are indicating a strong demand for the QIP. At least 2 to 3x bids are expected. GQG, Capital, SBI Mutual Fund, and HDFC Mutual Fund are among some buyers, which is why watch out for JSW Infra today. I thought what Info Edge put out yesterday was also very important. They're talking about their startup investment portfolio update. They've disclosed their startup investment portfolio performance since 2007. Total invested capital at 4,900 crores, including 1,300 crores from external LPs. They've invested about 1,003 crores in 54 AI and deep tech startups since 2020. Their portfolio today is valued over 41,000 crores. This implies a gross multiple on invested capital, or MOIC, of 8.4 times and a gross IRR of approximately 33%. Management says AI, deep tech, and consumer tech to remain key value drivers, and they prefer to invest in companies domiciled in India and with Indian founders. Why I thought this was interesting is because look at InfoEdge's track record in picking winners so far. Of course, Eternal being the most glaringly obvious of them. So if they're coming out and saying that they have this focused portfolio starting 2020, well, this is the way with their listed entity to have some exposure to it as retail investors. The third one I'm looking at is Blue Star, and Jefferies has a take on it. They've maintained a hold with a target price of 1,735 rupees. They're talking about the April to May 2026 room air conditioner sales being strong at plus 25 to 30% year on year. Data centers is a strong opportunity. India's capacity is an estimated 1.5 gigawatts, which can grow 5 times by 2030. They estimate Blue Star's potential total addressable market at 50% of total data center capex. Blue Star expects its data center sales to triple to 3,000 crores. That's 15% of sales in the next 3 to 4 years. So that pivot, or I would say that increase of space from a room air conditioner and other companies to, of course, data centers will be interesting. It's on my watch list. We're also speaking with B. Thiagarajan today at 9:30 a.m.
Yeah, we're looking forward to that. Very interesting trends coming out in the room AC space. BEL is top of my list. Just a short update from them as they normally do. Just about 1,081 crore orders that they've gotten in the defense space since the 25th of May. That's basically a month. They do this on an ongoing basis. So that's certainly a positive development. By the way, the defense pack has been in focus in the recent past, and BL certainly should be something on your radar. Syrma SGS, they've signed a new joint venture with a Japanese company called Kaga Electronics, and this is now to establish, develop and operate a state-of-the-art EMS manufacturing facility together in India, focusing on Japanese clients. 60% is what Syrma will own in that joint venture. The rest will be held by Kaga. The investment by Syrma will be to the extent of 15 crore rupees, not very large, and Kaga will invest the rest, which is 10 crore rupees. It is a Japanese EMS player that's listed on the Tokyo Stock Exchange, and it specializes in high-mix, low-volume manufacturing. It remains to be said what the revenue potential of this latest facility is or joint venture is, and we look forward to speaking to the management to figure that out. But keep that on your radar. And finally, Vishal Mega Mart, Investec has initiated with a buy rating and a target price of 144. It says an outsized opportunity is what they see in this particular company. Execution engine is primed to win. They see strong metrics and see potential to win. They also see a clean double engine growth story. A 10% same store sales growth and 13% store addition drives an 18% revenue and 21% EPS CAGR over the course of FY26 to 29. So that's pretty robust. Valuations are currently at 42 times FY28, and according to Investec are attractive. So watch out for this one.
Yeah, it's interesting. Yeah, and then people blame global AI plays trading between 18 and 25 times, saying that they are expensive when they have earnings coming up for the next couple of quarters. But I can understand for consumption names, you can actually discount earnings till near perpetuity. Yeah. You can't probably do that with the AI names, but still. 42 times attractive, sometimes it was 60 times and attractive. It's interesting. Okay, 3 stocks on my list today. Bajaj Auto buyback of 46.94 lakh shares at 12,000 a share. Promoter is not participating, so that's interesting. Keep an eye out for this one today. Keep an eye out for BHEL. Now, BHEL may not be the winner of this, okay? I will lay the disclaimer out, but West Bengal has invited bids for 2 mega thermal power projects worth over 22,000 crores. It is the biggest power sector initiative in recent years in West Bengal. And frankly, just goes to show what was the state doing, literally doing for the last so many years on the capex front. Pitifully nothing. I'm glad that this is happening for the state, and I will watch out for what's happening to BHEL and some of the others, which are potential beneficiaries. Nobody knows who will win these orders, but these are large BHEL. I would suspect is in a pole position to be able to deliver something that the state may want, and therefore keep an eye out for this one. I think some of the market participants may well start discounting this per se as one of the order wins for BHEL for sure. But keep an eye out. Maybe BHEL reacts today. And I wonder if Angel, Motilal Oswal, Grow, etc. have a reaction today. Now, what's happened, viewers, is that SEBI's proposed DMA access or direct market access for all investors and not just institutional investors. Now, DMA in commodity derivatives has been widened as well, and SEBI is planning to consolidate up tech rules for market infra. Now, is this a big negative? Remains to be seen. I don't think market participants, think of it this way, institutions have DMA, but they still go through a broker. Now, retail participants will have DMA in some sense, but will still need a broker. I think the impact is this, that for large HNI and ultra HNI client-based brokers, this could be a potential negative. Why? Because the broking rates, which are anyways woefully thin, could be even lower. Now, large clients place large orders. You tend to earn a lot of brokerage by servicing them. If that brokerage rates are coming lower because of DMA, could it impact the earnings of these brokers? My guess is that it is a yes, and therefore maybe Grow doesn't get impacted. Maybe Zerodha, maybe Angel One doesn't get impacted as much. But maybe a Motilal Oswal, maybe an MK, maybe some of the others.
ICICI Direct maybe also.
Yeah, maybe ICICI. I presume ICICI Direct will have a lot of retail users, but whoever has got ultra HNI and HNI clients, maybe they get impacted. I think maybe a brokerage coming in and telling us might be better. In fact, we have Manish Sonthalia today, who was earlier with Motilal Oswal on the buy side, now is with MK on the buy side. So technically, in the
wouldn't ultra HNIs like the convenience of having someone do it for them?
Yeah, so that will continue, that mechanism continues, but because they have DMA, the brokerage that they pay to this broker will come off, likely will come off. Now this is my reading. I think once we talk to one of the participants, we'll get to know. But if there is a reaction today on a Motilal or an MK or something,
then you know why it is.
Then we'll know why.
Okay, we'll take a very short break, but we're coming right back with top strategies for the day. Stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertising.
Welcome back. You're watching India Market Open. I'm going to just pull up the implied open very quickly before we get to Parag Thakkar and Kushpura in the studios. About 30 points down, a little more than what we saw just about 20 odd minutes ago, but expected a muted market more than anything else. Good morning to both of you, and let's start with the indices, Kush. I know you have a lot to say, so let me go straight to you.
I have a lot to say today. I have to contain myself. But
I know. We barely made it out of the break.
No, but I have to start with the World Cup, the Football World Cup, right? And specifically this one new chap, I don't know if you've heard of him or not. Messi?
Oh, a new chap.
Yeah, this young chap. Argentina has won 2 matches, okay, 2 out of 2. They've scored 5 goals. And this gentleman has scored all 5 of them. Can you imagine? It's a big thing. I mean, even if you don't track football, to help your team get there by scoring, it's like Bumrah taking 20 wickets in a test match. Correct? It's something of that sort. Maybe that's a little more for me. But at that age, after having already won a World Cup.
At what age?
I don't know.
38.
40 thereabouts, I'm assuming. Right?
Yeah, but for a footballer, yeah.
For a footballer,
it's a big deal.
Intense, the physically intense sport, that is something. So you have to give credit for that guy and the kind of respect he earns. You have to hear the interviews, post-match interviews for the Argentinian team. They say, we are playing this for Argentina, but we are playing it for Messi yet again. That's the kind of respect that he commands, and why not? Fabulous.
Can I add something to this?
Please.
Yeah, so this is actually 8 goals in the last 3 World Cup encounters, 5 straight wins for Argentina in World Cup finals, if you will. And a lot of them, out of the 5, 4 of them can be credited to Lionel Messi. Wow. He's that kind of a player, right? Because the last World Cup, the quarter, semis and finals, the semis and the finals were won because of Messi magic. And he scored 3 in the finals.
So you would dive to have a stock in your portfolio that can do that for you. Who's the Messi in your portfolio?
So today's Messi's are JSW in front.
Sir, आज का Messi नहीं होता.
Well pointed.
आज का Messi नहीं होता. You need to have a consistent
performance. Let's start to this. So let's get to the Nifty outlook first. Nifty and Bank Nifty.
I will in fact link this to stock markets very clearly. And Neeraj, who would have imagined that out of the 5 of us, correct, we both will be talking about football as much and not the
and the footballer
himself.
I wouldn't have.
She actually knows more. Tamanna knows more about it.
No. I just know whatever I see on my socials. I will not pretend.
No, but see, this also in a way goes to show that you don't need all the AI trades and the Yamals and the young guns. The Reliance Industries and the HDFC of the HDFC banks of the world will also do the trick for you in your portfolios. They actually might just do the trick this time around. If you see the kind of moves that they're making.
No, but I'm going to challenge you on that. You're talking about a player who's actually performed, right? There's a statistic for it.
Yep.
So you have to talk about players who have performed at least in the recent past.
I'm saying that these
guys... You're saying they may, basis what?
No. I am saying that Reliance Industries or HDFC Bank are the stalwarts like Messi. There is a phase in every player's life, which is the downturn, the lull phase. अब Reliance HDFC का चल रहा है doesn't mean that they will not. तो वो आगे आने वाले टाइम में चलेंगे. विराट कोहली का भी डाउन फेज आया था, सचिन का भी आया था. Doesn't take away the fact that they are greats and they have done wonders. Likewise for HDFC Bank and Reliance. More so for Reliance, by the way, and I'll come to that with data also.
Okay, so now let's move to JSW Infra. तुमने सारा अपना time ले लिया. You can please put Kush's things on graphics.
बस और कुछ नहीं बोला.
Okay, why is JSW Infra stock of the morning?
So first of all, it is most annuity predictable cash flows, which I love. Valuations are attractive because 2,600 crore EBITDA is what they have made last year, but it is going to 5,000 crore in FY20, and it is almost assured. So it is an indirect proxy to play steel volume growth, which will be executed by JSW Steel, a group company, in a way where your leverage is very limited, your pre-tax ROC is 19-20%, and you are not subject to any cycles. Steel is subject to cycles. So long as JSW Steel executes its capacity expansion from 38 million ton to 80 million ton, and is able to sell that steel, this guy, JSW Infra, is going to handle 3 tons. Suppose JSW Steel is putting up a plant of 1 million ton, JSW Infra will handle 3 million tons of raw material, iron ore, cooking coal and all that. So it is a less leveraged, very less cyclical thing, higher pre-tax ROCE thing, and you have a JSW Group which has a fantastic execution track record. So I would say that at 14 times, for example, this 2,600 crore was the EBITDA for last year, 64,000 crore is the market cap today, and 3,100 crore is the net debt today. And this is going to 5,000 crore EBITDA, and net debt is just going up to 7,000-8,000 crores. So it is available at 14 times FY28 EV/EBITDA in my view, and this can compound at 20% CAGR. So I think it's a very good annuity cash flow business. Just one thing is that FY27 is not going to be that eventful. The big earning trajectory inflection point is coming in FY28.
So at 307, at current valuations, in the middle of this QIP is JSW Infra buy.
So basically today it will definitely, see, QIP price is 285 to 290, indicative is 285, floor is 290, right? So it will settle between 290 and 300, which is I think a sweet spot. A long-term investor with a 2-year view can clearly buy the stock.
Actually, even for the short-term guy, the overhang of the QIP, it was no news that the QIP is coming.
Yes.
The overhang of the QIP going away could actually be a technical trigger for the short-term.
It is actually a thumping the table buy for me.
So then when you say that, you have to thump. You have to see the thump.
JSW Infra and Bajaj Auto, thumping the table.
Okay, so Bajaj Auto...
ICICI Bank remains, of course.
That's a tap, light tap, not a thump.
That's a permanently thumping the table.
Okay, no, but Bajaj Auto, once again, for same reasons, because the promoters are not participating
in the buyback. Valuations at 21 times FY28. Exports is booming to about 2 lakh vehicles per month. Rupee is at 94, so that gives them cushion. And EV is also booming. By the way, Chetak two-wheeler has broken even at the EBITDA side. And three-wheelers, electric three-wheelers, actually they are EBITDA positive. And that is showing a big traction. So EV and exports, both these are great growth drivers for Bajaj Auto.
The points that you made about JSW Infra, doesn't that also put the spotlight in a sense on Adani Ports?
Absolutely.
Similar kind of business with all of the same factors that you're talking about?
Yeah. So basically, this port is an annuity cash flow business, right? Because if somebody has booked your space for something, for exporting or importing, say, let's say coal import or say car export, he is going to pay you that thing forever, right? So he has booked that space. So basically, these are annuity cash flow businesses. So if you have a net debt to EBITDA which is under control, which in Adani Port case is 2x, in JSW Infra's case it is 1.2x, right? If you keep your net debt to EBITDA under control, say below 2.5x, and you will keep growing. And these are the companies, Adani, JSW, these are guys are executing it beautifully, right?
Sorry, but the only caveat out here, or my disagreement with this argument is just the size, right? Great executors, both sides. Adani Ports is 40,000 crores of revenue. JSW Infra is 6,000 crores. I think as an entity, it's got some time to prove. By the way, standard disclosure, Adani Group owns NDTV, watching NDTV Profit, but it's got nothing to do with it. I mean, it's just a
observation.
50,000 feet view, that just the size difference between the two entities, the proven track record of execution of Adani Ports since maybe 2004 or thereabouts, for 20 years, etc. So still some time away to be able to compare the 2%.
No, I will. So there I have a different view. I can
but
compare.
How can you?
Because
how can you? 6,000 versus 40,000 crores.
That's okay. But the point is,
how is that okay? Sorry, I don't understand.
Yeah, so JSW Steel has also fantastic track record of putting steel plants.
I'm comparing Infra.
No, I'm saying JSW Infra is linked to JSW Steel.
Whatever. As an entity, Parag.
See, I'll tell you one reason.
Sure.
So, for example, JSW Steel was using iron ore, which was coming through road and rail. Now that is being transferred to slurry pipeline, which is being put up by JSW Infra. So business तो है ही, वो खाली वहाँ से वहाँ कर रहे 4,000 crore capex and 830 crore EBITDA is getting added on a base of 2,600 crore EBITDA.
Prabhai, sorry, just last point, because I brought this point up and just wanted to give a disclaimer. I am not saying, I am no one to comment whether a stock is attractive or no. You are better placed at that. So I'm not talking about whether this is a table thumping buy or no. All I'm saying is I think it is not the right thing to compare the two entities simply because of the size.
So I'm not comparing. I'm saying both are great.
We're saying in the same.
Both are great, but JSW
Infra
is topical today because of QIP.
100%. The overhang going away is a big thing.
Yes.
Okay, let's come to stock picks this morning, Kush.
Sure. All three of them on the long side, Navin Fluorine, NCC and Shriram Pistons. I have a word on the indices as well, but maybe a little later then. Navin Fluorine for targets of 7,775 and 7,950 with a stop loss at 7,400. NCC for targets of 164, 169 and stop loss at 154. And Shriram Pistons comes back again because the 3,800 initiation price, that's where it's still hovering. So 3,900, 4,000, these are your targets. 3,700 is where you keep that stop loss. Yesterday's calls of ACE Action Construction went on to hit the second target, so you can book that out. Jamna Auto missed the first target by 1 paise. 136 was the first target, 135.99 was the high. So maybe as a word to traders, if you're putting your targets and in exit positions, 10-20 paisa niche rakhoge to bhi it's perfectly fine. That's more of a trading advice rather than the call itself.
Yeah. Okay, ZF Commercial, Jamna Auto, Action Construction was yesterday's calls. Pay attention to these ones as well. We'll give you an update later in the day. We have to go across now to Somit Sarkar, who's joining us as he normally does to give you all of the chatter from the dealing rooms. And Somit, there are quite a few stocks that are in focus and that are on your list today, I believe. What do you have for us?
Well, firstly, it's Eternal and Swiggy. Now, there are buy flows on institutional desk on both the counters and delivery volumes are seen on the higher side for both the names. Both foreign and domestic institutions have been accumulating this counter is what dealers have indicated. For Sansera Engineering, there are buy flows on the large HNI desk. Dealers are expecting strong management commentary to come in the upcoming plant visit very soon. For AB Capital, there are buy flows on DI desk and delivery volumes are as well seen on the higher side. And for Lenskart, there are sell flows on the PMS desk. Dealing rooms are expecting a block deal to happen very soon in this counter. Couple of steel names, Jindal Steel and Steel Authority of India Limited, that is SAIL. Multiple dealing rooms have recommended sell calls to their clients. Dealers indicate a sharp fall in rebar steel prices in the month of June. From the highs of around 56,000 rupees per ton, it has come down to around 52,000 rupees per ton. Hence a sell call coming in. And couple of news that we did indicate earlier. Firstly, Craftsman Automation on June 22nd, that is yesterday, we did mention that there are sell flows on the PMS desk and dealers are expecting a block deal. And today, promoter will be selling around 2% of its equity via blocks. And JSW Infra was part of our segment on June 16, where we did indicate that a fundraise will be announced very soon and that has been announced. We'll get back to you with how has been the demand for the same and who are the main subscribers for this QIP.
It's been one of the key talking points this morning. Somit, thanks so much for getting us those details. One of the points that Somit raised, though, has stood out, Parag Bhai, and he spoke about steel rebar prices coming off. What are the implications for steel companies? And ultimately, you are seeing those commodities, at least for the short term, come off. But I was reading a piece earlier today that suggested that maybe the pause in copper prices sets the base for an up move down the line, because ultimately the demand hasn't gone anywhere. So how do you treat the metal pack?
Rebar prices generally drop during monsoon.
Okay.
Because construction activity slows
They
down.
drop, right.
Right. So it is a seasonal factor. And plus the steel prices had rallied too much after the safeguard duty came, right? So it is just a cooling off, which will correct itself after monsoon. So, okay. And HRC prices have not corrected too much. They have at the most corrected by 2,000 rupees per ton, while rebar prices have corrected 6,000 rupees per ton. So, there might be slight sluggishness in steel stocks. I would say that, but I would be a buyer on JSW Steel on any dip.
Okay. Does that hold true on the charts as well for the metal pack as a whole?
So the ferocity on the downside still remains. The good thing is that they're coming close to support levels. So SAIL, for example, which was discussed, has a 61.8% retracement support at 168, 169 levels, right? So close to those levels, if the stock holds holds ground, then I think it becomes a good entry point from there on. So yes, there is some more downside left in some of these stocks, but like I said, close to support zones, and if they hold, then they become a buy.
Okay. A bunch of other counters also in focus this morning. Let me go across to Mahima joining in with more stocks that should be on your watch list.
Right, so Tamanna, I'll start with GHB Infra. It's a big order win coming in for this company of 213 odd crore, which is a work order that they've secured for railway infrastructure projects in West Bengal. The order is to be executed in the next 14 months. So this one should be on your radar on the back of a positive news flow. The next one is on Apar Industries. Now, Apar Industries has signed an agreement with Middle East for supply, and this is for supplies of base oils at Yanbu Lube Hub, and this enables production of transformers, specialty oils, etc. So it's a good win coming in for Apar Industries. The next one is Citi has initiated a coverage on Meesho. They've initiated a buy with a target price of 210. What they're saying is that it's leveraging technology to deliver value e-commerce, plus this value focused e-commerce platform with several vectors of strategic differentiation versus others. Plus they believe that Meesho is uniquely positioned to serve as infinite and accessible store to a massive audience, and that's why they've initiated with a buy rating and with a target price of 210. The last one on my list is GE Vernova, where Jefferies has initiated a hold with a target price of 6,000. They're saying that with no large parent order in FY26, gross margin upside might be limited, but value company at 65 times P FY28 estimates. That's for an EPS CAGR of around 36% over FY26 to 28. So this is the reason as to why they've initiated hold on this one. So these are some of the names that you should definitely keep on your radar on the back of news flow or brokerage initiations.
Okay, so quite a few which are going to be in focus today. I just want to get a view actually on Info Edge, and I don't know if you saw the announcement that they've made. They've talked about their startup holdings, and they've given the entire list of what their holdings have done from 2007 to now. Obviously, there's been a huge increase in valuations, I think some 8x, etc. But what was more interesting to me is they're talking about what they're investing in since 2020, the deep tech, AI, etc., and want to focus on Indian domiciled companies. Do you think that that's an interesting space to look at if you're not directly able to spot these winners?
Yeah, absolutely. Well said, well said. I think I am completely in for it. I don't understand startup investing. I like mature or cash flow generating business like JSW Infra or Bajaj Auto kind of names.
But you don't want to sit out entirely.
So basically, this is a good way to play there. This is a guy who understands that space so well. Like he has invested in Zomato at the early stage, various other startups, right? As he might have pointed out. So this is a good way to do that. The only thing is that you have to have a view on Naukri, which is a standalone business for them, right? That Naukri business, if it starts doing well, then definitely Naukri is the Info Edge is a stock to go buy for a person like me, for example, who does not understand startup investing.
No, so Naukri
so
is
he
not,
will do it best.
So what Naukri is doing right now is not impressing you. That part of the business, the everyday part of the business is not impressing you.
No, I am not saying that. I have not evaluated it, to be honest. So, but overall, due to this AI thing and all, the IT hiring is slow, and so the overall outlook on hiring is not that constructive as of now. But as it, and I'm sure times will change. And this price is also very good in my view. Just I'm intuitively telling that this price is also very good looking.
Okay, because you haven't studied the valuation.
Yeah, valuation part of it.
Yeah, just on the charts, Kush, for Info Edge.
Well, it's on the cusp of a breakout. I mean, 990, 1000 thereabouts is the falling trend line resistance from where it can break out. It has seen quite an accumulation about 4-5 weeks ago. The follow through has been missing, perhaps because of what's happening in the market. And there are positive divergences. So yes, I would say the risk reward ratio does favor, a trade in Info Edge. Maybe with a stop loss at about 935, 950. And for significantly higher targets of let's say about 1080, and once that is taken out, 1150 plus levels also. Risk reward ratio is massively favorable, and the trend is starting to turn for Info Edge.
Yeah, it has come off quite dramatically. You saw that in the one year chart, but just over the last 6 months, it's down as much as 28%. It is now about 8% up from its 52-week low. So all of those factors suggesting that maybe margin of safety exists right now.
This person is the promoter is master in terms of
Sanjeev, you're talking about Sanjeev Bikhchandani. Yeah.
He's a master of startups, I would say.
Yeah,
he's a beginner of that trend in India.
There's a very interesting interview he did with us, and for anyone who wants to go back and watch it on YouTube, where he talks in detail, and I ask him on detail, how do you pick winners? When someone pitches, how do you pick which startup works and which doesn't? And have you had any regrets on the ones which you didn't pick and the ones which you did? And he talks about Eternal. He's like, to be fair, I pursued Dipinder. that let me come in on this. So that's a masterclass in the way he picks some of his winners. All right, we're here to pick winners for you, at least on a daily basis. We're going to try our best. So a cancer drug shortage in the US has put Indian pharma in focus, with the FDA reaching out for urgent supplies. It's a very sad turn of events on a humanitarian basis, but there is an opportunity here for Indian companies. Let me go across to Varsha, who's joining in with more details.
Yes, so you're right when it comes to US FDA, which has reached out Indian pharma for cancer drug shortage. Now the communication was sent by IDMA to identify immediate suppliers, and the shortage is one of the drug which treats lung cancer and bladder cancer. Why this matters? Because this is a life-saving drug, limited global supplier, and there is an US supply disruption, and the demand has been unmet, and the FDA is actually scouting new global suppliers, and India is a key country when it comes to oncology segment. Now companies already, what FDA wants, companies already making or capable of making drug, ability to supply for regulated markets like US, and the fast support to bridge shortage gap will be provided by US FDA. Now why will India benefit? Of course, because India being a global hub when it comes to oncology, generics, injectables, and this is a large US FDA approved manufacturing base. We have cost advantage, we have strong export capability as well. Now which companies will be in focus? First of all, Zydus Life Sciences, because they make this generic cancer drug which is in shortage. Aarti Pharma Labs makes API of that drug. So these two companies are most important when it comes to this drug. You also have Aurobindo Pharma, Dr. Reddy's, Cipla, Lupin, Sun Pharma, which have oncology as a segment, and they are actually increasing the growth when it comes to oncology. So overall, these all companies will be in focus when it comes to the cancer drug which is in shortage.
Thanks for that, Varsha. And why you shouldn't read this development narrowly as one more shortage trade, because it's a reminder of, I think, India's structural relevance in global pharma. Low glamour, more critically important things, you have to turn to proven track record companies, and I think that's where the Indian thing comes in. And this is just one small example of that. I don't know, Parag, if this is materially stock moving for any of the names in the ecosystem. Is it?
Which sector you're saying?
This whole cancer thing that Varsha just spoke about.
Okay. So oncology is, of course, a growing thing, right? And AstraZeneca Pharma is a leader, global leader in this space. I don't know about any Indian specific company who has mastered this particular side of it, oncology, because it's a very complex thing. So I would restrict my comments that AstraZeneca Pharma is the only company which in anything which happens on the oncology side will be at the center stage.
But also because if the reports turn out to be accurate, then a lot of other companies, Varsha highlighted Zydus as one, Oro for injectables depth, Dr. Reddy for oncology APIs and formulations, Cipla for oncology injectables. So there are multiple plays out there. The other thing, and 1 minute left, so to pre-open session, but Parag, the other interesting development that happened was the direct market access. Now, and I wonder if you have some thoughts here, because brokers with
HNI and Ultra HNI.
You think the same, right?
Yes.
The retail broking companies like Grow, etc. may not get impacted as much.
Yes.
Why do you say that?
But the HNI and Ultra HNI guys who can directly do this DMA kind of transactions, they might prefer to do it. If they choose to do it, the brokerage will reduce. The overall revenue.
Will you do it?
I am hopeless in technology, so I cannot do it.
But so this was my counter, that if you look at the current crop of Ultra HNIs, if in practical terms, the real people behind it, I'm not saying they're hopeless in technology, but many of them may not mind paying that brokerage for the effort. We are a very service-oriented economy and people. If you can get someone to do it for you, you will prefer to.
100%. And I have seen many HNIs, because I've worked on that desk, HNIs and Ultra HNIs, liking a particular dealer also. Like
they have that comfort zone.
Yeah, so that's a comfort zone, because that dealer actually understands that client's, so DNA. So I would say that it is a personalized thing, but some of them might use, and that to that extent, a limited impact can come on the brokerage revenues.
Okay.
But nothing dramatic.
Nothing dramatic in my view, in medium to long run.
Okay, so we're going to go into the pre-open session, but before we do that, just a couple of, because they have brokerage focus on it, just want to look at some of the companies that could be in focus this morning. We're talking about Meesho, and Mahima talked about it. Citi has initiated a buy with a target price of 210 rupees. Now, this is one stock which I think has had a lot of initiate buys in recent times. This is one more which is coming in. And why does Citi like it? Because they're saying Meesho is uniquely positioned to serve as an infinite and accessible store to a massive audience. This is at a time when you have, the Amazons of the world in play. IDFC first. I thought this was interesting. CLSA has maintained a hold, saying the balance sheet growth outlook is healthy and capital raise is coming over the next 12 months. NIM outlook, that's net interest margin outlook, is stable as well. CLSA on Z Entertainment, the other one that I want to look at is Z Entertainment. They've maintained an outperform with a target price of 125 rupees because of the fact that Z5 streaming service users have doubled, led of course by the FIFA rights that are coming in. They also have the most downloaded OTT despite Z having FIFA on premium subscription. I'm wondering if any of the three that I talked about are on your radar. I talked about Meesho, Z and IDFC first.
So basically IDFC first is a very easy one for me. It's a banking stock. So right now my view is that given the turmoil which the country has gone through in terms of due to this West Asia war conflict, I would like to restrict to my banking picks to ICICI, HDFC, Axis, Kotak's, SBI, BOBs of the world. Of course, I have RBL and City Union Bank in the mid-cap, small-cap banks, which I continue to like. But as my view becomes more constructive on the economy, and as we are less affected by all this, because oil is below 80 right now, and if it remains that way, then I'll go to stocks like IDFC First Bank or something like that, where they do slightly riskier lending.
And what about a Z or a Meesho?
So Meesho is out of syllabus for me because EBITDA level there is loss at 255 crore last quarter. Last year was 1,485 crore. Market cap is still above 75,000 crore. So better you have to ask Info Edge promoter that whether he can invest in Meesho or not. If he says yes, then I can invest some amount in Meesho.
Yeah, the red line for Parag Bhai is you're a loss-making company.
Yeah, loss-making company, and that too after achieving certain scale, still there is a loss. That's a red flag for me, but it's okay. It's okay in this world where the investors are ready to support this kind of growth, even if there is a loss. Looking at a larger picture, long-term picture, which I am not able to visualize. Okay, so I accept it. That's okay, right? And the other one was Z. Z is always undervalued stock. See, extremely undervalued stock. It had some governance issues. If those issues goes out, it can be a clean buy. But one major issue with this is that the advertisement revenue, the core अपना general entertainment channel advertisement revenues are structurally going down. Z5 can unlock value for them in future, and of course the stock is extremely cheap.
Also the fundraise, and it'll be interesting to see.
And promoters want to put money, right?
Yeah, it'll be exactly. That's the point. That promoter putting in money. Also, the promoters may still get it wrong. I think in Vodafone also promoters have put in money in the past so many times. But the nature of investors who come in Parag Bhai might be interesting to see as well on Z.
Yes.
Actually, Kush, do you have a chart view on any? Actually, before we get that, just very quickly, since the pre-open rates have started, just mark some of those names and just see what some of those stocks are up to. So the broking names: Motilal Oswal, MK, Grow, Angel Broking. Are they reacting at all to the DMA news? Well, not quite. Then Bajaj Auto, buyback of nearly 47 lakh shares at 12,000 a share. Bring that stock up, not too much. Craftsman Automation, the promoter is likely to sell up to 2% stake at a floor price of 925. No big reaction thereof. JSW Infra, and wonder if that QIP overhang going away leads to some moves there or no, and some order wins for a BEL, for example, so keep an eye out for that. And Yash High Voltage had a preferential issue at 721. Allottees included a ValueQuest, White Oak, Malabar, etc. No big reactions in any of the stocks that we've spoken thus far.
Kirloskar Oil, second morning in a row. Second I would say. Third.
Friday also I thought it reacted, no?
There was a small reaction, I think.
But Monday was when it was
20%.
completely 20%. So look at Kirloskar Oil pre-open once again showing some action over there. Okay, let me go across to Sharad very quickly for the big brokerage call this morning. Sharad, what do you have?
We have Grow from the broking space, and Kotak Institutional has come out with its report on that. They have given a maintained buy rating, and the target price, if you look at it, that comes in at 220 rupees per share. Now, they have stated that Grow has sustained a strong net customer addition in a subdued industry environment, and this is because of a better retention supported by a multi-product marketing strategy, and also the continues to capture that 40 to 50% of the excess gross industry addition. And the aim is, of course, on the AI deployment. Also, beyond broking, the firm is building a 3-tier wealth platform across retail, affluent, and the HNI segments. M2F book is scaling well as well with a good support, and also they are remaining constructive on the business on the medium to long term, even though the short-term trends might be volatile.
So much, Sharad, for that. We've got Ruchi Jain, who's Vice President Equity Technical Research, Wealth Management at Motilal Oswal Financial Services, joining us. Ruchi, thanks so much as always for taking the time. Good morning to you. And are you seeing any positive signs? We've had 7 days on the trot for the broader markets, and pretty good going for the benchmark as well.
Yeah, hi, very good morning to everyone. Well, if you look at the Nifty index, last 6 trading sessions, Nifty has consolidated within that range only, where 23,850 is being acting as a support and 24,200 is the resistance. And if you look at this entire range, this is exactly between its 50 DMA and the 200 EMA. So 50 and 200 is the other averages, which has become a range for the market. But in this entire consolidation for the index, the good thing is that the index's entire consolidation is above its 50 and 20 EMA. So the short-term trend still remains positive in spite of this consolidation. And the broader markets have been doing well. The mid caps, small caps are consistently witnessing a good market breadth over there. So the overall trend remains positive. But just for the momentum to kick in the index, we need a breakout above the 24,200, which would then lead the index towards 24,500, which was the previous swing high. So overall, I think the trend still remains positive. But right now, it's good to focus on the broader markets if you are a very short-term trader. For index-based traders, 23,800 is the good support for the index. Any declines you would get, your stop loss is below 23,800. So keep the stop loss and keep a buy on dip approach for the index.
Okay, so are your stock picks or the ones that you like in the broader markets, Ruchit?
Yes, overall, we have been seeing that which sectors are showing relative outperformance compared to the benchmark. Look at last 2-3 days, pharma has been doing well. Overall, the pharma had recently given a breakout from its about 1.5 years of consolidation phase. So I think pharma as a space should continue its up move. So Cipla within that pack is my first pick, which technically looks good. Yesterday, the stock gave a breakout from its consolidation with very good volumes compared to what it recently has been doing. So Cipla can be bought at current levels with stop loss below 1380 for potential targets around 1485. And defense is another theme where we are witnessing such outperformance compared to the benchmark indices. So Nifty India Defense Index consolidated above its 50 DMA for about 1 month. Now again has resumed its uptrend. So earlier what we saw that the private sector defense were doing well. But now again the momentum seems to have shifted to these PSU names like HAL, BEL, Solar Industries. So from a momentum perspective, I think defense as a theme would continue to show outperformance. So BEL technically looks quite good. Post the recent correction, the risk-reward ratio seems to be in favorable. So BEL can be bought at current levels with stop below 422 for potential targets around 450.
Okay, just quickly want to get Nifty view from you, Kush, just before we go into the opening.
So see, for the last 3 sessions, I've been saying positive biased consolidation. Exactly wahi chal raha hai. And I've been saying one more thing with reason, which is HDFC Bank and Reliance Industries ka call option. Now, if the team can bring up the option chain, let's say first for Reliance Industries, you will see a massive bump up, okay? Exactly, 1350. You see that big red line? That's at 1350. If you add the premium, at which most of these calls were written, as about 25-30 rupees. So 1375, 1380, that's the wall that Reliance Industries has to cross. Now move on to HDFC Bank. You will see a very similar line on 800, right? That's the strike price where maximum call options were written. Again, premium of about 20-25 rupees for the most bid. And that is why you're seeing Reliance and HDFC Bank go up but slide from those levels. And that is why from a near-term perspective, there could be a positive biased consolidation that could go on. And hence, Nifty is a buy on dips. But this is only applicable till this expiry, and by that I mean the monthly expiry, which is 13th of June. In fact, you might see a lot of positions being unwinded before that as well. So once this hurdle is taken out, there is a good possibility that Nifty is in for a run towards 24,500, 24,900 kind of levels. Bank Nifty, in fact, about 58,500 to 60,000 plus kind of levels. So for me, this remains the key reason why the Nifty is not moving up right now. And these call options are also not going away, which means the market has confidence that there might not be an immediate up move on the indices, but the structure remains bullish. Positionally, if you want to buy, support levels are moving higher. You can take a buy on dips approach on Nifty and Bank Nifty both. Bank Nifty preferred.
I quickly want to ask Parag Bhai about Cipla. So yesterday the Citi note on Cipla saw a huge boost coming in, and it detailed a lot of reasons for a re-rating on Cipla. I'm sure you must have taken a look at it. Do you have a fundamental view on Cipla?
Yeah, so I am also constructive. Cipla is a great company, and they have promised a good jump in their US revenues for this year and next year, which was considered a little bit more optimistic by various analysts on when they came out with the. But I think market has taken it positively that a company like Cipla will give a statement which will be reliable. So I would say that they have many products on that side. Of course, their domestic business is fantastic. They have a superb respiratory franchise, which is irreplicable in my view. So I would say that yes, it's a great company, but I'm not sure whether they'll be able to meet the guidance which they have given on their US business revenues. If they meet it, of course, the stock is looking very good from this price. But it looks very optimistic to me.
Okay. Among all of your pharma names, Ruchit, anything that stands out for you? I know Cipla was your technical call, so I'm not asking about Cipla again. But any of the others that stand out for you?
If one has to look more from positional basis, then Zydus Life Sciences is looking quite good over here. We have seen a good run-up move when the numbers were announced in this. The stock rallied from 900 to 1120. Post that, the stock has seen some consolidation, so that overbought momentum readings which were there after this rally, that has been cooled off. And the previous resistance of 1050 has now been acting as a support. So the risk-reward ratio is still much favorable, but maybe a slow mover, a gradual up move can be seen. So if anyone is looking for any delivery-based buying for maybe next 2 to 3 weeks or 1 month's perspective, then Zydus Life Sciences could be a good pick over here.
I just want to point out that metal seems to be the one sector that's underperforming in trade today, and a few standout names there. Whether they move differently once the market opens at 9:15 is a different point. But Vedanta is down about 3.7%, Hindustan Zinc about 2%, Nalco and Hindalco both losing about 1.5%. JSW Steel now about 1%, and Tata Steel about 0.6%. But it's really Vedanta as well as Hindustan Zinc, Nalco and Hindalco that are losing the most ground. Kush, any view on this?
Yeah, very similar, Alex, to what we just discussed about something like a sale. The selling pressure still continues. Support levels close by. So, for example, a Hindustan Zinc is at the 200-day moving average. That level comes at 556. And the stock is at 561 right now. Last couple of sessions, it's actually defended that level. So, yes, they are close to support levels. Once you get some stability and once you get a bump up, I think the risk-reward ratio will be favorable. For now, I wouldn't venture because again, I don't like to catch a falling knife. So, yeah, I'm just waiting for a base formation and then an uptick in some of these names.
Okay, Ruchit, just about a minute to go. And you've already given us your picks, but anything from the pre-open session that stood out to you that you would suggest a buy on?
Aditya Birla Capital looks interesting. We have seen a breakout yesterday only from its previous swing high resistance, and good follow-up move has been witnessing an opening also today. So I think this relative outperformance could continue. On the high side, the stock has potential to rally towards 405 maybe next 1 or 2 days itself.
Stop here. What is the stop loss on it?
Stop loss can be placed below 386 for potential targets around 405.
Last call.
Yep, I'll go with NCC, 164, 169 targets, 154 stop loss.
NCC, Aditya Birla Capital, both names not necessarily starting off in a big bang way. So interesting. If I'm not wrong, in fact, Parag Thakkar also had mentioned NCC as a fundamental idea a couple of days back. So could be interesting to see how that one does in the near term. A lot of stocks in focus today on the back of news, not enough movement though. So in some sense, the newsmakers, if you believe in them, are actually giving you an opportunity to go and buy them today. But here's how the markets are starting off this Tuesday morning. Very flat actually. So no big moves on open. The question only is what do we do post that? The good part about today morning though, as we start off at about 24,000 for the Nifty and about 76,900 for the Sensex, is that the advanced decline ratio is doing okay. So the mid cap and the small cap indices will come up on the screen. Now the small cap index about 0.32%, the mid cap index 0.15%, and Nifty IT will come up next on the screen because banks are flat. IT is down 1.6%. So, well, it was a one-day wonder, if you will, the move yesterday, and today again succumbed to some bit of selling pressure. Let's get the heat map up on the screen and show you what is moving and what is not. Even Stevens for the red and the green. Let's start with the green first. Dr. Reddy's about 0.76%, likely to do with this US cancer peace announcement, deal announcement. Adani Ports 0.66%. ICICI Bank up 0.5%. Then comes Cipla. There is a bit of a mojo in pharma, if you will, nothing dramatic, but doing okay. There is Tata Consumer, there is Apollo Hospitals, and there is BEL on that order win. What is not doing well? We know IT is not doing well because the index was lower. Infosys down 2.5%, TCS down 1.5%, HCL Tech down 1.5%, Tech Mahindra and Wipro following suit. In between that, Hindalco down another couple of percentage points. So that one is sulking a bit. HUL is sulking a bit. Asian Paints is sulking a bit. And the quantum of red is now slowly going up, but nothing too dramatic. Well, on the whole, it is healthcare on one side and IT on another side. That's how at least you can define this morning with no rara moves really, at least on the gainers.
I think IT once again seesawing, one day up, one day down, but today maybe tracking what is happening in the Nasdaq as well. Let's pull up the Nifty contributors very quickly before we get to what's happening in the broader markets. ICICI Bank and RIL holding things up, but the drag really coming from an Infosys, HDFC and TCS. Between the three of them, that pull on the Nifty is very, very apparent. Let's pull up the small cap and the mid cap indices. Look at what's happening there. Completely flat on the mid cap, 150. The small cap also completely flat. The advanced declines ratio is very equally balanced. So you can't say that this is a positive day. A breather is being taken after the rally we've seen over the last couple of trading sessions. Let's pull up the sectoral heat map for you this morning, and IT stocks likely to be at the bottom. There you have it, 1.5%. Metals also flailing. FMCG stocks have been under pressure, and we'll have a conversation in just a few minutes from now on what is the pain point with FMCG stocks and is this poor monsoon going to be a big problem. Pharma stocks and healthcare stocks right in the on the top of the charts. Remember, we spotted this trend for you early this morning. The US FDA has reached out to Indian regulators for manufacture of more cancer drugs because they are falling short. Okay, let's look at some of the specific stocks that we're talking about today. And I'm going to start with InfoEdge. We've been talking about this. They put out their entire portfolio, startup portfolio and investment since 2007. Talked about their AI deep tech portfolio. That's about 3% up on the stock. Let's look at the pharma pack. Zydus, Alchem, Cipla, because of that shortage of drugs in the US, all of them up in the green. Alchem Labs doing the best, actually about 2% up right now. Syrma SGS in focus. They have a tie-up with a Japanese company. That stock about 2% up. BHEL and GHV Infra both have had order wins. And GHV Infra is the one that's actually showing some action, not so much for BHEL, but that's about 3% up. Kirloskar Oil, Kirloskar Brothers. Want to just look at what's happening to these stocks which were in focus yesterday. Once again, Kirloskar Oil about 11% up. So keen to hear from the company on what this new move in the data center space actually means for them. JSW Infra, their QIP is out, 2.5% up. We spotted the stock for you as well. Vedanta, promoters will be selling 1.7% stake via block deal. No one likes promoter stake sales. That's about 5.5% down. And that stock is seeing a bit of a hit today. Though I must make this distinction, in JSW Infra also there's a promoter stake sale, but they have to do it because of SEBI regulations.
Yeah, in fact, that Vedanta block has taken place, 1.8% stake exchanging hands in 4 block deals that have taken place in the stock, taking a little bit of a battering. There's a stock that has gained in the recent past that is cooling off, and that's New India Assurance. It's had a pretty decent couple of trading days. It's down about 3% or thereabouts, some profit taking in evidence, but the rest of the metal pack also losing ground alongside Vedanta. You have eClerx that is losing ground, Muthoot that is down about 1.6%, but not too much else in the way of big losers. A few names from the broader markets. Tamanna has already highlighted Kirloskar Oil for you, but there's Suven Pharmaceuticals that's doing well, up about 4.7%. Carborundum Universal, as well as Dr. Agarwal's Health, both gaining over 3.5%. Sirma SGS, by the way, on account of that joint venture with that Japanese partner to set up an EMS facility, the stock is up nearly 4%, 3.7%. Remember, this is only an investment of about 15 crore rupees, and the Japanese partner will put in 10 crore rupees. So it's not the largest capital allocation towards this new facility. It'll be interesting to see what the revenue generation capability is there. Okay, let me very, very quickly get a check with you on Sirma as well as New India Assurance. Would you take money off the table on one and put money in the other?
Let me add a couple more names. Kirloskar Oil, Kirloskar Brothers, and Kirloskar Pneumatics. The entire pack has actually rallied. Kirloskar Oil is something that we've discussed so many times. In fact, it was a weekly pick also, a few weeks ago. They've run up massively now. You have to start booking profits in some of these names. Of course, structurally the story remains and structurally the moves remain. But you want to take some money off the table, again re-enter at lower levels, at least book partially, if not fully. So yes, New India, Sirma, and a few of the names that I mentioned. Also that applies for the defense pack, by the way.
Okay. Ruchit, you want to come in on names that you think money should be taken off the table in? Okay, Ruchit, can you hear me? Yeah, I think you're on mute.
Yeah, apart from these, I think metals is one space where the index has started showing that relative underperformance, and what we can see that earlier the entire metal space rallied when there was a good run-up move in the base metals on LME, like gold, silver, copper. When they were going up, we saw the metal stocks also doing well. But now last few trading sessions when the overall markets have been doing well, the base metals on the LME exchange have been seeing a corrective phase, and due to which we can clearly see a direct correlation where the metal stocks have started underperforming. So I think over short to medium term, that underperformance is likely to continue. So I would suggest if anyone has to take money off the table, then metals would be one space.
All right. On that note, Ruchit, Kush Bora, as well as Parag Thakkar, thank you so much for joining us today, as you do on an ongoing basis. And let's move on now and talk about FMCG companies. They're in the spotlight on the back of the delayed monsoon. Remember, we're talking about a deficit of over 40% at this stage. Hope that catches up. But as things stand, it's not looking the best. We're going to be speaking to PL Capital's Amnish Agarwal very shortly. But just to set the context, we've got Mahima joining in. Mahima, what are the key trends that you're witnessing right now?
Right. So, Alex, as you rightly mentioned, right, the first half of June itself has seen that India has recorded a rainfall deficit of around 25 to 40%, though there has been some catch-up in the late of June, but still the expectations are that IMD is predicting that between June to September, it's going to be around that 90% long period average, which means that it is going to be a below normal category monsoon this season. Plus, there's an emerging El Nino that could possibly suppress rainfall and could affect crops going forward as well. This will have a mixed reaction on the entire FMCG sector. It could be negative for a lot of names like Colgate, HUL, Jyoti Labs, etc., where anywhere between 35 to 45% of their revenue comes from the rural areas. But at the same time, something like an Imami, where Dermicool as well as Navratna have over 40% share and 45% comes from rural. So summer products could do well, but at the same time, rural could be under pressure. Dabur 15% revenue comes from juices, so that could be benefited, but around 53% revenue comes from rural, so that could get impacted. Similarly, for something like a Tata Consumer, the mineral water brand could do well, but at the same time, around 35% of their revenue comes from rural markets, so that could get impacted. Similarly, for ITC, 5% of their market share has juices, but at the same time, 35% of their revenue comes from the rural market, so that could also get impacted. So this is the overall view of how monsoon can impact going forward the entire FMCG space.
Thank you for that, Mahima. Amnish Agarwal, co-head institutional equities at PL Capital, joining in this morning. Amnish, very good morning to you. Thank you so much for speaking with us. Are we going to see this correlation continue for the next few months till it's clear what the monsoon pattern and trend is, and which are the FMCG players you think are most vulnerable since we are having a monsoon deficit very clearly this year?
Hi, Tamanna. So, over the years, actually, the correlation of FMCG growth rates to you can say, monsoons, that has actually diminished. And it is the broader context which actually impacts the sales more than purely the monsoons, because the proportion of, say, rural income which is dependent on agriculture, that has also gone down over the years. But having said that, definitely I think 2 to 3 things we should be, you can say, cognizant about. First of all, the El Nino was expected to impact the second half of the current monsoon season. Now, El Nino is yet to set in, but even the first half condition is not good, which means that we might be heading towards one of the worst deficits in monsoon in the current year, and that is purely. I think that there is no, you can say data backed projection which has come from any agency. This is purely based on what I feel, based on first 3 odd weeks of the monsoon so far. The second factor is that it is not only the rural, the entire, you can say, consumption basket can have some sort of an impact, more so the small ticket items. Because last year we had negative inflation, particularly on the food side from June onwards, and this time around we are already witnessing the prices of all the essential commodities that they are moving up. The prices of petrol has gone up, diesel has gone up. So if you look at all the FMCG companies, barring say Marico, which due to, you can say, decline in the copra prices is cutting down on the parachute prices, I think the entire basket is witnessing anywhere between say 4% to sometimes even say 7-8% kind of a price increase. So which means that effectively most of the gains of the GST in terms of price reductions that have got nullified now. So in this context, my feeling is that it is not only the rural, but the lower end parts of the urban consumption, they can also come under pressure in the coming few months.
Okay, so what about second order effects on consumption? Do you think that the two-wheeler space, for example, vehicle financing as an extension, is where we'll actually see the pain instead of the staples?
You see, what happens is that staples definitely going to have it. But if the monsoons are not good, then the impact of that becomes widespread.
There is a bit of a audio issue with what Amnish is trying to respond. We'll just try and get that going. Has to be some tech piece there, but it'll be interesting to see what kind of an impact does this recovery of the monsoon, if I can call it that, will happen. Today morning is a great day in Mumbai. Hopefully the next few days are good for the whole of India as well.
But you know, the point is that even if the monsoons have now come, they've come late, some of the damage is already done.
Agreed.
So it's not as the rains will come and then...
But the positive, and I think this is something that our colleague Sesha did in a story just last week, is that a lot of companies are feeling more positive based on the fact that commodity prices have come off, and to a certain extent, the prices that they've already increased, that might actually be the end of it, hopefully. And so to that extent, the double damage of a higher price as well as lower demand will not take place.
Let's ask Amnish the same thing, right? Sorry, Amnish, you were, sorry.
Yeah, Amnish was making a point. Amnish, you want to complete the point that you were making to Tamanna's question before we take the conversation forward?
Yeah. Am I audible now?
Yes, you are.
Yeah. So what I was saying is that the small ticket items like FMCG, they might be the first ones to get the impact. But if it spreads, and when it comes to say two-wheeler, when it comes to say some of these financiers, the impact might start from the rural India there. Now we need to look at two aspects in that. First of all, particularly the two-wheelers or auto, we got a big boost from the month of September due to the GST-led price reduction. Now, any which ways, we are going to approach the anniversary of that, after which the growth rates are likely to normalize. Now, combined with the fact that if the monsoons are not good, if there is some impact on the rural income, particularly two-wheelers could see some pressure going forward. That is one part of it. The second is that there is every likelihood that we might see over the next 6 months some sort of an increase coming in the interest rates. Now, whether it is 25 bips or 50 bips, only time will tell. But once the interest rates start rising, so now you have got three factors. First of all, the incomes are down. Your petrol and diesel prices are up. The interest rates are, you can say, going up. So the overall cost of ownership of a vehicle that goes up, and usually we have seen in the past that whenever such like things happen, the demand growth then actually takes some sort of a hit. Now, to what extent it will be, only time will tell.
Okay, so I take your point, and all of these things have happened in the past, so perhaps it gives you a roadmap for what could occur. But the data seems to be suggesting otherwise. At least in the last couple of months, we've seen durable numbers with the Vahan data pointing to certain things, right? Passenger vehicles. So you're saying that that's primarily on account of GST, and that's going to dissipate sooner rather than later?
See, as I said, that GST was made applicable from middle of September, or towards I think it was 22nd of September or so. So before that, the base is very favorable, because after that we have seen for the past say 6-7 months growth in excess of say 15-20%. But once the base sets in from the month of say September onwards, then the things are going to change. After that, any which ways, the industry is expecting that the growth rates will normalize to more like, you can say, high single digit, low double digit, depending upon the segment. So if it gets combined with the impact of the monsoons, interest rates, inflation, and the price increase, so there could be, you can say, definitely the growth rates are going to slow down, but there could be a little bit more slowdown than what should happen normally.
Okay. All right. Thank you so much for that, Amnish Agarwal there. Speaking about the impact we'll have on consumption from monsoons coming down, but it's not just monsoons, right? It's commodity prices going up. So the prices of products going up, couple that with higher fuel prices, and then of course maybe interest rates going up. So which is why you're seeing a pain on the consumption space. But that's not happening with AC makers at all. Blue Star is seeing a demand recovery in room air conditioners after a weak FY26, with industry volumes rebounding sharply in May. It's not just that, the data center play is looking exciting. Before we speak with Mr. Tyagarajan about that and more, Mahima joining in to set up the conversation.
Right, Tamana. So while one side of consumption will get impacted because of weak monsoons, consumer durables and ACs especially are going to definitely benefit in terms of demands because of summers being harsh, and that we've seen in terms of Blue Star, because in the recent management meet, the management did say that RAC demand has improved after a difficult FY26. Channel inventory is no longer a concern. May 26 was a strong month for RAC with an estimated volume growth of around 40% year-on-year basis. Margins have remained near key pressure point, but they've taken certain price hikes, and although the price hikes are slightly below versus where the inflation stands at right now, around 12 to 14%, and non-RAC cooling business could grow anywhere between 10 to 12% over medium term. Plus, data center is a very big opportunity where Blue Star already is present through EPC as well as MEP and cooling solutions, and has around 25% market share in MEP business. So it'll be interesting to find out as to how sustainable this demand is and how big a business can data centers be going forward in the next 3 to 5 odd years.
B. Tyagarajan, Managing Director, Blue Star, joining in now. Mr. Tyagarajan, it's almost a reversal of what we saw exactly a year ago, isn't it? You were stressed then and you're smiling now.
Good morning, Tamanna. It is a pleasure to interact with you today. Yes, I would say I am partially only happy. Summer delivered, therefore the volumes have grown. Inventory level is not an issue at all, but the margins continue to be under pressure. You know that the entire cost increase could not be passed on, and the industry as well as Blue Star may be impacted due to this. That's the reality.
Okay. Just elaborate a little bit on that. When you say that the prices could not be passed on and there will be an impact, so even though volumes have grown, you're saying margins will continue to be impacted because of the bump in raw material costs or input costs?
I think so. See, the cost increase so far till the season which began somewhere around April 14th, it is around 13%. But what could be passed on is somewhere around 8%. 5% could not be passed on at all. In the meanwhile, due to products which are connected with the petroleum or the transportation costs also have gone up further. So therefore, there will be a deterioration in the margin. The outlook that we have indicated is as follows, that as far as room air conditioner business is concerned, the revenue growth in volume term will be 25%. In value terms, it will be 30%. But the margins may be down. We have to wait and see by 200 basis points in operating margins compared with last year. That's what it is. And normally in a summer season, you should aim for 9.5 to 10% of operating margin, which may not happen due to this. And this I have been saying right from March, that the key challenge is this time it is not the volumes or revenue, it is about the margins.
Mr. Tyagarajan, good morning. Neeraj here. Now that the situation seems to have cooled off, or the stress seems to have cooled off a little bit, can you hypothesize what the annual margin picture could look like, since margins are the key issue, if the current status stays as is?
It's very difficult to predict. We have to make hell of a lot of assumptions. We are going to assume, to begin with, the war is over. We are going to make an assumption that the supply chain will resume and the normalcy will be restored. In our case, it is connected with metals, the steel, copper, all these things. And if Middle East reconstruction starts, again, metal prices will go up. Now, one can say that, look, rupee probably has cooled off. That for sure we can make an assumption. So having said that, the aim is that full year basis, we should maintain the margins that we delivered last year. That is the only way we can operate at the moment. But the headwinds so far at a peak season, it shouldn't have happened. It happened. This industry, the period when we wanted to deliver volumes as well as profit, the conflict was the West Asia conflict was at its peak, and rupee depreciated substantially. That is the issue. And we all operate with optimism. So the hope is that we will get back to last year margin levels. A lot of hard work will have to be done.
That's good. Mr. Tyagarajan, you are known for your candor, and therefore I'm inclined to ask you, where is it that you see the silver lining? In margins or in this thing? So if I were to ask you, FY27, where is the silver lining? What is the blue sky? What would you say?
For Blue Star, it is the commercial air conditioning as well as the electromechanical projects part of it, where you have data center industry propelling growth. In fact, demand is more than what one can deliver. You know that we have more than 30% market share, and the order book is full. Orders are flowing in, and we are a very large player in the EPC part of data center business. We also make certain equipment. The inquiries are beginning to flow for that as well. So this part is indeed an interesting one. The second part is India's manufacturing story continues. Therefore, the demand from manufacturing sector, specifically advanced manufacturing, and plenty of it, like whether it is solar, EV, semiconductor, the order inflow is very high. And therefore, where we would have diverted resources to infra projects, which all used to go on for 3 years, 4 years, these are projects, the data center and manufacturing, 12 to 18 months, the jobs will be over. Faster closure means good cash flow, and the margins are decent. So that is a silver lining.
Mr. Tyagarajan, hi, morning. Alex here, and you've spoken about this in the past, the fact that you want to make Blue Star all-weather. The question is, does that happen in FY28? Based on what you're talking about, your order book is full. So first of all, what is the size of the order book on the commercial side? And when you say that you're not capable of taking more because you need to execute these, are you working on creating that capacity as well?
Very much. We will never say we will not be able to execute at all. You have to be agile to divert the resources from one segment to the other. So that has been the hallmark of Blue Star, because we are not only a B2C player, we are also a B2B player. And right now, data center and manufacturing is propelling growth. We are diverting resources into that, and we will maintain our leadership position there.
But what is the order book stand at right now for the commercial business?
What will help you is to understand the EPC business. We expect the market size to be somewhere around 4,000 crores in the next 12 months, and you can assume that we will be anywhere out of that 4,000 crores. 1,500 to 2,000 crore revenue we will deliver. And I have indicated to you that FY29, 20% of the revenue of Blue Star coming from data center segment alone.
You know, I want to just dial back to the point that you made about room air conditioner margins. Some price hikes have been taken, as you mentioned. Are there more that you are comfortable taking with the kind of demand you're seeing, Mr. Tyagarajan? Will you see another set of price hikes for room air conditioners?
Tamanna, you are aware that we are a company where we have to deliver value to the consumers, deliver value to the investors as well. So chasing market share blindly is not the way we operate at all. There has to be a right balance. Our market share goal is 15%. We will keep an eye on that. Right now we are somewhere around 14.3, 14.4. At the same time, if cost increase will have to be passed on as a price increase, we will do that. Some more price increase will happen, definitely. At the same time, let us say post festival season or during the peak festival season, if the commodity prices soften, we will reduce the prices. That has been the policy we will go ahead and do. In fact, we should have passed on the entire thing. We couldn't. The industry couldn't. That's where we are.
No, so what is the extent of price increase that is left to do, which you're saying will definitely happen?
See, if strictly speaking, additional 5 to 7% will have to happen. Okay. And I doubt whether the entire thing could be passed on. 50% of that will have to be passed on necessarily. Okay, so up to 3.5% will have to be passed on. All right, thank you so much. In the off season, it hardly matters actually. That is the right time to pass on the price increase as well. Okay. In India, in large parts of the country, has become all-weather requirement of cooling now. So I don't know how much of an off-season you also see. But thank you so much, Mr. Tyagarajan, for joining in. Always a pleasure having you on NDTV Profit and speaking with you. That's the Blue Star management speaking with us this morning. But we're continuing the corporate focus here. Hindustan Copper in focus as the company has outlined an ambitious growth roadmap centered on mine expansion, higher copper production and diversification into critical minerals. We will be speaking to Sanjeev Kumar Singh, the CMD at Hindustan Copper, about the business outlook. But Sharad Dubey joining in to set up that conversation first.
Well, interestingly, Hindustan Copper has come out with its 2-year plan. This is for, of course, the FY27, FY28, and also an annual vision statement. Looking at the price, says the global copper prices, they have seemed to come up with a correction. And if you look at the overall momentum coming in from the plan, this is the expansion in the critical minerals and the renewable energy portfolio. Global collaboration is also something which the street is quite bullish on, especially with Hindustan Copper and the more usage of tech for internal operations and the release of the standard bidding document. These are the important key takeaways coming from the vision plan. And of course, street feels like the critical mineral angle and also the, you could say, the dividend payment angle, which has been given by the company, augurs well for the entire stakeholders.
Yeah, well, so much to talk to Sanjeev Kumar Singh. He's the Chairman and Managing Director of Hindustan Copper. Mr. Singh, thank you so much for taking the time out. This is Neeraj Shah here. Good morning. Since pricing is so difficult to talk about, let's start with what the company is doing on production, right, and volumes. What would the detailed roadmap be, sir, for copper production growth, let's say over the next 2 years, or let's say over the next 5 to 7 years? Because, I mean, the expected ore production and refined copper output targets, do you have them in mind?
Thank you and very good morning. Definitely, we are on the expansion mode now. And as I've mentioned earlier also, our 5-year targets are 12.2 million tons by 2930. And this is already started. And the maximum will come from Malanjkhand mine, that is 5 million tons by 2930. Our Khetri copper project will be producing roughly 2.9 million tons, and the Ghatshila, which is Indian copper complex in Jharkhand, will be producing 4.3 million tons, which includes obviously the 3 million ton mine, which we have given in MDO mode to JSW. So this, if you add up, it is 12.2 million tons. This year, we produced 3.67, and next year's target is 4.71, if you have seen our annual plan also. And to say that how they are in the right time or right perspective, I will tell you, I'll inform you that by March, we had already awarded the contracts at Malanjkhand. Roughly 1,400 crores contracts are there. They are already on ground. See, 2 months have passed. May and the last week of June is coming. So they are moving as per their pace, and we are being monitored also. It's not that I'm speaking just at the work pace and all that, because that is very crucial for us, because unless and until we reach that these expansion projects in time, will not be able to deliver that 5 million tons. This 12.2 million tons will, if you translate our new concentrator plant at Malanjkhand and other old plants, and the recovery percentage also, it translates roughly 90,000 tons of MIC, which Hindustan Copper is going to produce. And that too, I told you, that will be on the time scale of 5 years, that is 2930. And in the coming year, yes, around 4.7 million tons, and MIC will be around 32,000 tons of copper concentrate.
Got it. And okay, so those are well documented. Thank you for laying it out for us as well. How do you view the long-term structural demand for copper, Mr. Singh, driven by various factors, right? Because the one thing is the production that you do, the second thing is the demand. And how does Hindustan Copper plan to gain a larger share of this growing demand for copper?
See, number one, as far as copper concentrate is concerned, I told you it is presently being imported from Latin America, Australia by the two big players, Birla Copper and Kutch Copper. We will be supplying them with this, the indigenized, you can say, the copper concentrate from Hindustan Copper. Number two, I'll just like to inform you that we have also restarted our Gujarat copper project in Jhagadia, Bharuch district in Gujarat, which will also contribute in the last quarter of that cathode production, which will come from that. And within 2 to 3 years, it will reach its peak rated capacity of 50,000 tons. So that is one part, that's cathodes. We'll now come up into that. And as far as mining is concerned, I've always mentioned, we are the only miner to the nation. We'll be producing 12.2 and that 90,000 tons of MIC. So if you total these two elements, we will be participating in the country's need. But what I see, what I foresee, since the demand is increasing like anything as far as AI is concerned, infrastructure is concerned, we may be able to suffice only 5 to 6% of the country's needs.
Singh, very good morning. Tamanna here. You know, we're also speaking at a time when you end your tenure at the helm of Hindustan Copper. In fact, next week you're handing over the baton. What has been the big highlight for you, which you really cherish, what Hindustan Copper has done during your tenure?
Ma'am, the first highlight is that I've worked for this divine metal company. Copper is a divine metal. I earlier used to work in NTPC and Coal India, which were fossil fuels. So this is the first parameter. And the second one is that all mines have reopened, which were closed since 2001 July. They are going to contribute to their maximum in 26-27. We have opened our Gujarat Copper project, which was also closed for, say, 5 to 6 years. And in fact, if you see, the whole issues now have been cleared by the support of the government of India and the respective state governments and all other stakeholders also. And this Gujarat Copper project, I'd like to mention, it has been done in a wonderful hybrid mode for the first time in this country. It is based on revenue sharing, but there are two things. One is the revenue sharing on different stages, that if you produce 0 to 20,000, you pay me 2.25%. If you increase the production to 37,500, you pay me 2%. And if you reach the peak rated capacity at the earliest, you will be paying me 1.75% of the revenue. And the auction was done on the cash profit, and which the base was 10%, and the winning party, that is Loham, got it at 12.5%. So I like to tell this is one of the best modes in which the tendering has been done by Hindustan Copper. Innovative, I like to say. And see, so all the projects have reopened or restarted, and the expansion is in full bloom. We have added 140 million tons of reserves and resource in last 4 years when I joined the Hindustan Copper. So now they are adding value to the company. We are going to restart mines in Sikkim. That is one part, because if you start the copper mines, they can start giving you production or revenue within 2 to 3 years, because the gestation period of a copper mine is very high. If you get a greenfield project, it will take 14 to 15 years to start the production. We have already started exploration in Chhattisgarh with our Chhattisgarh government. We already have a JV company there, and the initial results show a big prospects of copper deposit. We have one copper deposit in Siddhi district of Madhya Pradesh,
it's been an eventful tenure over here, no doubt. Just wondering, looking forward, first of all, the business you're in is closely linked in its performance to commodity cycles, which you can't do much about right now. Commodity cycles are upwards. What is the big challenge you see ahead for a company in your space? And tell us a bit about the focus on other rare earth minerals, etc., and mining that you're looking at, because that is also need of the hour for the nation right now.
The biggest challenge, I just forgot to mention that we are already moving into Chile through Codelco. That is our big challenge, because we have to start the exploration and then subsequent production at the earliest, because Chile or Codelco can help us in achieving a big, large-scale productions. Number one challenge is there. Number two challenge, what we foresee in India, as far as rare earth you mentioned, we are already doing a lot of exploration in our tailings of Khetri mines and Malanjkhand mines. We are the first company in the world to drill those tailings. We have got good information about rare earth, but how far this rare earth is extractable? And molybdenum from the Malanjkhand tailings is extractable, I mean to say. That is to be seen. Yesterday, we had an MOU with Engineers India Limited, EIL, for this particular purpose. I was in Delhi yesterday, and we discussed with the director on the large scale, how the plants can be put up, what should be the pilot scale plant, lab scale plant. So we are moving in that direction. So EIL is going to help us as far as critical minerals and rare earth, what you asked. And the testing for the rare earth has already been completed at Khetri. I mentioned we already have, but it's not very high grade rare earth, but it has. So now the extraction part is to be seen. Let us see how Engineers India Limited helps us.
Thank you so much, Mr. Singh, for joining in and speaking about this very, I would say, eventful tenure that you've had and the future of Hindustan Copper. Thank you for your time.
Thank you, ma'am. Thank you. Thanks.
All right, Bajaj Consumer in focus as the company's growth portfolio crosses the 200 crore mark, while Almond Drops Hair Oil remains a key growth engine, contributing nearly 80% of the business. But before we speak to Naveen Pandey, the MD of the company, Mahima is telling us what's been happening with Bajaj Consumer.
Right, so Tamanna, as you rightly mentioned, Almond Drops Hair Oil has been the growth engine for Bajaj Consumer, contributes over 80% of the business and has grown significantly in terms of volume also in FY26. Plus lower unit packs have also aided growth. Chassis of rupees 10 have grown by around 25% plus. I think the plus point for Bajaj Consumer has been Project Arohan, because that is the GT transformation project that they took up, and the, markets where they've implemented this already is growing 4% faster than the non-Arohan markets. In terms of guidance, they've said that the almond oil markets are the growth portfolio basically is expected to be around 500 crores in the next 3 years, and they're also expecting to deliver double-digit revenue growth going forward as well. So this is the overall view of how things have fared for Bajaj Consumer. I think it will be important to understand as to how raw material pricing is faring and what price hikes and volume growth is going to look like going forward.
Mr. Pandey joining in this morning. Mr. Pandey, very good morning to you. We had a conversation earlier on the show talking about whether we're going to see any impact on consumption appetite if the monsoon continues to be poor. The fact that commodity prices have gone up and all companies have had to pass it on. Just want to start with that kind of a check with you first before we get into specifics on the company. Are you seeing any kind of an impact on demand or having to pass on high input prices?
Thank you, Tamanna, for being here. Pleasure to be here on your show. What we see in terms of inflation, right now the inflation has just started going into the market. So we have not really seen the full factor of inflation getting implemented. The government has done really, a lot to try and cushion that in terms of fuel prices. Most of the FMCG companies have also tried to cushion as much increase as we can and only pass the bare minimum which is needed. From a sustenance to go into the market. Now, these products and the inflation is only likely to hit from starting right now to the next 3 months. And hence, any impact of it on subduing the demand, etc., will only likely to come in and show in the next 2 quarters. However, given what we've seen, the kind of, inflation being passed off, by and large, one should remain confident that it is not going to change the nature of the market too much. At least that's the belief at this point of time.
Okay. Just wondering, what is the extent of price pass on that you had to do, Mr. Pandey, and have all of the inflationary prices been passed on in entirety to consumers?
So what we have done, is that we have taken a view of what we are likely to see as a steady state cost. Which is, not the maximum cost inflation which we are getting, but what we are likely to see steady state towards the, full year. And basis that we've taken a price increase, which is close to be around 5%, which has got executed in the Q1. And we believe that this should be sufficient because we expect easing to start happening in the next 2-3 months in terms of many of our key raw materials. And that should be enough. That's the way we've done it.
Okay. Mr. Pandey, good morning. Neeraj here. Just a quick follow-up on that, simply because almost everybody is saying that revenue growth is not a problem or not as big a problem area as margins could be. But I think in the April call, you had repeatedly attributed the margin expansion to a deliberate revenue management stack and not transient items, right? So in some sense, will you be better placed to manage this cost inflation, how much to pass on, how much to retain and still maintain margins picture for yourself? And safe to assume that, or rather, I'm asking you if one can assume that you'll be able to at least reach the levels of last year, even through this conflict-ridden period?
So if you were to, look at in terms of operating margin, what we achieved and what we were from full year. So obviously our Q4 was much higher than the full year average. And what I did say, yes, that we've achieved this Q4 number through a back of structural fundamental issues. It's not a, one-off which has led to that kind of a margin. And hence, we would like to remain range bound in that margin territory. When you say range bound, 150 to 200 basis points is the kind of movement we can keep on having depending on what is happening on the demand situation, what is the nature of competitive intensity, as well as cost inflation on the bucket. But by and large, I think we will, we would like to operate in that zone. So that's what we remain confident of. The aspiration range which we have set for ourselves, again, I will not say it's a guidance, but more an aspiration range is we are happy to operate anywhere in the low 20s to a mid 20s number.
Got it.
So I don't see us, disappointing ourselves on that in the near term.
Perfect. That's good guidance. The other thing, Mr. Pandey, is that the last 6-7 years or maybe 10 years of this whole FMCG consumption construct has shown that it's not necessary that size has been an advantage. If you will, a lot of private players who started off small or smallish have actually had a real good growth both in revenue and profitability as well as in the way the market has valued them, whether in the private markets or even in the listed space, if you will. Size has not been the advantage. Now, therefore, I'm trying to understand when you think of yourself, from where you are right now to, let's say, in the next 5 years, do you reckon that there is a steady state, mid-teens, low teens, high teens growth, CAGR or single-digit CAGR that you envisage, or do you believe there could be some serious bump up in growth possible by virtue of newer product categories, size, agility, etc.?
See, what we believe is, we would want to be in the, double-digit to a teens kind of a growth rate. Now, that will be a combination of our core brands coming in and kicking into a high single-digit, just about double-digit revenue. The growth portfolio, kind of operating in strong 20s, early 30s kind of a growth over a long period. And then boosting ourselves with certain inorganic or really new category, new product opportunities. Now, so what we should see is that what I would be happy with is that if we are able to maintain that double-digit momentum and have some years of exceptional growth. We've had last year, which was very good, 20% plus growth for us. If we can get in the 5-year journey 2 or maybe more years of such like that, it'll be good. It'll be difficult to say what those years would be and where we will, kind of hit the ball out of the park. But I think maintaining a steady stream and then having a couple of good years in between can make a lot of difference to us.
Okay, where do you see when you're looking at the remainder of the financial year, Mr. Pandey, where are you seeing the growth areas coming from? What is new and exciting that's happening with Bajaj Consumer?
So for us, I think we started the journey of concentrating back on Almond Drops close to a year back. And we are seeing a lot of benefit of that in terms of revenue growth, share growth, and across geographies, across channels. I think we will still continue to get some tailwind into that action, and that should stretch into the year. We have started, a lot of fundamental work on our growth portfolio. We finished with 225 crores of revenue in the last year, and we would want that portfolio to become 450 to 500 crores over the next 3 years. So obviously there is a sizable task in terms of revenue growth coming in from there. If you were to look at the same thing from a channel perspective, today again it's going to be a very multi-dimensional growth for us. Growth is going to come on back of both new age channels in organized trade and e-commerce, quick commerce, as well as the general trade. And hence it's going to be a broad-based multi-category growth for us in this year.
Thank you so much, Mr. Pandey, for speaking with us this morning. We'll take a very short break. We're coming back with a big conversation on the other side on NDTV Profit. But just before we got into that break, wanted to mark that Alan Greenspan has passed away at 100 due to Parkinson's complications. But, he's best known, I think, Neeraj, to all of us who've been tracking financial markets. There was a time when, and this happens with every Fed chief, right? They have outsized power over the world. But Alan Greenspan was in a different league altogether.
in a different league altogether. Did it during some very interesting times when this whole conversation of de-dollarization picked up, right? 2000, whatever, that 2000 to 2010 decade. But Tamanna, the other piece is also what a career, right? Jazz music on saxophone in teens, dropout because wasn't good enough, studied economics, then created the path that took him to the highest level of policy making. I mean, what a distinguished career.
Yeah. His biggest quotable quote was when he warned of irrational exuberance. And of course, that irrational exuberance caught up several years later. But thinking about that point of irrational exuberance today, in light of everything that we're seeing around AI, etc., little telling. So go well, Alan Greenspan. You've made a mark around the world. We'll take a very short break, but we're coming right back with the big conversation on Talking Point. Manish Sonthalia joining this morning. Don't miss it.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
All right, welcome back. Manish Sonthalia, Director and Chief Investment Officer, MK Investment Manager, is joining us this morning on India Market Open. Manish, always a pleasure to have you on. Right now, once it seems like the worst is over, the euphoria one would expect in Indian markets is not really being seen. Why do you think so? Do you think fears of geopolitical tensions are getting replaced by fears of what a poor monsoon may do?
Tamanna, good news sink in slowly, bad news get priced in instantly.
Yeah.
So that's basically getting, done even now. Markets do climb a wall of worry. We have climbed the wall of worry as far as the Middle Eastern crisis is concerned. Things are behind us. I don't see any reason to be bearish. Of course, over a period of time, we'll be headed higher from current levels. This is what I believe.
Okay, so where is that growth going to come from? That recovery which you say will come slowly because the good news gets priced in slowly. Where do you think that's coming in from?
A host and plethora of sectors, Tamanna. Basically, this whole Middle Eastern crisis has exposed energy transition globally. So this is one of the most common themes across the globe. So anything to do with energy transition, solar, renewable, transmission, electric vehicles, batteries, pump hydro, these are the areas which are in focus. Second biggest area is basically defense or advanced manufacturing, medical, semiconductor, defense manufacturing, aerospace manufacturing. These are newer areas where a lot of focus, a lot of initial capital is getting sunk into, not yet fully priced in vis-a-vis the growth for the next 5 to 6 years. So this is another area. Third would be data center ancillary, basically your AI thematic play. India is late in the curve, and again, for the next 4 to 5 years, you got to find your picks. Near-term valuations are very, very pricey. Then you have the auto ancillaries, which is particularly doing quite well. You have the healthcare sectors, hospitals, whole lot of sectors. The only worrisome point is that the mainstream sectors, which are getting not the valuations or the banking space, the large banks or the IT, they are slightly headwinded. So I would believe the action is more outside the index, Nifty 50 or Sensex. But there's a whole lot of bullishness across sectors in India, but mostly outside the index.
So, sorry, you said, Manish, sorry, just so that I don't get it wrong, did you say mostly outside India?
Outside index.
Outside index, yeah, which is fine. I mean, we've been talking about how the trade may not be in the Nifty, but beyond the Nifty, right? I mean, maybe we'll have many more indices, Nifty, next 50, then Nifty 101 to 150, and then more and more. Yeah, maybe more and more people can trade. But just those things too. But you spoke about a plethora of sectors, Manish. Just want to understand as a primary divide, because the currency, despite, I mean, we have macro stability now, but the currency is at about 94, maybe it strengthens to 93 or thereabouts, but a big benefit for exporters versus what the currency would have been at 85 or 86 or 87, what have you, right? Are exporters, whether it's textiles, auto anchors or some others, a good large position to have in the portfolios or not quite?
The two areas of right to win for India is basically textiles and auto anchors. They are the factories of the world. And now with FTAs, European FTA around the corner within the next 2-3 quarters, British FTA, getting operationalized from 15th of July. I mean, cotton prices today are lower than what they were last year. Yarn spreads from from 75 cents has now moved up to $1. So textiles is in a sweet spot. Auto anchors in any case were doing well, both the ICE as well as your batteries, the EV portion. Aerospace, another area of defense, from build to print, from moving away from build to print to build to manufacture. Again, a whole lot of names out here which are doing quite well. So, India's got the breathing space till 30th of September, because of the RBI initiatives, $50 to $70 billion. 93 to 94 is a stable level. Nowhere is the fear that the currency is going to breach $100. That was the biggest fear in the minds of everybody. The macro conditions would have looked very, very vulnerable at 100. That's not happening, at least till about 30th of September. That's a breathing time. FII flows, outflows have abated. And I think these are all positives. I even hear that FIs are starting to turn very positive in India. From the next 2 years perspective, maybe the aggressive selling has broadly been done. So we'll wait and watch. But yeah, these are some of the positives currently.
Okay. And Manish, just wondering, because you said the right to it is in textiles and auto anks, textiles to some extent have made a first move, right? I don't know if it's the first full move, but there is definitely a move that has happened. Are there still attractively valued textile opportunities from a couple of years perspective?
100%. You know, the advantage that India gets over Bangladesh, 12% duty differential, and the large addressable market in the US. Of course, that will be known after the trade deal gets signed. The final trade deal gets signed with the US. But Europe and the British one is almost broadly done. The 12% duty disadvantage that India had over these years, is no longer going to be the case. And India is very competitive in textiles. And I believe valuations are still very, very sanguine. You haven't priced in the growth from the next 2 to 3 years perspective. So a great sector to be invested in current times. Early mover advantage would be there. But yeah, that is how I feel from the next 2 to 3 years, still a lot of money to be made.
Okay. Manish, one trend that is being seen is any company in Indian markets as well and in the broader indices that has anything to do with an AI data center play, even obscurely, is seeing huge investor appetite. I mean, I don't want to name it, but there is a company which has announced that it is contemplating a deal with a large global player, contemplating a deal. And that stock is on fire. Do you think that hunger and that appetite needs to be looked at with a little skepticism, or are you also on the hunt for such plays?
No. All these narratives have to be looked at with deeply under a microscope. Anything and everything. We have gone through these global financial crises and a whole lot of euphoria, narrative-driven trades. That's not going to be, fruitful in the long term. Fundamentals need to be addressed. Valuations need to be addressed. So yes, the data center ancillary plays are for real. AI investments are going to happen from 1.5 gigawatts to around 5 to 6 gigawatts. But India doesn't have a play in either the chips or the memory. But anything other than that, whether it's chillers or optic fibers, these are for real. You have very few plays. But these the guys who have seen a lot of years under these businesses are going to be for new businesses without too much of fundamentals to back. I mean, I would look at those with skepticism. Yes, the space is very promising, but one needs to inspect and look at these companies very minutely.
Okay. In terms of where those opportunities lie, because it's all talked about in vague terms, Manish. The plumbing around data centers, the power, generators for data centers, cooling solutions for data centers. But what have you spotted? I mean, I'm not asking you for stock names, but are there real cogent stories out there that you've seen?
Yeah. So the 50% is chips, 30% is memory. We don't have these plays. 20% is everything outside them. So networking, chilling, cooling, plumbing, standby power, engines, catering to that power. These are all very real. From the demand perspective, you have many companies, catering to these, or let's say the energy itself, because AI is nothing but a play on energy tokenization. So energy itself, whether it be solar, renewables, etc., these are all AI plays, but one needs to carefully analyze the growth, the valuations.
Okay. Manish, you've not shied away from making bets on really small names in your portfolio as well, right? For the longest time, you said that small is beautiful, you're getting ideas there, be it capital markets, etc. Which brings me to my question around the smaller capital market players, be it, and they are in the listed space, but be it small distributors, be it small brokers, be it maybe smaller AMCs, though none of them are listed right now, but maybe at some point of time they will. Would you bet on some of these niche plays in the capital market space, if the valuations are right, considering that now direct market access is possible even for retail and not just institutions, if you will, and therefore ultra HNIs come in, so that may impact some of the smaller brokers, etc., etc. Do you like some of the smaller capital market plays?
Absolutely. I think intermediation is a fabulous business, and all the capital market plays are basically a play on intermediation. And the TAM is going to be very big going into the next 5-10 years. Of course, one needs to bet on what's the right to win in each of these smaller companies. It's not that everyone is going to be successful. Somebody has something unique. Even though they are small, they have a unique positioning. Maybe those are the names which are going to get very bigger. And the capital intensity in the business is just not there. So, currently in the overall scheme of things, too small and AMCs have still a long way to go on the upside. But I say mid-sized AMCs would have a right to win. So, because performance draws AUM and you get rewarded on AUM in terms of your fees. So mid-size, when they are mid and they are on their way to become large, these are the areas to bet on as far as the AMC is concerned. Distribution, wealth management is a fabulous business. The right to win is now established firmly with the Indian guys. All the foreign wealth management guys have left. So people who have stayed all along and those who are building their business brick by brick, because it's not a very capital intensive business. One who stays on the curve, on the growth, because penetration of equities in India is still a long way to go. And we are nowhere close to where developed markets or even Southeast Asian countries are there. And again, it's an intermediation business, great businesses, high ROEs, great payouts. So yeah, these are some of the plays where I would bet on. Of course, broking, platformized broking, digital, these are again, less capital intensive business, whole lot of free cash flows. When India moves from 4 trillion to 30 trillion in the next 25 years, these will be very large plays. And again, the number of PAN accounts and the number of broking accounts, 75 crore PAN accounts, maybe 9 to 10 crore, broking accounts, still a long way to go. So yeah, these are some of the plays where I think still a long way to go.
What about exchanges? Since you spoke about that whole capital markets play, there's a mega IPO around the corner. How are you feeling about exchanges?
So basically it's a 10 to 15% growth till perpetuity. Apply the formula. I would believe a 50p. That year's earnings is part of the course, whether it is NSE, whether it is BSE. The other ones, the Metropolitan Stock Exchange or NCDX, still have to prove themselves. MSCI is 1,000 crores market cap. Is there a place for a third exchange? Maybe yes. When the size of the opportunity, they would not like a duopoly to exist. Maybe a 3-player industry is not bad for a place like India. So that's an option value, but clearly, exchanges will be great money makers for the long term. You don't know what's going to be in place for NSE in the short term, but definitely in the long term, you're going to make money.
Okay. And, the other theme that seems to be picking up, where there's more excitement than your traditional banking, financials, and IT, is industrials. Everyone's talking about industrials, the hardcore infra plays. Is that something that excites you?
Yeah, 100%. So, the amount of investment outlays that are being undertaken by government of India as well as the private entities, the green shoots probably have not disappointed. As far as the private capex is concerned, it's only going to pick up. So one needs to be wary about valuations and where their niches, generalized infra players will not gain. But anything to do with power transmission, etc., would be clearly, favorites, or let's say buildings, infra, renewables, transmission, distribution. These are areas with interest.
Thank you so much, Manish, for speaking with us today. Always a pleasure. Wide variety of sectors that Manish Sonthalia spoke about. I think one that stands out is be cautious about narrative push around everyone and everything that's talking about AI and data center.
Yeah, just so that we are clear, viewers, we are not saying that the company that we've spoken about ad nauseum for the last couple of days, there is an issue around it. Just
nothing specific.
Yes, nothing specific. But yeah, there is merit in having this per se. But that's about the time that we have on the show. But there are a couple of other things that we should focus on. First is this whole piece around the trade deals and the conflict, etc. So United States Trade Representative Jamieson Greer is the two-day India visit of him. We'll see a conclusive agreement to the trade deal by next month. Rishabh is here with more details of the visit. Rishabh.
Absolutely. What you have is a very crucial set of talks that is set to kickstart today here in New Delhi. You have the Commerce Minister Piyush Goyal, and on his first visit as US Trade Representative, Jamieson Greer is set to be in New Delhi for the next 2 days. A very important set of talks. Why? Because you have what is going to be the final touches that will be given to the first tranche of this India-US trade deal that has been in the works for over a year now. What we're looking forward to, something that US Ambassador to India, Sergio Gore, has also said that we're 99% there. It's just that 1% that is left. And that 1% is perhaps the tariff differential that India will have versus other manufacturing economies. You have earlier, India had negotiated its tariffs down from about 25% to 18%. And that was considered a win because we were at a 1 to 2% tariff delta versus other manufacturing economies like Malaysia, Indonesia, Vietnam. And that is something similar is what India will be batting for is this tariff competitive advantage that we will get versus other manufacturing economies. What India has maintained throughout these negotiations is its red lines. And that means that agriculture and dairy are expected to continue to be outside of the framework of this deal.
We'll wait and see those details, Rishabh, and you'll be on top of it. We're right out of time, but thank you so much for that update. That's all the time we have on India Market Open. From Neeraj, me and the team that put the show together, thank you so much for watching. It's going to be an exciting day, so stay tuned for a lot of action on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together.
Welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin dips below $64,000 per mark. Derivative activities improve. Franklin Templeton files Bitcoin DRIP ETFs. Clarity Act boosts XRP ETF inflows. Bank of England removes stablecoin holding caps rules. Bitcoin dips below the $64,000 levels and the total derivatives open interest has increased and the average funding rate that has turned positive. Now, of course, this is a bullish divergence because of rising open interest and positive funding rates. This is suggesting that the traders are rebuilding their leveraged long positions even as the spot prices struggle. Franklin Templeton has filed for 2 US equity ETFs whose stock dividends are systematically reinvested into Bitcoin, starting at 95% equities and a 5% Bitcoin with exposure capped at near 20%. The products remain preliminary with fees, tickers which are undisclosed, and this effectiveness pending SEC review, potentially as early as September 2026. Clarity Act is a major US market structure bill that would classify the qualifying tokens, including XRP, as digital commodities under CFTC oversight, while leaving investment contract tokens under SEC jurisdiction. Remember, CFTC stands for the Commodity Futures Trading Commission. Analysts link this clearer framework to growing spot XRP ETF inflows as well as increased institutional participation. Well, Bank of England has removed proposed limits on individual stablecoin holdings and eased reserve requirement in its final policy and draft rules for systematic stablecoins, and the initial threshold of almost £40 billion, which is nothing but $52.8 billion, that's the number looking at the stablecoin issuers now, which they can hold up to 70% of the reserves in the short-term government debt and up almost 60% level in the proposed earlier consultations. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, we have seen there is a negative bias coming in for Bitcoin and Ethereum, but larger plays are quite flat. If you look at the support and the resistance levels, it ranges between 63 to $65,000 when we talk about Bitcoin. Well, time now to take a look at the crypto strategy for the day on the Crypto Decoded. Here's what to keep in mind today. Well, there is a renewed interest despite the fear coming in the markets. Remember, the allocation should be of smaller size going ahead. If you talk about the overall strategy, it is likely to be neutral to range-bound movement going ahead. Remember, important trigger is the spot ETFs. If these flows start coming in from the institutions, that is where we can see some kind of positive momentum happening in the cryptoverse. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto regulations, taxation, or the broader industry. The team is available to provide guidance and help users make uniform decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri, and this is a show that gets all your stock related queries answered. For viewers who are tuning in and wondering where you can ask us those stock related questions, you can ask them on the numbers that will be flashing on your screen up there. There you go. Those are the numbers where you can go ahead and call us or even send us a WhatsApp with all your stock related questions. While you do that, let's take a quick look as to how the markets are doing. The Nifty 50 absolutely flat above the 24,100 level. At least that's a relief, but it's up by about just 0.06 odd percent. Let's try to pull up the heat map as well to see as to what are the counters that are contributing positively. You have your pharma names up again in trade today. Cipla, Dr. Reddy's, Sun Pharma, Apollo Hospitals, all in the green and topping those charts. Followed by something like a Tata Consumer, Trend, Shriram Finance doing fairly well. But on the flip side, you have Infosys yet again losing ground, down by about almost 3%. Hindalco Industries, significant profit booking is coming in for this one as well. TCS, Tech Mahindra, Wipro, HCL Tech. So all your IT names continue to be under pressure. Let's try to pull up the Bank Nifty. The Bank Nifty is also almost flat around the 57,900 levels is where it's trading at right now. A range-bound trade is what we are seeing for the Bank Nifty. Let's also try to pull up the sectoral heat map to see as to what sectors are doing in trade today. Of course, your pharma and realty doing fairly well, both up by about 1.7%, 1.8% each. Consumption pack also fairly doing well, but on the flip side, you have IT, which is down by about 1.8%, followed by metals, where there's profit booking coming in, 1.6% of a downtick, and PSU banks is because of which the Nifty Bank continues to be under pressure, down by about 0.9 odd percent. Let's also see as to how the advanced decline ratio is faring at the moment, because the broader end of spectrum yet again is led by the small cap index. Let's try to pull that up. There you go. It's diverged now and almost even Stevens as far as the advanced decline ratio is concerned. But, Puneet, like I was saying, it's the small cap index which is at least keeping that number in check.
Well, most certainly, we continue to see some pressure being built on the mid-cap names over the last couple of days, and it's important to see what happens with those, because the buying largely continuing in the small cap index over the last 6 to 7 months. Also, you've seen, in the small cap index, funds give 8 to 10% of returns, but those have been much higher compared to the mid cap names. So the small cap names continue to augur well. We've been getting a lot of questions on the small cap side of things as well, but when you look at the BSE 500 also for the individual names now, there have been some which have been dominating the news flow. Today you're seeing pressure on stocks like New India, Vedanta, as well as Nalco. IT continues to find its hiding space, essentially still down about 2.5% to 3% now on Infosys. Hindustan Zinc also around 2.8%, while on the other side though, Cohance, which has been under pressure for the last few days, is now starting to see a very strong up move, up 14%. Pharma continues to do well. Yet again, we've been getting so many queries on the pharma space, individual names as well with our guests. We'll take those today as well. Piramal Pharma up, Rajesh Exports, seeing a revival. Lodha as well as Prestige also doing well in trade today as well. But let me welcome in our guest for today, Astha Jain, Senior Research Analyst at Hem Securities, and Swati Hotkar, AVP Technical Research, and Nirmal Bang joining in now. To both of you, thanks so much for joining in, giving us time today on the channel. Let's start taking the first stock-related query now, and this one is coming between Tata Motors commercial vehicle, passenger vehicle, as well as Ashok Leyland. Our viewer Sanjay from Bengaluru wants to know which is the best buy for the next 1 year or so. Astha, very good morning to you. What would be your preferred pick, because you've seen crude price is also come down a bit, and that's favored the CV cycle, CV makers. You also had the Tata Motors investor day today, and we put out those flashes an hour ago on the company targeting good growth in free cash flow. How are you looking at these two counters, and anything that you like amongst the three names?
Hi, good morning to everyone. So talking about this space, I think Ashok Leyland is a better choice if I would like to go. Now here the time horizon also matters. If the time horizon is more than 3 to 5 years, then definitely Tata Motors is one of the candidate which can have a high potential over the long period of a time. But if I talk about between these two counter, I think Ashok Leyland should go ahead, because what we know that Ashok Leyland has got certain points which are very much particular. First of all, their market share is very strong. So what I like about the Ashok Leyland is that a very strong market share. Secondly, what I believe that they are a very good story for the infrastructure play. If you want to go for any automotive counter which is a good infrastructure play, then Ashok Leyland is something can bet upon. Tata Motors, they have one negative is that there is over dependence on the JLR. So that is what I believe that one of the concern which I'm not very much comfortable with. And here in the case of Ashok Leyland, there is no such dependence. Plus margin sustainability is always there. So I think if anyone wants to go in between these two, so I'm choosing Ashok Leyland over Tata Motors Prestige.
All right, okay, so that's the view coming in on all of these auto names. The next one that we have is on Lemon Tree. Our viewer Khurshid from Delhi wants to know the technical view on this one. He's holding 400 shares, bought at the levels of 145, and wants to know if he can continue to maybe add more average down. Swati, a very good morning to you. Would you recommend that for Lemon Tree? Swati, I think you're on mute.
I'm really sorry.
No worries.
Good morning, Maima, and good morning, all of you. Definitely, the view is positive on the Lemon Tree. As of now, if we look towards the weekly chart, the stock is under the formation of a W-shaped pattern. No wonder the client has bought at elevated levels, but I will suggest the risk-reward ratio is favorable, so you can definitely average it out at the current market price, 190, 120 levels. For a short period of time, I'm looking for a target of 141, and beyond that level, 152 levels can be seen. So it's definitely hold and add-on positions can be created at the same.
Got that view, Swati, and welcome to the show. But let's go across, take the first caller for today. Bharat is joining in from Andhra Pradesh. Bharat, very good morning to you. What's your query?
Good morning, sir. I am holding Kirloskar Brothers at the price of 2172. Can I average or can I hold us?
And Bharat, did you buy this looking at the charts or the fundamentals?
Yes, sir.
No, which one? Either one or both of them?
Kirloskar Brothers, technical view.
Technical view, got it. Swati, you know both these counters actually, right? Kirloskar Brothers as well as what we've seen on Kirloskar Oil Engine. Also, I'm sure you've gotten a lot of queries over the last few days. But what do you make of Kirloskar Brothers for Bharat? He's bought shares at 2172. Should he continue to hold?
Yes, Kirloskar Brothers, you can definitely hold on at the current market price, because from the last few trading session, Puneet, we have witnessed that once the stock managed to give the breakout of 1800 levels, we are witnessing a swift positive rally, which is likely to be continued for a near-term target of 2250 to 2300. Wait for some more time if you want to average it out positions. I believe if we are getting any dips towards to 1800 and so level, that levels will be a good level to take a average out positions, so that the buying price will come down. But the initial targets I'm looking forward is 2250 to 2300 levels. So you can definitely hold on the Kirloskar Brothers.
Okay, all right. So that's the view coming on Kirloskar Brothers. I think we've got a caller waiting by, if I'm not wrong. Ajay. Ajay is waiting by on the call. Ajay, a very good morning to you. Go ahead, ask your question.
Yeah, good morning, ma'am, and good morning to all the panel. मैम मेरे पास क्वेश्चन है, मेरा क्रिसल मेरे पास शेयर है के रेटिंग वाला
ठीक है
51-26 पे 25 शेयर है मैम, ये काफी पिछले साल लिया था मैम, ये काफी नीचे है। क्या मैम इसको रखना चाहिए या इसको बेच के मैम कोई 1-2 शेयर जो हम ले सकें आज के मार्केट के हिसाब से जिनका है ग्रोथ, कोई बता सकेंगे मैम, कोई हेल्प कर सकते हैं इसमें?
श्योर श्योर अजय जी, पक्का आपकी हेल्प करेंगे। आपने क्या देख के स्टॉक लिया था? फंडामेंटल्स देखे थे, चार्ट्स देखे थे?
हाँ मैम, हाँ जी, ये मैम उसके बाद ये 55 तक भी गया था, फिर वो नीचे ही आता चला गया।
अच्छा, चार्ट्स देखे थे आपने?
नहीं मैम, फंडामेंटली मैम क्रिसिल की मैम ये बहुत डोमिनेटिंग कंपनी है, मतलब इसके मतलब अपने एरिया में, दैट इज ओनली रीजन।
ठीक है, श्योर, गॉट इट। तो मैं ये क्वेरी आस्था से लूंगी। आस्था, क्रिसिल पे क्या व्यू है आपका? अजय को होल्ड करना चाहिए या सेल कर देना चाहिए और लॉस बुक कर देना चाहिए? एंड इफ ही सेल्स तो किस में एंटर करना चाहिए गोइंग फॉरवर्ड?
अजय, मैं आपको एक चीज बताना चाहूंगी कि आपने बहुत अच्छे पॉइंट्स देखे, लेकिन इनके साथ 2-3 नेगेटिव्स हैं जो कि आप जरूर से ध्यान रखिए। सबसे पहले तो जो भी रेटिंग एजेंसी रहती है वो हाईली रेगुलेटेड एनवायरनमेंट में होती है, तो मार्केट्स को वो कभी इतना पसंद नहीं आता जहां पे भी रेगुलेशन आ जाते हैं, क्योंकि स्टॉक्स फिर उन रेगुलेशंस की वजह से थोड़ा सा कंपनीज पे असर आता है। दूसरी तरफ रेटिंग एजेंसीज में आप वैल्यूएशन जरूर देखिए, तो इसके साथ जो नेगेटिव है वो क्या है, इनकी वैल्यूएशन बहुत हाई है। तीसरी तरफ मुझे जो लगता है, क्योंकि इनकी जो पेरेंटेज है वो S&P से है, तो बहुत बड़ी डिपेंडेंस वहां से भी इनकी है, तो कुछ ये फैक्टर्स है। सबसे बड़ा फैक्टर तो मुझे लगता है कि जहां पे भी रेगुलेटेड एनवायरनमेंट में कोई भी कंपनी काम करती है तो थोड़ा इन्वेस्टर्स और मार्केट को वो पसंद नहीं है, तो ये थोड़ा एक इंडस्ट्री का फिनोमिना है जो अभी आपको समझना पड़ेगा। लेकिन बाकी चीजें इनकी काफी अच्छी हैं, तो वहां पे कहीं दिक्कत नहीं है। ये कुछ एक नेगेटिव मैं आपको जरूर बताऊंगी, क्योंकि देखिए डिविडेंड ये कंटिन्यूसली पे कर रही है, अर्निंग्स वाइज देखे तो अच्छी है। अब आपको करना क्या है, मुझे लगता है ये एक स्लो ग्रोथ आपको देता हुआ नजर आएगा, तो अगर आपको स्लो ग्रोथ से कोई दिक्कत नहीं है तो आप इसमें बने रहिए। और मैंने आपको कारण बताया कि क्यों ये स्लो ग्रोथ देगा, वैल्यूएशन ज्यादा है, रेगुलेटेड एनवायरनमेंट में काम करता है और पेरेंटेज S&P पे बहुत बड़ी डिपेंडेंस है, लेकिन खुद की फाइनेंशियल परफॉर्मेंस इसकी काफी बढ़िया है, तो उस वजह से यहाँ ग्रोथ तो हमें बिल्कुल देखने को मिलेगी, लेकिन आपको पेशेंटली इसको होल्ड करना पड़ेगा। ना कर सकते हैं तो होल्ड करने की सलाह मेरी इस काउंटर पे रहेगी।
Got that view, Swati, and thanks so much for that detailed view as well, because on CRISIL, something to watch out for, a defensive name in that sense, but there are some concerns highlighted by Astha, but she's also given some important points to watch out for. But let's go across, take another caller from Noida, and Viraj is joining in for a stock query. Viraj, very good morning to you. What's your query?
Hi, good day to everyone. So I want to ask, what is the good price to enter TCS for, a midterm?
And do you have, Viraj, any other IT name in your portfolio, or is this the first one?
No, I had the TCS earlier, but I sold it for a loss. Like I bought it at 3,500, but then I sold it. So I again want to enter it. So is it the right time? Is it the best price? Because it's already down. I mean,
and do you want to look at, and Viraj, are you looking at the fundamentals right now or the technicals?
No, I'm looking for the fundamentals.
Fundamentals, got it. Astha, then let me stick with you then. Once bitten, twice shy. Do you think it's good enough to buy into TCS yet again for Viraj right now?
So, see, there are certain positives about TCS. First of all, the strong deal when this company is having. So, and the dividend is also very strong. They are now, if you listen to the management, they are now speaking about the AI opportunities as well. And in fact, the kind of margin TCS is enjoying right now, it is one of, industry leading margin which it is enjoying. And it has got a massive scale. So, these all are the factors which any investor should always look after, any IT company. Now, what is the major concern that how they will going to deploy this AI thing into their ecosystem, first of all. So that is always the thing which analysts are looking forward for. So my thing here is that you can, stay invested in the TCS, maybe right now the environment is not very much positive for the IT companies. So maybe we will get some lower levels to, enter in. So right now, TCS is a good choice in the IT space, but do track the management commentary from time to time, what they are saying about the AI, because this is the major thing which is right now creating impact on these IT companies. So just watch out for those commentaries, comments, etc. Otherwise, stay invested in because their deal wins is really very strong. And my idea here is you enter at the lower price, not right now. So TCS is one of the counter which I would recommend to enter at the price level of around 2000 or 1990, etc.
Okay, all right. So that's the view coming in on a lot of these IT names. But, quick mention on something that was just flashing on your screen down there. Iran says technical talks on implementing MOU is concluded, and they've said that future talks to include Pakistan PM as well as Qatar PM. And it also says that group to be informed on sanctions of the nuclear issue. So that's the update coming in with regards to US-Iran war, something that was needed to be addressed. But let's take in your next question, which is coming in, and this is on Natco Pharma. Our viewer wants to know whether from a really long-term perspective of 3 years, Natco Pharma is a good hold, or is it better to book profits? 200 shares were bought at the levels of 700 rupees. So 41,000 of profit is where our viewer is sitting at. Astha, what would you recommend?
So if I talk about Natco Pharma, they are into, oncology, generics, etc. And what is positive is that, first of all, they have got a very, very strong balance sheet. So that is one of the points which we are liking about this company, that their balance sheet is very strong. And in the oncology space, they have got the leadership. So this is also very much positive. And going ahead, we believe that these points will continue to benefit the company because they are now diversifying geographically also very well. So remain invested in the Natco Pharma. This is what I believe. If there is no hurry to book profit, maybe you can wait for the targets of 1,000 to 1,100 in this counter.
Got that view, Astha, but let's go across, take another very quick caller before the rapid fire round. This is from Chandigarh, Christopher joining in for a stock query. Christopher, good morning. What's your query?
Yeah, a very good morning to you. I hold 700 shares of Vatek Vabag, bought at 1539.
Okay.
I'm looking for a 3 to 5 year view on the stock.
Got
and
it.
It's a good play on the semiconductor sector too, I guess.
Got it. Astha, Vatek Vabag largely, known for its, water play as well. Would you recommend Christopher to continue holding? He's bought at 1539.
Yes, sure. Now the war situation is now somewhat stabilized. So definitely India, Middle East, these are some of the, countries where the water scarcity is very high. And I think in such cases, definitely the companies like Vatek Vabag has got a very strong opportunity. So it is one of the company we all know it is into the water technology, etc. So definitely one should remain invested in this counter. Now there are various reasons for remain invested in. First of all, we always look after the order book. Order book is very strong. Secondly, we always look about the balance sheet. Balance sheet is also very, very strong. And thirdly, we always see what the profitability is like in the financial statement. So all these things are really signaling towards the strong fundamental which this company is having, along with the fact that they are got a very strong presence globally. So yes, remain invested in this counter. Maybe you can enter at the lower prices also of 2020 or so, but price target can be set at around 2200 to 2300.
All right, okay, so that's the view coming in on Vatek Vabag, but it's time for a rapid fire round. Astha and Swati, you both know the drill. The first question that we have is on HDFC AMC or ICICI AMC. Which one is a better bet for the next 6 to 12 odd months? Swati, where are the charts looking more attractive? Sunita from Delhi wants to know.
I'm more positive on the HDFC Bank, HDFC AMC, because it is under the form which is of an inverse head and shoulder. Upside target I'm looking for 2900, so you can definitely go for a long position.
Okay.
Also on Sumitomo Chemicals as well, Swati, our viewer Lalita has bought shares at 504, currently sitting on a loss. Should she continue to hold?
Yes, definitely she can hold on. As of now, I believe that the 420 is acting as a good support, so maintaining that as a stop loss, you can hold on for a target of 450 to 470.
Okay, the next one that we have is from Soumya, who's writing us from Bengaluru, asking about Hindustan Copper. She's got around 50 shares, bought at the levels of 605, wants to know if she can continue to hold average and what should be the short-term target. Swati?
Now, my view is a little bit cautious. Hold on by maintaining a stop loss of 500 rupees. Any pullback rally towards to 540 should be utilized to exit the longs.
Is it a good time to buy into Anant Raj as well, Swati, looking at the charts?
Yes, definitely you can go for a long positions, but above it will be conditional buy call above 540 levels, maintaining a stop loss of 510 for a target of 580.
Okay, Nalco is the other one. Kaushik from Gujarat has bought 40 shares at the levels of 222. Asking if metal cycle is over, it's time to book profits. Asta, any view on this?
I don't think so that one should book profit at this point of a time. Remain invested in this counter. We believe it will go till the level of 390 to 400 in the medium to long term.
Sunil from Vizag has been holding on to Reliance Industries at 1300 but hasn't made returns. So, Asta, question one, should he exit and he wants to buy an energy stock? What would you recommend?
I don't recommend him to exit from Reliance first of all because we are still positive on this counter. Maybe times are not good for it, but it will again move till the level of 1400 to 1450 in the longer term. Stay invested in.
Okay, Indocount Industries is the next one. Our viewers bought 34 shares at the levels of 297. Raja from Chennai wants to know if you can continue to hold, sell. Swati, your view on this one? Today it's buzzing slightly. Notla also has initiated a coverage, but overall technical view?
View is positive. Hold on for a target of 420 to 440 levels. Maintain the stop loss of 375.
Got it. Praveen from Chennai wants to know on Jyoti Labs as well. Asta, the big Henkel has now moved out, so that gap is there in the portfolio. Is it a good time to look at it or wait for some clarity?
Wait for some clarity. Don't enter into this counter as of now.
Okay, the next one is on HDFC Bank. Malika wants to know whether from she's bought it at the levels of 750 and 700 shares is what she's holding. No specific time horizon, but Asta, from a long-term perspective, continue to hold.
Sure. Hold it for the price target of 850 at this point of time.
All right, okay, so that's the view coming out of HDFC Bank. But with that, it's time to step into a very, very short break. But don't go anywhere. We'll be back with answering more queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your WhatsApp queries. On the top of the screen is the number that you can use. You can also call us for those queries as well. But the next one, and it's a very interesting query coming in from Ishwar from Kolkata, who's a regular viewer. He wants to know about the long-term potential of the defense sector, and he's missed out on this rally and has been, he's written his query as well because it's a little difficult to identify. And Ishwar, we've all been there in the new space that's been consistently doing well, so he's feeling a bit of FOMO, Astha. Wants to know for the next 3 to 5 years, what are some of those couple of names that he can buy and sit tight? What would you recommend? Astha, I think you're on mute.
Sorry. I'm sorry. So yes, the potential is really strong in the defense space because with the rising defense budget, we are seeing growing export opportunities as well as, Make in India initiative, a kind of geopolitical environment which we are living in. I think these all factors signal towards the strong potential of the defense counter. In that, we really like, first of all, BEL, Bharat Electronics Limited. Secondly, we like Paras Defense. We find it also very strong. Thirdly, data pattern is also looking good to us. So these are few counters, but that doesn't mean that list end here. There are various other stocks also. But if anyone wants to go, then these are also some of the names where one can invest their money in.
So that's the view on some of these defense names. The next one that we have is on Cupid. Bindu from Hyderabad says she's holding 1270 odd shares since the levels of 86 rupees. Wants to know if she can go ahead and book profits. Swati, a good amount of profit is what she's sitting at right now. Do you think there's more upside left or should she book profits?
The counter is sitting at all-time high levels. Definitely, and he or she bought at very attractive levels. Definitely, partial profits can be booked at the current market price. Another partial you can hold on for a target of 195 to 200 by maintaining a strict stop loss of 170 rupees on a downside.
Correct. Well, the next counter coming in is on Piramal Pharma, and we spoke about Natco with Astha. So, Astha, does Piramal also come into your focus? Pawan Kumar is holding shares at 166. Counters recovered after a really long time, Astha. Is it a good buy? And if so, should he continue to hold?
So what I believe that first of all, they are not only operating in CDMO space, but they are also operating in, complex hospital generics. And I believe, in fact, consumer healthcare is also one of the segment. Now, the kind of, what we are seeing that this company is now started reducing its debt, and it was at one point of a time a very debt heavy pharma company. So now they are now started reducing their debt levels. I think that is basically making this counter attractive at this point of a time. And this counter is also looking good because they have got a very strong CDMO business with their global manufacturing, facilities which they are having, as well as they are having presence globally. So I think that this counter is also looking good to us. And today we have seen that the pharma space is also working well. So we are positive on the Piramal Pharma, but it will take some time and it will not enjoy that kind of valuation which the other pharma companies are enjoying. Maybe we are seeing now the debt is reducing, but investor wants to see more out of this company. So slow, maybe a slow revenue generator or a value generator. But yes, one can remain invested in this counter for the price target of 200. However, it is more than the cost price which the investor has put their money into this counter.
Okay, all right. So that's the view coming on Piramal Pharma. I think we've got Bhaskar waiting by calling us from Hyderabad. Bhaskar, a very good morning to you. Go ahead, ask your question.
Yeah, good morning. I'm holding Enviro Infra.
Okay.
1,000 shares at price 225. I want to know the technical.
Okay, Bhaskar got your question. Swati, your view on Enviro Infra as to what are the charts indicating?
At the current market price, definitely the positive move is likely to be continued. I believe that the stock has a potential to reach up to 240 to 250 levels. So you can hold on the long positions for mentioned targets. If you want to any kind of a stop loss, 205 is acting as a crucial support level. So by maintaining that as a stop loss, you can hold on the longs.
Also, the other question, coming in now, and this one's from Raghunath Nair on all cargo logistics. He's holding shares at almost 20 odd rupees, holding 3,100 of them. And, it's been down and out in that sense. Swati, would you recommend him to continue holding this stock or probably book out, buy something else?
Puneet, as of now, I will not suggest to book the losses at the current market price because the counter is already trading at the oversold zone nearby at those level, and it has a very cluster support zone by 7.5 levels. Definitely a pullback rally is witnessing in the near term future, which will take a counter towards to 10 to 11 rupees. On every rise, you can definitely exit the long positions. If you want to invest into some other stock, I believe delivery looks very promising at the current market price, or if you get a deep towards to 5 to 7% on a downside, you can go for a long position into the delivery.
Okay, all right. So that's the view coming on delivery specifically, and of course all cargo as well. But we've got Shailendra calling us from Hyderabad. Shailendra, a very good morning to you. Go ahead, ask your question.
Panel members, and I want to know that VBL about this Varun Beverage Limited. I have acquired 360 scripts at the rate of 457.
Okay.
So, I have accumulated slowly, and the average price it has come on 457.
Okay.
So now I have to accumulate more and more, but I have to wait for this dip, or can I go for at this rate?
What is the time horizon that you're looking at, Shailendra?
Maybe for 2 years, 3 years. But I don't want any book as profits because I cannot daily watch and I cannot watch and daily.
Sure.
Because how much? Because recently, 550 it has done. Though I have not booked profit.
Right.
Still I have left. But my time period is 3 to 5 years or more than that.
Okay.
Because I am giving gift to my son.
Okay,
this
great.
Is all. Yeah. Not only this, I have a portfolio around 16 shares are there, big shares.
Right.
BSC like BSC, CG Power,
right,
and banking sectors, Motors, XAID.
Sure.
So all I am giving to gift because I am also a working government employee.
Right.
And nearing to retire for next year. This is just a gift for investment purpose.
Sure.
To my son.
Got it, Shailendra. That's a very thoughtful way of, planning your investments. So appreciate that definitely. But Asta, what is your view on Varun Beverages from a really long-term perspective? He's looking at a 3 to 5 year at least.
So view is positive because what we can say about this companies, first of all, such companies have to be analyzed on the basis of their volume growth. So strong volume growth. And the most important factor about this company is that their bottling relationship with the PepsiCo. So they have got that advantage of PepsiCo. And in fact, they are now expanding in the South Africa, if I'm not wrong with my knowledge. So, I mean, all these factors are really giving an edge to the company. Now, there is only one concern about this company, sir, and that concern is about the valuation. If we look at the valuation of this company, it is very, very high. So I think you can get the chances that we can see some sort of a dip also in the stock prices when they don't perform according to the financial expectations which we analysts have. So at that moment we can see some sort of a dip. But here our view is long term, maybe 3 to 5 years. So definitely it is a good stock to stay invested in. But please do a volume growth from time to time. Stay invested in.
Got it. Well, got the view. Astha, let's go across, take another one from Rakshit, who's from ODP. He wants to know about Apar Industries. Swati bought shares at 8,000. Is it a good time to book out or should he continue to hold? He's doubled his money at this point of time.
See, looking towards the momentum, the view is definitely positive. Stock is on the verge of giving the breakout of a flag pattern on the daily charts. So I believe it has a potential to reach up to at least 1700 to 17,400 levels. You can hold on the long positions, but if you want to keep any kind of a profit stop loss, 16,200 is acting as a good support levels. By keeping that as a stop loss, you can hold on the long positions.
Okay, the next one that we have is on Coforge. Our viewer wants to know if it makes sense to make a fresh entry at the current level. Swati, would you recommend that?
Maybe not at the current levels, but any dips towards to 1380, 1350 levels are the attractive levels to take a long position. So wait for some more time. Any dips towards to 1380 levels can be attractive levels to take a long positions.
Got it. The next question coming in now, and this one's, and of course, Coforge was an interesting query. I had the chance to speak to the management as well. Do try to catch it if you haven't. It's a shameless plug. But still, the next one's coming in on Vedanta. Our viewer Gauri Shankar is holding shares at 442 since April of 2025. So might have gotten some shares demerged as well. Asking if he can add more at the current levels. What would be your opinion, Swati?
At the current market price, the stock is under the selling pressure. It has given the breakdown of a head and shoulder pattern neckline, which was at around 292 levels. So we might witness some sort of a more selling pressure, which will take us counter towards to 270 to 265 levels. So wait for some more time. Any dips towards to 265 levels, you can definitely go for a long positions. And the immediate target will be at around 320 to 330 levels.
All right. I think we've got Yogesh calling us from Jaipur. Yogesh, very good morning to you. Go ahead, ask your question.
Good morning, Mahima. See, my question, I have a HDFC bank and I want to invest 5 lakhs in this stock.
Okay.
Today minimum I invest this and I want to, I more invest in this time or not?
Okay. I hope 5 lakhs is not a very concentrated amount, Yogesh, for your portfolio.
No, it's actually I have the 1 CR in equity market. This is a part of my 5 lakhs.
Okay, perfect. Then you're all set. I'll take this up with Asta. We already discussed this one in the rapid fire round, but a quick view again on HDFC Bank.
HDFC Bank is looking good to us. There is only problem is that the merger related, issues which are coming on and that are creating some impact on their financial ratios. Otherwise, it is a very good long-term banking story with a very strong deposit franchise, etc. Stay invested in this counter. And if you want to add more, you can add more at the lower level, not right now. But this counter is well poised to show strong potential in the long term. Stay invested in with a price target of 850 at the initial levels.
850 on HDFC Bank. Got it, Astha. But the next question coming in now from Priyanka Asher of Mumbai wants to know for Birlasoft if it's a good bet to add in the short term. Would you recommend that, Swati? We've seen pressure sustained across the IT pack. What's your view?
Puneet, you are rightly pointed out this particular overall sector is under the selling pressure and this particular stock is also trading in the formation of the lower tops, low bottoms. I believe the selling pressure is likely to be intensified if the stock gives the breakdown of 310, 307 levels, which are the acting as a crucial support levels. If you break those levels, then 280 to 290 levels can be witnessed. So wait for some more time. Any dips towards to 280 level, once again we can review this particular counter and then we can take a long position, but not at the current market price. So stay away from this particular stock.
The next one is on Schaeffler India. Vinod Kumar from Delhi has got 32 shares at the levels of 4277. Wants to know from a 1 year perspective, continue to hold, exit. Astha, what's the view like?
So, Scheffler, from 1 year perspective, is a hold from our side. First of all, I want to give the target, and the target is 4,800 to 4,900. Now, if I talk about the fundamental of this company, also, then it is one of the very high quality auto component manufacturer, and they are into the bearings business, etc. Not what we are liking about this company is that first of all, their business quality is very high, and the most important part is that their margins are also very strong. So, good financial performances they are showing, and their automotive growth is very strong. Stay invested in 4,800 to 4,900 can be attributed as a price target to this counter.
Tata Capital is the other one. Now, Shankar from Bengaluru wants to add 500 shares of this counter. Swati, we actually seen this remaining very stable at that 320 odd IPO price for the last few months, but saw that one-day uptake of almost a 10% move. Do you think that that sustains? What are the targets that you are looking at?
We need to wait for some more time. We might witness a profit booking at the higher levels from the last two trading session. Any dips towards to 340, 335 levels will be attractive levels. So any dips towards to those levels can go for a long position, and then the immediate target will be 370 to 380.
Okay, the next one that we have is coming in on Azad Engineering. Our viewer wants to know if this is the right time or maybe the right entry price for this one from a 6 months perspective. Swati?
No, ma'am, we need to wait for some more time because the stock has given a breakdown of the 20 days moving average. We might witness some sort of a profit booking on the selling pressure, which will drag us counter to us to 1950. So at those level, you can think about the buying.
Got it. Well, the next question coming in from Rakshit from Bengaluru. He's holding shares of Laurus Labs bought at 602, so has been in very good gains. Asking if he should continue to hold this counter. Would you recommend that, Asta? The story continues.
So talking about Laurus Lab is looking good to us, and yes, the story continues. So we are believing that one should remain invested in this counter because they are into API, CDMO, etc. And we are believing that this story will continue to go on. Stay invested with the price target of 1550.
The next one that we have is on GlaxoSmithKline Pharma. Siddharth from Noida wants a 2 to 3 months view on this one. Swati?
My view is positive. The stock is under the consolidation phase within the rising channel. I believe one should definitely hold on from here onwards. At least 2,500 levels can be seen. So hold on your long position by maintaining a stop loss of 2,300 rupees on a downside.
Got it. The next one coming in now, and this is from Vinod from Bengaluru. He wants to know about a good buy in the hospital space, Asta, for the next 2 to 3 years. Anything that you like from that space right now?
Yes, hospital stocks are looking good to us. Max Healthcare and Apollo Hospital, both these counters are looking good to us. So in the large cap space, we can go with the Max as well as Apollo Hospital.
Okay, all right. The next one that we have, I think Shweta is calling us from Bengaluru. Shweta, a very good morning to you. Go ahead, ask your question.
Hi, very good morning, Mahima. My question is regarding National Aluminium Company, NALCO. I have 130 shares at 421 price. So I would like to know short-term view for this. Should I average it at this price or should I hold it? Or is it good to shift to RK Forgings?
Okay, all right. Got your query. I'll take this up with Swati. Swati, what are you seeing on the charts for NALCO? Should she continue to hold or should she shift to RK Forgings?
Yeah, as of now, you should definitely hold on this long because no wonder the stock is under the selling pressure. We might witness some sort of a more profit booking, which will take a counter to us to 330 to 340 levels. So wait for some more time. No need to book your losses, but you can average it out when the stock comes down to the 330, 340 levels. I believe it has a potential to reach back towards to 440 to 450 levels. So you can definitely hold on the long.
Got it. The next one, that's coming in now, and this one is from Saurabh Shah from Mumbai itself. He wants to know about Cohance. He was smart enough to buy these shares at 425. Asking if, today has of course been a very spectacular move on this counter. No real news flow, Astha, but we've seen, of course, that big management change come in. Umang Vora from Cipla is now going to be heading the company. Do you think it's a good time to add at this price point?
So I believe that yes, one can add, but not at this point of a time because today we are seeing a very sharp run in these stock prices. So my idea here is one should add this counter at the lower price of around 450.
Okay, all right. The next one that we have is coming in on Berger Paints. Sundar from Chennai wants to know whether he can continue to hold 1,000 shares that he's been holding since the past 20 years is what he's saying, and wants to know whether he should continue to hold further or exit. Asta, what would you recommend for somebody who's been a patient investor in this one, and especially paints as a space, because there's a lot of uncertainty around the entire space. What would you recommend?
So it is the second largest decorative paint play in the India, and with the kind of growth story we are looking on India, demographics, etc., this demand is continue to play for the paint. So yes, I am positive about this counter, and it is a good long-term story to bet upon. One should remain invested in this counter for the price target of 650 at the initial levels.
Correct. We took Vedanta's query with Swati as well, but Swati, there are a bunch of queries from a lot of viewers, like Udit amongst others. Vineet also has asked us this question as well, and so has Puneet Saxena. So I'm just combining all of them from the demerged entities. Anything that you like right now in the charts? I know it's a very, very limited time frame since they've started listing, but I'm seeing 8 stock queries on Vedanta demerged listed entities. So anything that you're picking, I'll come to you as well.
I would suggest to hold on some more time, because this particular pack is under the selling pressure. We need to take some more time, particularly Vedanta. I believe we might witness some sort of a selling pressure, because on the technical spurt, it has given the breakdown of a head and shoulder pattern. Neckline was at around 290 levels, and it has given a breakdown with the volumes. So any dips towards 260 level will be the attractive level to build up the long position, where the risk reward ratio will be a favorable. And the short term to medium term, the target I'm looking forwards to 340 to 350 levels back. So hold on for some more time. Any dips towards 270, 280 levels can be a good levels to take a long position.
Right, it's time for our rapid fire round part 2. Swati and Asta, you both know the drill. The first one is on HPL Engineering. Padma from Bengaluru has bought 250 shares at the levels of 772. Continue to hold. What is the support and resistance that you're seeing on the chart, Swati?
Support is placed at around 820, and the upside I'm looking for a target of 860 to 870 levels.
Asta, quick view on the Vedanta demerged entities. Anything that you like? Of course, aluminum continues to have the highest value, but what's your view?
I like zinc business, so I would like to go with the zinc business. After that, I like aluminium business. So yes, Vedanta is looking, and its zinc business is looking good too.
Okay, the next one is on Quality Walls. 2,000 shares bought at the levels of 32 rupees from a 1-year horizon. Any view on this, Asta? Continue to hold?
Continue to hold for the 1-year time perspective with the price target of 40 and above.
Next one's coming in from Sai Karthik from Dallas, Texas, on JSW Infra. Swati, he's bought shares at 272, asking a 3 to 6 month target.
A target, I'm looking forward at least 345 to 350 levels. You can hold on the long position. Downside, it has a good support at around 295.
Okay, the next one is on Walk Hard. Dr. Lavanya from Eluru is holding 150 shares at the levels of 2050. What's the target that you're seeing on the chart, Swati?
In the Voca Pharma, definitely upside 2200 are the likely targets. Downside, it has a good support at around 1950, so you can hold on the longs.
Next one's coming in on NCC. Our viewer Satyan has bought shares at 220. Swati wants to know if he should continue to hold, and what's the target in the medium term?
In the NCC, definitely VIV is positive. The short term to medium term target is 165 levels. You can hold on by maintaining the stop loss of 154.
Okay, the next one is from Guru, who's writing us from Chennai. He wants to know one stock in the power space that he can go ahead and buy right now. Asta, what would that pick be?
The grid is looking good to me. So in the power space, Power Grid and PFC both are looking good to us.
Sundaram Finance bought at 4,900 by our viewer Balaji. He wants to know a 3 to 6 month view, Swati, on the charts.
Definitely, view is positive in this particular counter. It has a potential to reach up to 5,000 levels. Downside, it has a good support at around 43, so you can hold on the longs.
Okay, the next one that we have is on BSC. Our viewers bought it at the levels of 484. 750 shares is what Raman has been holding and wants to know if he can continue to hold this one. So, very attractive levels, Swati. What would you recommend?
You can hold on by maintaining a strict stop loss of 3,900 rupees, because if it's break, we might witness some sort of a profit booking, which will take a counter towards to 3,600. So hold to the mentioned stop loss.
Santi is holding on to Trent, bought at 3,130, so very close to the current market price. Asta, he wants a long-term view. What should he do?
Long-term view is positive. Remain invested in this counter with the price target of 3,400 to 3,500.
Okay, the next one that we have is on IDFC First Bank. Satyan from Palakkad is holding 250 shares, bought at the levels of 83. 1 year target on this one, Swati?
Bought at very elevated levels. You can hold on by maintaining a stop loss of 75. The target will be at around 90 to 95 levels.
Is it a right time to buy into Emphasis right now, Astha? You spoke about TCS, but Subrata Mukherjee wants to know about Emphasis. What's your view?
This is buy not at the present level. It is not a right time to enter into this counter. Maybe at the lower level of around 2150.
Hyundai 100 shares bought around the levels of 2200. Jaskirat from Bengaluru wants to know if he can continue to hold this one. Astha?
Yes, hold Hyundai. I think 2200 can be seen in the medium term.
On granules, our viewer bought shares almost a decade ago at just about 10 rupees. Let's pull up the counter now. He's up almost 80x in that sense. Should he continue to hold for the long term or book out Astha some gains?
I think one should remain invested in the long term if there is no hurry to book out the profit, because this counter can move till the level of 1000 in the long term.
Got it. Well, that was the last question of the rapid fire as well as this edition of Ask Profit. Swati as well as Astha, as always, thanks so much for joining in and helping us with all those stock related queries. But viewers, out of time on this edition of the show. Thanks so much for watching. Stay tuned and we'll see you at 2 p.m. for Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and KYC is the show where we get you one of the hottest companies where the people discuss is there any alpha to be made or not. We get for you mid caps, small caps, and a whole list of other stocks from the universe. But today there is a very interesting company. Guess करके बताइए ये कौन सा company है. मैं आपको थोड़ा hints देता हूँ. First hint, it's a Pune-based technical textiles company. I'm sure you know the name, but there are a lot of these group companies which are listed, more than 4 or 5 I think. It was established in the year 1976. One more hint for you, and that is the stock is up 31% from March lows. And the last hint, try to guess it, I'm sure you are very near to it. It supplies sport nets to Wimbledon. Wow, that's an interesting fact. Try to understand which company I'm talking about. I'm sure the first name you must have guessed by now, and the confusion might be there in the second name. It's of course Garware Group Company. It's Garware Technical Fibers. But why are we calling this technical textiles company? क्या बात है इसमें? First question definitely is going to be on the overall business outlook and the benefits from UK FTA. That is why we are getting in the textile companies and also the technical textiles. That's the story we should be looking out for. The demand trends and the client confidence. What does that suggest? Is there any volatility at play from the abroad clients? The pricing power of the company, more price hikes, will that be taken? It's an old company. They have a very good name in the markets, and that's why the pricing power comes in. Inventory levels, will it be on the higher side as per what the customers have requested? That's the key question to be asked, especially in the first quarter. Middle East issue, is there a delay in the domestic dealer offtake? That's also we'll try to understand. And of course, some problems are there in the industry, but in that case also the market share picture, does it maintain it? And if it maintains it, it's a benefit of consolidation comes in at play. And this is very interesting geosynthetic business. And I'll try to make you understand also that this is a quite technical company, but very simplified way we'll explain it. We'll have Shujal Rahman, he's the CEO at Garware Technical Fibers, to give us the entire viewpoint and the outlook for the business and the industry ahead. चलिए अब कंपनी के बारे में बात करते हैं. Let's try to understand about the company, the key details, what you should be knowing about. Of course, this is a technical textiles company from Pune, established in the year 1976. A lot of collaborations have happened. I see the history in the company's website. Now they have applied in sports, fisheries, aquaculture. They provide high tensile nets, ropes and ancillaries. It is a little bit of technical, but I'll simplify it for you. Shipping, agriculture coated fabrics and geosynthetics. Basically, geosynthetic is nothing but the slope wires which are there so that the rocks don't fall, and of course across various different types of lands. Also, let's move on and understand a little bit more about the company. They have, of course, two facilities, in Vai and Pune, largely Maharashtra-based company. And also, most of the manufacturing setups and ancillaries are here itself. But they are marketed in more than 75 countries. Company mein R&D is very strong, and that is why they have a good pricing power. I'll give you a lot of details about the positives of the company, but you need to hold on. You need to wait a little bit. They have almost 101 patents filed and 29 granted. That is where they get that global exposure. 20,000 SKUs are there, which is pretty impressive when it comes to different categories. Now, speaking of categories, let's try to decode. लेकिन ये company बनाती क्या है? That's of course markets also at times don't understand that, but we'll try to simplify it for you. Aquaculture. There are cages, mooring ropes and netting solutions, and this is very much important, especially for salmon fishing and also different types of fishings, and all these ecosystem products, high margin products the company makes. So this is a niche category product and a niche industry. Sports nets business, they have tennis, football, baseball. The nets which we see for the baseball, of course the goalkeeping nets we talk about, and of course the tennis, they supply to Wimbledon, Roland Garros, you name it. It's an Indian brand which is hidden in plain sight of the global events, especially in the sports. So that's a proud moment as well. But value added, niche bhi hai, value added products bhi hai. They have ropes, fabricated slings and high strength polyfins. Of course, the applications are across various industries. Third important product is geosynthetics. That's where the company has stated the growth is coming faster. This is nothing but the slope protection, especially in road, railways, airports and ports. This is very much, you could say a very strong kind of a product so that the rocks don't fall in case of tunnels. But enough of the products. Let's try to understand where is the revenue coming from. Of course, domestic revenues are slightly lower. It's roughly 40%. But look at that, the international exposure, that is where the street is quite bullish on. 60% of this revenue is coming from this segment. So this is the overall revenue breakup I would like to point out for the company. But the question remains is, what are the positive factors for Garware Technical Fibers? What may work for the company? The first one, it's debt free and the company is having a strong pricing power. यानी कि raw material price अगर ज़्यादा बड़ा है तो company जो है price hike कर सकती है. They command a good bargaining power in the industry they work in. A high return ratio industry, of course, compare that with technical textile and a normal textile. If you get them together, that's what we see, the company has a better alpha. Strong commentary has come in from the management, especially for the new product rollout. They have a good R&D setup also, and they're always looking out for niche products. So that is how you build a moat across the decades of your existence. And interestingly, I have found the valuations attractive also, because of the volatility seen in the export business. Also, the government is pushing really hard for technical textiles. This is a very important point. So you should note it down if you are a budding analyst. These are something you should be looking out for. But not everything is rosy, and that is why at KYC we get in the both sides of the coin to give you a very balanced outlook. What may not work for the company? The inventory levels, they might remain higher in the first quarter. The customers have also said, hold on to your inventories. There is a lot of volatility, and because of that, adjustments, especially on the accounting, can be there. There is a very less analyst coverage. I just checked, only 2 analysts from domestic broking houses are tracking it. So definitely there needs to be more product discovery, and the markets also haven't actually factored in, what, the strength which the company has. So it might be having a little bit of valuations when it comes to a normal textile company. So we need to get that in KYC, that by technical textile and normal textile, polyester and cotton are different things. But the KYC ratings is not different. We always have a proper format for it. This includes income statement, balance sheet, cash flow, return ratios. We see what's happening with the business. Also the shareholding, how that pattern has moved around, street cred, different timelines. We try to understand, has this company made money for you or not? Valuations, interestingly, the company doesn't have much peers, so I'm going to compare that with the only valuations front for the company itself. And of course, we have outlook also. That's one of the most important rating to track. The first one, let's get in, is of course the income statement. Income statement, it is dismal. Why? Of course, the numbers are strong, but is it growing or not? And if it doesn't grow, the street won't reward. And this is what's happening. Single digit growth aa raha hai aapka revenue, EBITDA, PAT mein. So that is where a little bit of concern comes in. And if we pull up the Q4 numbers also, largely it was a mixed set of numbers. And that is where a little bit of concern comes in, because the numbers have to follow. If the number follows, the EPS goes up, of course, the market gives you a value, despite of being in a niche business or a category. And largely margins were stable, a slight dip coming from FY24, FY25, it was 20% plus, and then it's slightly going down to 19%. So no much variation. It's a very stable business model, but the street needs growth. That is why I'm going to give this a thumbs down when it comes to the income statement. Now let's move on to the balance sheet and see what's the story here. Largely, it's debt-free. That's a very good point. At times, people call it conservative thought process, but nevertheless, if the balance sheet is maintained, it's a good sign for the future moves. Reserves are pretty decent. Cash balances have also gone up, and largely it is maintained very nicely. So I'm going to give this a strong thumbs up. So we spoke about the income statement, we spoke about the balance sheet, but come over, let's try to understand the cash flow segment, what has happened, and the company has been able to, for the FY26 numbers at least has been pretty decent, a good conversion, and this is the rate to look at, that's roughly 81%, and the net cash flows is decent, it's at 73 odd crore rupees, but nevertheless, it's a strong way of, keeping the working capital ratios in check. So there is a little bit of conservatism at play, but it benefits also, especially for the analysis which we do on a backdated basis. That is why I'm going to give this a strong thumbs up to the cash flow segment. So after these three ratings, we come to the ROC numbers. And this is where if you compare that with a normal textile company, which might be commoditized, even though it's going through a structural change, look at that, this has been maintaining 20% plus ROCs for textile company, and remember, it's a technical textile company at play. So I'm going to give this a strong thumbs up when it comes to the return ratios. Apart from return ratios, it literally looks like a mirror image. March 2024 का shareholding pattern देखिए, promoters, FIs, DIs और public, कुछ नहीं बदला 3 साल में. Look at that. This has been pretty much same, no major changes happening. So all the shareholders are holding. Nobody's selling a lot, nobody is buying a lot. So we need to wait and watch. So as of now, it's a neutral rating when it comes to the overall shareholding. But let's talk about the street cred. Has the company made money for the investors or the traders? That's the key question. So I pick up 4 important data points. From March lows, like everyone else, most of them, companies trying to do a recovery, the stock went up 31%. But still, what peak numbers we saw in 2025, that is still, it's down almost 19%. अगर एक साल की बात करें तो stock जो है 9% जो है गिरा हुआ है. But the biggest complaint, if you're holding it for the long-term investor, for the last 5 years, the stock hasn't done much. Only 20% return has come in. And that is where a little bit of concern starts coming in. So definitely we'll try to understand more about it. But that's of course the next rating. It's a negative right now over the valuations, because stock में इतनी गिरावट आई है और of course earnings भी largely flattish रहा है. The valuations have turned attractive. The current valuation, this is the 12-month forward P, comes in at 31 times, and if you have a peak valuations, that came in at 46 times, and that 5-year average, if I talk about it, that comes under almost 30 times. But if you analyze that totally, the valuations are cheap. Now, if the valuations are cheap, I'm going to give this a strong thumbs up. So 7 ratings are done. Let's talk about the 8th rating, and that's of course the outlook, what the company is going forward. This is very much important. Improved visibility is coming in the salmon aquaculture business. So that's pretty much interesting, where the nets are being, the demand for the nets are picking up. USA sports nets business, those orders are coming at high rates. The market share has been maintained. Company has stated that in the fourth quarter's presentation. The value-added ropes business, of course, there was an acquisition, and the company claims that the ROC and the EPS numbers are accretive. We need to understand by when this integration comes in. That's the key question. And also the high growth rates. This is a geosynthetic business. We call it the slope protection. That is where a bullish commentary is coming in. But in short term, there are inventory adjustments. Raw material costing का जो impact था Middle East से वो भी आने वाला है. So a lot of short term volatility would be there at least for the next 1 to 2 odd quarters. But let's see how the company comes up from this bad situation. So it's a neutral rating, I would say, when it comes to the outlook. But apart from the outlook, let's try to understand कि KYC rating के report card में company को कितना मिला है. This is an important data to check. So we revise that. Concerns on the growth, revenue, PAT, EBITDA, but balance sheet cash flow management is pretty strong. And for a company in technical textile, getting a good return ratios and maintaining it for so many years is a good sign. Shareholding, nothing has changed. Street cred, however, despite having niche business, a decent ROC numbers, it hasn't made a lot of money for the investors. So last 5 years, just 20%. Valuations, that's why it becomes quite attractive. Long-term outlook is strong, but of course the short-term outlook, there will be volatility. So the total KYC rating for Garware Technical Fibers comes in at roughly 5 out of 8. It's largely neutral to slight positive when it comes to our average rates which we give, or the average ratings which we give in KYC show. But we'll try to understand the entire story, and of course we'll get in from Shujal Rahman. He's the CEO of the company, but there's some interesting tidbits about him. He has held leadership roles from Seat, Mondelez, Marico, Apollo Tyres. So he has seen a lot of corporates and different segments as well. He's the chairman of Pune zone at CII as well. That's a prestigious position. And also education coming in from Harvard Business School and Aligarh Muslim University. So pretty interesting, history coming in from Shajal. But just to get everything in perspective, let's ask the first question itself, getting him with us. And Shajal, the first question I would like to ask you, especially, first of all, good afternoon, and it's always a pleasure to have you at NDTV Profit, is the business sentiment. How is the business sentiment looking like, especially with so much volatility in your export business right now?
Thank you, Sharath, and thanks for having us on the show. I think the last 3-4 months we have seen the Iran war and the play out of that. For us, the impact was on raw material. It increased by about almost 70% in 12-13 days. Fortunately for us, we are a company which is in the value-added segment, and our products are innovative, and many of the products have patents. So we are able to pass through the raw material hikes to our customers. Obviously, there is a lag. As we speak, what happened was in the month of March and April, we had concerns about raw material availability. So, we were able to stock up raw material, and you would see in the March balance sheet also that there's stocking up in raw material. And that's the reason why you mentioned a while back that the inventory has increased. Another reason for us where inventory increase was due to the transit. What happened was in March, many of the material was to reach to our subsidiaries in Norway or in Chile, which obviously are 60 to 75 days transit from India. They couldn't reach because of this geopolitical issue, and obviously inventory, which is GIT, also increased, which was basically confirmed orders. So that was the impact we had last year. This year, so far, as we speak, things are looking okay. Raw material is still holding on; it's not dropped. Supply is, as of now, not a concern of raw material. Many of the orders which we were expecting have also come, and things are looking good for cotton at this stage. Right. That means the supply chain issues have normalized going ahead. And also, if you look at it, the way the momentum is building up for the value-added products, you also deal in the niche segment. That is where a little bit of strength also lies. But I want to ask another angle to it. Recently, of course, the India-UK FTA was completed.
and a lot of new industry opens up for your company also regarding the products which you have been talking about. Shujal, I just want to understand, what incremental benefits can come in for Garware Technical Fibers?
Actually, when the FTA was announced, put 5 days back, I was in UK only, and we met some customers. So obviously, there's a benefit for us. There'll be some duty impact benefit which will be there for us, but the bigger benefit will be for our customers. Scottish salmon is a big salmon species, and it's a very profitable and a very premium segment for our customers. They want to sell it in India, and this opens a door for them. And in fact, they came and visited our facility and also met some customers, their customers. So it's actually win-win for both of us. From our side also, it's positive, and from our customer side also, it's positive. So I think it's a good move.
Fair enough. It's a good move, and hopefully in the coming quarters you can quantify that also for us, because a lot of discovery needs to happen. The street generally doesn't look into detail about technical textile companies like yours, and I feel there is definitely a value, a value here. But speaking of pricing power, there seems to be, you are having a good bargaining power on the pricing segment, on the pricing power, and I'm sure the raw material costs have gone up. So by when this calibrated price hikes can start coming in, second quarter, or you'll just take it, by the end of the first quarter itself?
No, I think in quarter one itself, price hike impact will be there because we were able to pass through. There is a little bit of a lag because we have orders in the system. Otherwise, mostly in international market, every month we have a price updation list, so it immediately is passed through. Domestic also has been passed through. So the impact will be felt in Q1, as I mentioned a while back. Being an innovative company, we are able to pass through the raw material increases, and we are able to give value proposition to a customer. That's why they come back to us.
Fair enough, and this is largely known. It's almost, you could say, 60 to 70-year-old brand. But I want to understand a little bit more about the domestic business. The Middle East disruptions, as we are speaking about, I just want to get a little bit more views on this domestic dealer offtakes. Is that delay continuing, or has that bottomed out or improved as we speak right now?
In domestic, we have two parts of business. One is geosynthetic, which is the slope protection infrastructure business, which is doing actually very well. It's been growing at the rate of 40% last 3 years. So that business is still doing very well. There's no impact of West Asia crisis on that business. The pipeline is very positive. On the other side, the domestic business, which is industrial business and fishing business, that business was not doing well last few years, but it has now bounced back in a very big way. The construction business, construction safety business, and other businesses, oil and gas business, all is doing very well. Transmission business is doing very well. So these businesses are doing well. In domestic market, obviously we have a channel through which we serve the customer, which is a dealer and distributor. So when RM increases by such a level, they obviously hold on to their purchases. They don't buy. So there is some lag, but I think now things are settling down. Everybody's understood the impact of this war and the raw material impact. So I think things are going back to normal. In terms of demand side also, I don't see any major impact. One point is that at this point, there is some doubt in everybody's mind in terms of monsoon outlook. So some businesses may get impacted, but we are waiting and seeing the impact of monsoon. So at this stage, I think overall domestic also looking very positive.
So short term, there are some issues, but Shujal, let's talk a little bit long term, FY28, FY29. The margin outlook, how does it look? It comes back above that 20% mark on a consolidated basis. How does that look? What are the levers for the margins?
So in terms of margin outlook, I think we will be in the 20-21% range. That's our last few years trend. So that if you see our Q4 margin was very good. So we will maintain those kind of margin profile. That's I think the intent, and that's the drive that we are pushing. As far as the outlook is concerned on some of the segments, so if you look at our business, 80% of business comes from value-added products and 20% is still commodity, on which we are working in the rope segment. These are mostly the value-added ropes in oil and gas. They could be in transmission, they could be in shipping and mooring. So that segment is where we are working on to upgrade our customer profile, our product profile, and move to a value-added segment. That may impact positively on our margin, but I think overall margin will remain range bound, so to say, and we'll maintain that 20-21% margin.
And also there is a little bit of concern, especially from the long-term investors. Okay, fine, margins remain stable. What about the top line growth? Last 3 years, it's been largely single digit on the CAGR basis. So of course, the top line growth is also something which the street wants to know more about for your company. Any kind of, targets which you have set, if 3-year target or a 5-year target, which you would like to share?
As a company, we focus on bottom line. Our aspiration is to double our profit every 5 years. And we are well on track, at least in F27, to be able to achieve that objective of doubling our profit in 5 years. So you can assume our bottom line growth at about mid 15% or around 15% level. As far as the impact of last year is concerned, if you see, last year was not a great year for us. There were 2-3 big impacts toward the end. I spoke about the supply chain issues, but also around Q2 time, what happened, normally salmon farming, which is like 80% of salmon which is consumed in the world is farmed. Salmon farming takes about 12 to 14 months for a salmon to be produced in the fish in the water. For some reason, this cycle was reduced by about 1 month, 1 to 2 months, about 4 to 6 weeks, so to say, which essentially meant more salmon in the market and which impacted the salmon prices. And our customers, in a way, cut down on their capexes, which impacted us in a big way in Q2. But that situation is now resolved, and the last quarter orders were there, which I think we were able to produce and execute, but we couldn't get the sales done. So that impacted F26 in a big way. But also, you would also appreciate that 10% of profit comes from USA, where our sports business is a very big segment, which also got impacted last year for about 6 to 7 months due to overall 55% tariff. We were able to hold on to that.
Right. On your US business for the nets, right now the FIFA World Cup is going on. Just out of curiosity, are the football nets being made by your company?
We don't know, because we normally supply to our distributors. Okay. So I would say there's high probability it could be our net, but we don't know, because we don't sell it as a branded product. We sell it as a catalog product and supply to our distributors who sell it eventually.
Fair enough. It's wonderful to have a chat with you, and it's always a pleasure, Shujal, to be with us at NDTV Profit. Best of luck for your company and the future. So that's a very interesting take coming in from the management. But yes, there are problems, there are inventory issues, and it's going to take some time, especially on the demand front. But a very interesting company, right? So for all these interesting stories on these companies, keep watching KYC, and yes, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Sharp slide in Nifty and Sensex drags benchmarks to today's low. Nifty struggles to defend 24,000. Ailing metals and IT names drag indices. Pharma Realty offers some respite. Oil prices continued to retreat as diplomatic progress between the US and Iran raised hopes of additional supply returning to the market. Brent slipped towards $77 a barrel as traders priced in sanctions relief, a possible easing of Middle East supply risks. Precious metal linked stocks traded under pressure with Hindustan Zinc and Muthoot Finance falling in early trade. The decline tracked weaker global gold prices as investors turned cautious ahead of key US inflation data that could shape the interest rate outlook. Trade diplomacy is gathering pace in New Delhi. A senior US delegation, including Chief Negotiator Brendan Lynch, has met Commerce Minister Piyush Goyal as both countries work to close gaps and advance an interim trade agreement. Good afternoon. You're watching Markets at 12 with me, Mahima Vachharani, and this is a show where we get you updates on the top buzzers and news updates at noon. But first, let's take a quick look as to how the markets are faring at the moment. Let's try to pull up the Nifty 50 chart and see as to where it's trading at the moment. It was a flat day of trade and has turned reverse from there at its day's low point as we speak, below the 24,000 levels. So we've broken crucial levels on the Nifty 50. Let's try to pull up the heat map and see as to what are the counters that are putting pressure on the Nifty 50. And you have a lot of IT names that are down significantly. Infosys down almost 3%, TCS down 2.8%, Hindalco continues to be under pressure. You have Tata Steel, Wipro, Tata Motors, Tech Mahindra also that continue to be under pressure. But on the flip side, you have pharma names that are holding up. Cipla up 2.8%, Sun Pharma, Dr. Reddy is also doing fairly well, but the advanced decline ratio on that chart has moved more towards the bears is what we are seeing on the Nifty 50. Let's try to pull up the Bank Nifty as well. The Bank Nifty right now is hovering around the 57,500 level. So there also there's a significant slip that's come in at its day's low point. PSU banks are the ones that are putting pressure when it comes to Bank Nifty. Let's try to pull up the sectoral heat map and see as to what sectors are indicating right now in terms of where the action goes. Only the pharma and realty in the red. Largely metal, IT, PSU banks is what is dragging the markets down in trade today. Let's try to pull up the broader end of spectrum as well. In terms of mid cap 150 and the small cap 250 as well. The mid cap 150 is down by about 0.6 odd % at its day's low point, and so is the small cap 250 at the day's low point as well, down by about 0.5 odd %. Lastly, quickly BSE 500 before I go on to our next story. There are some names that are still up in trade today. You have Cohen's Life Sciences, Piramal Pharma, BASF, Rajesh Exports, etc. But on the flip side, you have Vedanta, New India, Nalco, Sterlite, etc., which continue to be under pressure. So that's with regards to where the markets go. But metal stocks are feeling the heat as falling steel and aluminium prices, signs of returning global supplies and profit booking trigger a sharp pullback. Now, the Nifty Metal Index has corrected 6% from its May highs, and Sharath joins us with more details on this one. Sharath?
Yes, we are seeing a strong sell-off in the metal stocks, be it the steel stocks or even the aluminium-related stocks, as of course the global pricing that has come down. One of the main key reasons for this is, of course, the progress which is happening between Iran and US, and because of that, the supply issues that seems to normalize. That's one of the key reasons for it. Remember that the aluminium prices that comes in at 3-month low, and the steel, the rebar prices, that has also actually corrected. And today there is a stock-specific news also where Vedanta, the promoter stake sale has happened via block as well. Dollar is trending, and there is an inverse relation with the metals and dollars, and of course the profit booking was the rally which we had seen over the last 2 to 3 years in the metals. That's also where we are seeing a profit booking happening. The Nifty Metal Index hit its lifetime high levels, you could say, in the month of May, but from there the correction, look at that, Vedanta, Nalco both falling between 17 to 20%, while SAIL, Hindustan Zinc and Hindalco also falling between almost 14 to 16 odd %. And yes, the Oswego plant fire overhang was also there for Hindalco, but net this is the entire reason why the metals are seeing a strong sell-off.
All right, Sharath, thank you so much for getting us those details. In fact, let's also welcome in Harshal Dasani, the business head at Invest at PMS, joining us now. Harshal, very good afternoon to you, and thank you so much for taking out the time. I think we were just talking about metals, so I'll start by asking about metals. Right now, there's a lot of confusion around whether the metal upcycle is on the verge of a decline or whether the upcycle has already happened and now there could be a reversal that could kick in. What are your views on this one?
Well, firstly, good afternoon and thank you so much for having me. Well, the metal index has been the top gainer for the last 1 year. If you see metal and power, they have done fantastically well because we were on a rate cut spree. Even if you look at gold and silver, since the September 2025, they have been on a massive up spree. Gold has done amazing, silver has gone almost 3x. But now we are seeing a little bit of cool off because of this war. We saw a spike in the price of crude oil, because of which the fears of inflation are around, and we are already feeling the fears of inflation around. And that is the reason why there is a fear of rate hike also. You're also seeing the dollar strengthening up, which is technically very negative for metals because they have an inverse relationship. So overall, if you look at metals, they look for a short-term correction here. You look at the aluminium price, they're also cooling off because we're seeing signs of peace between Iran and US. But if you look for a longer span of time, if you specifically talk about copper and silver, with the AI run that we are having right now, with the semiconductor run that we are having right now, not only in terms of the price in the stocks, but also in terms of the demand that we have, I think copper and silver have a very long-term view from here. They're going to do really well because at the end of the day, the supply of these metals is very limited. And the demand for them is going to keep rising over and over with time once we modernize more with AI and semiconductors. So I think that copper and silver, both are poised for a long-term growth. I think even gold, it's here for a temporary correction. But if you look at the long-term view, I think gold is steadily going to grow because once US is out of the war, the Russia-Ukraine war and your war that is currently happening between Iran and Israel, then once US is out of that, that is when US will realize how much stretched it is in terms of war, in terms of the money that it has printed for war, and in terms of the loan that it has. So I think at that point of time, central banks would be looking to dump dollars and move more towards gold. So I think gold, silver, and your other metals are down for maybe a temporary correction, but I think the long-term trajectory for them is up.
The other aspect, right now we've seen, Indian markets also touching at its day's low point, and this is because if you take a look at the global markets right now, there is the COPSI, which is down almost 9%, took a 20-minute halt in trade. Yesterday we saw a significant fall coming in SpaceX, and because of which there was collateral selling in Nasdaq IT as well. Today also, if you take a look at, Taiwan, it's down by about 1.5%. Japan is down by about 3% odd. Even China is seeing a downtick of around 3% odd. How are you reading these global cues? Because, it is a ripple effect that's happening in multiple markets, right? How does one pick up cues with regards to where global markets go as of now?
Well, honestly, I think Indian markets cannot be compared to global markets because if you look global markets, September 2024, Indian markets, that is Nifty, Bank Nifty, your mid cap and your small cap index, all had made their all-time highs. And since then, only except the mid cap index, which is just close to its all-time high, any of the indexes that you pick up, Nifty, small cap, mid cap, the broader market has not really performed. Meanwhile, if I compare Korea, Japan, Taiwan and Nasdaq, which is of course the mother of all markets, US has done fantastic on the AI and the semiconductor run. And Korea and Taiwan have become the chip rockies because all the companies in US are needing those chips. So KOSPI maybe 10% down right now, but if you look at KOSPI since September 2024, I think KOSPI has already gone 3x. Your Taiwan has already done 2x. Even the Nasdaq is doing amazing. So I think in case of Indian markets, the problem is that Indian markets are not really undervalued. They are underperforming. What I really feel is that the sector of this bull run is going to be AI and semiconductors as you're seeing the global markets performing. But for the very first time, we are seeing that India does not have that sector. And the closest sector that we have to AI and semiconductors is Nifty IT. And there you look at Nifty IT is down 50% from its all-time high. So the sector which is probably dragging the global markets up is the sector which is dragging Indian markets down. So I think that Indian markets have been underperforming for a very long time. And on top of that, we had crude spiking above $100, which is again a very big problem for us. So I think now if you look at IT strategically, IT should benefit from the USD INR weakening. USD INR touched 97. At that point of time, IT should be benefiting out of it because the revenues are spiking up in the foreign translation. But even after that, IT companies are giving a muted growth. They are giving 1.5 to 3% of growth year on year. This is what they are predicting. And these companies are trading at a price to earning multiple. I'm talking on a very basic fundamental. If you look, these companies are trading at a price to multiple of 18 to 19. Well, if you look at them historically, they used to trade around 26, 27. Right now they're at 18, 19. So they look a value bet. But a company growing at 1.5 to 3%, trading at a PE of 16 is very expensive. So I see more cool down coming off in the IT space. So we are sailing against the tide. So I think Indian markets should do well. I think they have done both of their time correction and price correction. When once the AI bubble bursts out in these countries, that is Korea, Taiwan, FIIs will have another market, a proxy market India, where the money has not flown in for the last 2 years and the time and the price correction is also done. So I think Indian market should soon see a breakout coming in. Even if you look, the FII flows have started muting down in terms of selling in India. So I think that overall, if these countries, they go off for a small sell-off and they go off for a small correction, it is going to benefit down the line to India because the money is going to flow into India because AI and semiconductor, which is the theme which has been pulling the global market up, is going to act beneficiary for India when the AI bubble bursts because India is not riding the AI wave right now.
Got it. Okay. Harshal, just one last quick view on gold and silver because both of these metals have corrected quite a bit, right? Silver almost 50% from its highs, gold almost more than 25% from its highs, right? What's your view on both of these precious metals?
Well, I think gold and silver are going to do really well from now. As I mentioned while I was answering the question first that you had asked me about metals, that the central banks, once the war is over, once they realize that how stretched US is, they are going to pounce back again on buying gold. And if you talk about silver, silver is not only an industrial metal now, but it has also got the status of a monetary metal right now. So the industrial use of silver is on an uptick. The demand is rising. No matter you look at the price of silver, it doesn't matter if it's up or down, but the demand for silver is rising. And at that point of time, the supply is limited. So it's a very simple economics. When you have a limited supply and a rising demand, down the line it is going to fire up. Silver, again, gold and silver, they have a tendency that they stay sideways for years, and then again there's suddenly buying coming into it. So I think overall gold and silver, I have a very bullish view on that. They're temporarily down because of the inflation fears and the new Fed chairman increasing the rates. Once I think those fears are settled down, because US needs growth right now, and at this point of time a rate hike is not something that US is looking at. Once we see the rate cut cycle coming in again, you will see the metals again firing up.
Okay, all right. Harshal, thank you so much for taking out the time and giving us all those insights with regards to, of course, where markets go, global markets, as well as precious metals. Thank you so much for taking out the time. All right, so that, of course, was the discussion with regards to where, the markets go. But the other counter that remains in focus is GPT Infra. And, let's try to pull the stock up and see as to what it's doing in trade. Even with the markets seeing a downtick, it's holding up the stock as we speak. But to take this conversation ahead, because lots happening with the company, there's new segment that they're entering into. There's lots happening with regards to the order wins as well. To take this conversation ahead, we're joined by Atul Tantia, who's the Joint Managing Director and CFO of GPT Infra Projects, joining us now. Mr. Tantia, thank you so much for taking out the time. I think the first and foremost question that I have is with regards to your, HAM project that you've recently won which is for a Jodhpur bypass, which is of almost 670 odd crores. Just want to understand as to what this means for you, because this is the first time that you'll be foraying into this segment. Plus, it will require some investment going forward. How will that investment be made? Just give us some perspective on that.
Sure. So the HAM contract is for the Jodhpur bypass, the 7-kilometer elevated corridor for the Jodhpur bypass. It's along our lines of core competence, similar to construction of a bridge. So that is the reason why we backed this contract and we were able to give a competitive offer. We believe that value engineering contracts wherein we can add engineering skills is our forte, and we have been able to back similar contracts earlier as well in the EPC mode. This is the first time we're doing a HAM contract, and we are almost on the verge of doing the financial closure for this, which would happen over the next 1 month or so. Post that, the appointed date would be given by NHAI after handing over 90% of the NAD. The investment in the subsidy would be close to 50 crores from our side, which would be funded by strong internal accruals. We have a cash flow to EBITDA conversion north of 70-75%, which allows us to fund this kind of growth opportunities for us as well.
Fair. So, just want to understand with regards to where, what the future of the company looks like, right? Because you're transforming into an integrated, infra EPC player, and that includes a lot of segments going forward. So, going forward, in terms of where the order book goes, in terms of where order wins goes, where is going to be the focus most from, and how is going to be the segmental breakup looking like? I'm just talking from a perspective of 2 to 3 years down the line.
Sure. So last year, in FY26, we had got a new order inflows of almost 2,400 crores, which brought our net unexecuted order book as on 1st April to almost 4,600 crores. This gives us very strong visibility in terms of execution over the next 2 to 3 years. Having said that, we have set a target of almost 3,000 crores for this financial year for new order wins. We are quite confident that this will be achieved this year, given the newer segments like signaling and obviously the traditional segments that we do, like railways and roads that we do target. We already bid for a couple of large contracts and are in the process of bidding for some more of them as well. And hopefully by March, we should be able to exceed the 3,000 crore target that we had set for this year. These orders would be primarily from the northern and the eastern part of the country. Eastern part of the country, especially West Bengal, has seen a change in the political environment. And even the budget which was presented yesterday they have announced a couple of new infrastructure contracts, which gives us good sentiment in terms of new infrastructure contracts in the state as well.
The other aspect, Mr. Tantia, is with regards to your order book, right? It's more than that 4,400 crore. You're saying that there could be, inflow of 3,000 crore more. Firstly, with regards to this 4,400 crore, what part of it is executable in FY27? When you say that, 3,000 odd more crore that you're going to get in terms of order inflow. Just want to get a sense in terms of revenue visibility for FY28, FY29, what is the run rate going to look like?
So we have given a guidance this financial year of almost 27 to 30% growth in terms of our revenues, which would make us about 700 crores this year in FY27. And going forward, we expect to do a revenue growth rate of almost 20 to 22%. Which would mean that we would be doing 2,000 plus crores in FY28 as well.
All right. With regards to your global expansion, because your Ghana plant is operational, and I think it started its first sale in March 2026. This is, something that could help potentially in terms of your margin expansion as well. Give us some perspective on how do you plan to scale this up, and what is it going to look like by the end of FY27?
So FY26, you're right, we did the first commercial sales in the Ghana factory, which was almost 7 crores. This financial year, we expect revenue from that subsidiary to be almost 50 odd crores. It's a promising market. We have an order book outstanding there of almost 120 odd crores, which is executable over the next 12 to 18 months. And we are also expecting new orders in South Africa as well as Namibia, which would improve our international order book. We are already doing a contract in Ivory Coast for 195 odd crores. So the total international order book currently is about 350 crores. We expect some more orders to come through, like I said, in South Africa and Namibia in the next quarter as well. In terms of margin expansion, obviously it will happen A, from these international contracts, B, it will also happen from our signaling business, which is a much higher margin business for us and would be accretive to our overall EBITDA as well.
So what is the kind of margin expansion that you expect in FY27? You've already moved in terms of operational margins from 11% to almost 14% in 2026. Further upside, if you can help me quantify as to how much that would be in FY27 by the end of FY27.
So we have given a guidance of EBITDA margin to be north of 13%, and we've already done close to 14% last year. Having said that, a lot of the margin also depends on the currency fluctuations from our African subsidiaries. Last year was favorable in terms of the currency fluctuation. That is why the margin was slightly better than what we had targeted. So the steady state margin we expect to be around the 14% mark. Obviously, the currency fluctuation is in no one's hand, and it will depend on the market as such.
Okay. One last question with regards to your export business as well as the new business, right? You are targeting exports to be at 10% versus that of 5%. What is the timeline for this particular one? And for the CDMO-like model early stage business, what are the plans going forward?
So the export is primarily from the subsidiaries in Africa. Also, we have a small order for an export business in Bangladesh as well from our facility in Panagarh. These two obviously currently contribute to almost 5%. In the next 2 years, we expect this to move up significantly and to move it to 10% despite the 30% order growth that we will be doing this year in terms of overall revenues. This would be a significant number for the company, and we expect export revenues to be almost 150 to 200 crores in this financial year as well.
Okay, all right. Ms. Tantia, thank you so much for taking out the time and giving us that perspective on where the business goes from here on, and all the best for FY27.
Thank you.
All right. So that, of course, was the management of GPT Infra. The stock doing well in trade today, although off from its day's high point. But that's how the market sentiment is, but still holding up as far as the stock goes. Moving on to the next one, I think Tata Motors is the one that's targeting 40% CV market share by 2028 and double-digit margins with strong EV ramp-up by FY27. Puneet is here with more details on the Investor Day presentation. Puneet?
Well, thank you for that. Now, we are still awaiting the details for the passenger vehicle side of the business, but on the commercial vehicles, they made 4 key bold claims. The first one, as you rightly mentioned, 40% market share. It's been something that the company has been targeting for the last couple of years now, has been around that 37 to 38% share, but it continues to target by 2028. They've also mentioned that they're targeting double-digit EBITDA margins, but in a pass-through CV cycle, expanding it to expandable margins by the teens in a good cycle as well as what they've seen, especially in one which has growth in it. The third key one was disciplined investment spends, 2 to 4% of revenues. That's a target that continues for the company. And fourth, very importantly, on free cash flow, 7 to 9% of revenue is what the company is targeting as free cash flow in 2028. But apart from that, also there's been some conversation about the big acquisition of Iveco, delayed by a couple of quarters, but the timeline maintains through for Q2 of FY27. They've highlighted that the synergies from the Iveco acquisition will follow through and unlock newer geographies as well as complementary products once the acquisition is completed, and they feel they're targeting a 30 to 35% ROCE post the Iveco acquisition as well. That will be something to watch also. Finally, in terms of the TML volumes, you've seen a further scale up of the EV side of the business in this quarter, expecting to continue this year. And last final point, where they are seeing some structural tailwinds for the company, while the headwinds led by fuel price hike amongst others seem to be manageable.
All right, Puneet, thank you so much for getting us those details on Tata Motors. But with that, viewers, completely out of time on this edition of Markets at 12. But do stay tuned because more news and updates are waiting for you on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first,
virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. I mean, we've given up that opening cues as well, and clearly we're almost near the day's lowest levels. The kind of downtick that's coming in, if you see Nifty 50 as well, we are below that 24,000 mark. You know, I mean, at one point in time, we were seeing resistance at 24,000. 24,000 again moved as a support as well for the last couple of trading sessions as well, and now we are below those support levels once again.
Well, that's right. Good afternoon, Hiral. And it's up, you could say, last 15-20 minutes, absolute shocker in the markets. Nifty Bank, both of them seeing a big, sell-off happening. I remember the Asian markets, especially the KOSPI market, hit its lower circuit as well. Maybe there is a big profit booking at play and a little bit of concerns on the AI investments. But exact reason, we don't have that. But largely, we can give you the indications of why this impact is happening. Let's pull out Nifty Bank and see if the story is different or not. And yes, the sharp sell-off continues here also. There's a little bit of support coming in, but remember, we need time for both of these indices to actually stabilize for the other movements. And also there is a Nifty expiry at play. But let's look at the key factors to watch out for this sharp sell-off and what it means for the other asset classes. The concern starts coming in. Nifty IT is also down almost 2%. Apart from this, of course, there is a big positions where there is a profit booking. Nifty weekly expiry is at play. So, of course, last 90 minutes also you cannot rule out the volatility. But 23,500 to 23,700. I've taken the long-term support range because they need to stabilize first. Same thing goes for Nifty Bank also. And this is the range which is there, 56,000 to 57,000. Let's stabilize for the further moves, whether it's upside or downside. Only pharma and realty are green, but right now even reality has flipped and it's in the red right now. The broader indices are suggesting bearish momentum. We had seen a good value buying in SMIDs over the last 5 to 6 trading sessions, so a little bit of profit booking. Now when that happens, the dollar strengthens, dollar index more than 101 now, and the reversal impact happens on the metals and the rupee. That is why they are quite weak. Also, the European markets are likely to open like a gap down opening coming in red as well. So of course a little bit of profit booking would definitely be there, and the concerns might be there, especially on the risk on sentiment coming down. So definitely we are seeing a sharp sell-off in the markets right now.
Okay, so sharp sell-off in the markets that is coming in, and interesting sectors that Sharad has pointed at as well. Let's just quickly look at the Nifty 50 heat map, and then we'll also look at the sectoral heat map to just understand the kind of trends that are coming in. If we can just have that on the screens, and the kind of point contribution that we are seeing on Nifty 50. Absolutely, it's pharma which is on the run foot, but apart from that, IT a major washout today, so it has been that seesaw kind of a ride when you talk about IT as well. Tata Motors PV continues to trade under pressure along with the metal names, and we have a couple of defense names also which are seeing some bit of profit booking. Let's also look at the sectoral heat map quickly, and we'll see what's happening there, because again you will have pharma, which is the only sector, to be honest, that is in the green with gains of little over 1%. But apart from that, metals is the top losing sector, as Sharad was mentioning. IT, PSU banks, media, across you're seeing that kind of profit booking and selling pressure that has creeped in the last 15 to 20 minutes of trade. But individual pockets that are buzzing, which are on NDTV Profit's watch list. We mentioned about pharma, and that's the cancer drug shortage in the US, which is providing some bit of a fillip to that space. You have BASF, that stock is at a 1-month high. IT stocks, the global tech sell-off is what is weighing. You have Tata Motors CV, which is eyeing a 40% market share in the domestic CV segment, is what they've indicated. So that stock is in focus. Vedanta, we did see a block deal where promoters went ahead and sold. Kirloskar Oil, 2 consecutive sessions of rallies. Sirma has formed a new JV with Kaga Electronics. And New India Assurance, that's actually snapped a 7-day gaining streak. We will get you a special coverage on New India Assurance as well on India Market Close. So stay tuned for that one. Nifty Real Estate Index, the volumes are 3 times the average. There was strong momentum there. That's seeing profit booking now. Textiles, where Motilal Oswal has initiated coverage on a lot of textile companies, and they're expecting a gradual recovery, I beg your pardon, to come in. And InfoEdge betting big on AI and deep tech. In fact, we'll have an exclusive conversation with Sanjeev Bikhchandani as well at 1 p.m. So stay tuned for that conversation. So that's what the watch list is looking like. But Sharad, over to you to take the rapid fire with Rajesh Bhosle of Angel One.
Thanks a lot, Hiral, for that. Good afternoon, Rajesh. It's always a pleasure to have you with us at NDTV Profit. We'll start our rapid fire. Just a caveat, there's a serious sell-off in the markets coming in. But nevertheless, of course, we can look at the medium-term setup in the technicals. Rajesh, your view, especially on BASF, the stock had hit its 1-month high levels on the intraday basis. Do you think on a monthly chart basis, there is a more sustained move going ahead?
Yeah, hi, afternoon. Talking about BASF, our stock is in strong positive momentum. In fact, if we see volume activity as well, we are seeing strong surge in volume. So yes, we expect uptrend to extend in the near term. Possibly the recent swing highs around 4,000 levels can be retested. And now on the downside, if we see prices are sustaining above 89 EMA after a very long time. So that 89 EMA somewhere around 3,600 is likely to act as a support. So buy on dip could be suggested. 3,600 would be the support, and in the near term we can expect move towards 4,000 levels.
Rajesh, for IT stocks, Friday was a big sell-off, then Monday a little bit of recovery, and again we are seeing a sell-off happening. Of course, global tech AI as theme is coming in and weighing on the Indian IT stocks also. Any good stock to actually have some shots, kind of a strategy, do you think, especially in the large cap IT names?
So we are having a wait and watch approach for the IT space, because we are seeing very choppy moves, more majorly on the downside. And if you see chart structure from the 2022 to 2023, the IT index itself is placed on a long-term support. So we are not taking any bet at current levels. But once 20 EMA is crossed for key heavyweights, that is where we'll look for good risk reward ratio. As of now, we'll have a wait and watch of the IT space.
Right. Another stock, Kirloskar Oil. Of course, yesterday was a very strong trading session, and it seems like there's a good follow-up buying happening right now also. Stock is up more than 3%. Do you think good time to do a little bit of profit booking here, or this is a sustained trend, at least on the weekly charts?
So if you see higher time frame, definitely it's in a strong uptrend. But when it comes from a shorter term perspective, I would suggest to book some profit because if we see from morning highs, prices have definitely corrected, and on the daily chart, if we see some kind of shooting star price pattern is visible, so profit booking could be suggested. And once it dips back towards 20 EMA, somewhere around 2250 to 2200, there is where we can re-enter. But as of now, book some profit.
Okay, book some profits. Let's talk about the realty space. The realty index also slightly in the green, but showing a good technical strength. From last week also we have seen, the Nifty realty index going up. But there are certain stocks, like AB Realty and even Oberoi Realty. A lot of realty stocks doing well in trade. Do you think this will sustain? And if yes, where is the risk-reward ratio looking good for fresh entries? Rajesh?
So we are seeing fresh breakout in a reality space, and they have definitely done well in last few weeks. As I highlighted, fresh breakout is there. Prestige instead, if we see there is a cup and handle pattern breakout, and after a long time 200 DMA is crossed. Volume activities are also very strong, so possibly the outperformance can extend. So Prestige Estate can be bought with a medium term perspective. Possibly 1700 can be expected. Similarly, if we see Oberoi Realty, mid-cap space counter, even this counter is looking very interesting. Double bottom breakout is there. This stock is already sustaining well above 200 DMA, and possibly from here onwards 1800 can be expected. So both the counters, Prestige as well as Oberoi Realty, from a medium-term perspective.
Right, two picks coming from real estate, Prestige and Oberoi Realty. Also, that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks suggesting?
Thank you for that, Sharad. In terms of trends, I'm sure there's something happening with regards to Indian IT and real estate as well as pharma. But let's see what the names are indicating. Vedanta has been making it to the list as well. Jio Financial Services has been trending over the last 2 to 3 days. Tata Capital is a new addition that we're seeing, and I think it's a Tech Mahindra that we're looking at. So interesting names there. Rajesh, anything with regards to Jio Financial Services or a Tata Capital or a Tech Mahindra that you like on the charts?
So both these three counters are under pressure in today's session. So we expect weakness to persist. Jio Finance, especially if we see it's showing bounce back from lower levels, but it's not holding above its 89 EMA. So until levels of around 250 is not crossed, Jio Finance would be avoid. If we talk about VDL, there is a strong bearish gap down opening today, and the stock is also slipping below 89 EMA. A fresh lower top, lower bottom structure is there, and possibly from here onwards, levels somewhere around 270 to 265 can be expected. If we talk about Tata Capitals, yes, there is some profit booking since last 2 sessions, but overall the chart structure looks positive. Rounding bottom structure is already there. So any kind of further dip toward 350 to 348 would be opportunity. So Vedanta and Jio Finance would be on the bearish list, whereas Tata Capital, we would suggest any dip towards 350 can be bought.
Other suggestions coming in from Rajesh, but the only sector which is doing well in trade was actually surviving, you could say, in the green despite the brutal sell-off in the markets is the pharma index. Yesterday also some positive news flows came in. There were some broking reports also. But today also it's almost the sector of the day. But why is it there? Why are these stocks rallying? To decode that, we are joined in by Varsha. Hi Varsha, pharma is the sector of the day literally. What are the key reasons for this up move?
One is, of course, this being a defensive sector, so people are, investing in pharma, considering this as a defensive sector. But there are a couple of news, when it comes to this sector. One is, of course, US FDA has reached out Indian companies because of there's a shortage of a cancer drug, which is isopharmatide injection, which treats, various types of cancer. Now, why India will benefit by this and why pharma stocks are buzzing? Because India is considered to be a global hub of oncology, generics, injectables, and there's a large US FDA approved manufacturing base. We have cost advantage, and hence India will be benefited. But Indian companies which are in focus and which make this drug, one is of course Zydus Life Sciences, which will be a direct beneficiary. But Aarti Pharma Labs, if you see, that stock has been buzzing because that company makes API of this generic cancer drug which is in shortage, and hence you're seeing both of these stocks buzzing in trade. Apart from this, you have Dr. Reddy's, Sun Pharmas, and whole pack of pharma companies are buzzing because every pharma company is into oncology segment, and they are increasing the revenue contribution from oncology, and hence you're seeing that sentimental move when it comes to the other pharma companies. The other news is, of course, on the biosimilars, wherein Canada has removed phase 3 trial requirement for biosimilars, and this is a big regulatory shift to speed up the drug approvals, and the focus is now on analytics data and not on the trials, and hence this will speed up biosimilar launches globally, will improve affordability of biologic drugs, and Biocon, being one of the pioneer in biologics, is of course one of the major beneficiaries. Also you have Dr. Reddy's, Lupin, which are increasing their focus on biologics. So hence these are the news flows which is there, and by which due to which the pharma sector is buzzing.
Thanks a lot, Varsha, for that detailed analysis, and of course Varsha tracks this sector very diligently. Pretty interesting. Thanks a lot, Varsha. So now let's move on, and we have with us independent market expert Shahina Mukaddam with us. Good afternoon, ma'am. It's always a pleasure to have you with us at NDTV Profit. Varsha was discussing about the pharma industry. A lot of positive triggers coming in, and of course it's a defensive play also in terms of volatility. How do you think this sector is doing, and which would be the good fundamental stock pick from this segment?
I think the opportunity for the pharma sector going forward is pretty strong. If you see FY26, most of the businesses most of the stocks were consolidating. In fact, the businesses were consolidating. We had some pressure on generic products in the US, and also some bit of softness in the US market for overall sales. Some of the products had become very competitive, and the generic prices have come off. But I think going forward, if you look at FY27, things are improving. On a YOY basis, a lot of these companies will do much better. Like the analyst was just discussing Biocon, I believe it's going to do pretty well in FY27. One is, of course, that 26 was a year of consolidation for them. They were repaying some of their loans. So you're going to see interest costs coming off in FY27, as well as some of their biosimilars, peptides. That will start doing much better in FY27, FY28. In terms of valuation also, I think it is quite reasonable. That could be an interesting pick. Another one I would say is Aurobindo. There, we've seen a good amount of consolidation that took already place. And going forward, I think there the valuations are pretty attractive. New products should drive growth, both in Europe as well as US. So I think some of these products, as well as others like Cipla, very interesting new product launches in the US during the current year, as well as FY27, so 27-28. So I think it's going to be a pretty interesting time, and I think pharma should do well as an overall sector in the medium term to the longer term.
Okay, so that's with regards to pharma as a space. Thank you, Shaina, for that. Stay with us. You have Mundra Airport, the newly built terminal that has been officially inaugurated today, marking a major milestone for aviation connectivity in Kutch. Jeet Adani, director of Adani Airports Holdings, says that the airport is connected with Mumbai, Delhi and Surat too, and the key approvals for Mundra Airport are already in place. Let's listen in.
We see that this will open up a significant amount of connectivity and interface from Mundra, our Karma Bhumi, to the rest of India. And I know a lot of people who live here and work with us are extremely excited, and we look forward to further growth and further increasing connectivity across from Mundra to the rest of India. as of now, we are starting with not a very heavy schedule. We have a couple of flights connecting Hindon, Goa, Surat, Bombay, and we'll be starting Ahmedabad soon as well. We see there's three kinds of connectivity that is required. One is our own internal connectivity, where our stakeholders, our own employees, our partners, they would be forming a significant part of this. The other part of the connectivity or the demand that is going to come out is going to be some amount of tourism travel, because Mundra as a city also has generated significant wealth for its citizens, and we believe that there's going to be some level of demand to most of these destinations. Just keep in mind that today for someone from Mundra to even go to Mumbai was like a 2-stop journey, and having a direct flight now is going to be extremely easy for them, or they have to drive up to Bhuj and then take a flight. The third part is going to be some level of tourism travel, because there's a lot of cultural sites around as Manvi Beach. So we see that some amount of tourism will also come, will get activated from here.
So that's Sri Tatani talking about all the updates when it comes to the Mindra airport as well. But moving on, New India Assurance, an interesting one to look out for, because 7 consecutive session of gains is what we've seen on this counter, and today it's absolutely snapped that rally. 6% downtick coming in on this one. Let's just pull up a 1-month chart or even a 5-day chart to understand the kind of moves that have come in on this counter. Now, what has happened? Overall, if you talk about the counter, 45% gains in 7 sessions. The stock already trading at a 52-week high, 80% in FY27 so far. In fact, the biggest trigger over here has been the value creation and unlocking opportunity on the back of the NSE IPO that was announced, the DRHP that was filed, and if you talk about in New India Assurance as well, I think the stake that it has is always almost valued at 2,100 odd crores. Now, in addition to that, the record premium scale and the market leadership that they hold is another trigger that everyone is watching out for. Their FY26 profits surged, and this was despite the large one-off costs. They absorbed nearly 3,500 odd crore worth of wage and pension provisions as well. And the profit growth actually outpaced the premium growth for the company. The investment income has become a key earnings driver as well when you talk about New India Assurance. Now, the investment book that is driving the story, that portfolio has almost reached almost 1 lakh crores, and the investment income is now nearly 1/4 of the gross written premium of the company. There is one missing piece over here, that is the underwriting. Now, if you talk about the underwriting performance, that has been deteriorating during FY26. So your motor and aviation losses, that has what is weighed on the profitability. Your insurance operations remain under pressure. So if that continues, that is the missing piece that one needs to watch out for from a fundamental perspective, apart from the value unlocking that anyone would see on the back of the NSE IPO. A deeper dive on this one on India Market Close. Shaina, good afternoon. Hiral on this side. How are you looking at a New India Insurance? And along with this, do you think there is another better play? Because whatever it is in non-health, they are the leaders.
Hi, Hiral. Yeah, afternoon. Basically, India, as you mentioned, New India Insurance is doing well had done well because of their investments in NSE, and they have offered 1% up for sale. Now, that will, of course, bolster their FY27 earnings. At the same time, I believe a lot of it is already in the price. It is not a cheap stock. It is quite expensive if you look at the overall valuations. So, in my view, I would see this consolidating, for some more time. I don't see a up move from here now. In fact, I see a bit of correction. I think there are better opportunities available in the overall space. And in fact, I think LIC, after that huge correction, in fact, just let me go back to New India Assurance. Another negative factor here is that the government holds 85% equity. So you're going to have that overhang of liquidity in the stock. Coming back to my best preferred pick would be LIC. The valuations, look at the valuations. They're very attractive. And they also hold NSE, but they're not offloading any stake in it. So I would believe that in terms of valuation also, I would prefer LIC over New India Assurance.
Right, interesting picks coming in, but another counter, Syrma SGS, and this time there is a Japanese agreement here with, of course, with the company. But what is it all about? We're joined in by Puneet here. Puneet, is this very material for this?
Well, it's a new joint venture, and while we're still awaiting what kind of products that the company is targeting, it's important, and stocks reacting also in that way. Now, with Kaga Electronics India, they will be establishing a joint venture. Now, this will be, setting up a facility right here in India, and they will say that they have, Syrma will hold an aggregate ownership of almost 60%. 40% will be held by Kaga Electronics. Now, they have entered this agreement, of course, with a total investment plan right now of almost 25 crores. 15 crores will be invested by Syrma SGS. Kaga is also listed on the Tokyo Stock Exchange as well, and is one of the leading EMS players who looks at PCBs as well as on the semiconductor side. So this could be potentially a value addition product via the PCB route that the company is targeting, and hence a big agreement. Syrma is already up 92% in this year itself. So another joint venture for a new product.
Thanks a lot, Puneet, for that. And who knows, there might be some IP related agreement as well. Pretty interesting take coming in from Puneet. But Shaina ma'am, I want to understand, how does this change the trajectory for an EMS company like Syrma SGS right now? Of course, EMS stocks have gone up, but now they're looking for the next leg of growth.
Yeah, I think Syrma, the management guidance has always been pretty strong. They was already guiding for something like a 30-35% growth in terms of revenue for FY27. So I think this positive sentiment should help bolster the stock and keep it up. Otherwise, I would say valuations are slightly a bit expensive, but with all these positive developments, I would definitely say that if one is an investor, one can continue holding in Syrma for the medium to longer term.
To longer term, that's the view coming in. Thanks a lot, Shaina ma'am, for taking out the time at NDTV Profit. But folks, we are at the end of the show now. From me, Hiral, and the entire team who have put together this wonderful show, it's a bye, but stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Sharp slide in Nifty and Sensex drags benchmarks to day's lows. Nifty struggles to defend 24,000, nailing metals and IT names drag indices. Pharma offers some respite. And oil prices continue to retreat as diplomatic progress between the US and Iran raises hopes of additional supply returning to the market. Brent slips toward $77 a barrel as traders price in sanctions relief and a possible easing of Middle East supply risks. Meanwhile, precious metal-linked stocks traded under pressure in tandem. So you do have Hindustan Zinc, Muthoot Finance trading in tandem with metals as well. The decline tracked weaker global gold prices as investors turn cautious ahead of key US inflation data that could shape the interest rate outlook. Meanwhile, trade diplomacy is gathering pace in the national capital. A senior US delegation, including chief negotiator, has met Commerce Minister Piyush Goyal as both countries work to close gaps and advance an interim trade agreement. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before that, let's get chatting about the markets right now, and it's quite the fall that you're seeing coming in just the last few minutes as well, whether you talk about Nifty or Sensex. Nifty on your screens right now, about a 200-odd point cut really coming through, and when you talk about Sensex as well, that is actually a gas with that 550 point, in fact, downtick really coming in. So it's a tale of two triggers when you talk about markets. On one hand, you do have the Nifty expiry that is at play, global tech sell-off that is seeming to be dragging here. And when you talk about the sectoral picture, that actually tells you very clearly about those triggers that I'm talking about. So you do have Nifty Metal that is down and out in trade with that 3% downtick coming in, 2.2% downtick coming in for Nifty IT as well. When you talk about some of the key constituents, you do have Infosys down about 3%, TCS also 3%, Wipro, Emphasis, Tech Mahindra, HCL Tech, as well as Persistent. All of those counters trading anywhere between about 1% to about 3% lower as well right now. And you do have PSU Bank, Media, Energy, Bank, all of those sectors trading with a downtick. What's remaining resilient, and the other trigger right now is pharma that seems to be resilient on the back of news flow. That's said and done. Let's talk about some of the stocks also that are in focus. So there's a Vedanta that's down about 8%, Nalco, Hindustan Zinc, all of those counters are under pressure. But speaking of India, that is cementing its place as an AI hub with a razor-sharp focus when it comes to data centers and the latest trends. Let's get you the word coming in from an industry veteran who's been at the heart of India's AI story. Let's cut across to my colleague Hiral Daria, who's in conversation right now with none other than Sanjeev Bikhchandani, co-founder and vice chairman at Info.
From what you're saying as well, what was your strategy back then?
Well, we didn't overthink it. We just, met founders who were good, pursuing stuff that was interesting, even though it may be slightly far out right now, but it's interesting. And then we see what could come of it. So even back when we went into Zomato, which was then called Foodie Bay in 2010, it was a small website, not even an app, which just listed restaurants with their menu cards. But it was getting traffic, it was getting traction, it was useful. We were using it, we liked it. And we said, शायद इसमें कुछ है.
Okay, so Sanjeev, founder में शायद कुछ था कि business में शायद कुछ था?
Idea में कुछ था, founder में था. Founder and idea. Business was 1 lakh rupees a month when we went into Zomato.
Okay, so basically you're betting big on the founder, you're betting big on the idea. Business will come later. Will that the strategy be right now?
So we like to go in early. We'd like to back good founders pursuing interesting ideas.
Okay. So, if you have to talk about the InfoEdge investment as well, 1,000 odd crores over 54 AI and deep tech startups from the overall 4,900 crores. And if I have to look at the portfolio, already more than doubled. So, if you have to look at both these segments, AI and deep tech, the kind of returns AI has given you, deep tech is still far behind that as well. And I'm sure it's still niche, R&D investments are too high. Do you think this is now time to probably book profits in terms of AI? Is it a bubble, or do you think there is much more to it? Let's talk about AI first.
No, I think our portfolio, the companies we back, both in AI and deep tech, are still very early. And therefore, I think it's very, very premature to be thinking of exits right now. It will take more than 7 to 10 years further to play out.
So, okay. Are you saying that there is nothing which is in mature stages right now in terms of AI and deep tech?
Well, there are companies doing 100 crores a year or getting there, maybe 50 to 100 crores a year. Those are interesting. But, really, you've got to back them for several more years and be patient if you really want them to become large companies.
Okay. And how much conviction do you have? Because I know, by only having conviction, it's not really going to get to the investment returns that you wanted to get to. But say from 100% portfolio that you're holding with regards to AI and deep tech, you have conviction saying that, okay, I'm sure some percentage of it is definitely going to give me returns, while there is some which is still on the back burner.
Well, I think if 20% of these companies or 30% of these companies do well, it'll be a good achievement.
Okay. And between AI and deep tech, where are you seeing the moat coming in now? Because deep tech is something which is still evolving. I'm sure even AI is. But with regards to AI, with what's happening across, it's a double whammy right now, I would say. So there are some people who are of the opinion that AI probably is a bubble. People are talking about, okay, with the use of AI, what can we do? That's the other side of it. And the third is it a good investment bet? Now, with all of these questions, Sanjeev, no one wants to really miss out on the bus as well. And the valuations are soaring. How do you put all of this together?
I think first thing you got to figure out is it getting traction? Is it solving an unsolved problem? Do people want this? Is there demand for it? Now, if that answer is in the affirmative, then you say we can go in. And then you ask questions like, will it be commoditized? Can it be disintermediated? Or will they build a moat, a network effect, some IP being built? And if yes, then it's defensible. Then you discuss valuations. And if a valuation is high tomorrow, but the company is growing fast, even if there's a correction, a year from now, it'll seem like a reasonable valuation.
Okay. And to add to this now, do you think at this point in time, it's still good enough in terms of valuations where you can start looking at AI bets? Because from an Indian market perspective, if you have to look at AI, you do not have absolute AI plays. Either you're talking about Indian IT companies who are either acquiring AI plays or probably partnering with AI plays. How do you anticipate playing the Indian AI theme from here on?
So most of the companies invested have some defensibility, some moat, some network effect, some IP creation. Something that differentiates them from others and prevents them from being commoditized. Or they can do that next 6 months, 12 months while they're still building it out. And that is the vision of the entrepreneur. Now, if you're able to do that, then you'll be okay.
And what would you have to say when you talk about, say, backing hard tech versus software AI in terms of structurally adjusting your capital allocation? Because you've been a famously patient investor with all of this.
So look, we don't come from a hardware background, right? We come from an information and software background. Having said that, we made forays into hardware and manufacturing. So there is a company called Bharat Semi, which we have invested in, which is making semiconductors. There are a couple other hardware companies where we are sort of dabbling in. We have sort of put our toes in the water. So we've done some hardware, not a lot, but we'll probably do more hardware going forward.
And with AI as well, Sanjeev, you've actually noted that it is fundamentally deflationary when you talk about existing businesses, right? Does lead to compression of margins as well, because everyone becomes productive, but no one really stays differentiated. With the way things are moving right now, at the pace of which things are moving.
That's not necessarily true. That's not necessarily true.
Okay.
I mean, you could use AI to differentiate. You could use AI to do more. You could use AI to do different things. You could use AI to do stuff that is not being done earlier. So let me give an example. In Naukri, we've got a team of 150 engineers who do AI and machine learning, and they're constantly working on doing stuff that will make our products better. And so little example. Naukri has got maybe 150,000 clients. These are companies that use us to recruit. We sell to them and we service them 3 ways. One is the top 10% of our clients, maybe 20%. We have account managers who will go and meet them personally. The next 30-40%, you will service them over the telephone. The bottom 40% you don't even talk to at all. They come, they do self-service, they go away. They're not giving us enough business to justify a human being interfacing with them. That cost. Now with AI and voice bots, we are calling up the bottom 40% and servicing them. Now nobody lost his job. You're doing your job better. It's incremental revenue, and your clients are being serviced and are happier. That's a win-win-win. That is not AI being deflationary. That is AI being growth-oriented.
Agreed. That is AI being growth-oriented, Sanjeev. But how many of the businesses would be able to use AI from a growth perspective always? I'm sure there would be a place where it could become deflationary as well.
Yes, of course. So there will be some jobs that might be under pressure. Look, let me put it this way. Whenever a new technology happens, there's disruption and there's opportunity. I mean, up until the 90s, there was something called a telex. I don't know how old you are, but I don't know if you've ever seen a telex machine. Yes, every office had a telex. I mean, some had 2 telexes. And there was somebody called a telex operator. Now, when telexes went out and faxes became ubiquitous, the telex operator lost his job. But maybe he reskilled and became the fax operator. Maybe he reskilled and became a data entry operator. He found a job. And there wasn't this mass layoff of telex operators around the country causing problems. So people adapt, people get new skills, and they figure it out.
But, to add to this, Sanjeev, I mean, you've been hearing of so many job losses right now. I was just reading the other day wherein you had Oracle in FY26. 12,000 job losses is what we've seen. 12,000 employees that have been fired in FY26. Examples like this, what do they really tell you with what's happening in IT, which is then tied to AI?
So listen, if you compare it to the total base of employees in Oracle, I don't have the number offhand, but I would imagine it will be a small fraction, number one. Number two is, I don't know how many of these job losses were actually because of AI or were they being attributed to AI. Number three, we have seen this movie before. We saw it in 2007-8 in a global financial crisis. People were firing, but they were also hiring. They were firing one skill set, they were hiring a different skill set. And overall, eventually after 5-10 years, there was growth when you look back on it. So let's wait and see what happens. But will some people lose jobs? It's possible.
Okay.
But
All right, and there you go. So that's the word coming in terms of the disruption when it comes to AI, and that's across industries. But let's also talk about another disruptor, and let's talk about what's happening in terms of disruption with oil prices as well. So now when you talk about oil prices, you're seeing quite the fall come through right now, and that's on the back of some of those easing supply tensions, as you can see on your screens as well. About 1.5% downtick really coming in for Brent and WTI as well. Similar moves that you're seeing coming in when you talk about silver prices as well. Quite the slide that you're seeing there. Let's also get you some of those insights as well and put all of these things in perspective. In fact, Vandana Bharti, AVP Commodity Research, SMC Global Securities, joining us on the show right now. Vandana, thank you so much. Pleasure always speaking to you. Firstly, wanted to try and understand what you think about the disruption in the oil markets right now. There's a lot that the market is looking at right now, and the number one disruptor right now seems to be the entire announcement coming in when it comes to the US oil waiver.
Yeah, hi Shreyanshi, and thanks for having me in this show. And the announcement is getting longer time, but yes, the relief is that the Iran oil, it is from the sea to shore side, and it is a relief for the market. And because of that, we have seen a decline in the prices. And next we are expecting $67 kind of level in crude oil after hitting it $70. So yes, the entire world is tracking the transportations and volume, which is crossing the Hormuz, and on basis of that, prices are moving that. But yes, $67-65 kind of level is a very strong support for this commodity, because ultimately some disruptions will take some months to year to get back. So yes, $67-65 we are looking for, and in Indian market, I'm expecting that the prices should move up towards the level of 6,500, 6,600 kind of level.
No, absolutely, Vandana, and you're not alone when you say that you believe that the disruption might last from between months to years, because Qatar, in fact, has also come out with that verdict as well. There's a bunch of commentary that we've been getting throughout the course of the war as well in terms of how the infrastructure issues could really be a problem going forward, which brings me to my next question in terms of higher for longer oil prices, right? This is something that we've been talking about given the entire situation when it comes to the war. Is it something that you're still penciling in? And where do you also see the bottom of the barrel, given that, all of the supply concerns, about 80 million barrels, could really be kicking back in? And there's a lot that you're looking at there.
Yeah, if we calculate the entire episode, there was a demand destruction of around $1.5 because of the higher crude oil prices, and that is going to be normal. And the disruptions, it is still there could be 7 to 8 million barrel per day disruptions, even if they start the transportation very smoothly, and even they allow even they ink the agreement today only, but still it will take 6 months to get rid of the sea mines. So we cannot say that it is going to be very easy and the entire supply will come in a very short time. So at least it will take 2-3 months to get the transportation normal, but whatever damages have been done in refineries, in oil wells and all, it will take years. So yes, $65-70, it will be a higher bottom for crude oil this time. But yes, some demand destruction is there because of some kind of slowdown indications in the major entire world, because China is there, real estate problem is still there in the China. And yes, even in case of silver, earlier it was base metal, now it is in the case of silver. Now they have become the net exporter. So it is showing a kind of slowdown in China. So
no, absolutely, and Vandana, this is something that I really wanted to double down on right now, right? In terms of silver as well, you've seen quite the decline come through right now. You do have very interesting trends that are really playing out in the market. Do you think that the demand seems to have taken a hit, or do you think that this is a little bit of a knee-jerk reaction coming in on the back of high interest rates that the market is tracking?
It's a combination of all. There is some position shift from July to September contract that is creating a panic in the silver prices. And yes, China, they aggressively import the silver and now they are exporting it. So they became exporter here. Some demand destruction was there because of the crude oil higher prices, and the world is waiting for more positive data. So these four kind of triggers, it made silver bearish for the time being. And yes, the dollar index, it played the major crucial role in case of bullion. So $61 is a very crucial support. Once it hit the mark of $67, it will open the door for $58 or $57. So from 118 kind of level, we are moving towards the level of $5 kind of level. But still, it will create a demand from ETF as well as physical buying for silver. And what it is happening in gold, the China, they have aggressively started buying gold. Similarly, they will go for the entire world. They will go for silver in case of possible and ETF.
No, absolutely, which exactly is what I wanted to discuss with you in terms of gold as well, right? It's almost like you have the key to all of the questions that I want to ask you this afternoon, Vandana, because gold is essentially the next thing that, you should be tracking at this hour right now, given that you seem to have some of that extension of the decline really coming in. And what do you think is going to be happening from here on? Do you think that the fundamentals are going to take charge of the markets and the bulls could really win this battle right now?
Exactly, because May, June, July, these 3 months are considered to be a very dull season for gold prices. And in these 3 months, we have seen decline every year. So now the decline came and the intensity was higher because of the dollar and all sort of other triggers. But yes, in between, what is very positive for this gold counter is that China, they have bought around 163 tons of gold. So from lower level, central banks, they are very active in buying, and ETF and retailers, they are moving out from this counter. So once the ETF buyers and the retailers, they will enter into this counter, the rally will start, and I'm expecting that in July or August low, the upside rally in gold counter, it will start and it will continue till the month of October, November, if we consider the seasonality, and the trend is moving accordingly. Even the fall from $5,600 to $4,100 or $4,000, it will create a physical demand for gold, whether it is gold, jewelry, whether it is coin or bars.
Absolutely, Vandana, and thank you so much for helping us out with that entire outlook also coming through when you talk about prices as well. Quite interesting to see the way that the market is really playing things right now, and thank you so much for joining us with all of those insights. Speaking of the market and metal stocks right now, let's talk about the heat that they're feeling right now on the back of falling steel and aluminium prices, signs of returning global supplies as well that we've discussed in profit booking trigger in terms of a sharp pullback. In fact, Sharath is joining in with some of those key details.
We are seeing a strong sell-off in the metal stocks, be it the steel stocks or even the aluminium-related stocks, as of course the global pricing that has come down. One of the main key reasons for this is, of course, the progress which is happening between Iran and US, and because of that, the supply issues that seems to normalize. That's one of the key reasons for it. Remember that the aluminium prices that comes in at 3-month low, and the steel, the rebar prices, that has also actually corrected. And today there is a stock-specific news also where Vedanta, the promoter stake sale has happened via block as well. Dollar is trending, and there is an inverse relation with the metals and dollars, and of course the profit booking was the rally which we had seen over the last 2 to 3 years in the metals. That's also where we are seeing a profit booking happening. The Nifty Metal Index hit its lifetime high levels, you could say, in the month of May, but from there the correction, look at that, Vedanta, Nalco both falling between 17 to 20%, while SAIL, Hindustan Zinc and Hindalco also falling between almost 14 to 16 odd percent. And yes, the Oswego plant fire overhang was also there for Hindalco, but net this is the entire reason why the metals are seeing a strong sell-off.
No, absolutely, and thank you so much, Sharath, for joining us with that update. Also coming in terms of some of those metal stocks that you should be looking at, in terms of news that you should be tracking at this hour. Mundra Airport's newly built terminal was officially inaugurated today, marking a major milestone for aviation connectivity in Kutch as well. You do have Jeet Adani, director of Adani Airport Holdings, saying that the airport is connected with Mumbai, Delhi and Surat as well, and key approvals for Mundra Airport are already very well in place. Let's go across and listen into that bit of commentary.
We see that this will open up a significant amount of connectivity and interface from Mundra, our Karma Bhumi, to the rest of India. And I know a lot of people who live here and work with us are extremely excited. And we look forward to further growth and further increasing connectivity across from Mundra to the rest of India. As of now, we are starting with not a very heavy schedule. We have a couple of flights connecting Hindon, Goa, Surat, Bombay, and we'll be starting Ahmedabad soon as well. We see there's 3 kinds of connectivity that is required. One is our own internal connectivity, where our stakeholders, our own employees, our partners, they would be forming a significant part of this. The other part of the connectivity or the demand that is going to come out is going to be some amount of tourism travel, because Mundra as a city also has generated significant wealth for its citizens, and we believe that there's going to be some level of demand to most of these destinations. Just keep in mind that today for someone from Mundra to even go to Mumbai was like a 2-stop journey, and having a direct flight now is going to be extremely easy for them, or they have to drive up to Bhuj and then take a flight. The third part is going to be some level of tourism travel, because there's a lot of cultural sites around as Manvi Beach. So we see that some amount of tourism will also come, will get activated from here.
All right, then that's all that we have on the show for now. Thank you so much for tuning in. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of India Insecticides. Now, if you look at the share prices, they're down nearly 21% in the last 1 year. So the two key questions to ask the management would be the benefits of Strait of Hormuz opening up and also how the demand has been picking up with monsoon coming in. The second counter is an SME stock, that is Yash High Voltage. Now this stock is important because they have raised nearly 151 crore rupees from various investors. To name a few, Madhu Kelar, Ravi Dharamshi's own fund, Motilal Oswal, while White Oak have also invested in this fundraise. So what's the way forward is something that we'll try to decode with this company on the show today. Apart from that, we'll be also speaking about stocks like Aarti Pharma Lab. The stock was up as much as 10% in trade because of a shortage of lung cancer drug in the US market. Now do remember, Aarti Pharma Labs is the only Indian company manufacturing the API for this lung cancer, and hence the stock has been gaining in trade. Apart from that, we'll be also talking about Polyplex Corp. Now, the stock was up for the fourth trading session. If you look at the volumes, they're quite strong in the market. They were nearly 30 times its 20-day average. And another interesting fact about the stock is that its Thailand-listed subsidiary share price of that company was also up nearly 40% in trade. So what could be the potential reason behind this move is something that we'll try to decode with our fundamental guest on the show today. Now, if you look at the market, it has been a weak day. The Asian markets have been weak. We are down nearly 250 points from the day's highest point. Somewhere around 23,900 is something we're trying to hold on to. Currently, we are just 20 points down below that crucial mark of 23,900, but we have been holding around that level for the better part of the day. If you look at the sectoral indices, apart from pharma, all the sectoral indices have been trading in red. As you can see, that Nifty Pharma and Nifty Healthcare, those are the only two sectoral indices that are up anywhere between 0.7 to 1%. Apart from that, all indices are down in trade. Metal index, the worst loser, down around 3.4%, largely in the back of weakness that we have seen in aluminium and steel prices. But Varsha, when it comes to the small cap names, what have been buzzing there?
Well, let me pull up a chart when it comes to Garuda Construction, because that stock is up on the back of huge volumes. A good day for this company. The volumes are trading at 28 times of its 30-day average. Let's see what that stock is doing. Is up almost 10% in trade. You have Roto Pump also, 35 times volumes, is up again almost 10%. You have EMS company also buzzing in trade. You have Black Rose also, quite gaining when it comes to small cap segment. Black Rose is also up, if I'm not wrong, almost 9 to 10% in trade. On the loser side though, you have, Rosel Tech, EPAC Durable, which are sulking on the trade. You also have NACL Industries and SEPC, which are down. Rosel Tech is down almost 12% in trade. Even EPAC Durable is also seeing some kind of pressure. SEPC is down almost 5%. You have NACL Industries also. EPAC is down almost 7%. So, as Somit was saying, not a very good day for the market, but yeah, few of the stocks are actually buzzing in trade on the back of volumes. But one stock which is in focus is Insecticides India. Now, we are seeing Strait of Hormuz opening up, even companies going into premium products. June was expected to be better as per their latest con call. Let's see what management has to say. We are here joined by Mr. Rajesh Agrawal, who's Managing Director at Insecticides India and Vice Chairman of Crop Care Federation of India. Mr. Agrawal, welcome at NDTV Profit. Always pleasure to have you. With the Strait of Hormuz now opening up, how are you seeing overall situation considering the demand and supply, and what's the on-ground situation that you're seeing?
Okay. The Strait of Hormuz will definitely ease down the petroleum prices, and we have seen the crude coming down. And as it impacts the crude, so it's not only the availability of the solvents, emulsifiers, which are the integral part of agrochemicals, but yes, it will also ease down the possibility of fertilizers, which the farmer is suffering. And if we talk about the current ground level situation, then there is a delay in the monsoons of about 2 weeks, which has impacted the sowing pattern, particularly in the southern part of the country, in the central part of the country, and to an extent to the northern areas also, because they are also impacted a little by this delay in the monsoons. And as the monsoons has started hitting it has started from south and reached up to Maharashtra. So as the things go better, this situation is going to change in totality. But at the moment, the sentiment was bad till last week, and it has started showing the signs of improvement in this week.
Sir, you were actually expecting demand improvement in June as per your last con call. Have you seen, today today is 23rd June. Have we seen some kind of improvement, and how is Q1 looking like? Would there be any kind of pressure considering the delayed monsoon?
Yes, the improvement which was expected has not come in the month of June. But we are expecting now in this week, because the rains were delayed, and due to too much delay, the sowing itself got delayed in the central part of the country and the southern part of the country. And so far, in many parts, it has not started. So there is an overall delay in the business opportunity. It has impacted, but I believe that we'll be able to come at par, or we'll be able to show a small improvement in our performance in Q1. And the actual is to come in Q2. Q1 will be a little small growth or negligible growth actually.
Okay. Now speaking about longer terms, sir, here, or longer trends here. Now over the last 3 years, if you look at your margins, it has expanded from 6.8 to 10.6%. Is there further scope of margin expansion going forward?
Definitely, we are working in this direction because we have built up the premium products. We are working for brand enhancement and brand building exercise. We are launching new things. We are backward integrating. We are investing in R&D. We are launching new products. So all these exercises, they are meant to
keep the farmer on your side, to give him the newer, better solutions, to give him the premium products. So I believe that this double-digit margin which we have achieved in the last year, it has to become a new normal, and slowly we will expand our margins from here with the top line growth also, which is expected in years to come, along with this fiscal itself.
Any number if you could share with us, say over the next 2 to 3 years, what is the kind of margin expansion you're expecting?
Like if we talk about 3 years, definitely we are expecting 2 to 3% margin growth from here, what we have achieved already. So we must be crossing 12% in next 3 years, definitely, with a good top line growth. And the top line growth also expected is in the range of double digit.
Is it in FY27, sir?
FY27 also is a positive, should be a positive year. I'm very, very hopeful, though monsoons have delayed, but it is started picking up as we get the shower in this week and the next week. So the entire sowing in the country is going to happen, and we have not only spread the premium products, but also many generics and general products in the market. So I'm quite hopeful with both the products going into the market, we should be able to show the growth in this Kharif season also.
Okay. Now, one of your acquisitions that you did, I believe, a couple of years back, Kairos, it has already been generating good profits for you. How are you expecting the performance to be for this particular acquisition that you had done, say, over the next couple of years?
We look at Kairos as a good opportunity for Insecticide India, because we have launched the brand of Kairos in the market, and we are establishing the network across the country. Already north, east and west, the entire network and the teams are set, and we are quite hopeful to get a good decent contribution in this year. So 5 years down the line, I see Kairos as a 1,000 crore company.
Right. And sir, also the premium products which contribute 60 to 63% to your top line today, the target that you've set is 70%. By when will you achieve that target, and how much incremental increase in margin that you're seeing on the back of this premium products, and by when?
These premium products are contributing regularly. Like we are slowly improved from 40 odd percent to cross 60%, and the vision is to achieve 70% in next 5 years. It's a 5-year target. So we'll keep on getting more contribution from these premium products, and the entire launches which are coming in the times to come are from the premium segment itself. So not only the products which are launched in the past, but the new products also will keep on contributing to this growth, and definitely we'll achieve this. So, and the profitability also will be visible. As I told you that the 3-year target is to improve 2% at least in the absolute margins. So that is the vision which we are keeping for the company.
Right. And of course, on CDMO, sir, when do you expect meaningful revenue contribution to your business when it comes to CDMO segment?
This year we should see a small start, and as it goes better, so the future will see more opportunities coming into the company. So we have signed certain agreements. We are making some small supplies, and then we have to see how we are able to commercialize these and make it big.
Okay. Working capital was one of the issues earlier in FY26 that analysts had pointed out. Has the situation improved, or you're expecting that to improve in the second quarter of FY27?
There will be small improvement in this Q1 itself, and Q2 will see a better improvement because that's the major selling month, and the sales have been little slower than expectations in this month, in particular May and June. So there will be improvement definitely visible in this Q1 itself, and Q2 should have a major improvement, I would say.
Right. Thank you, sir. Thank you for joining and giving us the way forward for Insecticides India. Well, that was the management, quite optimistic on the growth going forward. With that, let's also welcome in Avinash Gorakshakar, the founder and head research, Avinash Mentor Research Services. Sir, you heard the management. They're quite optimistic on the growth given the fact that now geopolitical issues have resolved, which will also lead to lower raw material costs, and also monsoon is picking up now in the country. How are you looking at this counter at current valuations?
Yeah, good afternoon, Somit. I think the company should do well in FY 26-27. I think they have a good pipeline of products. Plus, the CDMO business, as the management pointed out, is also going to start contributing, from the second half, hopefully, of FY 27 onwards. But I think the first quarter numbers, Somit, will prefer to wait and watch because this company is largely a insecticides company. And, the April to September period is the peak period for these companies. So the quarter one numbers are likely to be impacted. The monsoon has been delayed. Plus, I think raw material prices have gone up. So possibly we could see some recovery from quarter two onwards. But I think definitely it's a good structural bet in the agrochemical sector. Our sense is that over the next, say, 12 to 18 months, you could expect a decent risk reward. But it's better to wait for Q1 numbers to come out, after which, there would be more clarity.
Moving on to the next management on the show, Darshan Thakur, Executive Director Finance of Yash High Voltage, joining us. Now we are getting the management because they have done a fundraise of close to around 150 odd crore rupees from very prominent and well-known investors. So, sir, firstly to ask off, get the answer on this, why this fundraise at this moment? How are you going to deploy these funds? And what's the way forward for Yash High Voltage?
So, firstly, thank you to NDTV Profit for having me on your channel. It's indeed a pleasure. Before we get into the details of the fundraise and how it will put the company into the next growth trajectory, let's understand the landscape of the industry in India and globally. So today, India as a country is witnessing unprecedented investments across power generation, transmission, renewable energy. You have EV infrastructure, industrial expansion, you have the dedicated freight corridors. There is an estimated investment of close to about 17 lakh crores over the next 5 to 7 years in this, particular industry. Now, today, as company, as Yash High Voltage, we've been into this business for about 18 odd years. It took us a long while to, be where we are today. We are in that sweet spot where, the company has the faith from the customers. We have established, close to 50,000 bushings that are running on the ground, out of which about 25,000 for over 10 years now. Now, when you have a well-established market for the product, there are tailwinds in the industry. There is a boost from the government, and you're well positioned to capture this. And that is where we felt that we need to get onto the highway. Okay, so with this preferential issue of close to 151 crores, we are entering the 550 kV segment, which will put us, and help us compete with the global giants in the industry.
Okay, so the entire fund will be used for entering this new segment. Is that what you're saying?
Yes, so it is basically a small amount of about 26 crores into the OIP segment. So broadly, the industry is into two parts: the RIP, which is relatively a new technology, RIP, RIS, we call them dry bushings, and the OIP. So 26 odd crores is into the existing brownfield project for OIP expansion, and the balance is towards the RIP project.
Okay. Also, if you could just tell me, given the fact that most of your raw material is imported, I believe, right? So, because of the current war, did you face any issues in terms of higher cost, delayed procurement?
So not delayed procurement, but yes, there were cost escalations. Fortunately for us, we've been able to navigate through this crisis quite successfully. Some of it we've been able to pass on to our customers. Some of it we've been able to optimize through cost efficiency and optimization. And that is precisely what is reflected in our EBITDA margins, which actually went up by about 260 basis points over the previous year.
Okay. Coming back to the new segment that you just mentioned that you will be entering, how much time will it take for you to actually see this revenues realizing into the P&L account, and what is the kind of incremental revenue that you're envisaging here?
So, see, right now the installation and commissioning of the plant and equipment is in process. It should take us maybe another 1.5 months at max. Then there is a type testing process that is involved. Where you when you're developing a new product, there are type tests involved. which will be parallelly, but it will take another 2 or 3 months. By end of quarter 3 is where we should be able to move into commercial production.
Right. Hi, Mr. Thakkar. Varsha, this side. Pleasure to have you. So you're scaling from 245 kV to 550 kV. Now, how much this expand your addressable market? Number one, and what percentage of revenue can this high voltage segment contribute? Maybe in next 2 to 3 years.
So first, to answer you, this particular addressable market for up to 420 kV or 550 kV globally, the addressable market currently, global addressable market is close to 19,000 crores. We've just touched the tip of the iceberg. We expect this to, continue to grow at about 5 to 6% over the next 5 years. Over the next 5 years, the addressable market for us will be close to 28 to 30,000 crores. Our aspiration or clear action plan, or you may call it vision, is to get to 5% of the total addressable market over the next 5 years. This translates to roughly a growth of 4 to 5x over the next 5 years.
Right. And sir, 400 crore of order book, this gives you the revenue visibility. I get that point. But how much of this can convert in FY27?
So this entire order book, and of course, we've added a lot more order book over the last 2.5 months also. We have our order book, which will take care of our, invoicing numbers for the next 15 to 18 months.
So, I get that point. I just wanted to understand the 400 current order book that you have. How much of this will be executed in FY27?
Oh, almost the entire thing.
Okay. So
whatever we are adding is over, splitting to the next financial year.
Okay, so we can consider that 400 crores of odd revenue you can achieve in FY27. Am I right?
Last year we grew at about 57% year on year. We would definitely, would want to maintain a higher growth rate than what we already did last year.
Understood. And so what about margins? Currently, you almost 24% of EBITDA margins that you have. Is there any possibility of inching up this margin, or you'll be maintaining this kind of margins?
So see, Varsha, how it works is that today, we are importing our cores, which is, bulk of our imports is the basic or the active part, as we call it. Now, once we start indigenization of this process, one is that, you definitely save on the margins of the vendor. Then you have a reduction in your freight, foreign exchange. All this translates to definitely a margin expansion, but not in the current financial year. We see the margin expansion kicking in from probably a year and a half or 2 years later. And that is where we would be able to see a margin expansion of at least 4 to 5%.
Understood. And sir, everything for you, at least, or rather I would say investors are actually betting on RIP localization. Now, if what can go wrong here? I mean, is it customer approvals which will get delayed? Or will that, push out your revenue? What are the execution risks, if you could highlight it for us?
So, see, this is a new technology. We've been making up to 245 kV, and now we are venturing into the 550 kV segment. So there is definitely a technology enhancement. To mitigate that risk, we have onboarded a Swiss partner who's our technology partner. The agreement or the engagement with the Swiss partner is to help us develop the complete product range for the 550 kV and successfully commercialize this into production. When you are entering any new segment or any new product development, we understand there'll be teething issues, those small glitches, but the management is very confident and, we will be able to overcome these glitches.
Okay. So coming back to the revenue potential or the revenue expectation that one can have for FY27, I believe you have around a capacity of around 15,000 units annually. So at a peak utilization level, what is the kind of revenue that Yash High Voltage could generate?
See, generally, we don't measure our capacity in units because, I may be able to manufacture more number of units for a lower kV class. The moment it goes into a higher kV class, for instance, a 400 or a 550 kV, the per unit realization is like, grows up multifold. So we measure our capacity in terms of revenue. With this expansion, our installed capacity for RIP bushings goes up to a turnover of 900 odd crores, plus an additional about 125 crores in OIP segment.
Great.
So total installed capacity of 1,000 odd crores is something that we get into.
Great. Also, just wanted to understand something on your customer front. I believe currently you might be having all the big names like Power Grid, CG Power or Transformers and Rectifiers as your clients. But usually how much time does it take for a new player to get onboarded in the list for these clients? What is the wait time period, and are you looking to add more clients?
So one is, yes, of course, on the client front, we constantly, want to keep adding new clients so that, we don't have that concentration risk on a few customers. Second, on the, the biggest entry barrier in our industry is not the investment. It is basically, the approvals from the end user. Okay, and it is really a long gestation period. Yash High Voltage as a company also took about 5 to 7 years, to get all these approvals in place. And that is why I say today we are in that sweet spot where we have the approvals, we are well accepted in the market. We have created a visibility in the market as a reliable component provider for the transformer industry. So you really don't see you might be able to see a lot of transformer companies adding capacity and a lot of new players, not only in India, but globally,
right,
who are entering the transformer space, but you don't really see a lot of bushing players. There are a handful of them. The segment that we are into, we don't have more than 8 or 10 players globally.
Right. And sir, quickly just wanted to understand one single thing. Copper, I believe, is the single largest raw material for the company. And over the last 1 year, we have seen a massive increase. Is that, can you pass on this cost to your clients?
Like I said, not completely to the client. I mean, we would not want to put our clients also, bear the entire burden of the increase in raw material cost. Some of it we've been able to pass on. Some of it we've been able to, optimize through cost efficiency measures. And that impact is quite visible in our EBITDA margins for the year.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Yash High Voltage. Avinash, quickly your view on the stock.
No, I think, Swamit, this is a very strong structural growth story, and I think it's a bet on the power sector. The kind of product Yash Voltage makes, I think, has made a lot of prominent marquee investors come and invest in the preferential issue. So I think, the numbers for 27 are also going to be equally strong. Of course, valuations are not cheap. They are fair to expensive. But I think over the next, say, 12 to 18 months, we expect that, the risk reward can definitely be good. I think one can definitely look at buying this stock on declines.
Right. Thank you, Avinash. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri. And the mood of the market has completely changed since we last spoke, right, at 10:30. Unfortunately, we've slipped way below the 24,000 levels, now even below the 23,900 levels, currently trading at 23,870 odd levels. Almost a % of a downtick is what we've seen on the benchmarks. And largely, we're seeing a fall through in terms of sell-off because of the way global markets have also performed, right? There's COPSI, which is down almost 9%, Japan, which saw a downtick of around 3% Taiwan, which saw a downtick of around 1.5%, and that is being reflected in Indian markets as well. Let's try to pull up the heat map as well and see as to what are the counters and what has changed there. Now we have the metal packs which is dominating the sell side, and unfortunately, while we were seeing a good healthy advanced decline ratio on the Nifty 50, now it's just a few counters which are in the green, and the rest of the chart is in the red. And lot of sell-off in the metal names is what we're seeing. JSW Steel, Hindalco, Tata Steel, all of these counters down 3% each, plus your IT also contributing to that lower levels. You have Infosys, Wipro, TCS all down in that range of 3% again each. Tata Motors is also something which is down by about 3% and I think Puneet will be in a better position to tell you as to what has gone wrong here. But with regards to sectors also, like I said, IT and metals is where the real pressure is. Let's try to pull up the heat map and see. Pharma still holding up by about 1%, followed by the healthcare. Otherwise, all your sectors are in the red. PSU banks also now tanking almost 2%. Media also seeing downtick of around 1.7%. Energy, bank, etc. All of those names in the red. But in terms of where the broader end of spectrum goes, let's try to pull up the advanced decline ratio to see as to where that ratio stands, because we were even Stevens in the morning, but right now, completely on a different level, and that gap is widening unfortunately by the hour. You have around 2,000 odd declines versus that of 600 odd advances. So that's the kind of pressure in the broad end of spectrum as well, because the mid cap 150 is down by about 1%, the small cap 250 is down by about 0.7 odd percent, both trading at their day's low point. So that's the mood of the market right now. But let's start taking all your stock related questions, and to answer them, we're joined by Tapan Doshi, research analyst at CATapan.in, and Kunal Shah, senior technical and derivative analyst at Mirae Asset Sharekhan, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to you. I'll start by taking the first question, which is from MM Kapoor, who's writing us from Lucknow. He's got 33 odd shares of SBI that is bought at the levels of 1100. Wants to know whether he can continue to hold this one or sell. Kunal, a very good afternoon to you. I'll come to you on this one. What are the charts indicating?
Good afternoon. Good afternoon to everyone. So I think overall SBI, I think looks positive on the long-term charts. So I think again continue to hold it. Now from a short-term perspective, if you look at it, the support is at 980, 990, and that has been a very strong support for SBI. And I'm expecting this to move towards 1080 on the upside.
Got that view, Kunal. But let's take another question now, and this one's on Pace Digitech. Now, Dilip, stocks actually buzzing in trade today as well, up almost 8.5% and continuing to do so. Yesterday, the company put out its investor presentation, also some targets given, and market is taking it with both hands at this point of time. He is holding shares, Dilip is holding shares at 1090. Stocks actually trading sub 200. So I hope he means 196 and not 1096. But he wants to know if it's a good time to add more at this point of time. Tapan, that big update coming in for the company yesterday, probably boosting the shares. Very good afternoon to you. What's your view on the stock now?
Yeah, good afternoon, Puneet. Yes, no, quite an aggressive guidance. And if you see order book, execution is the key now. They have more than 8,000 crore of order and already, best manufacturing ramp up they are going to do. The only thing is the working capital stress will be there. That energy business is also scaling quite good. Now, we have to see how the debt they are going to handle and the interest cost and all that. But somehow I feel that it is a fast growing infrastructure player. So one can hold to this stock. Yes, if he wants to buy around 190, he can start entering again.
All right, the next one that we have is on GE Shipping. Sarthak Pathak from Mumbai has bought it at the levels of 1641. He says that it's seen a lot of correction in the past week. Continue to hold or sell. Kunal, your view on the charts? This is GE Shipping that I'm talking about.
I think I continue to hold the stock on the weekly charts. The 20 DMA has been defended. So one can continue to hold with a stop loss of 1352 on the downside.
Okay, all right. The next one that we have is coming in on Bot India. Our viewer DJ Rao from Hyderabad is holding 50 odd shares at the levels of 26,125. Wants to know if he can continue to hold or book a loss. He says he's got no time constraint. Tapan, any view on this one? He's sitting on a loss of around 26,000 rupees.
Wait for one more quarter. No, they are good in chronic therapies and that is only driving the growth. Premium healthcare demand is rising. That is where company will benefited and no new launches are also coming. The thing is, there is a limited export diversification, but they have high ROC and cash rich balance sheet. So yeah, please hold for one more quarter.
Okay. All right. The next one that we have is coming in and this is on Aventil. Ravi from Hyderabad has purchased Aventil at the levels of 174. Currently, let's try to pull up the stock and see where it's trading at 171, and he wants to know as to what should be the view in the near future. Kunal, any view on the charts for Aventil?
I think for Aventil, even if you look at a daily chart, it has been trading in a heart of high bottom formation. With the markets correcting, it could come to a dip towards 160. If it gets a close below 160, then exit your long.
Okay. All right. The next one that we have is coming in on Heritage Foods, and this is from Sri Krishna, who's writing us from Bengaluru. He's holding this at the levels of 415. 100 shares is what he's holding. He wants to know if he can accumulate more. Tapan, any view on this or the entire space that it operates in, the dairy space? Because, you know, in the last couple of months, we've seen that value-added products is what it's leading the growth in all of these names.
Yeah, totally agree with you. Value-added products is growing actually, and the web share also increasing steadily. The distribution for this company is going good now. The only thing is a lot of competition is there. Milk price volatility risk is also there. Again, it's a margin-sensitive sector. So I'll wait for some time, but still, I think maybe 10-15% upside in this year is there. Currently, hold on to this stock.
Okay, all right. The next one that we have, by the way, for viewers who are just tuning in, you can also give us a call on the number that will be flashing on your screen up there. Callers, ask your query live. The next question that we have is from Utkarsh, who's asking about Lotus Developers. He's bought it at the levels of 176, and he wants to know whether he can continue to hold this one from a slightly long-term perspective. This is 3 Lotus Developers that he's talking about, and his buying quantity is very high. 6,500 Tapan is what he's holding. But any view on this one and of course the entire space of realty?
I'm quite little positive on this sector overall. And again, luxury real estate is cyclical in nature, so one has to keep that in mind. But I think in 27 revenue growth, maybe around, that is what company is saying, that more than 50%. Even pre-sales momentum is quite good. It is a asset-light redevelopment model. So I hold on to this stock. I think you can add it more once it goes down, but yes, hold on.
Okay, all right. The next one that we have is on NCC. Satyan has been holding this since a year at the levels of 220. He wants to know whether he can continue to hold this from a long-term perspective, short-term perspective, and whether he can average at the current levels. Kunal, what are the views on the charts, and do you think it makes sense to average at the current levels?
I think not to average at the current levels, but you can continue to hold the stock here. 140 is now has become the immediate bottom for the stock. Till the time that is not breached on the downside, the view remains positive. And on the weekly chart, if it surpasses 170 on the upside, then one can start averaging for the stock, looking for higher targets of at least 230 to 40 on the upside.
Okay, all right. The next one is on Sharda Cropchem. Preeti from Raipur is sitting on a loss of 11% is what she's saying. She's not given us the quantity or the buying price, but she wants to know if she can continue to remain invested or shift to something else. Kunal, what would you recommend?
I would recommend continue to hold. Now 850, 860 is a very strong demand zone. If that is breached, then the fall would be steeper. Currently trading at 888. And even if you get a bounce towards 1050, 1100, that could be an exit opportunity.
All right. Okay. The next one that we have is on Urban Company. Achint Nagel is asking this question, and he's holding Urban Company since the price of 143. Wants a view on this one from a slightly short-term perspective, but Kunal, enough data on the charts to give a perspective on Urban Company?
Yeah, I think yes. From a short-term perspective, yes, you can continue to hold with a stop of 129 and can look to see the up move continuing towards 143, 144 on the upside.
The next one is on Gaudium IVF, for recent, fairly recent listing. Akshat wants to know if this is a good time to make an entry into this one. Tapan, it's had its fair share of gains, but it's also corrected a tad bit. But what would you recommend from a long-term perspective? Do you think it's a good counter to continue to hold?
See, currently, we have to see more, 1 or 2 quarter more here. If you see the IVF industry is going by 15+%, a new center they are planning. Again, the patient's volume is increasing. Only thing is that geographical concentration risk is there. But I think asset-light fertility clinic model normally does well. So my take is please hold on to this stock.
Got it. Let's take the next question now. That's coming on Transrail Lighting. This one's from Suman from Kolkata. He's holding on to shares at 534, asking if he should continue to hold on for the next 6 months. Kunal, the stock has been a rank outperformer over the last few months. Is there any chance to come back if to 534, and should he continue to hold still after that?
Yeah, I think definitely continue to hold now. I think 450, 460 on the chart looks a good bottom that has been made, and the immediate hurdle for the stock is at 530, 540. Once that is taken out, you can see a good move on the upside towards 560, 570. So.
Okay, all right. I think we've got a caller. Uday is calling us from Bengaluru. Uday, very good afternoon to you. Go ahead, ask your question.
300, 150 shares.
Okay.
On the long-term perspective.
Okay, I got your question, Uday. Zaggle is the one that Uday is talking about. Tapan, any view on this one? Because, I mean, there's no stop to falling for this particular counter, but what would you recommend? Should he continue and book his losses, or what should he do?
See, that is the problem. It's not coming up, even though sales and profitability is okay. Again, the only problem here is the enterprise spending in sensitivity is there. Again, the margin volatility is much more. Again, competition from fintech is too much. Even though it is an asset-light model, I think no, this is a stock he should get out once it is on a rise.
Got that view, Tapan. The next one coming in on Z Entertainment. Our viewer Siva is holding shares at 119 rupees per share. Let's also look at the year-to-date chart because there's been a sharp reversal over the last 2 to 3 months, but Siva is still sitting in losses of almost 33,000, and there you go, almost a 30% jump. Now, Kunal, of course, a lot of this up move has been led because the company got, the FIFA deal, and hence I think the premium subscription for ZEE5 has gone through on the fundamental side of things. Charts, do they suggest the move to continue? Can the stock come back to 119? That's the buying price, and should he continue after that?
Yeah, I think definitely continue to hold. I think the 97, 98, the hurdle which has been taken out from there onwards on the weekly chart also, we are now seeing the high top, high bottom formation forming into the stock. So clearly the trend has changed for the stock. You might see some volatility and dips there, but overall I feel positionally the stock can go at least towards 145, 150 on the upside.
Okay, the next one is on Suzlon Energy. Our viewers bought it at the levels of 57. Wants to know whether it can continue to hold, sell. What should be the short-term targets for this one? Kunal, your view?
I think for short term, the bottom has been made at around 54, 55. So that should not be breached on the downside. And once the move continues on the upside, the stock can at least go towards the mark of 65, 70 in the very short term.
Got that view, Kunal. But Interarc Building Solutions, let's pull up that counter as well. Got some order wins, I think today morning itself and has been buzzing post that. Has sold off from the highs, but, Harvinder Bhatia is holding these shares at 2,263. So he's got it at some elevated levels. But Tapan, stocks I think run up from that 1,000 to 2,200 and then seen some correction. Should he still continue to hold this counter because he's holding 1,100 shares, so sitting in massive losses right now? What's your view?
No, currently hold it, no, because if you see the industrial capex cycle is supportive, order inflow is also healthy, capacity expansion is already going on, and again the warehousing demand is also accelerating. The only problem with this company is the project execution delay is possible, but as the manufacturing growth is that this company will be benefited. Valuation is little bit on a higher side, but still I will wait for 1 or 2 quarter more. Don't try to book losses now.
Okay, all right. So that's the view on Interarc. But time for our rapid fire round. Kunal and Tapan, you both know the drill. We've got our first question from Pramesh, who's writing us from Hyderabad, asking about HDFC Bank. He's bought it at the levels of 868. 170 is the quantity. Kunal, what should he do? Continue to hold?
Hold with a stop loss of 740.
The next one, Tapan, this one's between Paras Defense and Data Patterns. Ishwar wants to enter the defense space. Is there a good entry price or are they slightly more expensive? What's your top pick?
No, both are quite expensive. Wait for a dip at least 10-15% down from here.
Okay, BLS International, is it a good buy at the current rate? Vishwanatha Reddy from Andhra Pradesh wants to know this. Your view on this, Kunal?
No, only buy about 280.
Got it. The next question, coming in now, and this one's on Laurus Labs, bought at 365. This is very attractive levels. Tapan, up almost 4 times now. Should he still, of course, continue to hold?
Yeah, congratulations to him. Yeah, please hold it. I think CDMO business will do well. Please hold it.
Okay, the next one is on SW Solar. Shankar from Bengaluru wants to purchase around 500 shares for the next 2 odd months. And what should be the target price? Kunal, any view?
Sorry, for Sterling Winston, I think continue to hold at the current levels. 230, 235 has been a strong base for the stock and extend towards 280.
The next one coming in now, it's on M&M. Sashant is holding shares at 3134. I think he seems to have bought it for the short term. So Kunal, what's the view on the stock now?
See, I think M&M has been consolidating. In fact, the entire auto space is consolidating. So one can continue to hold with a stop loss of 2985.
Okay, the next one that we have is a fairly short, small name, Kunal. It's Vidya Wires. Our viewer Mahadev from Hyderabad has bought 1,000 shares with levels of 108. From a 3 months perspective, any view on the charts?
See, I think overall the data is less since it's recently listed, but I think overall the support for the stock is at 95. Till the time it is holding this level, continue.
And Paisalo Digital, also smaller name, Kunal, bought at 59 rupees by a viewer. His name is Utkarsh and he wants to know what should he do with his 6,000 odd shares that he's holding. Stock's trading at a similar level. Any view on the charts though?
I think yes, looking positive. Continue to hold with a stop loss of 51.
Okay. The next one is from Puneet Saxena, who's writing us from Ghaziabad, asking about Vedanta. He wants a 3 to 4 months view on this particular counter. Kunal, what would you recommend?
Not at the current levels. I think metals could see some further correction, so not at the current levels to enter the stock.
Raja from Chennai, who's a regular viewer, has bought shares into, I think he's holding Dish TV for a while now and holding shares at 18. Now, Tapan, I think the company is just, blown off the radar essentially. So should he just exit at the next opportunity? What's your view?
100% exit.
Okay, the next one that we have is on JK Tires. Our viewer wants an input on this one. He's a long-term investor and wants to know if this is the right time to make an entry. Tapan?
Yeah, so in SIP manner.
In SIP manner, okay, got it. The next one, Jubilant Foodworks. Our viewer is holding 50 shares of the company but has been in the loss over the last couple of years. Tapan, he's not mentioned his buying price, but stock's at a lower level now compared to the historical evidence. Is it still worth holding on to?
Currently hold.
Okay, the next one is on MRPL. Naga from Hyderabad has bought at the level of 176 shares is what he has. 6 months view on this one, Kunal?
See, I think overall exit, the stock has been trading in a downtrend, and if 150 is breach on the downside, then can see some further selling pressure.
Next one's on NHPC, bought at 82 by Prashant from Lucknow, and he wants to know, Kunal, if he should continue to hold this counter. He's sitting on a loss and holding 2,200 shares.
Hold with a stop loss of 72.
Got it. Well, that was the last question of the rapid fire in this edition of Ask Profit. Tapan as well as Kunal, thanks so much for helping us solve all these stock-related queries over the last half an hour or so. We solved 32 of them, taking the grand total to 88 queries in the morning and the afternoon edition. So thanks so much to our guests. Thanks so much to you viewers writing to us as well. But stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hi, thanks so much for joining in. You're watching NDTV Profit and this is India Market Close. I have one song for you and the start of the song is Ye Kya Hua?
I know you're flaunting your singing skills, which I don't have, but
You wanna
kaise
sing?
hua is
There
the
you go.
question. I can just talk
That is
about
the question.
it, right?
Why don't you have an answer?
I mean, I think it's profit booking also that we are seeing because we've surged beyond that 23,400 mark. Now, the key over here, Alex, is that 24,000 was one of the key resistance levels a couple of days ago. Moved to support. Now, the moment you're seeing something which is going up has to come down, obviously.
Yeah.
But with that, if you talk about what's happening in terms of the US-Iran deal as well, everyone's talking about the deal is done, but what's happening actually no one knows. So there is that fragility that continues to stay, at least from the geopolitical front, and I think that's what people are not really ready for. So any surge that they are seeing, they're booking profits.
So that's a good point, and I think it must also we should also talk about the broader markets. Pull up the mid-cap index and the small-cap index just to round things out, because the market breadth has cracked very dramatically from this point, right? So 0.8% for the mid-cap index, small-cap index down about 0.4% and climbing. I wonder where we'll end this hour. But what Hiral is pointing out, particularly for the broader markets, is so true, because I was looking at it, 7 days on the trot of gains for the mid-cap and the small-cap indices. And if you look at it from the 1st of April, Hiral, 18% gains for the mid-cap index, 25% gains for the small-cap index. There you go. So just 1 month is 5.95%. But if you look at from April, there you go. This is the small-cap index, 25%. So it's bound to happen.
And especially when there is no major certainty that we're looking at as well, and everyone is watching out for the first quarter commentary now in terms of the impact, right? Now look at the heat map in terms of Nifty 50 as well. If you can just pull up that one on the screens, and then we look at the sectoral heat map. It is mainly your pharma names, but that is also reacting to news, right? Shortage in terms of cancer drugs in the US, which is not really translated into business for them. It's an opportunity for them, on the back of which you're seeing pharma names which are moving higher. You have the auto pack which has started to catch up right now. Eicher Motors, Maruti,
but small
Axis
gains.
Bank. It's marginal gains. Axis Bank as well. I mean, but apart from that, look at the metal pack.
There's a reason for that to take place, right? Specifically for the aluminium players, Hindalco, Nalco, even Vedanta are losing ground because aluminium prices have come off.
And you have steel prices also which have corrected substantially, right? So overall, because of that correction that's coming in terms of where actual, metals go, that's having an impact in terms of the metal names. In fact, we spoke to Rakesh Arora, if you remember, and he was of the opinion that book profits in terms of the metal names, and that's exactly what is happening right now. IT, similar story, right? It's seen some marginal gains. I think people who would have entered at a later stage, if they're seeing anything positive, they're booking profits here. And it's a global sell-off again.
Yesterday, it was the one sector that was doing reasonably well through most of the session. But I think you saw the first inklings of that selling even in trade yesterday, because we came off quite substantially from the high point. We ended with gains of 0.7% for the IT index. But take a look at the metal index, 3.5% at this point. Pharma, as you pointed out, is the one gainer. Nothing else really.
And even from the consumption basket, if you go to see, I mean, you're not really seeing any sharp moves, because the anticipation was that probably there will be some bit of gains coming in there. But there you go, consumer durables is down a little over 1% as we speak. Energy under pressure. Nifty Bank down 1%. Defense also seeing that profit booking after that good surge that is coming. Real estate is what I want to see. There you go, 0.6%, not come off that much as compared to the gains that we've seen.
Consumer durables as well. There's an interesting story here, because we spoke to the management, remember, of Blue Star this morning, and what they were saying, Mr. Tyagarajan, and he's always very forthright about everything with regard to the outlook as well, right? So he was talking about the fact, Hiral, that your sales have been decent, but they have not been able to pass on prices completely. He said that 8% was required to be passed on. Only 5% was managed, so 3% is still pending, and they may have to do it immediately. 3 to 5%.
If not, then it's an impact on the margins. Let's just quickly look at your NSE 500 components as well, and then we look at the advanced decline ratio, as Alex was pointing out. I mean, there you go. Majorly, you have Cohance, Piramal, your beneficiaries, Gland Pharma. Info Edge, interestingly, on the back of the AI and deep tech investments, that stock is up a little over 3.5%. You have metal names over here. New India is also very interesting. 7th consecutive session of gains. Absolute profit taking coming in there. The question over here is, are there any further modes to see an upside? Or is it time to really book profits in terms of New India Assurance? And apart from that, the other one that comes to my radar is the BASF and Rajesh Exports. So nothing major that's coming up.
Theme-wise.
Exactly.
We should talk about the fundamentals.
Absolutely. Let's look at that. In terms of triggers, weekly expiry at play, and that's what you're seeing, that profit booking that's coming in. Over 200 points fall is what you've seen, and that's because of the weakness in the global markets as well. Now, 23,900 is something which is acting as a strong support for Nifty 50. If you talk about resistance, 24,150 is what you're seeing as well, along with 24,200. Now, continuing to face supply in this zone for the second time in last 5 days. So that's the range that we are talking about, 24,150 to 24,200. Now, in terms of broader indices as well, again, that bearish sentiment has started to come in on the back of the profit booking that we are seeing. Nifty Pharma, only sectoral gainer in terms of trading in the green. 4 consecutive sessions of gains coming in for this one. If you talk about Bank Nifty, immediate support being placed at 57,300 and 57,200. So that's that support zone of 100 points that you will see. And on the upside, the target that you should be watching out for is 58,000. And if a 58,000 is crossed on Bank Nifty, you can look out for a 58,500 as well. So those are the technical levels, Alex, that you should be watching out for. But we have Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities, joining in. Sunny, good afternoon and welcome to the show. This is Hiral on this side. You know, my question to you is, you've started to see that profit booking in today's session as well. We've given up from a technical perspective the 24,000 levels and no major participation coming in from banking majors as well. How are you looking at the setup? Are you seeing this as an opportunity to buy? Or would you say any rise that's coming in terms of markets is an opportunity to sell?
Yeah, good afternoon, Hiral, and thanks for having me on the show. I think definitely, any dips is a buying opportunity, as we have seen that global macro headwinds have been with a correction of crude oil prices. And at the same time, we have seen with a lot of measures taken by an RBI to support USD INR. Now, even that concern is no more valid for the market participant. So I think any dip is a buying opportunity. And as we all know that maybe Q1 maybe slightly muted in terms of earnings for most of the sector, but with an crude oil prices coming off, USD INR stabilizing, I think input cost pressure should reduce significantly, and hence the remaining 9 months of FY27 should be pretty good in terms of earning growth. So since FY27, we are well placed to deliver a double-digit kind of earning growth, and same is the case for FY28. So I think any dip should be a buying opportunity. And when it comes to sector, I think banking is a well-placed sector. We feel reasonably trading at a reasonable valuation, and even on consumption side, we believe that auto ancillary as a pack looks well placed. Metals, we have seen some correction because of an very strong up move on the dollar index, and to some extent, especially on aluminum side, ease of supply as far as Middle East is concerned. But again, we feel metal in structural long-term uptrend, so any dip should be again a buying opportunity among the metal and mining pack.
Okay, all right, we'll come back to that. Because quite a few of these stocks, Sunny, are seeing significant cracks on the screen and the possibility of further cracks down the road as well. But we want to focus in on our stock of the day, and that is Syrma SGS. It's something that we pointed out for you this morning. It's a joint venture that the company has gotten into with Japan's Kaga Electronics. It's not the largest commitment of capital, 15 crore rupees from what I remember from the perspective of Syrma, and for the 10 crore that Kaga is putting through. What are they doing? And is there an idea on revenue potential? Let's go across to Puneet to find out. Because Puneet, this morning when we spoke, there was not too much information about this. The street seems to be excited though.
Well, most certainly, and I think it's the newer products that Kaga looks at is something I think that the street's already baking in. But I do want to talk about how the company has been performing in terms of numbers also. So firstly, what's the news today? Of course, the joint venture with Kaga Electronics, they'll be looking at developing an EMS manufacturing facility in India for Kaga's Japanese clients as well. They will also be taking a 60% stake, 40% will be taken by Kaga, and 25 crore commitment, as you mentioned, Alex, 15 crore by Syrma, 10 crores by Kaga Electronics in this. Now, Kaga generally specializes in a high mix, low volume kind of a play, so there's only value addition, and I think the flexible PCBs will be something that could be used in the semiconductors amongst other key products that Kaga uses as well. So this will be a new vertical for the company and higher revenue potential, but we still have to watch out for clarification on that. But I do want to focus on the stock price performance also, because we've seen in this year so far, Syrma is up 91%. Now it's on a very small counter, market cap above 25,000 crores. And in the last 1 year itself, up 174% in terms of stock price performance. When you compare that with its peers, there's a clear stark difference of what kind of outperformance this has been, because players like 15% returns by Amber Enterprises is one, but all the other EMS counters, and they had run up, so the correction was something to watch. For Keynes Tech, the issues in Q4 and cash flow generation was visible, but you've seen a very, very large outperformance by Syrma SGS compared to its peers. I also want to just quickly point out the valuation as well before we talk about the outlook now. This is valuation comparison for FY27 on the 5th of February 2026. Comparing that with today's date, of course, of June 23rd, Syrma, of course, was trading at 41 times at that time. That has materially inched up to 62 times price to earnings. But in all look at the correction, for Amber Enterprises also, it's been a stark outperformance. So both these players have seen valuation re-rating on the upside, while the others have also been in a similar trajectory, but not with the intent that Syrma has been. So that's one important point. And finally, in terms of outlook, the order book already at 6,600 crores, which is 1.5 times the revenues that they did for FY26, that's 4,800 crores. And the guidance continues to be very strong of 30 to 35% growth with higher EBITDA margins of 10 to 10.5%. So most certainly the valuations have now gotten pricier. The discount to its peers have also vanished away. But the growth outlook is something that the street's betting on, and certainty in earnings is clearly visible in the stock price performance as well.
Oh, yeah, absolutely. 175% over the course of the last 1 year.
Only before Puneet just goes, I want to ask a quick question to him with regards to where Ola goes. Puneet, I know I'm just taking you off the... right now, you've not come for an Ola, but overall, they've got the BIS certification for indigenous 46100 LFP cell. How big a news is this? Because the stock has actually climbed to the day's highest levels right now. 3.5% up move coming in on that one.
Well, one of the important aspects, of course, for the cell technology is that currently there's a custom duty of 5% on imported cells. So that benefit, Ola Electric does give it to its players as well. But for the company itself, they want to develop this product into an energy storage unit as well. So I think that will be something to watch. But of course, the LFP cells will be used in the scooters. That additional benefit could be visible on margins based on backward integration. But that's my 2 cents on it right now, that the BIS certification will help in validating the product that can be also sold to other players as well.
That was much better than 2 cents.
Yeah, absolutely.
Puneet, for having just gotten a few seconds to answer that question.
Yeah, and categorically tells you why the stock is rising, right? I mean, the margin gains on the back of backward integration that Puneet was mentioning will be one of the keys to watch out for.
So in case people were wondering what the BIS certifications mean, is the Bureau of Indian Standards. It allows for the sale of technology in India. It's basically a stamp of approval for technology that is indigenously developed. Sunny, so 2 stocks that we need to talk to you about. One, Syrma SGS, which has gained 174, 175% in the last 1 year. And a lot of people say for good reason. But the only question is, if you manage to get it more than 1 year back, should you take money off the table now? If you miss the bus, should you buy right now?
I think the company under our coverage and even our target was 1400 post Q4 number. So I think it's better to take the money off the table, as now our estimate is that for FY28 the company will be delivering 28 rupees EPS. So trading at now 50 time price to earning multiple. So maybe those who have entered a year back should take money off the table, and those who are waiting for a fresh entry should wait for dips to add the stock. Obviously, long-term story continue to remain pretty robust. So we have seen that margin has shifted from closer to 8% in FY25 to now a double-digit 10% number. And with a robust order book and the kind of JV which company is announcing every quarter, I think going forward, maybe 20-25% kind of growth should continue. But as we speak, definitely valuations have turned right here.
I want to ask about Ola as well, right? While we were on the subject, and since we referred to it, a BIS certification, and the stock is reacting right now because it's an approval for indigenously developed technology. Any coverage on this, Sunny, and what do you make of it?
Coming to Ola, I think one biggest positive factor has been a ramp up in a sales volume in the month of April and May, and I believe even June sales volume as per Vahan data seems to be indicating that this month will be again closer to 9-10,000 kind of sales volume number. So again, at the time of IPO, company used to clock 40-45,000 quarterly sales volume number, and that seems to be coming back after a period of closer to, I think, 6 to 8 quarters. quarter. So I think the sales volume growth is something which will keep the street excited, and in case company is able to maintain the sales volume for next 3 to 6 months, I think definitely there is a case for re-rating. And no doubt as the company integrate backward, as company will plug in its own battery cell, obviously margins will keep on expanding. So no view as such, but again positive read through on both backward integration as well as sales numbers.
Okay, so that's with regards to Ola as well. We have Akshay Bhagwat also who's joining in from JM Financial. Akshay, welcome to the show. Always a pleasure to speak to you. My question coming to you is in terms of what's happening in the markets, there is expiry at play. But what is the direction that you're seeing, which is underlying right now? Because the volatility seems to be right there. We're going above the 24,000 mark and now we've come back below those levels. So what are you picking up so far?
Good afternoon to all. Yes, it is the weekly expiry date that is playing on the market, and also the global indices, the Asian markets are weak. Beyond that, there is no much reason for today's fall. So even if you look at it, it's just a temporary break of momentum. The key supports which one needs to see for Nifty index is 23,800. Till this support holds, I believe it's still more of a neutral setup which we are in for the short term. But overall, still the technical trend is positive. If 23,800 holds for this week, then you can expect 24,200 to be tested in the coming week. So all is well. It is just the weekly expiry blues which are playing on in the market. That's what the initial price action looks like.
Okay. Any individual stocks that you're liking at this moment, Akshay?
Yeah, so you can look at Exide Industries. The technical setup is pretty strong, although it's been fluctuating a bit in intraday, trading near the day's low, but I think the broader technical setup is positive. 381 is where it trades. You can buy it at current market price for targets of 400 to 405 with stop loss at 370. And if you're looking for trading bets on the short side, because the market are swinging both ways, then Loda or Macrotech Developers, which trades at 918, is a trading short-term sell with downsides possibly till 850 to 860 zone, which you can look forward in the next 3 to 4 trading sessions, with strict stop losses above 955.
All right. Invariably, what happens is in this kind of a market, there are two sectors that stand out as gainers. And you've actually spotted this over the last several weeks. It's pharmaceuticals for good reason today and the healthcare index. So pull up that sectoral indices, a heat map, and you will see what I'm talking about. These are the only two sectors that are holding on to gains in trade today. Varsha joining in to talk about the reason why. So pharma, there you go. Healthcare as well should actually make it to the list. You'll see it there. Pull up healthcare. I just want to see if I'm right. Yeah, healthcare is still up in the green. So you don't see it in that list, but it's up about 0.9%. I do want to go across to Varsha to find out why pharma is buzzing today. Varsha, it has to do with this unfortunate situation regarding oncology drugs in the US, right?
Yes, that is also a key trigger. You have biosimilars also, which we'll be talking about. And of course, pharma is actually seeing a defensive sector today, I would say. Let's see why. So one is, of course, the sector is seeing traction as a defensive sector. Global uncertainty is actually pushing investors towards stability, but there are two major global triggers which are actually adding the momentum when it comes to this sector. Number one is, of course, the US drug shortage, wherein US FDA reaches out to Indian pharma industry for cancer drug supply. Now there's a shortage of the communication was, of course, sent by IDMA to identify immediate suppliers, and the shortage is in ifosfamide injection. I don't know if I'm pronouncing it right, but this is just a cancer injection which is used to treat bladder and lung cancers. Now, what this signals is, one is this is a life-saving, drug, has limited global suppliers, and the US is actually unable to meet its own demand, and US is actually looking at India for immediate supply support. Talking about why India gains, let's talk about that. Now, India is strong when it comes to oncology, generics, injectables, and we have large US FDA approved manufacturing base, and we do have cost advantage and scale capability. Let's also pull up which are the companies which will be the beneficiaries. Of course, Zydus Life Sciences, which is a direct play, deals into this product. You have, Aarti Pharma Labs also buzzing in trade, is up almost 5%, and it's the only company which makes API for this drug. Aurobindo, Dr. Reddy's, Lupin, all are actually in buzz because everyone is going into oncology segment. The next big trigger is, of course, Canada has removed phase 3 trial requirement for biologics, for biosimilars. Earlier trial cost and time consuming, but now the focus is on analytical data. Now how India will have an advantage over this? Indian companies are strong when it comes to biosimilars and complex generics. Lower cost and faster approvals improves pipeline visibility. Talking about the key beneficiaries, of course, Biocon is the pioneer when it comes to the biologics and biosimilars. Dr. Reddy's, Zydus, Lupin are some of the companies which are actually going big when it comes to biosimilars. So overall, you have a defensive play. You have US oncology shortage and also biosimilars playing out well for overall sector.
Oftentimes, Varsha, a lot of people fail to understand some of the technical terms in the pharmaceutical industry. So for somebody who absolutely does not understand this, in just 2-3 lines, can you explain the difference between a new formulation, a generic, and a biosimilar?
Okay, so generic, it's not. So I'll take an example. Crocin is a branded formulation. So a drug value chain, how this works, you have key starting material, you have intermediates, you have API, you have formulation. So API is nothing but the main ingredient. For example, in Crocin, paracetamol is API, जो आपका दर्द भगाता है. That's the main ingredient. Now, Crocin is the branded drug. Paracetamol, Dolo and all, those are the generic versions of that formulation. Formulation is nothing but the end product. API is the main active pharmaceutical ingredient which is used in the formulation or in making of drug.
Thank you. Thank you for that explainer as well. Yes, the biosimilars. But that's for the next one. That's for the next time. And for our viewers, we'll get you that explanation from Varsha as well. She does it really well. Sunny, your views when it comes to the pharmaceutical space, because you're talking of a US opportunity which is coming up. Fortunately for the companies, but unfortunately that there is a deficit there right now. How are you looking at it?
Definitely, I think, again, if you look at the pharma market, so IP market has grown at, for FY26, closer to 9 to 10%, and predominantly led by lifestyle diseases linked to cardiovascular or oncology, all such segment diabetes. So I think Indian market continue to do well. US market, which has been one of a key earning driver for most of our companies, have been a mixed bag during the Q4. But having said that, as the various opportunities opens up, definitely seeing that next year is well placed for pharma company. So within pharma pack, what we believe is that basic Q4 number and outlook for FY27-28, Ajanta Pharma is the one stock which we like, which we feel that predominantly a play on formulations, and recently they have launched 15 drugs. And at the same time, biosimilar, as you were discussing, is under pipeline, which will start materializing from FY28 and FY29. So Ajanta Pharma is the one stock. And amongst the research, our CRO company, Rubicon Research is the one company which we like, which has delivered a fantastic set of number. And again, a very niche, specialized pharma chemical name is Sudeep Pharma, wherein their battery chemical plant is going to go on stream very soon. So again, a play on a mix of pharma as well as battery chemicals. So Sudeep Pharma is another name.
Got it. By the way, in case you were wondering and we didn't close that loop, biosimilars essentially, if the formulation of a normal drug is ABC and those are the components of that drug, then if you have another drug that has different formulations and have X, Y, Z and perform the same function, that is effectively a biosimilar. Let's very quickly take a check on some of these pharmaceutical names with Akshay. Akshay, 1 or 2 names that you think should be bought into right now?
Yeah, so for pharma, if you look at the technical health of the stock, I think Aurobindo Pharma would be one of the names which you can look forward to. So on the broader technical charts, it is pretty strong. Right now, I just stand at 1536. It is almost near the important resistance of 1540. A possible breakout should happen soon, which should look at possible targets of 1650 plus. So this is one of the best charts right now in the pharma space, which has exposure in futures and options space. That's Aurobindo Pharma. And Divi's Lab can be the other name you can look forward to, although today it is a bit flat, but my sense is it is setting up for a major breakout above the levels of 7,000. And once it does, we are looking at potential targets till 7,500.
Okay, so that's Divi's. Thank you for that. In fact, Somit Sarkar waiting patiently with all the chatter from the dealing room. Somit, expiry day, what are you picking up? Because categorically, you're seeing good amount of profit booking that's coming in today's session.
Yes, when it comes to the indices, yes, there is profit booking that we are seeing after a rally that we had seen in the last couple of weeks. But a lot of stock-specific actions that dealers continue to highlight. Firstly, when it comes to Vaibhav Global, there are some sell flows on the large HNI and the PMS desk. Dealers are expecting a block deal very soon. Nalanda Fund could likely be a seller, is what dealers have indicated here. For Heikel, there's a buzz of a potential inter-promoter transfer. Earlier, there was a buzz of a block deal, but most likely it will be an inter-promoter transfer and not a proper bulk deal that will come on the exchanges. For ICICI Bank, there are buy flows on institutional desk. Delivery volumes are expected to be on the higher side. For Deepak Fertilizer, there are buy flows on the large HNI desk, and dealers are expecting that the first quarter numbers could be quite strong, and hence they have started to accumulate this counter on the cash segment. For CMR Green, there are buy flows on the large HNI desk. The company will be reporting its Q4 numbers on 30th June. It's a recently listed company. Dealers are expecting a strong set of numbers in the fourth quarter of FY26. Apart from that, JSW Infra, they opened their QIP. What dealers are indicating is that the demand has been quite strong for this QIP throughout the day, and they have highlighted few names like SBI Mutual Fund, HDFC Mutual Fund, GQG and Capital Group among the prominent buyers for this QIP. And lastly, when it comes to Craftsman Auto, there was a block deal that happened today. The promoter was the likely seller in this block deal. The demand was quite decent for this block deal, and dealers are indicating that HDFC Mutual Fund and Invesco Mutual Fund were among the prominent buyers for this block.
Thank you for that, Somit. So that's with regards to a couple of names that are buzzing in trade. A quick check on the charts, Akshay. If you have to look at a JSW Infra and if you have to look at a Deepak Fertilizers, anything that you like?
Yeah, so GSW Infra is one momentum-based stock because if you look at the recent price action, it's almost been a one-way uninterrupted ride starting from 260. And I think this is all setting up for possible targets till 350. So I think GSW Infra is pretty strong on charts. And if I were to look at Deepak Fertilizers, which is the other name you mentioned, here the technical chart is strong, but it is a bit overbought for fresh buying. So I think if one is keen on buying the stock, wait for slight dip of around 1540 odd levels. If you're holding it, then potentially 1700 is the target you can hold on for.
Okay, so that's with regards to where Deepak Fertilizers goes. Misho, let's pull up that one on the screens. Very strong on the city initiation that has come in. They have a target price of 210, not too far from getting there. And what they've said is that the tech-led model delivers value-focused e-commerce offering, and the value-focused platform with multiple strategic differentiators is what they're seeing over here. The fully marketplace-based model drives scalable operations, lowers sellers' costs, and delivers affordable consumer selection. They're positioning it as accessible, infinite store for the masses. 8.5% up move coming in there. Sunny, any view on a Misho?
Yeah, we continue to remain constructive on Misho, predominantly led by a very solid business model, wherein as of now, the kind of transactions which I believe is closer to north of 20-25 crore in a year, where they are not charging anything on as far as transactions are concerned. So I think there is a lot of levers which are available for Misho to monetize this platform. So again, long-term positive, but in short term, obviously would like to see a path to profitability. So would like to remain neutral and would like to watch for a quarter or two in terms of numbers and path to profitability. But no doubt, long-term business model, there are many levers to drive the profitability going ahead.
Okay, all right. Let's take a check on delivery, and it has staged a sharp recovery with the stock back to listing levels, and that's certainly something to celebrate for initial investors that have stood the test of time. The question is, what has been responsible for that turnaround in fortune? We've got Jasmeet joining in to talk about the details. Jasmeet, Obviously, looking at the financial metrics, what stands out?
Well, if you look at Delivery as a company, it has really performed well in terms of the overall financial metric. But let's quickly do a stock market check on performance in terms of performance, and then quickly get on the what's working and what's not working for Delivery. If we look at the overall stock performance, the stock is back to its listing price around the 480 levels, and the stock hit the lifetime low at nearly rupees 241, and since then it has doubled. So we see a turnaround story coming in from Delivery altogether. Well, if we look at over last 1 year, the stock has nearly rallied over 30%. Now, in terms of what's working for the particular counter, while the revenue at a compounded growth is growing at roughly 23% over last 5 years, and even the margins have reversed for this particular counter from being negative 7% to a positive 6%. Now, if we look at the other key aspects, the company has achieved the free cash flow status a year in advance than what it had said earlier, which is a key positive. And secondly, the express delivery segment, which contributes nearly 70% of the revenue, contributed roughly or delivered roughly 100 billions of the orders in the previous year. If you look at the other key aspect, the DIIs have tripled their stake in overall Delivery, which is a key positive. Now let's really look at what's not working. We see majority of the gain in Delivery is coming on the back of the heavy volumes and the AI integration that they have done across the portfolio in terms of the physical AI that they've been using in the factories, which is a key positive. But if any downtick in terms of the volume will impact the margins considerably. The second thing, the FIIs have been reducing the stake over last 4 years, which is a key overhang for this particular counter, given that all the promoters that a company has are FIIs, and they have been selling their stake and recovering the money, which becomes an overhang on this counter. When we look at the other key aspect, the company follows an asset-light model where the majority of the holdings, the trucks and the warehouse are on lease-based. So the lease liability have nearly doubled in last 3 years, where if it keeps on increasing, it's going to impact the bottom line at the end of the day. Further, the valuations remains quite high for this particular counter, at par to its competitor Shadowfax, but when we compare it with the other players in the market, the valuations remain expensive for Delivery. Now let's quickly do a quick deep dive in terms of the overall revenue and the margin performance and understand where the company stands. We look at the overall revenue figure in FY26, the company crossed the 10,000 crore milestone altogether and roughly gained 23% per year over last 5 years. We look at the margins, even they have reversed. Let's quickly look at the chart of Delivery. It will give an interesting aspect, given that the revenue, majority of the revenue uptick has come in 2022, where they have gained nearly 88%, and then we see 26 of March, where the company has integrated the acquisition and gained about 17% in terms of the margins. Even those have reversed from -7 to 6%. Let's look at the next key aspect where the Delivery is leading in terms of the overall cash flow metric. The operating activity at the company has become positive in terms of operational cash flow, but the net cash flow still remains a mixture of negative and positive on the back of the investments they have been doing into the portfolio. When we look at the other key aspect for this particular counter, we also make a note that the company has achieved the free cash flow and achieved almost 89 crore of positive cash in FY26 all alone. Further, the operating cash flow is improving while the net cash is still fluctuating. Now let's look at the other key aspect for this counter, where we note that the company is currently debt free, but the heavy weightage, as we discussed, is on the lease liability, which has been increasing from earlier 725 odd crore in FY23 up until 1400 odd crores in FY26. Now when we look at the overall lease liability, that has to be in check going ahead of how that further goes, though it might not impact the margins at the early stage, but it will for sure impact the bottom line. Now, in terms of the overall shareholding pattern, the DIIs have nearly tripled their stake from 13% to 36% in FY26, but the FIIs have reduced the stake from earlier 67 to currently 48%, and it's a wait and watch of where does that particular FII selling stop in this counter. So when we look at the overall, there's a holding pattern for the company, the FIIs and DIIs, we see it's been increasing from 13 to 36. Now, when you look at the next key metric for the counter in terms of the overall valuation standpoint, we do note that the valuation of Delivery stands at 55 times, and the 12-month forward, again at the expensive side itself, the 30 times, compared to Blue Dart, which is a straight competitor for this particular counter, currently at 12.8x. So we can easily see the overall pressure that they might be seeing in terms of the valuation being on the expensive side. But on the other hand, the Shadowfax recently listed companies in a similar business have the same valuations at Delivery. Now, lastly, in terms of the guidance, the management remains very constructive over the con calls, where they see that the long-term EBITDA margin is expected to reach at a particular level, while it's a wait and watch of how does the coming quarter turns up for the company, given the company has already gained almost double from the recent lows. So it's a wait and watch of how does the guidance have been met and how does the overall PTL and Ecom Express performs for the particular counter.
Lots to watch out for. Thank you, Jasmeet, for that roundup. Sunny, do you think Delivery will actually deliver now that it's above its IPO price? Couple of metrics that Jasmeet was bringing to us are improving as well. What is your view?
I think no doubt. I mean, we have seen a massive improvement across both the supply chain and express business when it's come to delivery. And at the same time, there was some concern during the Middle East crisis that with an increase in diesel prices, that may impact their margin for FY27 now. But even that concern has eased off as we speak. Maybe Q1 we may see some muted kind of margin numbers, but rest of the year, in case the crude oil prices continue to hover below $80, should be a good year as far as the numbers for delivery are concerned. So I think remain constructive on purely basis turnaround story. No doubt, I mean, valuations are slightly expensive, but in case the margin keeps on moving up, in especially on supply chain side, where the margins are closer to 9 to 10%, then in that case, we may see a kind of re-rating. So would accumulate the stock on every day. Yeah.
All right. On that note, gentlemen, thanks so much for joining in, for speaking to us on NDTV Profit. Pleasure having you. We have more or less maintained our position for the benchmark Nifty 50. Currently trading, actually, no, we've dropped quite considerably in the last 5 to 10 seconds, in fact. We're seeing a sharp drop, 1.1% at this point. Remember, we have expiry to talk about, and the implication seems to be just that. We've seen a bit of a sharp correction at the end of trade today, and we've broken well below that 24,000 level. Where does this take us, and why is this taking place? How do we settle in the last week of this expiry? Find out after the break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries. Commercial activities which they are into, and it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Welcome back to India Market Close on NDTV Profit. Let's get in Nagraj Sethi from HDFC Securities, and we have Lancelot Dukuna as well joining in. Welcome to the show, gentlemen. Nagraj, the last half an hour or 20 minutes of trade, what is the strategy that you would recommend and any of your picks in terms of BTST?
Yeah, hi, good afternoon. After a sharp rally of around 1100 points over the last 8-10 sessions, Nifty slipped into minor weakness from the higher levels in today's session. The volatility persisted due to weak global market, and I'm expecting this is not a great this thing for a short term, at least on the time at the lower levels around 23,800, 750 level is likely to offer some support for the market. I'm not expecting this bigger decline to continue for the short term, and there is a possibility of bounce back from the lower levels.
Okay, and your top picks?
I have two picks from the long side. First one is from pharma side, Aurobindo Pharma. The stock has been in a sharp run over the last 4-5 sessions, witnessed bottom reversal near 1400 levels, placed at the edge of upside breakout around 1550 levels. The overall chart pattern is looking positive and volume as well. One can look to buy at this point of time, currently around 1535 levels, and immediate target would be around 1640, and one can place a stop loss at 1500. I have another one stock on the long side, that is from real estate.
We're losing Nagraj's feed, and just before he was going to give you a stock idea. How unfortunate. But we'll be back to tell you more about that. Lancelot, I just want to get your opinion. What we're seeming to be witnessing right now is money being taken off the table after what has been a pretty handsome run for the Indian equity markets. Maybe not for the large caps, but certainly for the broader markets. What should your strategy at this juncture be? Would you be buying on dips, and if so, where?
So I think, the volatility in the market has seen, the rise from almost 2200, 300 Nifty right back to 2400. And that has, and that too in a short period of time, probably just around 40 days, it has moved back up. So given that, you are seeing some amount of profit being booked. And like you said, in the broader market, the rise has been much higher because in the large cap space, it has been a little muted, but many of the mid caps and small caps have seen a much higher upside. So going forward as to the strategy, one should look at, with your outlook for the next 2 to 3 years. I think given the global scenario in terms of, the scene in the Middle East, more or less coming into a kind of impasse as far as, further escalation is out of the picture. And we are probably looking at, some kind of settlement or coming down to a new normal in terms of maybe some delays and things like that on the supply chain. So it should not have a very severe impact on most of the operations in India and companies operating. Plus, we've seen crude prices also stabilize at the current levels, which is not so bad from an India perspective. So, given that, one should definitely keep an eye open for opportunities. And I think, in a sense, the banking space in India does offer banking and financial services. They haven't really participated in the rally on the upside. And within that space, you could see some pockets of stocks which are fairly valued, and one can look at adding into the space at this point in time.
Okay, so that's with regards to where markets go. Stay with us. In fact, in a major relief for air flyers, sources tell NDTV Profit that airlines may take back fuel surcharge sooner than planned. Danish is joining us with more details. Danish, what are you picking up?
Well, that's correct. Sources have told NDTV Profit that the airlines may take back the fuel surcharge earlier than they planned. And let me remind you that in the month of March, after the Middle East crisis began, we saw that Indigo, Akasa and Air India Group, they introduced a fuel surcharge, which basically means that you have to pay more to fly either on domestic but either on international. But what sources are telling us is the fact that the deliberations have begun. They are looking at the timeline, whether they should withdraw the fuel surcharge in Q2 or towards the end of Q3. So the airlines are deliberating on that right now, but the airline industry is also on a wait and watch mode. While we are seeing that the global crude oil prices have cooled from an all-time high, but if we talk about the A1 jet fuel prices, and that is the ATF that I'm talking about, even those international prices are still almost 1x up in comparison to the pre-war level. So the airlines are right now deliberating and are also on a wait and watch mode. And if things are in their favor, then the airlines may roll back the fuel surcharge that they introduced in the month of March.
Got it. Okay. All right. Thanks so much, Danish, for that. Specific question, Lancelot, on Interglobe Aviation, right? And a significant headwind in the way of higher fuel prices coming off for an airline, of course, between 40 and 45% of the cost of the airline is ultimately ATF. And so what is your opinion on this particular airline and the stock that you would weigh in on?
So I think, airlines will make money whenever the fuel prices go down, because domestic travel as well as international travel has seen an increase in volumes, over time. And Interglobe is practically the major dominant player in this space. We saw a while ago when there was some disruption, how it impacted travel for all travelers, because they had such a big market share. So from a profitability perspective, you will continue to see this will only improve their profitability going forward, and that would help in terms of greater earnings potential. However, when you look at it from a little longer term perspective, these are small cycles where you will see increase in profitability, or maybe when there was a dip because of the high crude prices. But over a longer period of time, it's a question of the new addition to capacity that comes in, the competition that comes in, and that globally brings down prices. So for an airline to sustain at a single pace, it becomes very difficult. So from a fundamental perspective, it may be worthwhile staying away from airline stocks. Although maybe in the shorter term, as a shorter term idea, this could be a good opportunity to buy in. And when the results are out, you could see some upside, and then one can look at exiting.
Got it. Nagaraj, you were just going to tell us about a stock that you find attractive, and it is about 315 right now. So you can also perhaps give us the relatively short-term trades that you might suggest right now.
Yes, I was talking about the Arrow Pharma. That the stock price has witnessed a sharp breakout from the 1400 levels and placed at the edge of upside breakout. The overall chart pattern is looking positive. It has witnessed a breakout with a rise in volume as well. One can look to buy at this time. Currently trading around 1535 levels. The immediate target would be around 1610. One can place a stop loss at 1500. Second one is from a realty front. Obera Realty, that stock has been in a consolidation phase over the last few months. Recently made an attempt of breakout and currently placed at slightly lower level at the breakout point. Now currently trading around 1705 levels. One can look to buy at this point of time, and 1795 is going to be the immediate target, and one can place a stop loss at 1680.
So that's with regards to where Oberoi Realty goes. Now, another sector which is actually cracking in trade, seeing profit booking, is metals. They're feeling the heat as well because of falling steel and aluminium prices. And signs of returning global supplies and profit booking is a key trigger that you're picking up as well. Sharp correction coming in there from its May highs. My colleague Parth is joining us to tell us more. Parth, the stocks are under pressure. The question is this going to be the trend that we will see for some time, where we will continue to see profit booking because they've really come up quite a bit? Or is there the profit booking that we're seeing right now kind of a one-off?
I think this trend is going to continue because there are a lot of reasons behind that. But before we discuss that, let's first look at the performance of today. Nifty Metal has fallen over 3.5%. That's a big dip. And this is the lowest level the index has touched since April 2026. This is also the biggest single day fall that the index has witnessed since March 2026. So a huge down day is what we have seen in this sector today. If we talk about the top metal losers also, there are two major losers that need to be highlighted. The first one is Vedanta, which has fallen over 8.5% today. That's a big number. The second one is Nalco, which has also fallen almost 7% today. Vedanta in this month, that is June so far, has fallen over 20%, while National Aluminium has fallen over 17% in June so far. So both of these stocks, the leaders in metal sector, have seen a lot of dip. Now let's move on to why the metal index is falling right now. Well, a lot of reasons behind that. Steel rebar prices have seen a downtick, down over 18% from their recent highs. Also, similar trend has been seen in iron ore prices as well, down 10% from their recent highs. Aluminium prices are trading at a lower level as well. In the London Metal Exchange, they are trading at a 3-month low right now. Even precious metals, which are gold and silver, they have also seen a downtick of 14%. Silver has seen a downtick of 31% from their recent highs. So the downtick in commodity prices is what is causing the fall right now. And the reason behind this commodity fall as well are three major reasons basically. The number one is the peace talks between US and Iran that have now progressed a little bit. They are assuring investors that some of these supply bottlenecks that the sector saw before, they might open up right now, and the supply might continue. The second one is the strengthening of dollar, because traders trading from other currencies, they also have to convert into dollar terms, and if the dollar continues to be at a higher level, then they face some of the losses. And the last one is obviously profit booking, because we have seen this sector rally throughout in the last 3 to 6 months, and there are some profit booking trends as well.
Okay, so profit booking trends continue there. Lancelot, how are you looking at the metal pack? Because prices have started to come off in terms of aluminium, steel, silver, whatever you talk about right now. That is having an impact in terms of Indian metal companies. What would you advise investors to do?
So I think, there was a sharp rise in the last 6-8 months for metal stocks, and most of them had gone up considerably. So valuation still is not yet become attractive because of the steep rise, and maybe a fall further would then, maybe another 5-10% more would then become an opportunity when one can look at accumulating such stocks. Because over the longer period, of time, I think you will see demand for metals increase, especially copper and to some extent steel. And from a supply side, we are not seeing any additional huge capacities coming on stream, at least for the next 12 to 24 months. And in that background, the prices would have to really move up to meet the rising demand in the absence of any large capacity addition. So one should look at another maybe 8-10% as an opportunity to start accumulating the metals pack.
Okay, so that's with regards to where the metal pack goes. Quick question, Nagraj, in terms of metals, would you advise buying at lower levels after the correction that's coming in?
No, certainly not, because the downtrend continues. If you take prominent metals stocks, they have started falling after a sharp rise, and that though they are placed at the lower level, still there is no indication of any reversal building up at the lows. I don't think that we should at least accumulate at this point of time. Some more weakness is likely along with the market for the metals.
So that's with regards to the metal space goes. Now, Info Edge, that stock is buzzing into it. It's very interesting, Alex, to see the letter that came to the shareholders as well in terms of the investments that Info Edge has made when you talk about AI, deep tech, or even for that matter, consumer tech. The question over here is, what happens or how do the shareholders benefit out of this? Because investments are there, growing very well. Valuations are soaring for those kind of investments as well. But do the shareholders really get anything right now? And just listen into that slice of the conversation I had with Sanjeev Bikhchandani as well in terms of what an investor would get out of it. Listen in. From the business that InfoEdge does, right? What percentage of your revenues, what percentage of the profitability are you seeing will come in from the investments that you're making versus the core business?
See, in investments, you don't make a profit until you sell. Because you have a book value, you have fair market value, it hopefully appreciates. But till you sell, you don't realize the profit. Right? So this is not a business where you earn profits every quarter, every year. You may not earn for, you may not earn for a decade. So the cash flows, there are money that's coming in, will usually be the operating businesses, which is Naukri, 99acres, Jeevan Sathi, Shiksha, with some lumpy sort of income coming in sporadically when you sell an investment, when you exit an investment. So it's hard to predict. So InfoEdge fundamentally has got 4 businesses, which is jobs, real estate, matrimony, and education classifieds. And now there's a 5th business, which is investments. So it's one of 5 businesses, investments.
Correct. It's one of 5 businesses, and the returns that you get in that one of 5 investments, whenever they do come in, could be probably deployed, to the other businesses as well that you're mentioning. However, what is it for the shareholders?
Well,
because
the other 4 businesses don't really need a capital infusion because they're profitable or getting to profit pretty soon.
Correct. But okay, so what is it for the shareholders? How do the shareholders gain?
It is an excess cash, which the surpluses that Naukri generates. Some of that goes into investing in startups through our AI. Right? Shareholders gain because hopefully these companies become valuable. So like Zomato, Policybazaar are listed. There's a market value. We own roughly 12% in each. That gives us some market cap in our own valuation.
Okay, so Sanjeev, the question then is, because I'll tell you why I'm asking you this is, we were just doing a piece on InfoEdge where one of the comments on Twitter or something came up is, okay, these are the kind of investments that InfoEdge has made. Good amount of benefits that have come in terms of returns. Now, is this something which will be distributed to shareholders or not in the form of dividends, buybacks, whatever policy that InfoEdge would have? What would you want to tell shareholders over here? Because from a stock price perspective, the stock is kind of down 30% in the last 1 year. So that's, and that's a valid point from the investor as well.
See, like I said, till we exit an investment, we don't realize cash to distribute to shareholders from that investment, right? But if that investment has a market cap or a valuation or an FMV, that usually gets reflected in some form or the other in our stock price. Right? Now, our job is to do our job, which is run the operating business well and invest well behind good founders doing good stuff. And if we do that well, if we get growth back into Naukri, which we are hopeful of next 2-3 quarters. If we get, continue to grow fast in 99acres, which is happening as we speak, we think that the operating businesses will be valued higher 2-3 quarters from now than they are today.
So it's a good question to ask, and to be fair, he attempted to answer the question. And for a company that invests long term, of course, you're not going to make those profits. It's going to stay notional profits till such time as you book it. Lancelot, what do you make of that argument? And at 30% down over the last 1 year, is this a level that you would say is attractive for a company that looks to invest at the frontier, that looks to be ahead of the curve?
I think, when you're looking at valuing an investment company, you always will look at it on the basis of its price to book value, right? So if you take the investment portfolio of this company, it's It's roughly valued at about 11,000 crores in terms of market value, and its book value I think was about 1,900 crores. So when you consider that it is trading at a little higher multiple, considering that from an investment perspective, it's trading at a much higher price to book multiple only for its investment business. As far as the other operating businesses are concerned, they could be valued on a cash flow basis or a price earnings basis because they are operating businesses generating profits. And based on that, you would, based on the sum of these two, you get a valuation. So while the stock has fallen, 30% so far from its peak, it still looks a little expensive as far as fundamental valuations are concerned. And maybe if there's a further decline in the market values of the underlying investments, then that could reflect in a lower share price, which is what what Sandeep mentioned.
Got it. All right. So that makes sense.
And I have a point to make over here. Valuations are expensive in terms of InfoEdge, as Lancelot is mentioning, and the investments that they have made also are pretty much expensive at this point in time. So where it goes is anyone's guess.
On that note, gentlemen, thank you so much for taking the time today.
Yes.
Pleasure speaking with you. As we wind down, we're ending at the low point.
Low point of the day. And this is concerning, right? We're ending below that 23,800 mark, Alex, which is what, 300 points downtick from here on. However, from the day's highest levels, 24,135 is what you were watching out for. And from there, we've receded. With this, let's just quickly look at the advanced decline ratio first, because that will tell you the kind of momentum that has come in.
It's the widest point, yeah.
At the widest point, I mean, from where we started off in terms of the declines, the advanced decline ratio absolutely in favor of the declines, and that's what you're watching out for right now. I think the heat map will tell you what's happened.
Yeah, let's look at the Nifty 50 heat map, because I think more or less where you were at the start with regard to the amount of green, but the quantum of red has actually, and they stay the same. What I mean is that the stocks that have lost ground have actually lost more ground over the course of the last 1 hour. So Infi losing about 3.5% or so. Adani Enterprises actually dropping quite considerably from the high point of the day. HDFC Bank losing ground, now trading with cuts of about 1.8, 1.7%. State Bank of India, these are heavyweights that are losing ground. ICICI Bank moving from green to red.
No, that was Axis Bank. Axis Bank was in the green. That's also actually moved in the red. You have Pharma also, which has come up substantially. Likewise, even few of the auto names which were trading in the positive have come off quite a bit. Let's just pull up the broader markets as well and see if the cuts are as deep as compared to what we're seeing in terms of the benchmark space. There you go. I mean, you have mid cap 150 also cuts of little over 1% at the day's lowest levels, and the small cap 250. It's not at the day's low, but you've seen cuts coming in there, 0.7% lower right now, Alex.
But after 7 days of gains, I think this is par for the course, and 0.6 cut for the small cap index is not very much. I do want to pull up the intraday chart for a few banks, right? Private sector banks, HDFC Bank for one, which will more or less
even
map.
Axis is what you should,
I want all three.
For. Yes.
I want all three. So it's at the low point of the day. ICICI Bank pulled that up because I believe that it was trading in the green at one point today. It was, in fact. There you go. So it was trading in the green for a large part of the session. It's dropped, and now at the low point of the day, an Axis, which is trading more or less flat at this stage.
Look at that surge that did come in here. It's still trying to, be defensive and trying to come back into the green right now. But unfortunate that we are seeing the private banks also crash today.
So I think what has happened, if you want to sum things up for today, Hiral, it's a factor of global risk-off sentiment, because you saw the cracks in the Asia-Pacific region.
Look at Kospi.
Kospi, you had a halt in the trading, by the way. It ended with cuts of 10%, right?
Yeah. There was a lower circuit there.
And just a day after Hynix became the most valuable stock.
So Hynix and Samsung, both the counters cracked, which actually had an impact in terms of Kospi as well. European markets lower. Look at the US futures as well. On the back of the tech sell-off, you've seen the US futures also, which are trading lower. So all of this somewhere is having an impact in terms of Indian markets.
Yeah, and I think so. I read a few headlines about what people are thinking is the reason, and I think more than everything else, they're focusing on the possibility that the Fed is going to have to hike rates sooner rather than later. To have control over inflation, even though you've had oil prices that have corrected 40% from the peak. So that's certainly something to watch out for. But I think we've got quite a bit to talk about over the course of this evening, and certainly tomorrow when we come back to take you through the start of trade tomorrow. But from Hiral and myself and the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit. Welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin dips below $64,000 mark, derivative activities improve. Franklin Templeton files Bitcoin drip ETFs. Clarity Act boosts XRP ETF inflows. Bank of England removes stablecoin holding caps rules. Well, that's all about the headlines, but time for a quick refresher on crypto basics. Now, the first question is, what is crypto in India? To simplify, crypto in India refers to the buying, selling, and holding of digital assets like Bitcoin, Ethereum. While these decentralized currencies operate on public blockchains, they are heavily regulated by the Indian government through strict taxation, anti-money laundering laws, and know your customer KYC mandates. Now, the Indian government has classified all the crypto as virtual digital assets, VDAS. Now, their current status is defined by a few core principles. Remember, it's not a legal tender. Crypto cannot be used to pay off debt or mandatory government payments, as they do not function as official currency. Second, trading is legal. There is no blanket ban on owning or trading a crypto, and citizens can actively engage with the market. Remember, the strict platform compliance is there. All crypto platforms serving Indian customers are required to register with the Financial Intelligence Unit, or as in India we call it FIU.ind, and enforce strict AML and KYC rules. Now remember, the income earned from transferring or trading VDAS is subject to a flat 30% tax plus a 4% cess, and traders are not permitted to offset their crypto losses against other income. Additionally, a 1% TDS, which is nothing but tax deducted at source, applies to almost all crypto transactions, which acts as an advance tax to track user activity across the exchanges. Now, as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline, where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल,
बोलो जुबान केसरी.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you up to speed in terms of everything that has happened, be it markets as well as news and updates. But first things first, let's talk about markets then. The Street lost steam in the final stretch. Benchmark indices ended near the day's lows, with the Nifty slipping below the 24,000 mark and the Sensex also tumbling more than 1,000 points, as well as late session selling really gripped the large street. Let's also talk about risk aversion that swept across the large street today in terms of the sectoral indices as well. You did see that reflected as well. So most sectoral indices, in fact, ended in the red, with metals and IT leading the losses, while pharma stood out as a rare pocket of resilience amid the broader market sell-off. And like I mentioned, it's actually the metal stocks that were trading with quite some cut coming in, as you can see on your screens as well, about 5% knock coming in on a couple of counters. Let's talk about what's happening here, because it's a combination of falling commodity prices and market-specific factors that weighed in on the sentiment. Steel rebar prices have corrected sharply in the month of June. You do have aluminium as well that has hit a 3-month low as well, and peace talks in the Middle East that's raising hopes right now in terms of some of that supply really coming back up to normal. So add to that a stronger dollar, profit booking and technical reversal, and you're looking at a confluence of factors that you can see reflected in that shade of red on your screens as well. So the sector's recent momentum has clearly cooled. Let's move on and talk about Vedanta, that was in focus after a large block deal saw around 7.3 crore shares change hands at about 292 rupees a piece, translating into a transaction worth nearly 2,100 crore rupees. While the deal does not alter the company's operations or fundamentals, its size and the likely involvement of a promoter entity have really caught investor attention, and the transaction has sparked questions around promoter intent, capital allocation priorities, and what the move could really signal going forward in terms of shareholders. Let's also move on and talk about a stellar run-up in terms of AI-linked stocks that's screeching to a halt right now. Shares of several Indian companies tied to the artificial intelligence story and even the data center ecosystem seem to be taking a breather just now. Some bit of recovery coming in terms of black box that seems to have bucked the trend, but it's largely some of those stocks really tracking the weakness in global tech names. Caution is creeping into the AI trade as investors really reassess valuations and trim exposure to high growth, high expectation themes. Let's also talk about pharma stocks that got a shot in the arm after reports that the US FDA has reached out to India's Drug Manufacturers Association to identify companies capable of supplying cancer medicines to the US. Now, the development has really fueled hopes when it comes to potential export opportunity coming in for some of the Indian drug makers that you see reflected on your screens. All of them were gaining, by the way, upwards of about 1%, 2% as well. For some of those names, linked to the expectations really of incremental business. Let's move on and talk about Tata Motors that has drawn up ambitious blueprint in terms of the FY28 as well. And I'm talking about Tata Motors CV on the back of this sharp focus really coming in on the back of scale, profitability and even returns. The automaker is targeting somewhere close to a 40% share of the domestic commercial vehicle market, double-digit EBITDA margins and strong free cash flow generation as well. So you do have the Iveco acquisition as well that's expected to close by the second quarter of FY27. Also seen opening up new geographies when it comes to this particular company with an accelerating EV transition then and a target of somewhere close to 30 to 35%. In terms of the ROCE post the deal, you do have Tata Motors that's really positioning itself for its next leg of growth. Let's also move on and talk about Syrma SGS that's in focus on the back of strengthening its global ambitions with a strategic manufacturing partnership with a Japanese company. So about 3% uptick really coming through when you talk about this counter as well. And the two companies are going to be setting up a state-of-the-art electronics manufacturing services facility in the country focused on serving Japanese clients. Now, under the agreement, Syrma is going to be holding up to a 60% stake in the joint venture, while Kaga is going to be owning up to 40%. Now, in terms of the partnership, it's expected to enhance the company's manufacturing capabilities, but also deepen its access when it comes to the Japanese customer ecosystem. Let's also move on and talk about GHV Infra that has strengthened its order book with a fresh 200 crore contract, in fact, coming in terms of a railway infrastructure project in West Bengal. Now, when you talk about this order, it's expected to be executed over the next 14 months, further deepening the company's presence when it comes to the railway infrastructure segment. And the win is also improving revenue visibility, underscoring continued opportunities when it comes to India's railway modernization and infrastructure build-out. Moving on, then let's talk about GPT Infra that is entering a new phase of growth with its first HAM road project win also coming in, and the company is backed somewhere close to a 600 crore Jodhpur bypass project, marking its debut when it comes to the hybrid annuity model space as well. Now, at the same time, GPT Infra is also transforming into an integrated infrastructure EPC player, mind you, with its entry into railway signaling, a strong order book, and also recovering execution that's expected to support growth going forward. Moving on, then let's talk about brokerage notes then. In terms of Investec that has initiated coverage when it comes to something like a Vishal Megamart with a buy rating. The stock, of course, was not doing all that much, but the initiation note is quite important on the back of the target price of 144 rupees. They're also going ahead and calling the company an outsized opportunity in value retail, and the brokerage is seeing a clean double-engine growth story as well, underpinned by strong same-store sales growth as well as aggressive store expansion. So that's something that they're looking at. Also flagging some of the expected revenue and earnings that's going to be compounding strongly going forward. Believes the stock's valuation remains attractive given its growth prospects. Let's also move on and talk about Citi that has initiated coverage on Meesho as well with a buy rating. Now that counters up and away in trade with that 8.5% uptick coming in, and you do have Citi highlighting the tech-led value-focused e-commerce story here. The brokerage is also believing that the company's marketplace approach in fact offers a very distinct strategic advantage, enabling scalable operations while keeping costs low as well by reducing seller expenses and improving affordability. You do have the company really creating an accessible, infinite store for mass market consumers, positioning it well to capture the next phase of e-commerce as well, growth in India, and that's something that Citi is really talking about as well. Staying with brokerages then, let's talk about Jefferies that has initiated coverage on GE Vernova as well, and they have a hold rating that you're looking at. So target price of close to 6,000 rupees as well, while the brokerage really expects a strong 36% earnings CAGR as well between FY26 and FY28. It also believes that the stock's current valuations already price in much of the optimism. Jefferies also flags that a lack of orders from the parent could really limit margin expansion, and that's really the commentary coming in here. Moving on then, let's talk about the IPO of Waterways Leisure Tourism receiving a muted response on the first day of bidding as well, with subscription levels remaining subdued across investor categories. And despite operating in the niche river cruise and tourism segment, investor participation was cautious amid mixed market sentiment and valuation concerns. The issue is going to be remaining open for subscription over the coming days, with market participants closely tracking some of the demand trends that are important here. And on to some business news, then a major shift may be underway when it comes to global energy markets. The US has granted Iran a 60-day waiver to resume some international oil sales, offering Tehran an important economic lifeline. The move is coming in as Washington and Tehran report encouraging initial progress in peace talks as well, with both sides establishing a communication channel when it comes to maritime traffic through the Strait of Hormuz. And when you talk about just the negotiations themselves, they're set to continue in Switzerland this week, so keeping markets really focused on the prospect of more Iranian barrels returning to global supply. Moving on then, let's talk about the AI boom that is now facing a green reckoning. The United Nations is pushing for greater transparency, asking tech giants to really disclose the true environmental cost of their data centers, from water usage to carbon emissions and land footprint. Every metric is now under the spotlight. The message is clear here. Scale must come with sustainability. Now, the UN is also urging AI companies, in fact, to shift towards 100% renewable energy by 2030, even as data center demand explodes globally as well. So that really is the word coming in from the UN. Moving on then, let's talk about the AI revolution in terms of another angle coming in, creating new opportunities but also rewriting the employment playbook. Now, Oracle has shed about 21,000 jobs globally over the past year, around 13% of its workforce, as it pivots more aggressively toward AI. Now, the company is saying that it's deploying AI across its operations, and that has already led to staff reductions and could result in even more going forward. Oracle's move really mirrors a broader trend, in fact, across big tech, where companies are really cutting thousands of jobs, even as they spend billions building the infrastructure powering the AI age. Moving on, let's talk about macros then. Britain's economic engine is losing momentum. The UK services sector shrank in June at its fastest pace since January 2023, with the PMI sliding to 48.7. The sharp miss, in fact, versus expectations is signaling weakening demand and raising fresh concerns as well over the country's growth outlook. And on to some national news then. Union Minister George Kurian has resigned from the Union Council of Ministers following the completion of his tenure as a Rajya Sabha member. Now, you do have President Murmu also accepting his resignation according to an official notification. Kurian, who served as Minister of State in the NDA government, demitted office after the end of his parliamentary term. Moving on then, let's talk about the monsoons. Mumbai has officially welcomed the southwest monsoon, with the IMD in fact declaring its onset over the city. After days of anticipation, widespread rainfall really brought relief from humid conditions and marked the formal arrival of the rainy season. In fact, the IMD has forecast continued showers over the coming days, with authorities urging residents to really remain cautious in low-lying and flood-prone areas. Authorities have stepped up action following the deadly fire in Lucknow's Aliganj area that claimed 15 lives. 4 government officials have been suspended for alleged lapses, while 4 building owners have been arrested. As investigations into the tragedy really intensify at this point in time, officials are examining possible violations of safety norms and building regulations that may have contributed to this particular incident. Let's move on and talk about Tamil Nadu Deputy Chief Minister Udayanidhi Stalin as well, who's launched a sharp political attack, in fact coming in on actor-turned-politician Vijay, as well as escalating the war of words ahead of the state's electoral battles. During a public address, you do have Udayanidhi making a personal jibe at the TVK chief, drawing strong reactions from political circles and supporters as well. The remarks have added a fresh layer of political confrontation between the ruling DMK and Vijay's emerging political outfit. Let's also move on and talk about international news as well. After months of conflict, diplomacy may finally be gaining ground as well. The US and Iran have wrapped up an initial round of peace talks in Switzerland, with both sides describing the discussions as constructive. You do have US Vice President J.D. Vance as well saying that the talks have laid a good foundation for a final deal, while Iran has agreed to invite nuclear inspectors back into the country. Mediators Qatar and Pakistan have also hailed encouraging progress, raising hopes of a broader de-escalation when it comes to the region. Moving on then, Guwahati is no longer expected to host Japanese Prime Minister Sanae Takaichi during her proposed India visit in July. Now, the development is coming in after earlier plans for a summit-level meeting between PM Modi and Takaichi in Assam's capital. While the India-Japan annual summit is still expected to go ahead, officials are now believed to be considering an alternative venue when it comes to high-profile bilateral engagement. And a severe hot wave sweeping across Europe has claimed at least 18 lives thus far, with France among the worst hit countries. In fact, authorities reported that multiple heat-related fatalities, including children who were left inside a parked vehicle. Several regions have recorded unusually high temperatures, prompting health alerts, school closures, and even emergency measures as Europe really grapples with another extreme weather event. And on to some sports news then. The race for the Golden Boot at FIFA World Cup 2026 is heating up, with Messi and Mbappe and Erling Haaland emerging as the leading contenders right now. Messi's goal scoring for Argentina, the clinical finishing for France, and Haaland's goal scoring exploits for Norway have set up a fascinating battle among football's biggest stars. With the tournament entering a crucial phase, every goal could really prove decisive in the chase for the top scorers award. Moving on then, let's talk about Messi, who's become the outright highest goal scorer in FIFA World Cup history, surpassing the long-standing record during Argentina's latest World Cup outing. However, the historic milestone was accompanied by controversy, with debate really surrounding one of the goals that contributed to the record-breaking feat. Despite the discussions, Messi's achievement in fact further cements his place among football's greatest ever players. France booked their place in the round of 32 after winning what is being described as the longest match in FIFA World Cup history. In fact, Kylian Mbappe also starred with a crucial brace as Les Bleus also overcame a stubborn challenge in a marathon contest that stretched well beyond normal playing time. The dramatic victory not only secured qualification but also really added another memorable chapter to the tournament. Moving on now, let's talk about a major IPL transfer development. Rishabh Pant is set to rejoin Delhi Capitals after reportedly agreeing to a significant pay cut in another high-profile move. Spinner Kuldeep Yadav has been traded to Lucknow Super Giants, reshaping the squad dynamics ahead of the next season. The move, in fact, is marking a major shift when it comes to team strategies as franchises begin preparing for the upcoming IPL campaign. And as we wrap, Info Edge shares surge after the company really showcased scale and performance of its startup investment portfolio in its latest shareholder communication. We also quizzed the founder as well, Sanjeev Bikhchandani, on what does the investment really do in terms of the other businesses, what does it really bring in for the company as well. Let's go across and listen into a slice of that conversation.
From the business that Info Edge does, right? What percentage of your revenues, what percentage of the profitability are you seeing will come in from the investments that you're making versus the core business?
See, in investments, you don't make a profit until you sell. Because you have a book value, you have fair market value, it hopefully appreciates. But till you sell, you don't realize the profit. Right? So this is not a business where you earn profits every quarter, every year. You may not earn for, you may not earn for a decade. So the cash flows, there are money that's coming in, will usually be the operating businesses, which is Naukri, 99 Acres, Jeevan Sathi, Shiksha, with some lumpy income coming in sporadically when you sell an investment, when you exit an investment. So it's hard to predict. So Info Edge fundamentally has got 4 businesses, which is jobs, real estate, matrimony, and education classifieds. And now there's a 5th business, which is investments. So it's one of 5 investments.
Correct. It's one of 5 businesses, and the returns that you get in that one of 5 investments, whenever they do come in, could be probably deployed, to the other businesses as well that you're mentioning. However, what is it for the shareholders? Because
the other 4 businesses don't really need a capital infusion because they're profitable or getting to profit pretty soon.
Correct. But okay, so what is it for the shareholders? How do the shareholders gain?
It is an excess cash, which the surpluses that Naukri generates. Some of that goes into investing in startups who are AI. right? Shareholders gain because hopefully these companies become valuable. So like Zomato, Policybazaar are listed. There's a market value. We own roughly 12% in each. That gives us some market cap in our own valuation.
Okay, but okay, so Sanjeev, the question then is, because I'll tell you why I'm asking you this is, we were just doing a piece on InfoEdge where one of the comments on Twitter or something came up is, okay, these are the kind of investments that InfoEdge has made. Good amount of, benefits that have come in terms of returns. Now, is this something which will be distributed to shareholders or not in the form of dividends, buybacks, whatever policy that InfoEdge would have? What would you want to tell shareholders over here? Because from a stock price perspective, the stock is kind of down 30% in the last 1 year. So that's, and that's a valid point from the investor as well.
See, like I said, till we exit an investment, we don't realize cash to distribute to shareholders from that investment. Right? But if that investment has a market cap or a valuation or an FMV, that usually gets reflected in some form or the other in our stock price. Right? Now, our job is to do our job, which is run the operating business well and invest well behind good founders doing good stuff. And if we do that well, if we get growth back into Naukri, which we are hopeful of next 2-3 quarters, if we get, continue to grow fast in 99acres, which is happening as we speak, we think that the operating businesses will be valued higher 2-3 quarters from now than they are today.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Market slips sharply in last hour of trade. Nifty ends around 23,800 levels, giving up nearly 330 points from high point ahead of its weekly expiry. Infosys and Wipro are top losers in Nifty. Broader markets outperform the benchmarks. Investors remain on edge as US futures slips too. Oil prices have continued to retreat as diplomatic progress between the US and Iran have raised hopes of additional supply returning to the market. Brent has slipped towards $77 per barrel mark as traders price in sanctions relief and a possible easing of Middle East supply risks. Exclusive sources tell NDTV Profit that airlines may roll back fuel surcharge by Q2 end or early Q3 of FY27 as crude cools sharply, paving way for fare relief and competitive pricing across domestic routes soon. Trade diplomacy is gathering pace in New Delhi. A senior US delegation, including Chief Negotiator Brendan Lynch, has met Commerce Minister Piyush Goyal as both the countries work to close gaps and advance an interim trade agreement. Retail auto demand stayed resilient in June despite fuel price volatility and multiple price hikes. Discounts fuel demand despite hikes. Vahan data shows M&M has seen 72% growth as compared to last year. Two-wheelers, PVs and tractors have seen strong growth while truck sales have lagged. As El Nino looms, Union Agriculture Minister Shivraj Singh Chauhan has said that we must not wait for a crisis to strike. Urges advanced planning, calls for preparedness to safeguard the crops and food security across the country. Government lifts the ban on messaging app Telegram after the temporary restrictions linked to the NEET UG re-examination period. BCCI announces first major trade for IPL 2027. Former captain of Lucknow Super Giants, Rishabh Pant takes stunning 12 crore rupee pay cut to rejoin the Delhi Capitals. Kuldeep Yadav traded to Lucknow Super Giants. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. Viewers, the street has lost steam in the final stretch. Benchmark indices have ended near the day's lows, with the Nifty slipping below the 24,000 mark and also the Sensex tumbling more than 1,000 points as late session selling has gripped the Dalal Street. Let's go over to my colleague Parth for more details on this.
So Nifty has closed in red, down by over 1.2% today. 41 out of 50 stocks in the index closed in negative, with Infosys and Wipro being the top losers of the index, both down over 3% today. The broader markets have, however, outperformed the benchmark index, with Nifty Midcap 150 closing in red, snapping its 7-day gaining streak, down almost 1% today, led by New India Assurance and National Aluminium Company. New India Assurance was down almost 8%, while National Aluminium also saw a downtick of 6% today. On the other side, Nifty Small Cap 250 also snapped its 7-day gaining streak, down by over 0.5% today, led by GSPL and Aegis Vopak. GSPL was down 7% today, while Aegis Vopak saw a downtick of 5.5%. All of the sectors have ended in red except Nifty Pharma. Nifty Pharma was in fact the top gaining sector today, gained almost 1% and hit a new all-time high. Piramal Pharma and Gland Pharma were the top gainers in Nifty Pharma. Piramal up over 6.6%, while Gland Pharma saw an uptick of over 5% today. Nifty Metal on the other side was the top losing sector, with achieving the lowest level since April 2026, down over 3% today, led by Vedanta and Nalco. Vedanta saw a downtick of 8%, while Nalco saw a downtick of 6% today. Moving on to the sectoral trends as well, Nifty Metal has snapped a 2-day gaining streak, while Nifty FMCG was down for the 3rd consecutive day. Also, Nifty Pharma was ended in green for the 4th day in a row as well.
Thank you so much, Parth, for that market roundup. In fact, we also spoke to Manish Sonthalia, Director and CIO at EIML, on the improving FII outlook towards India, the moderation in the foreign outflows, and even why the risk of aggressive selling by overseas investors appears to be receding. Let's listen in to that remark.
India's got the breathing space till 30th of September, because of the RBI initiatives, $50 to $70 billion. 93 to 94 is a stable level. Nowhere is the fear that the currency is going to breach $100. That was the biggest fear in the minds of everybody. The macro conditions would have looked very, very vulnerable at 100. That's not happening, at least till about 30th of September. That's a breathing time. FII flows, outflows have abated. And I think these are all positives. I even hear that FIIs are starting to turn very positive in India.
Let's also look at the Indian currency now. The rupee has closed at 94.74 against the US dollar, which is 0.1% down. So the domestic currency, remained under pressure through the session and also settled near the day's low amid a stronger dollar and even heightened demand for the greenback. And rising crude oil prices and even the cautious global risk sentiment has also weighed on the rupee as investors have tracked the developments in the Middle East and also their implications for the energy markets. And market participants will continue to monitor oil prices, foreign fund flows and even global currency trends for further cues. And viewers, let's look at the crude prices now. So they continue to cool off as diplomatic progress between the US and Iran is helping ease the fears of supply disruptions in the Middle East. But, talking about Brent, so Brent crude is now trading around $77 per barrel range, while the WTI has eased to near the $73 mark, also extending the sharp retreat from the highs, seen during the height of the regional conflict. And the latest boost to sentiment comes after Iran's top negotiator, Mohammad Bagher, who said that an agreement has been reached with the US to release $12 billion of frozen Iranian funds. And Washington has also temporarily eased the sanctions to allow Iranian oil and also petrochemical exports until August 21. So, however, the geopolitical risks have not really disappeared entirely. Israeli Prime Minister Benjamin Netanyahu has reiterated that Israeli forces will continue operations in southern Lebanon and also target Hezbollah infrastructure, keeping the region on edge even as the broader peace process moves forward. Meanwhile, India has also welcomed the breakthrough. Speaking at the BRICS National Security Advisors meeting, NSA Ajit Doval has said that India welcomes the MOU between US and Iran. He also added that the reopening of the Strait of Hormuz is a positive development that could really remove supply chain bottlenecks and also ease the shortages across global markets. Let's listen into his remarks.
India welcomes the MOU reached between the US and Iran. We have got cautious optimism and we hope that it will work. It will help energy security. Opening of the Strait of Hormuz is a very welcome development. It will remove supply chain bottlenecks and many of the shortages in the field of, say, fertilizers and chemicals, etc., will be met with. And the freedom of navigation that will be available to the countries in the region and beyond probably will also greatly improve our economic prosperity.
And we are switching gears now in a major relief for air flyers. Exclusive sources are telling NDTV Profit that airlines may take back the fuel surcharge sooner than planned. And my colleague Danish is here with more details.
Sources have told NDTV Profit that the airlines may take back the fuel surcharge earlier than they planned. And let me remind you that in the month of March, after the Middle East crisis began, we saw that Indigo, Akasa and Air India Group, they introduced a fuel surcharge, which basically means that you have to pay more to fly either on domestic but either on international. But what sources are telling us is the fact that the deliberations have begun. They are looking at the timeline, whether they should withdraw the fuel surcharge in Q2 or towards the end of Q3. So the airlines are deliberating on that right now, but the airline industry is also on a wait and watch mode. While we are seeing that the global crude oil prices have cooled from an all-time high, but if we talk about the A1 jet fuel prices, and that is the ATF that I'm talking about, even those international prices are still almost 1x up in comparison to the pre-war level. So the airlines are right now deliberating and are also on a wait and watch mode. And if things are in their favor, then the airlines may roll back the fuel surcharge that they introduced in the month of March.
All right. Thank you so much, Danish, for gathering those exclusive details there. And also with crude prices cooling and price returning to the Middle East, Niti Aayog Vice Chairman Ashok Lahiri believes that the worst of the energy shock may be behind us. And speaking exclusively to NDTV Profit, Lahiri has told that if government is mulling to reduce the fuel prices as crude prices cools off, let's listen into his exact remarks.
एक पेट्रोलियम सेक्टर के एक्सपर्ट ने बोला कि जब ये क्राइसिस हुआ और भाव बढ़ गया तब सरकार नहीं, पेट्रोलियम कंपनीज भाव बढ़ाए तो नहीं, तो जो चीज बढ़ाए नहीं उसको घटाएं कैसे। मगर मुझे तो लगता है कि अगर पेट्रोलियम प्राइस, क्रूड प्राइस स्टेबलाइज कर जाए तो धीरे धीरे सरकार विचार करेंगे, कंपनीज भी विचार करेंगे क्या होना चाहिए.
And we are switching gears now. India and the United States have held ministerial level talks to push forward negotiations on an interim trade agreement. Commerce Minister Piyush Goyal has met US Trade Representative Jamison Greer in New Delhi as both the sides work to resolve the pending issues. And the two-day India visit will see a conclusive agreement to the trade deal by next month. My colleague Rishabh is here with more details.
Absolutely. What you have is a very set of crucial talks that are ongoing in New Delhi. From the latest visuals, what we're understanding is that Jamison Greer was at Vanija Bhavan, which is the Commerce Ministry here in New Delhi. And him and Sergio Gore then left shortly after their initial round of talks. But what are given to understand is that these 2 days you'll have continuous negotiations between India and the US delegations. Of course, the higher level political leaders will not sit through the entire spread of the negotiations, but it will be the chief negotiators and other officials that will take forward this US trade deal. What we're essentially picking up is 99% of the deal is done, just that 1% is left. So this current round, the primary objective is to sort of add the final finishing touches to this deal. And for India, it will mean securing some sort of a tariff differential advantage over other manufacturing economies like Malaysia, Indonesia, Vietnam, China, Bangladesh, and others. What India will also look forward to is to gain preferential market access into the United States market, a very, very large market, the biggest trade deal that India will ever sign. And that's why these deals have been taking a long, long time. So that's what we're picking up. These talks are expected to go on till tomorrow. What we understand is that there might not be any sort of a takeaway tonight by the Indian Commerce Ministry, but we'll have some details tomorrow is what we're picking up.
All right. Thank you so much, Rishabh, for gathering those details there. And viewers, switching gears now, a cancer drug shortage in the US has put Indian pharma in focus with the FDA reaching out for urgent supplies. Let's go across to my colleague Varsha for more on the opportunity and even the companies in focus.
When it comes to US FDA, which has reached out Indian pharma for cancer drug shortage, now the communication was sent by IDMA to identify immediate suppliers, and the shortage is one of the drug which treats lung cancer and bladder cancer. Why this matters? Because this is a life-saving drug, limited global supplier, and there is an US supply disruption, and the demand has been unmet, and the FDA is actually scouting new global suppliers. And India is a key country when it comes to oncology segment. Now companies already, what FDA wants, companies already making or capable of making drug, ability to supply for regulated markets like US, and the fast support to bridge shortage gap will be provided by US FDA. Now why will India benefit? Of course, because India being a global hub when it comes to oncology, generics, injectables, and this is a large US FDA approved manufacturing base. We have cost advantage, we have strong export capability as well. Now, which companies will be in focus? First of all, Zydus Life Sciences, because they make this generic cancer drug which is in shortage. Aarti Pharma Labs makes API of that drug. So these two companies are most important when it comes to this drug. You also have Aurobindo Pharma, Dr. Reddy's, Cipla, Lupin, Sun Pharma, which have oncology as a segment, and they are actually increasing the growth when it comes to oncology. So overall, these all companies will be in focus when it comes to the cancer drug which is in shortage.
Right. Thank you so much, Varsha, for that. In fact, viewers, my colleague Danish has spoken to Ankur Goyal, CFO at Akasa Air, on the challenges faced by the aviation industry amid unprecedented price increases. And he has discussed the supportive measures taken by the government, how airlines are managing the near-term pressures, and even why the long-term growth outlook, remains strong. So let's listen in to that snippet of that conversation.
If we look at the external environment, we have seen that over the past few months, the global crude prices have really spiraled around, and they have hit new highs almost every day, and that has had an impact on the ATF prices as well. So if we look at the other aspect as well, which is rupee depreciation, so this is like a double whammy for the airline industry. So how has it really affected you, and what are the plans to navigate through this issue?
The industry has actually faced unprecedented fuel price increases. These are not the increases we have actually seen in the last 15 years. So these are absolutely unprecedented times. We are very supportive. We are very thankful to the government for being so supportive, for being so proactive to help the airlines in the country. They've come out with a capping on fuel pricing. They have come out with a reduction on airport charges. They've also announced a credit scheme for the airlines. And these are the steps, that is absolutely something that is helping the airlines tide through this. So short-term headwind notwithstanding, the long-term plans remain robust. The long-term demand forecast remains robust. And honestly, that shows the depth of the Indian airlines and the depth of the Indian market, in which the demand continues to outstrip supply. That even in the wake of some of these conflicts, in the wake of some of these headwinds that we have, the demand in India remains robust.
Viewers, let's go across to Ministry of External Affairs briefing the media. Let's quickly cut across to what they have to say.
To be the case. Keshav, there was a meeting yesterday between the National Security Advisor and the CPC Politburo and Foreign Minister of China, His Excellency Wang Yi. As we have in our readout told you, the two sides reviewed recent developments in bilateral relations and noted progress towards gradual normalization in ties. National Security Advisor underlined that stable, predictable and constructive bilateral relations contribute to building of trust and better understanding between the two sides, and these discussions were forward-looking and constructive. So this is what I have to share with you, Keshav. Dharya, again, your question regarding Iranian National Security Advisor. Yes, our National Security Advisor had a meeting with the Iranian counterpart, who's here to attend the BRICS NSA meeting. Both sides reviewed the ongoing situation in West Asia. They discussed various aspects of the developments that are happening there. They also discussed cooperation under BRICS platform, as also various aspects of India-Iran bilateral ties.
All right, viewers, so that was Randhir Jaiswal, spokesperson of Ministry of External Affairs, briefing on the Iranian oil and the US, delegation that's in India, and about the bilateral. So, viewers, moving on, Mundra Airport's newly built terminal was officially inaugurated today, marking a major milestone for aviation connectivity in Kutch. And Jeet Adani, director of Adani Airport Holdings, has said that the airport is connected with Mumbai, Delhi and Surat too. And key approvals for Mundra Airport are already in place. Let's listen in.
We see that this will open up a significant amount of connectivity and interface from Mundra, our Karma Bhumi, to the rest of India. And I know a lot of people who live here and work with us are extremely excited. And we look forward to further growth and further increasing connectivity across from Mundra to the rest of India. As of now, we are starting with not a very heavy schedule. We have a couple of flights connecting Hindon, Goa, Surat, Bombay, and we'll be starting Ahmedabad soon as well. We see there's three kinds of connectivity that is required. One is our own internal connectivity, where our stakeholders, our own employees, our partners, they would be forming a significant part of this. The other part of the connectivity or the demand that is going to come out is going to be some amount of tourism travel, because Mundra as a city also has generated significant wealth for its citizens, and we believe that there's going to be some level of demand to most of these destinations. Just keep in mind that today for someone from Mundra to even go to Mumbai was like a 2-stop journey, and having a direct flight now is going to be extremely easy for them, or they have to drive up to Bhuj and then take a flight. The third part is going to be some level of tourism travel, because there's a lot of cultural sites around as Manvi Beach. So we see that some amount of tourism will also come, will get activated from here.
We are switching gears now. Telegram has been restored on the Google Play Store after a temporary restriction that had disrupted access for users in India. And the app was earlier taken down in connection with the government action around misuse concerns during the NEET UG re-examination period. And with the restriction window now coming to an end, Google has started bringing back the app online, and even the users are gradually reporting restored access. However, some functionality continues to normalize in phases across devices. And this development comes as digital platforms remain under close regulatory scrutiny in India, especially around the exam security and even content misuse. Viewers, BCCI has announced first major trade for IPL 2027. Former captain of Lucknow Super Giants Rishabh Pant has taken stunning 12 crore rupee pay cut to rejoin the Delhi Capitals. Kuldeep Yadav has traded to the Lucknow Super Giants. So let's go over to my colleague Rika Roy for more details on this.
Rishabh Pant is heading back to where it all began. 2 years after leaving Delhi Capitals and becoming the most expensive player in IPL history with a 27 crore deal at Lucknow Super Giants, he is now returning to Delhi Capitals in a blockbuster swap that also sends Kuldeep Yadav to Lucknow. Pant will earn 15 crore rupees a season with Delhi, while Kuldeep joins LSG on a 13.5 crore rupee contract. The move also brings an end to a difficult chapter for Pant in Lucknow. He was appointed captain ahead of the 2025 season. He struggled to live up to the price tag, to the expectations that were pinned on him. Despite being tried in multiple roles across the batting order, the left-hander managed just 269 runs in 2025 and 312 in 2026 before stepping down as skipper. Delhi, though, is a familiar territory. Pant spent 8 seasons with the franchise, played 111 matches, more than any player in Capitals' history. And he also captained the side for 4 seasons. For many fans, he remains the face of Delhi Capitals franchise. Meanwhile, Lucknow acquired one of India's premier white ball spinners. Kuldeep Yadav leaves Delhi after 5 successful seasons with the franchise, having taken 72 wickets in 65 matches. A homecoming for Pant and a fresh start for Kuldeep Yadav, and one of the most significant player deals in IPL history, has reshaped 2 franchises ahead of IPL season 20.
With that, viewers, it's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and KYC is the show where we get you one of the hottest companies where the people discuss is there any alpha to be made or not. We get for you mid caps, small caps, and a whole list of other stocks from the universe. But today there is a very interesting company. Guess करके बताइए ये कौन सा कंपनी है. मैं आपको थोड़ा hints देता हूँ. The first hint, it's a Pune-based technical textiles company. I'm sure you know the name, but there are a lot of these group companies which are listed, more than 4 or 5 I think. It was established in the year 1976. One more hint for you, and that is the stock is up 31% from March lows. And the last hint, try to guess it, I'm sure you are very near to it. It supplies sport nets to Wimbledon. Wow, that's an interesting fact. Try to understand which company I'm talking about. I'm sure the first name you must have guessed by now, and the confusion might be there in the second name. It's of course Garware Group Company. It's Garware Technical Fibers. But why are we calling this technical textiles company? क्या बात है इसमें? First question definitely is going to be on the overall business outlook and the benefits from UK FTA. That is why we are getting in the textile companies and also the technical textiles. That's the story we should be looking out for. The demand trends and the client confidence. What does that suggest? Is there any volatility at play from the abroad clients? The pricing power of the company. More price hikes, will that be taken? It's an old company, they have a very good name in the markets, and that's why the pricing power comes in. Inventory levels, will it be on the higher side as per what the customers have requested? That's the key question to be asked, especially in the first quarter. Middle East issue, is there a delay in the domestic dealer offtake? That's also we'll try to understand. And of course some problems are there in the industry, but in that case also the market share picture, does it maintain it? And if it maintains it, it's a benefit of consolidation comes in at play. And this is very interesting geosynthetic business. And I'll try to make you understand also that this is a quite technical company, but very simplified way we'll explain it. We'll have Shujal Rahman, he's the CEO at Garware Technical Fibers, to give us the entire viewpoint and the outlook for the business and the industry ahead. चलिए अब कंपनी के बारे में बात करते हैं. Let's try to understand about the company, the key details, what you should be knowing about. Of course, this is a technical textiles company from Pune, established in the year 1976. A lot of collaborations have happened. I see the history in the company's website. Now they have applied in sports, fisheries, aquaculture. They provide high tensile nets, ropes and ancillaries. It is a little bit off technical, but I'll simplify it for you. Shipping, agriculture coated fabrics and geosynthetics. Basically geosynthetic is nothing but the slope wires which are there so that the rocks don't fall, and of course across various different types of lands. Also, let's move on and understand a little bit more about the company. They have of course 2 facilities, in Vai and Pune, largely Maharashtra based company. And also most of the manufacturing setups and ancillaries are here itself, but they are marketed in more than 75 countries. Company mein R&D is very strong, and that is why they have a good pricing power. I'll give you a lot of details about the positives of the company, but you need to hold on, you need to wait a little bit. They have almost 101 patents filed and 29 granted. That is where they get that global exposure. 20,000 SKUs are there, which is pretty impressive when it comes to different categories. Now, speaking of categories, let's try to decode. लेकिन ये company बनाती क्या है? That's of course markets also at times don't understand that, but we'll try to simplify it for you. Aquaculture. There are cages, mooring ropes and netting solutions, and this is very much important, especially for salmon fishing and also different types of fishings, and all these ecosystem products, high margin products the company makes. So this is a niche category product and a niche industry. Sports nets business, they have tennis, football, baseball. The nets which we see for the baseball, of course the goalkeeping nets we talk about, and of course the tennis, they supply to Wimbledon, Roland Garros, you name it. It's an Indian brand which is hidden in plain sight of the global events, especially in the sports. So that's a proud moment as well. But value added, niche bhi hai, value added products bhi hai. They have ropes, fabricated slings and high strength polyfins. Of course the applications are across various industries. Third important product is geosynthetics. That's where the company has stated the growth is coming faster This is nothing but the slope protection, especially in road, railways, airports and ports. This is very much, you could say a very strong kind of a product so that the rocks don't fall in case of tunnels. But enough of the products. Let's try to understand where is the revenue coming from. Of course, domestic revenues are slightly lower. It's roughly 40%. But look at that, the international exposure, that is where the street is quite bullish on. 60% of this revenue is coming from this segment. So this is the overall revenue breakup I would like to point out for the company. But the question remains is, what are the positive factors for Garware Technical Fibers? What may work for the company? The first one, it's debt free and the company is having a strong pricing power. यानी कि raw material price अगर ज़्यादा बढ़ा है तो company जो है price hike कर सकती है. They command a good bargaining power in the industry they work in. A high return ratio industry, of course, compare that with technical textile and a normal textile. If you get them together, that's what we see, the company has a better alpha. Strong commentary has come in from the management, especially for the new product rollout. They have a good R&D setup also, and they're always looking out for niche products. So that is how you build a moat across the decades of your existence. And interestingly, I have found the valuations attractive also, because of the volatility seen in the export business. Also, the government is pushing really hard for technical textiles. This is a very important point. So you should note it down if you are a budding analyst. These are something you should be looking out for. But not everything is rosy, and that is why at KYC we get in the both sides of the coin to give you a very balanced outlook. What may not work for the company? The inventory levels, they might remain higher in the first quarter. The customers have also said, ki hold on to your inventories. There is a lot of volatility, and because of that, adjustments, especially on the accounting, can be there. There is a very less analyst coverage. I just checked, only 2 analysts from domestic broking houses are tracking it. So definitely there needs to be more product discovery, and the markets also haven't actually factored in, the strength which the company has. So it might be having a little bit of valuations when it comes to a normal textile company. So we need to get that in KYC, that by technical textile and normal textile, polyester and cotton are different things. But the KYC ratings is not different. We always have a proper format for it. This includes income statement, balance sheet, cash flow, return ratios. We see what's happening with the business, also the shareholding, how that pattern has moved around, street cred, different timelines. We try to understand, has this company made money for you or not? Valuations, interestingly, the company doesn't have much peers, so I'm going to compare that with the only valuations front for the company itself. And of course we have outlook also. That's one of the most important rating to track. The first one, let's get in, is of course the income statement. Income statement, it is dismal. Why? Of course the numbers are strong, but is it growing or not? And if it doesn't grow, the street won't reward. And this is what's happening. Single digit growth aa raha hai aapka revenue, EBITDA, PAT mein. So that is where a little bit of concern comes in. And if we pull up the Q4 numbers also, largely it was a mixed set of numbers. And that is where a little bit of concern comes in, because the numbers have to follow. If the number follows, the EPS goes up, of course the market gives you a value, despite of being in a niche business or a category. And largely margins were stable, a slight dip coming from FY24, FY25, it was 20% plus, and then it's slightly going down to 19%. So no much variation. It's a very stable business model, but the street needs growth. That is why I'm going to give this a thumbs down when it comes to the income statement. Now let's move on to the balance sheet and see what's the story here. Largely it's debt free. That's a very good point. At times people call it conservative thought process, but nevertheless, if the balance sheet is maintained, it's a good sign for the future moves. Reserves are pretty decent. Cash balances have also gone up, and largely it is maintained very nicely. So I'm going to give this a strong thumbs up. So we spoke about the income statement, we spoke about the balance sheet, but come over, let's try to understand the cash flow segment, what has happened, and the company has been able to, for the FY26 numbers at least, has been pretty decent, a good conversion, and this is the rate to look at. That's roughly 81%, and the net cash flows is decent. It's at 73 odd crore rupees, but nevertheless, it's a strong way of keeping the working capital ratios in check. So there is a little bit of conservatism at play, but it benefits also, especially for the analysis which we do on a backdated basis. That is why I'm going to give this a strong thumbs up to the cash flow segment. So after these three ratings, we come to the ROC numbers, and this is where if you compare that with a normal textile company which might be commoditized, even though it's going through a structural change, look at that, this has been maintaining 20% plus ROCs for textile company, and remember it's a technical textile company at play. So I'm going to give this a strong thumbs up when it comes to the return ratios. Apart from return ratios, it literally looks like a mirror image. March 2024 का शेयर होल्डिंग पैटर्न देखिए, promoters, FIs, DIs और public, कुछ नहीं बदला 3 साल में. Look at that, this has been pretty much same, no major changes happening. So all the shareholders are holding, nobody selling a lot, nobody is buying a lot. So we need to wait and watch. So as of now, it's a neutral rating when it comes to the overall shareholding. But let's talk about the street cred. Has the company made money for the investors or the traders? That's the key question. So I pick up 4 important data points from March lows. Like everyone else, most of them, companies trying to do a recovery, the stock went up 31%. But still, what peak numbers we saw in 2025, that is still, it's down almost 19%. और अगर एक साल की बात करें तो stock जो है 9% जो है गिरा हुआ है. But the biggest complaint, if you're holding it for the long-term investor, for the last 5 years the stock hasn't done much. Only 20% return has come in, and that is where a little bit of concern starts coming in. So definitely we'll try to understand more about it, but that's of course the next rating. It's a negative right now over the valuations, because stock में इतनी गिरावट आई है और of course earnings भी largely flattish रहा है. The valuations have turned attractive. The current valuation, this is the 12-month forward P, comes in at 31 times, and if you have a peak valuations that came in at 46 times, and that 5-year average, if I talk about it, that comes under almost 30 times. But if you analyze that totally, the valuations are cheap. Now if the valuations are cheap, I'm going to give this a strong thumbs up. So 7 ratings are done. Let's talk about the 8th rating, and that's of course the outlook, what the company is going forward. This is very much important. Improved visibility is coming in the salmon aquaculture business, so that's pretty much interesting, where the nets are being, the demand for the nets are picking up. USA sports nets business, those orders are coming at high rates. The market share has been maintained. Company has stated that in the 4th quarter's presentation. The value added ropes business, of course there was an acquisition, and the company claims that the ROC and the EPS numbers are accretive. We need to understand by when this integration comes in. That's the key question. And also the high growth rates. This is a geosynthetic business. We call it the slow protection. That is where a bullish commentary is coming in. But in short term, there are inventory adjustments, raw material costing का जो impact था Middle East से वो भी आने वाला है. So a lot of short term volatility would be there at least for the next 1 to 2 odd quarters. But let's see how the company comes up from this bad situation. So it's a neutral rating, I would say, when it comes to the outlook. But apart from the outlook, let's try to understand कि KYC rating के report card में company को कितना मिला है. This is an important data to check. So we revise that. Concerns on the growth, revenue, PAT, EBITDA, but balance sheet cash flow management is pretty strong. And for a company in technical textile, getting a good return ratios and maintaining it for so many years is a good sign. Shareholding, nothing has changed. Street cred, however, despite having niche business, a decent ROC numbers, it hasn't made a lot of money for the investors. So last 5 years, just 20%. Valuations, that's why it becomes quite attractive. Long-term outlook is strong, but of course the short-term outlook, there will be volatility. So the total KYC rating for Garware Technical Fibers comes in at roughly 5 out of 8. It's largely neutral to slight positive when it comes to our average rates which we give, or the average ratings which we give in KYC show. But we'll try to understand the entire story, and of course we'll get in from Shujal Rahman. He's the CEO of the company, but there's some interesting tidbits about him. He has held leadership roles from Seat, Mondelez, Marico, Apollo Tyres, so he has seen a lot of corporates and different segments as well. He's the chairman of Pune zone at CII as well. That's a prestigious position. And also education coming in from Harvard Business School and Aligarh Muslim University. So pretty interesting, history coming in from Shajal. But just to get everything in perspective, let's ask the first question itself. getting him with us. And Shujal, the first question I would like to ask you, especially, first of all, good afternoon, and it's always a pleasure to have you at NDTV Profit, is the business sentiment. How is the business sentiment looking like, especially with so much volatility in your export business right now?
Thank you, Sharad, and thanks for having us on the show. I think the last 3-4 months we have seen the Iran war and the play out of that. For us, the impact was on raw material. It increased by about almost 70% in 12-13 days. Fortunately for us, we are a company which is in the value-added segment, and our products are innovative, and many of the products have patents. So we are able to pass through the raw material hikes to our customers. Obviously, there is a lag. As we speak, what happened was in the month of March and April, we had concerns about raw material availability. So, we were able to stock up raw material, and you would see in the March balance sheet also that there's stocking up in raw material. And that's the reason why you mentioned a while back that the inventory has increased. Another reason for us where inventory increase was due to the transit. What happened was in March, many of the material was to reach to our subsidiaries in Norway or in Chile, which obviously are 60 to 75 days transit from India. They couldn't reach because of this geopolitical issue, and obviously inventory, which is GIT, also increased, which was basically confirmed orders. So that was the impact we had last year. This year, so far, as we speak, things are looking okay. Raw material is still holding on; it's not dropped. Supply is, as of now, not a concern of raw material. Many of the orders which we were expecting have also come, and things are looking good for cotton at this stage.
Right. That means the supply chain issues have normalized going ahead. And also, if you look at it, the way the momentum is building up for the value-added products, you also deal in the niche segment. That is where a little bit of strength also lies. But I want to ask another angle to it. Recently, of course, the India-UK FTA was completed, and a lot of new industry opens up for your company also regarding the products which you have been talking about. Shujal, I just want to understand, what incremental benefits can come in for Garware Technical Fibers.
Actually, when the FTA was announced, 5 days back, I was in UK only, and we met some customers. So obviously, there's a benefit for us. There will be some duty impact benefit which will be there for us, but the bigger benefit will be for our customers. Scottish salmon is a big salmon species, and it's a very profitable and a very premium segment for our customers. They want to sell it in India, and this opens a door for them. And in fact, they came and visited our facility and also met some customers, their customers. So it's actually win-win for both of us. From our side also, it's positive, and from our customer side also, it's positive. So I think it's a good move.
Fair enough. It's a good move, and hopefully in the coming quarters you can quantify that also for us, because a lot of discovery needs to happen. The street generally doesn't look into detail about technical textile companies like yours, and I feel there is definitely a value here. But speaking of pricing power, there seems to be you are having a good bargaining power on the pricing segment, on the pricing power, and I'm sure the raw material costs have gone up. So by when this calibrated price hikes can start coming in, second quarter, or you'll just take it by the end of the first quarter itself?
No, I think in quarter one itself, price hike impact will be there because we were able to pass through. There is a little bit of a lag because we have orders in the system. Otherwise, mostly in international market, every month we have a price updation list, so it immediately is passed through. Domestic also has been passed through. So the impact will be felt in Q1, as I mentioned a while back. Being an innovative company, we are able to pass through the raw material increases, and we are able to give value proposition to a customer. That's why they come back to us.
Fair enough, and this is largely known. It's almost, you could say, 60 to 70-year-old brand. But I want to understand a little bit more about the domestic business. The Middle East disruptions, as we are speaking about, I just want to get a little bit more views on this domestic dealer offtakes. Is that delay continuing, or has that bottomed out or improved as we speak right now?
In domestic, we have two parts of business. One is geosynthetic, which is the slope protection infrastructure business, which is doing actually very well. It's been growing at the rate of 40% last 3 years. So that business is still doing very well. There's no impact of West Asia crisis on that business. The pipeline is very positive. On the other side, the domestic business, which is industrial business and fishing business, that business was not doing well last few years, but it has now bounced back in a very big way. The construction business, construction safety business, and other businesses, oil and gas business, all is doing very well. Transmission business is doing very well. So these businesses are doing well. In domestic market, obviously we have a channel through which we serve the customer, which is a dealer and distributor. So when RM increases by such a level, they obviously hold on to their purchases, they don't buy. So there is some lag, but I think now things are settling down. Everybody's understood the impact of this war and the raw material impact. So I think things are going back to normal. In terms of demand side also, I don't see any major impact. One point is there, at this point there is some doubt in everybody's mind in terms of monsoon outlook. So some businesses may get impacted, but we are waiting and seeing the impact of monsoon. So at this stage, I think overall domestic also looking very positive.
So short term, there are some issues, but Shujal, let's talk a little bit long term, FY28, FY29. The margin outlook, how does it look? It comes back above that 20% mark on a consolidated basis. How does that look? What are the levers for the margins?
So in terms of margin outlook, I think we will be in the 20-21% range. That's our last few years trend. So that if you see our Q4 margin was very good. So we will maintain those kind of margin profile. That's I think the intent, and that's the drive that we are pushing. As far as the outlook is concerned on some of the segments, so if you look at our business, 80% of business comes from value-added products and 20% is still commodity, on which we are working in the rope segment. These are mostly the value-added ropes in oil and gas. They could be in transmission, they could be in shipping and mooring. So that segment is where we are working on to upgrade our customer profile, our product profile, and move to value-added segment. That may impact positively on our margin, but I think overall margin will remain range bound, so to say, and we'll maintain the 20-21% margin.
And also there is a little bit of concern, especially from the long-term investors. Okay, fine, margins remain stable. What about the top line growth? Last 3 years, it's been largely single digit on the CAGR basis. So of course, the top line growth is also something which the street wants to know more about for your company. Any kind of, targets which you have set, if 3-year target or a 5-year target, which you would like to share?
As a company, we focus on bottom line. Our aspiration is to double our profit every 5 years. And we are well on track, at least in F27, to be able to achieve that objective of doubling our profit in 5 years. So you can assume our bottom line growth at about mid 15% or around 15% level. As far as the impact of last year is concerned, if you see, last year was not a great year for us. There were 2-3 big impacts toward the end. I spoke about the supply chain issues, but also around Q2 time, what happened, not only salmon farming, which is like 80% of salmon which is consumed in the world is farmed. Salmon farming takes about 12 to 14 months for a salmon to be produced in the fish in the water. For some reason, this cycle was reduced by about 1 to 2 months, about 4 to 6 weeks, so to say, which essentially meant more salmon in the market and which impacted the salmon prices. And our customers, in a way, cut down on their capexes, which impacted us in a big way in Q2. But that situation is now resolved, and the last quarter orders were there, which I think we were able to produce and execute, but we couldn't get the sales. So that impacted F26 in a big way. But also, you would also appreciate that 10% of profit comes from USA, where our sports business is a very big segment, which also got impacted last year for about 6 to 7 months due to overall 50-55% tariff. We were able to hold on to that.
Right. On your US business for the nets, right now the FIFA World Cup is going on. Just out of curiosity, are the football nets being made by your company?
We don't know, because we normally supply to our distributors. Okay. So I would say there is high probability it could be our net, but we don't know, because we don't sell it as a branded product. We sell it as a catalog product and supply to our distributors who sell it eventually.
Fair enough. It's wonderful to have a chat with you, and it's always a pleasure, Shujal, to be with us at NDTV Profit. Best of luck for your company and the future. So that's a very interesting take coming in from the management. But yes, there are problems, there are inventory issues, and it's going to take some time, especially on the demand front. But a very interesting company, right? So for all these interesting stories on these companies, keep watching KYC, and yes, stay tuned to NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
to Your Money Matters. I'm Mahima Vachaj, and of course you're watching NDTV Profit, and this is a show where we talk about personal finance and how you can manage your own money wisely. And today we're going to talk about two very interesting topics. The first one is going to be about balanced advantage funds, and the second one that we've tried to pick up is also related to mutual funds, and that's as to how should you wisely calculate your mutual fund returns. What is the difference between absolute return, CAGR returns, XIRR, etc. So all of that we're going to take up, but first let's talk about balanced advantage funds. And to take this conversation ahead, we're joined by Divya Menon, who's the head of products at Axis AMC, joining us now. Divya, thank you so much for taking out the time. I'll start by asking a very basic question to you. For our viewers, understanding what are balanced advantage funds and why should one consider looking at these funds?
Just to step back a little, let's understand why do balanced advantage fund as a category exist, okay? I think that's important for our premise here. When investing, the most important thing that matters actually is the investor behavior. So there's a well-documented study on behavior gap, which essentially says that the fund return is not equal to investor return. In fact, investor return is subpar. And that is because of the investor behavior. Essentially, there are some biases that generally people or investors have, such as, trying to time the market, trying to do rear view mirror investing, chasing trends. And essentially what it boils down to is, in a layman's term, when the markets are rising and you are seeing that past returns are very attractive, investors tend to invest more and more. And reverse, when markets fall, they panic and they sell substantially. The end result is poor performance versus what a fund actually has delivered. So the whole idea or the setup of balanced advantage fund category is that you try to nullify this effect essentially by having a fund category which can go anywhere across equity and debt. So it's in the hybrid space, this is a very unique category where there is no defined allocation by SEBI. It's an open space, unlike other hybrid categories where there is a defined equity allocation or debt allocation or so on. This is a space where a fund manager can invest in equity or debt as and how his fund premise permits. So that's the beauty of this character, and that's where, this fund, because it can fit into any or every investor's core allocation. It's neither too conservative nor too aggressive.
Okay. The other aspect, Divya, that right now in the current market environment, do you think that our valuations indicating a higher allocation towards equity in these funds? How do you read through the current market scenario?
So, like I mentioned, the idea is to get a sense of the market conditions, not just the valuations. The category, the funds in this category can have their own, proprietary models, investment framework that will define how and where their equity or debt allocations have been. In the past, we have seen that whenever valuations have stretched or there's a case of overvaluation, funds have cut down. And whenever there's a steep correction, like say at times of COVID, there have been funds which have been able to, make good use of fund correction and increase their equity allocation. Today, times are very volatile. It's difficult for us to gauge where the markets would be. But within this, especially the last nearly 2 years, right, since the market started correcting, we have seen that this category, the fund managers in this category have been able to nimbly manage their allocations between equity and debt. moving lower to equities, given the geopolitical conditions, and then as they see things streamlining better, marginally raising their equity allocation.
Got it. Okay. So then, how quickly do you think that these balanced advantage funds can change the mix, considering how the markets go? Is there a set rule, or how does one that take into consideration?
So that is a difficult aspect of balanced advantage fund, because there's no uniformity between different fund houses. Essentially, largely, if we were to color the picture, most AMCs do have a proprietary model basis which they tend to increase or decrease their allocation. Let me also add that within equity and debt investments or asset allocations, these AMCs are very active in terms of managing their allocation within the space also. So it's not necessary that you have to drastically cut equity allocation, but within the equity allocation also, you may play the allocation between large, mid, and small very nimbly. So the difficult part for an investor, therefore, is to kind of gauge what is the model, because these are proprietary in nature, to understand holistically. So the fund materials, what the collaterals that the fund houses prepare help. You can also look at how the past trends have been in terms of how dynamic the fund category has been in terms of allocation. But there's no uniform set. So the idea is for an investor or seek help of distributor to assess within the category itself which are the more aggressive balanced advantage funds and which are the more conservative balanced advantage.
Fair. The other aspect, Divya, that a lot of people want to know is that, how effective are these funds when, historically we've seen drawdown coming in markets. So, for our viewers to understand as to why, it's important to take a look at these funds.
So risk, understanding risk or understanding volatility is very, very important in your investment journey. As an investor, it is very easy to assess performance or assess return, because that's very tangible for me, right? I get to see the performance everywhere. But what I don't get to see is the risk. And the actions that or the behavior that the investor showcases also is more when the risk comes to the fore. So the idea of balanced advantage fund is that while it is participating in equity markets, it is also able to, I won't use the word protect because there's no protection. There is cushioning of downside because the allocations can shift very significantly and very quickly between equity and debt. So in the past, when there have been cycles of steep corrections, like I was mentioning, COVID period, we have seen balanced advantage fund faring better than, pure equity funds, because pure equity funds by their nature structurally are designed to invest in equity markets irrespective of the market condition. But balanced advantage funds, because of, say, at a point in time, markets were stretched overvalued, they had reduced their allocation to equity. And when the markets therefore fell, they were not 100% equity. They were substantially lower. And that's why the beauty is when markets turn and balanced advantage funds are split between equity and debt, it gives you a cushioning effect on the downside. So kind of gives you a lower drawdown as compared to an equity fund. And in your investment journey, that is also equally important, because through the cycles, when the markets are moving up, it is participating. When the markets are falling down, it is participating less. And therefore, your journey ends up being relatively smoother in line. Having said that, if you are in a phase where, for multiple years, you are in a bull market, this will tend to lag a pure equity fund. But that is a con that you have for the pro that balanced advantage funds offer you.
Okay, understood. The other aspect is that different fund houses have different ways of allocation of assets in a BAF, right? How does one evaluate the strategy? Like, what are the parameters that one should definitely look at while choosing a balanced advantage fund?
Okay, so the key important parameter one needs to assess is to look at what is the minimum and the maximum range you get to have in your choice of funds or set of selected funds. As in, do they really have a broad base of minimum and maximum? Because that's where your dynamic allocation essentially will sit. Look at how historically the asset allocation has shifted, because you are investing in this category for actual dynamic allocation. So if really is the fund doing justice to the style that it is supposed to offer, which is, move between equity and assets, or is it, perpetually tilted towards a specific asset class? It could be equity, where it is irrespective of the market cycle, always higher equity, or irrespective of the market cycle, always lower equity. So that is something investor needs to get a sense of, and which is possible by looking at the historical allocation of the fund. The more nimbly the fund is able to manage itself and showcases itself across market conditions is what you will essentially need.
Understood.
And because it's a mutual fund, this dynamic allocation, the tendency that, like I started off saying, right, investors have the tendency of timing the market. But moving from one asset class to another for an investor is not tax efficient. But for balanced advantage fund, shifting from one asset class to another is very tax efficient because they don't have to bear any tax.
Understood. Just one last question, Divya, with regards to what who should actually look at these funds, right? Which ideal investors is this suitable to, and which investors should completely avoid this if there is a bifurcation between the two?
Honestly, I don't think, it's a category that anyone needs to be consciously away from. Like I mentioned, this is kind of like an all-weather fund, and therefore can sit at, in everybody's core allocation. That being said, probably a conservative or a first-time investor who's really not tested his or her risk appetite. Like I said, it's not very tangible to test risk appetite, but who's coming into the market for the first time, balanced advantage fund kind of offers them a good starting point to test themselves because while it's participating in equity market, the drawdowns can be lower. So that will give them a relatively smoother journey over a long period of time. For an aggressive investor who knows that, it's important not to be stuck in one asset class and wants a very professionally managed fund that is dynamically shifting, there also this fund can find a good fitment.
All right. Okay, Divya, thank you so much for taking out the time and helping us understand, the entire aspect of Balanced Advantage Fund. Always a pleasure speaking with you.
Thank you so much.
All right, viewers, so that was, of course, the conversation around balanced advantage funds, but it's time to slip into a very, very short break. But do stay tuned because we're going to talk about how to calculate your mutual fund returns in the right way. Do stay tuned.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade. Spots the trends.
All right, so we spoke about what balance advantage funds are and who is this beneficial to, but the other important aspect, that we need to kind of understand is that when you go ahead and invest in a mutual fund, everybody talks about returns. What is the correct way to kind of calculate this return is the real question. What is the difference between an absolute return, CAGR return, XIRR, etc. is something that everybody should understand. And to take this conversation ahead to understand exactly this, we're now joined by Prableen Bajpayee, who is the founder of FinFix Research and Analytics, joining us now. Prableen, thank you so much for taking out the time. I'll just, start by asking, as to what is the difference, firstly, between an absolute return and a CAGR return, and then we can dig deeper.
Hi, Maima. Great to be here. Absolute return is the point-to-point return. So it has a starting date and an ending date, and the two dates can be 2 days apart, they can be 2 months apart, 2 years apart, or 20 years apart. So it takes into account one value and the next value, which is your final value. And the simple formula is that you subtract the ending value. You have the ending value, you subtract the initial value from it and divide it by the initial value. That's basically absolute return. A simple example would be, let's say I have an investment of 50 lakhs and it becomes 1 crore. So it's doubled, and the absolute return here would become 100%. If I have to give an example, Mahima, related to the markets, let's take the Nifty 50 index. It has given us absolute returns of roughly 219% in the last 10 years. But broadly, when we're talking about absolute returns, we are totally ignoring the time factor. So while absolute returns is a good measure to know how an investment has done, and you can even do comparisons of two different investments, the time element is ignored. And within mutual funds, absolute returns are used for any investment comparison for less than 1 year, Mahima. Now coming to CAGR, which is the compounded annual growth rate. This is where we introduce the time element. And if we have to define the compounded annual growth rate, we can define it by an average annual return that an investor would earn over a specific period of time. So let's take a previous example where the 50 lakh became 1 crore and our absolute return was 100%. Now, when we insert time here, and let me give you an example with 3 different time periods. Let's say it's 7 years. With 7 years, 4%. If the time period is 10 years, the CAGR or the CAGR, what we call, will only be 7.18%. And let's say if this investment has doubled in 15 years, then the CAGR drops to 4.73%. So, Mahima, the very important thing here is that the longer it takes to double, the compounding process shows you that the returns, the compounded returns, are lower. So when we're looking at mutual funds, the same example, let's say Nifty, giving us 219% returns in the last 10 years. If we are looking at the CAGR of the CAGR, then the CAGR works out to be roughly 12.26. So these are 2 very important ways of looking at mutual fund return investments. And when we're looking at more than 1 year, for a lump sum investment, then definitely CAGR is what we're supposed to see. And even while making comparisons, but just, one more point here, Mahima, that often when we're talking about investments other than mutual funds, especially real estate, we often just look at the absolute returns, that the properties become 4 times, 5 times, it's given 200% returns. We often do not calculate the CAGR for any other investments other than mutual funds and financial instruments, basically.
Understood. Probably the other aspect is that people often do not understand the importance of XIRR, right? The difference, of course, we'll try to understand later. But first, I think it's important to understand the meaning itself. If you can help us, help us and our viewers understand as to what XIRR means and what is the importance of this metric.
XIRR is very, very important, Mahima, especially as an SIP investor. And even for a lump sum investor, let's say you've made investments at one point and then you added something and then say you withdrew at one point. So whenever there is some sort of a movement in between your investment period in terms of an inflow and outflow, then we have to look at XIRR, which is also called the extended internal rate of return. And XIRR becomes a true measure of that movement and the overall return. This is because, let's take an example of an SIP. Let's say I do an SIP for 10 years. So I have to do, 120 installments. And the time period that I'm allowing my first installment is actually 10 years. But the time period that I'm going to allow to the investment that I did, let's say in the 5th year, 7th year, 10th year, in the 9th year would be so different. So the time they get for compounding to grow is much lesser, but XIRR takes into account all of this. It is also possible that you make a lump sum investment in between or you withdraw some money. So the formula for XIRR will take into account all of these factors and the different periodicities, and based on that, it calculates the compounded growth, but for different periods. So it's almost like a representation. It's a variation, let's say, of a compounded return, but it definitely looks into the different periods that have, they have been considered for this return. And that is why XIRR for an SIP investor, I think, is the right measure. And obviously, whenever we are looking at our own returns, then also XIRR is actually the true measure of how your investments have done.
Okay, got it. So now, when we talk about choosing a mutual fund based on the returns, right? We've talked about absolute returns, we've talked about CAGR returns, we've talked about what XIRR means. When somebody is looking at a mutual fund purely from the perspective of past returns, how should one look at them? What is the analysis that one should keep in mind, and what are the metrics that are of the utmost important from everything that we discussed plus anything that you would want to add?
Right. So, Mahima, first of all, that past returns can be very, very helpful. At the same time, they can be a little misleading as well. And also they can bring in make an investment look very, very enticing and great. At the same time, they can also make an investment look really dud. So, for example, if you're looking at the past 2 years, gold has given roughly 100% return in the last 2 years. And if you're looking at Nifty 50, it's barely about a 4% return. So whenever we are looking at gauging how an investment has done, I think it's important to take a holistic view. And a holistic view would require you to look at the different returns. So let me give you an example here. Let's say March of 2020, somebody invested, and till today, their CAGR for a lump sum investment in Nifty 50 would roughly be 20%. On the other hand, if it was an SIP investment, the returns would only be 10%. So, Mahima, it's important when we're looking at the past performance, you look at different measures. So you look at the CAGR, you look at XIRR, and you can also look at the absolute return, and then have a comparison with what the peers have done, what the benchmark has done, to get a fair idea. But also when we're looking at the past, don't look at the perfect periods of investing. Like, March 2020, somebody investing is almost like you got the dip. But that's not going to happen. So whenever you're looking at the past returns, you must look at different time periods, the good and the bad phases of the market. And other than that, Mahima, one also has to look at, what is the risk factor? How much volatility, downside risk has been there. So there are different measures like the risk-adjusted returns, consistency throughout the returns. And finally, I think, on top of all of these sits rolling returns, probably, which is a conversation for another day. But I think rolling returns are also really, really important when you're looking at your overall investments and looking to invest there.
Got it. Praveen, like you rightly mentioned, right, XIRR is more relevant for SIP investors. Now, if somebody wants to easily calculate this, what are the ways and means available to calculate the same? I'm sure that there would be calculators available online, or if you can suggest a better way.
So yeah, most mutual fund platforms and apps or portfolio trackers, Mahima, would have an inbuilt system of checking the XIRR. But if somebody is keen and you're looking at doing it on the Excel or your Google Sheets, it's possible. So you have all the time periods added to one side, and then you have the investments added as well, and the withdrawals done. So investments done would come in negative and the withdrawals would come in positive. That's what the formula would suggest. And then it's a simple, equal to XIRR, and the values and the dates are added together and you can get the returns actually. So it's fairly simple. But I think it would be automated for most people because we all are using some platform or the other or an app. The problem, Mahima, lies that whenever you're doing this, be it your CAGR or your XIRR, none of these returns shows the volatility which took place. An XIRR of, let's say, 15% or a CAGR of 20% looks really great. But it does not tell you that there was volatility during this time period. For example, in CAGR would probably, if it's, let's say, 20% or 15%, one would feel that that is the return that I'm going to get every year. And the real story is very different because it may be plus 15 one year, -8, -7, plus 10, -5, and so on. So I think it's very important, whatever be the measure of calculating, you have to understand that with the equity, any past returns that you're checking should not be a quick way to look at or jump into conclusions as well. And for investors who are currently investing, I'm sure the XIRR as well as CAGR looks poor if the investments are done in the past 2 or 3 years. So I think just stay put there.
Okay, all right, Praveen, thank you so much for, helping us understand this concept so easily. I'm sure our viewers now know how to calculate their SIP and mutual fund returns in the right and perfect way. But with that, viewers, completely out of time on this edition of Your Money Matters, but do stay tuned for more news and updates on the other side.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in
Acquisitions in the US are complex. There are workforce regulations, regulatory compliances, and lots more. And as with any acquisition, there are obviously the cultural challenges that one has to think of. So when Aurobindo acquires Lanet or has gotten the permission for acquiring Lanet or clearance for acquiring Lanet, it begs to question the management on what happens next. And to answer that and more, we have the top tech of Aurobindo, Mr. Swami Iyer, the CEO of the US business, and Mr. S. Subramanian, the CFO of Aurobindo Pharma. Gentlemen, thank you so much for taking the time out. This is Neeraj here. And I want to start off with you, Swami, about the rationale here, right? Because you are not a small player by any stretch of imagination. So what does Lanet bring to the table? Does it bring customer relationships? Does it bring manufacturing capability? Does it bring regulatory clearance, plants, or is it something that Lanet does which Aurobindo couldn't have done on its own?
Thank you, Nirav. Thank you for the opportunity. I really appreciate this. And to answer your question, a very short answer would be all of the above except the last one. Now, just to go back to what we said, we are the number one company in the US in terms of prescription volumes. And Lanet is a perfect, nice addition in strengthening our non-opioid controlled substance portfolio. And this, you can say, is a push from Aurobindo's side towards this therapeutic segment. And in addition to this, Lanet has a large manufacturing facility which would increase our footprint in the US. And this would help us in establishing a better market share in the US and for domestic manufacture, which is a priority for the present government, and possibly look at some CDMO business. Incidentally, I also want to mention that we have made some progress in getting some awards from a leading customer in the CDMO side, and we are very upbeat on this. So this is, like I said, to answer your question, very simply, it's all of the above.
Some numbers, please, Swami. Would you be able to tell us if by virtue of doing this, will you be able to surpass last year's EBITDA for the US business or for Auropharma as a whole? Is it possible? Can you talk about it?
It's a little early for us to go into the exact number, but like I said, we are very upbeat about what we have seen so far, and we think we can expand our EBITDA substantially, including the margin, because we are acquiring certain niche products. And don't forget that it's not just what we are acquiring now. They got an excellent portfolio, mostly with the partnership. And I also want to tell you that one of the DPI product, which is the dry powder inhalation, which is Advair, we'll be launching that sometime soon through Lanet partnership. And this helps us enter this business of inhalation. You also may be aware that we have got a manufacturing, R&D and manufacturing facility in North Carolina, and we expect to launch some product from there. This would be our first entry into inhalation business, but I can tell you this is not the last, and we will strengthen our presence there.
The price of the FTC approval is the third thing, right? And Swami, I'm sticking to you because I want to understand. The FTC clearance leads to you having to do a divestiture of 4 of your key products as well. Is this something that that you're not baked in at the start, and what does it do to the overall Aurobindo US business? Is the tension manageable?
I want to just take a step back and then tell you, we talked about the viability, how soon we can get it. We are talking about $250 million, But you should remember one fact that this comes with working capital of about north of 100 million. So when we paid 250 million, we're already getting certain working capital in terms of inventory, in terms of receivables and whatnot. Net of that is a significant amount. So that's the first thing I want to clarify. So we had factored in certain amount of divestiture, and I think we are quite happy. We are quite pleased, I would say, with the outcome, because we had taken the worst case scenario and we have modeled it. So even in the worst case scenario, this was a very good model that we came to. And right now, what we are divesting is 4 products. And the top line on these 4 products would be probably in the low single digit to mid single digit. And this would be partly from Aurobindo side, partly from Lanet side. So we are very pleased overall with the divestiture, the way the process has gone through. It has been a hard battle. We have taken almost 11 months, but we are very pleased with the outcome.
Subbu, let me get you in on this conversation. Now, the road to 2 billion is well printed and documented by you. Where are you on that track now post Lanet? And do you reckon you'll be able to do it while maintaining margins, or could there be some hiccups there?
So first, in terms of the top line, now we did last year 1.6 plus billion, right? And Lanet with the 9 months should contribute around 220 million plus. So overall, we'll be around 1900 plus, right, billion. Plus, Swami is also working on launching the respiratory products, and there is Adque, Acrotech product. It is getting launched, and a lot of improvements are taking place across it. Europe is bound to grow by about 10% growth on constant currency. If you take into all the things, I think we will be achieving 2 billion plus or minus 5% easily. We can achieve that.
Okay. So, Swami, do you want to add something to this as well?
Yeah, sure. I think Subbu, when he had set a target of 2 billion, of course, this was something we wanted to make sure that we reach the target. I would say with the approval of Lanet by June, the key issue was how soon Lanet is going to be approved, because that's completely out of our control. But since Lanet has already been approved, we feel more and more confident that we are getting closer to target, not just closer, we will exceed the target. And we believe that the Lanet products, the portfolio, the technology, this would be a launching pad for us in terms of growing. And one important aspect, with many analysts have not looked at, I think, is the BD aspect that comes with it. Lanet has an excellent infrastructure in BD. As you know, Aurobindo has been mostly organic in terms of the products and then the R&D and stuff like that. Lanet has a large portfolio of in-licensing product. We are inheriting those relationships. And again, this is something we are very excited about, because we are getting into newer technologies and newer partnership, and we have to manage it. We had set it up in a very modest way. Now with Lanet, we are going to a different scale altogether.
Okay. Swami, now, right as you're crossing the finish line, I have to ask this to you, right? Right, you're crossing the finish line. The Yuja 3 unit has gotten some observations. On June 19th, you've cited another plant getting about 5 observations. There was one more plant which had gotten 4 observations earlier. So all is not hunky-dory around the US regulatory observations around Oro's practices, right? What do you think about it? How do you manage this tension or this friction around regulations? And what do you do to overcome that?
Sure. First, a couple of things. First and foremost, Lanet has an excellent track record of compliance. Whether it's in terms of FDA or whether it's in terms of DA, they have a good team, and we plan to continue giving them that independence and support to continue with it. Number 2, you should also know that Aurobindo has number of facilities, over 20 plus facilities globally. it's possible that there's always one-off facility which has problem. Maybe we are talking about more than one-off. Maybe we are talking about two-off or three-off. But this is aberration, I would say, and this is something which we need to fix. Aurobindo has the experience for it, has the manpower for it, has a commitment to do it, and sooner or later we'll do it. We learn from experience. You never lose. Either you win or you learn, and that's what we are doing. We are learning.
Okay, Swami, now a question around this whole tariffs, right? Now, generics are exempt, but there is no saying whether the window will last or no, right? And I believe through your Dayton facility, you have some shoring up there. What does addition of LANET do to enhance the US manufacturing and your ability to deal with the tariff issue if it were to crop up again? Talk to us a bit about that.
So, Nirav, I think we are closer to the tariffs and what happens with the tweets and everything else that goes on here. Just to tell you, I had also mentioned this in one of the investors' call earlier, that Aurobindo is in a position of strength, whether there is tariff or no tariff. If there is tariff, we have got enough facilities in US, enough manufacturing facilities to scale up quickly. We are geared up to it. And LANET will also be very helpful. Not that this had a impact on our decision making. LANET as such, on a standalone basis, is an excellent business. But I'm only telling you, LANET has got fairly good capacity. It's not fully utilized. We have scope to enhance the capacity utilization, and we can bring in products if there's a need. In addition to that, we also have the New Jersey facility. And if you remember, we also got a facility in Puerto Rico, which is kept as a reserve. So we have adequate facility should the government decide that they want to bring in tariff. Obviously, that has to be a level playing ground. If there's a product which is going to be charged, it should be cost effective to manufacture in the US. Then we are prepared. Either ways, we have facility in India and we have LANET, and we will be prepared for it.
Subbu, same question. Do you want to add to this?
Question of tariff or no tariff is not going to impact us anymore. We are coming out with a 4 billion capacity in US in terms of the LANET, and we are also having Dayton. We are also, Puerto Rico is lying there as a reserve. So we don't have a problem at all. In fact, our capacity end of March 26 is around 66 billion tablets, which is quite big really, right? And we are one of the very important players in terms of the, as Swami has been telling in the prescription, this one, we are number one in the US business. So it's very, we have adequate capacity and we have been able to service it. Should not be a problem at all.
Okay, Subbu, can I stick to you? Now, you've spoken a lot about how biosimilars start contributing to you from 2029, right? But it is some time away. And while that is happening, you committed $250 million to LANET as well. How do you ensure enough capital for one without it crowding out the other?
First thing, LANET, how we are going to fund it. So it will be funded exactly out of our own internal accruals. We are having a cash of more than 300 million and it will be funded out of that. So there is no debt or anything going to come. Going forward, we should be able to generate a cash flow of anywhere between 300 to 350 million year on year. And funding the biosimilars or any other project, is not a major problem. If there is a strategic acquisition, etc., only we need to go for the debt. Otherwise, mostly we will be able to service it or pay it out of our own cash generation.
Okay. And do you reckon the need to raise any kind of external capital over the course of the next 6 to 12 odd months? What's the kind of cash flow projections that you would have from the overall business, Subbu?
No, we don't need to raise any kind of capital. We are not thinking of raising any kind of capital. In fact, in the next 3 to 4 years, in the normal course, we should be able to generate more than $1 billion cash if everything goes as per the plan.
Okay. How do you make the US opportunity count as a large Indian entity? Could you talk a bit about that?
Yes, I do believe that we have that opportunity, and Arvindo is in the right place to do that, to avail of these opportunities, to harness whatever is there in the market. We are regularly called by the U.S. administration for discussion in terms of any matter like made in USA, and we continuously talk to them. We believe that if the requirement arises, we would be one of the first few to be called in, and then we would definitely do what it takes to accomplish that. And we believe that the market is opening up further, and there are going to be opportunities in terms of newer presentations, in terms of newer technologies, and we are already getting into it.
So we'd like to end with you. I mean, the last piece is buybacks, and I think you've done, what, 2 in the last 24 odd months. I'm sure the street is happy with it, but what happens next? Do you continue to do more buybacks, or what's the capital allocation strategy?
I mean, this is what I think in the private conversation, investors were looking for that. And we have passed on the information to the board, and board in their wisdom has decided to go on. And see, next year, we'll see next year.
Jaman, thanks so much for taking the time out and being with us. Really, really appreciate your time.
Back then in 2007, when InfoEdge actually began investing in startups, the commercial market for AI deep tech, that was actually practically non-existent. Now, joining us to discuss more on what those investments actually mean today, pioneering founder of InfoEdge, Naukri.com, and early backer of Tech Titans and Zomato, and Policy Bazaar, Sanjeev Bikhchandani joins in. Sanjeev, welcome to the show. It's always a pleasure to speak to you. You know, it's interesting to see how you anticipated the wave versus now chasing the hype. You started backing AI deep tech aggressively back then, in 2020. And this is well before the broader global hyper cycle or the Gen AI boom actually picked up. How are you reading into it now with the kind of benefits it's reaped?
Look, what we have learned over the years is that you've got to go today where the herd will go tomorrow. So A, you got to be early. B, the herd better follow you. If the herd doesn't follow you, there won't be enough capital coming into that space. You got to be right on both counts. And that is what the slightly harder part is. How do you anticipate what will do well a few years from now, and will the herd go there?
Right. So, Sanjeev, okay, from what you're saying as well, what was your strategy back then?
Well, we didn't overthink it. We just, met founders who were good, pursuing stuff that was interesting, even though it may be slightly far out right now, but it's interesting. And then we see what could come of it. So even back when we went into Zomato, it was then called Foodie Bay in 2010, it was a small website, not even an app, which just listed restaurants with their menu cards. But it was getting traffic, it was getting traction, it was useful. We were using it, we liked it. And we said, शायद इसमें कुछ है.
Okay, so Sanjeev, founder में शायद कुछ था कि business में शायद कुछ था?
Idea में कुछ था, founder में था. Founder and idea. Business was 1 lakh rupees a month when we went into Zomato.
Okay, so basically you're betting big on the founder, you're betting big on the idea. Business will come later. Will that the strategy be right now?
So we like to go in early. I would like to back good founders pursuing interesting ideas.
Okay. So, if you have to talk about the InfoEdge investment as well, 1,000 odd crores over 54 AI and deep tech startups from the overall 4,900 crores. And if I have to look at the portfolio, already more than doubled. So, if you have to look at both these segments, AI and deep tech, the kind of returns AI has given you, deep tech is still far behind that as well. And I'm sure it's still niche, R&D investments are too high. Do you think this is now time to probably book profits in terms of AI? Is it a bubble, or do you think there is much more to it? Let's talk about AI first.
No, I think our portfolio, the companies we back, both in AI and deep tech, are still very early. And therefore, I think it's very, very premature to be thinking of exits right now. It will take more than 7 to 10 years further to play out.
So, okay, are you saying that there is nothing which is in mature stages right now in terms of AI and deep tech?
Well, there are companies doing 100 crores a year or getting there, maybe 50 to 100 crores a year. Those are interesting. But, really, you've got to back them for several more years and be patient if you really want them to become large companies.
Okay. And how much conviction do you have? Because I know, by only having conviction, it's not really going to get to the investment returns that you wanted to get to. But say from 100% portfolio that you're holding with regards to AI and deep tech, you have conviction saying that, okay, I'm sure some percentage of it is definitely going to give me returns, while there is some which is still on the back burner.
Well, I think if 20% of these companies or 30% of these companies do well, it'll be a good achievement.
Okay. And between AI and deep tech, where are you seeing the moat coming in now? Because deep tech is something which is still evolving. I'm sure even AI is. But with regards to AI, with what's happening across, AI probably is a bubble. People are talking about, okay, with the use of AI, what can we do? That's the other side of it. And the third is it a good investment bet? Now, with all of these questions, Sanjeev, no one wants to really miss out on the bus as well. And the valuations are soaring. How do you put all of this together?
I think the first thing you've got to figure out is it getting traction? Is it solving an unsolved problem? Do people want this? Is there demand for it? Now, if that answer is in the affirmative, then you say we can go in. And then you ask questions like, will it be commoditized? Can it be disintermediated? Or will they build a moat, a network effect, some IP being built? And if yes, then it's defensible. Then you discuss valuations. And if the valuation is high tomorrow, but the company is growing fast, even if there's a correction, a year from now, it'll seem like a reasonable valuation.
Okay. And to add to this now, do you think at this point in time, it's still good enough in terms of valuations where you can start looking at AI bets? Because from an Indian market perspective, if you have to look at AI, you do not have absolute AI plays. Either you're talking about Indian IT companies who are either acquiring AI plays or probably partnering with AI plays. How do you anticipate playing the Indian AI theme from here on?
So most of the companies invested have some defensibility, some moat, some network effect, some IP creation. Something that differentiates them from others and prevents them from being commoditized. Or they can do that in the next 6 months, 12 months while they're still building it out. And that is the vision of the entrepreneur. Now, if you're able to do that, then you'll be okay.
And what would you have to say when you talk about, say, backing hard tech versus software AI in terms of structurally adjusting your capital allocation? Because you've been a famously patient investor with all of this.
So look, we don't come from a hardware background. Right? We come from an information and software background. Having said that, we made forays into hardware and manufacturing. So there is a company called Bharat Semi, which we have invested in, which is making semiconductors. There are a couple of other hardware companies where we are sort of dabbling in. We have sort of put our toes in the water. So we've done some hardware, not a lot, but we'll probably do more hardware going forward.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
2026 so far has been an interesting year. And you know what they say, may you live in interesting times. It's not always a good thing. For corporate India, it's been a series of headwinds. But there are several opportunities that may just be behind the surface. And I'm actually going to be speaking to the new president of the CII, R. Mukundan. I'm in Bombay House speaking to you today. Thank you so much for speaking to me. And I want to start with that because first you get those headwinds out of the way. We speak about how corporate India is dealing with them, and then we'll move to the opportunities. But first, the geopolitical tension, the monsoons. Do you feel like you've moved past the geopolitical tension somewhat? What is the impact that you're seeing?
So the way we are seeing, and the way at least we reflect in CII, is that there are three trends which are going to be with us for a long time. Then there'll be some episodic events which will happen from time to time. The first one is you already highlighted, the geopolitics and geoeconomics. I think our External Affairs Minister has got a way of saying you're going to multipolar, multi-alignment, whatever it is. It's basically moving from unipolar to multiple centers of, let's say, power or multiple points at which various leverage will be impacted, and that does impact business. And it'll show up in different ways. It may show up as tariff, it may show up as immigration, it may show up as some kind of a non-tariff barrier. So it will have its own set of issues. The second one is the technology revolution. We've had Industry 4.0 with smart factories. Now we're on to the use of AI. The computers increased massively. I think that is having its own benefit, but industry has to sort of learn and use cases in an early stage. So all of us are picking our way through, but also you have to help the entire industry to scale through this. So it's an opportunity, but yet a challenge if you don't navigate it well. We'll have hiccups on the way, but if you use it well, it's going to be a force multiplier. The third one is what you alluded to, saying that El Nino, but sustainability, climate change is a long-running theme. And I remember 20 years ago or 15 years ago, our current PM was CM, he used to tell in Gujarat, more crop per drop. I think that holds true even today. We've got to get more efficient with what we have. At the same time, we need to do things right so that we don't get impacted by these fluctuations of weather, which are going to become more and more, let's say, unpredictable and more severe, both in temporal and spatial terms. Then there are episodic events, which is when things completely go out of beyond what normal tensions would be, which is like the West Asia crisis, and they will come and go. They will last maybe a couple of months, maybe 6 months. There are actually 5 wars today. We talk about one.
Yeah.
Others haven't impacted, and one has been running for more than 5 years. So I think we should say this. Some of these episodic events are becoming like a new normal. And industry has to navigate, countries have to navigate, and for India as such, I think on reflection, this only means one, that the opportunity what we had for last 25 years can last another 25 years. And what is the opportunity? If you just do the number, there are only 3 countries which are bigger than 150 billion, which have grown greater than 6% consistently for last 25 years. Only 3 countries. And if I take the name, one is our northern neighbor, other one is us and Vietnam. That's it. Only 3. So the headroom for us, the runway for us actually is pretty good. And we've done it through all difficulties in the past. It is not as if we didn't have challenges from time to time.
So the only question is, and all of what you're saying, it reinforces what a lot of people believe with regard to India. But if you look at this year, and you were exiting the first quarter of the calendar year, and there was a fair bit of confidence about a recovery underway in various sectors of the economy. And then the start of this year was a moment of reflection where people said, look, maybe we're going to have to contend with a tough period ahead. And I know that some of this is episodic, but how does corporate India, and what is the conversation that CII is having with policymakers to say, this is a tough time, we need to tide over this. It's been a first quarter that's been really tough. We're likely going to have to deal with certain issues in Q2 as well. So from a policy standpoint, and in the conversation that CII is having, what is the conversation about tiding over right now?
So in terms of working with government, we had an excellent run.
Yeah.
So I just want to highlight that when the crisis hit us,
yes,
the short term, we had many meetings. These meetings were well coordinated between 3 ministries working in unison. We had Commerce and Industry Ministry, we had Finance Ministry, we also had the External Affairs Ministry. All 3 were working together in one tandem. I at least remember when tariff issue hit us last year. It's the first meeting I had, something like 20 odd ambassadors from Africa trying to solve the problem along with the Finance Ministry in terms of insurance, credit insurance, other things which come in from FM. Finance Ministry and Commerce and Industry, trying to say that how do we pivot exports which are going there to other set of countries. So today one of the biggest fastest growing export sectors actually is Kenya's East Africa.
Interesting.
So it came out of that effort. So I think difficult times throw up an opportunity, but these opportunities are not going to go away. You're not going to walk away because a trade deal has been reached with US. You will take care of this opportunity, plus you will also get back to the opportunity which opens up. So clearly our first effort was to look at the short term. How do we fix and tide over the immediate issue of what companies were facing in terms of gas supplies, critical supplies, all that got sorted out. The medium term was that supplies are in, but cost is going to increase. So what the industry and government has done is to cushion that, act like a shock absorber. Not everything has been passed on. Part of it government has absorbed, part of it industry has absorbed, and we will work through this. When you say longer term, because these events are going to repeat, how do we prepare? And there's a very clear, at least understanding within the industry and also in the government, increasingly it's been so, is that we have to reform even more.
Self-sufficiency.
That's one piece of it, but there's a lot to do in each one of the places. For example, if only 3 countries have grown faster than 6%, we are also going to be competing with them going ahead, because they're also not going to leave space open for us to go and occupy. So we have actually said that there are 16 sets of reform.
Okay.
And they broadly fall into 4 buckets. One is what I call as a foundational reform. These form the very, very foundation of whatever we have to do. Then there are factor reforms.
Can you name a few of them?
I will. Let me walk through the
4 buckets.
Then next is what I call factor reform. And these are things like power, land, labor, and logistics. I mean, these are factors which affect in industry, very specifically the industry. Then there are future-ready reform. We spoke about AI, we spoke about technology, we spoke about sustain. These forces are going to continue for long term. These are getting ourselves future-ready. And lastly, what I think there are better experts than me in fiscal, monetary, and policy area. So I call it 4 Fs in terms of what we need to reform. The foundational reform for us, fundamentally, that we need to continue the effort on ease and cost of doing business.
Right.
At the same time, we need to add speed of doing business so that there is an increased urgency in delivering faster. And what holds true for company also holds true for business, common man. You substitute business with living, ease of living, cost of living, speed of living. What took you 45 minutes to come here, if you can make it in 25 minutes, your speed of living will be better. Sure. So I think we need to work towards each one of these areas, and I think we've done a lot, but we need to benchmark with the best and say that what used to take weeks, can it take days? What used to take days, can it take hours? Especially with the use of technology, AI, all these things we have digitized everything, so it should be possible. The second piece in terms of the whole area is an outcome of what has happened now. I think we need to reboot and say that we're going to refocus on exploration of resources within India.
Sure.
Which means more places.
Natural resources,
whether oil and gas, minerals. I think India is underexplored country. I think it's a foundational issue because it impacts cost structure at the basic level. Because if the starting point is more expensive, by the time you have the finished goods, you're not going to make up for all the inefficiencies at the start point. So I think opening up more blocks, more opening up the areas and we must do it sustainably. Nobody is saying that we should not. Then there are 2 areas which I think are at the base of our economy. Whether we like it or not, industry and government and everybody in their self-interest have to make that more viable, more vibrant. One is agriculture and rural economy. India is the 2nd largest arable land in the world.
Yeah.
Nothing stops us being the largest exporter of food and processed food. And I think all we have to focus on productivity, ensuring that we are able to do a lot more. A lot of FPOs, for example, there are many in Maharashtra who have now achieved productivity levels equivalent to what Europe has got. So we've seen pockets of excellence. How do we spread it? Look at the milk revolution we've been able to do in dairy area. I think through Amul, I think each one of these areas I think are possible to be replicated. Then there's a fourth one, which I would say is the base of the Indian industry, is MSME.
Yeah.
We need to make sure they're vibrant, and that's the foundational piece. It's ease of doing business. Within that, of course, is cost and speed. Then there is an issue around rebooting our exploration of resources, agriculture and MSME. If we get this right, then we address on top of that the factor reform. And these have been continuing. It's not that it's not continuing, but now the outcomes are hitting some bottlenecks. For example, in power sector, power and renewable power is now even more important than before.
Correct.
The issue we are facing is transmission and distribution. It's not generation. We are able to put up generation capacities in 18 months, but transmission capacity take 3 to 4 years to come.
But even there, the opportunities in battery energy storage systems, which
also energy storage. So I think it could be pumped storage, it could be battery storage, it could be different forms of storage. I think that so that we are able to sort of also evacuate the power, store the power for peak. So all these are elements, including Shanti Bill, which has come, making sure it gets operationalized. So I think we need to work on that entire gamut of space.
Okay. Everyone, Mr. Kundan, when they talk about India, and I'm talking about now investors that look into the Indian equity markets and say, what are the opportunities, right? The standard conversation is, it's not an AI play. There is no opportunities. The big guys are either in Silicon Valley in the US or maybe on the fringes in certain other markets. But data centers maybe, but nobody is really using frontier artificial intelligence. I'm sure that these are conversations that the CI and companies are having. Is it possible that India can catch up in that race, and to what extent?
CI is working very much on both areas in terms of building capability, making sure the use cases are available. AI itself, many companies are learning, including not just here, around the world.
Yeah.
And certainly today, the biggest beneficiaries are people who are making the tools for AI rather than the AI itself. I think the factor multiplier, when these tools are put to use, is going to be 10x. So we've seen in every business, as you move from, today the best value is coming in the hardware which you sell, but best value will come in future in the use of what the hardware is supposed to do. So I think we will get there. We need not worry about it. It's a reason that money is not coming for whatever reason. We grew the foreign investor, portfolio investor. We need to focus on what will be, I would say, the money which will stay here, which is FDI. Very clearly inbound FDI needs to be focused on. Secondly, I think if you look at the P&L side of our performance as a country, we need to focus on our exports so that we can, and that's why free trade agreements are important. And to build competitiveness, we need to, and scale, we need PLI schemes which government has worked on.
I do want to ask about all of those things, but before we do, while we're on the subject of artificial intelligence, in the very recent past, there have been pretty prominent voices that have come out and said, hey, we might be building something out as humanity and the companies that are doing this at the forefront, and we may not know where we're heading in terms of the possibility of a bubble being created. Ashwath Damodaran was the latest to have a statement made on this, to say that it would be different from .com because in this case, a lot of people are building massive infrastructure and they're doing it with debt. And so if this does prove to be unviable, the fallout of that could be significantly worse than what you saw in .com. I'm sure that large companies are having conversations about this because ultimately India is trying to set up data centers. This is costly infrastructure, requires water, requires human resources, various other things. What about the flip side of the conversation? To say, are we rushing into this?
So I think we have to say the people are at the frontier of it. They're putting all the investment where they're putting.
Yeah.
And also people are finding, some of the firms are finding that their ability to utilize the resources they've already set up is actually weak, so they're actually subletting it. You already have seen what has happened in the deal between Elon Musk and Anthropic, where Grok is not done maybe as well. Maybe that's one of the reasons. So you will find these sort of discontinuities happen especially when you're growing, and this is bound to happen. It happens in our case, it happens in the case of AI, but I think systems will adjust themselves. All we are saying, it is not that all the compute put in that place is going to be completely not useful. It will be useful. We will hit roadblocks, whether it be in terms of the power capacity to support this compute. We will hit roadblocks from the communities which will have issues. So I think we have not seen the movie fully yet. But I think this is a story which will unfold over the next 5, 10, 20 years. And I think it is not that it is going to end in a way that it's going to be one extreme, what people say, doom, or it is going to be manna from heaven. It's going to be somewhere in the middle. And I think what we have to focus is what we've been good at, which is how do we use technology for the purpose of making sure we are competitive, rather than worry about the technology itself, because I think only 2-3 companies are actually outspending everybody else in that. And I don't think it's an area where we need to partner with them, which is why for us the right partnerships are fundamentally what we've stuck the right partnership with the US, which is what we are trying to do now. We are the right partnership in Europe, 2 biggest economies. We should not worry about anything else. We have to make these 2 work and work very well. With that, we've got a population of 1.4 billion. We need to uplift them. So I think we need to, let's focus on what we can do, rather than what some professor somewhere has said about. I mean, there are equally other side of the coin who say that no, it's going to work out all well. And end of the day, I think this is the money rush. When money rush does happen, these sort of discontinuities do happen. I think at some point it will also taper or make sure that it happens in a way that it is much more. But what are the opportunities? Let's look at the space. For example, aerospace is a big opportunity. Within India, space is a big opportunity. ISRO used to do, you see, what SpaceX has done should be propelling many more startups in the area of space within India. And what ISRO has done is bring about fantastic talent, bring about vehicular solutions which are very, very competitive. We can now build equally competitive solutions out of India. World is going to need a lot of low orbit satellites. India itself needs a lot of them. We should be able to launch all of them. We should be able to create business models out of this. So what the West has shown is fundamentally, how do you take a business idea? How do you then make sure that it becomes an idea which is marketable in terms of creating value for shareholders, people who invest in it, also for the customers? I think this is one big area. Second big area is defense. What the kind of changes which have happened. Can we capitalize on it? The third big area for the next 15, 20 years for the long runways be the transition to sustainability, the energy transition. Can we build out the future in a way that we become completely carbon free? So these trends are on us, and I think really what we are saying is, we have said that in each one of these areas, the reform which is needed to make the progress is very specific to that sector, and that's really what we are engaged with government and with the industry.
That's a very good answer. I do want to ask just a couple more questions. One, we've kind of spoken about these bilateral trade agreements and the opportunities that they present. I want to ask, so you mentioned US and you mentioned Europe, but seemingly the blueprint that the Commerce Ministry is taking up is to go and sign a lot of bilateral agreements. If you talk about New Zealand, you talk about certain other, the UK agreement that has come through. What opportunities does that present for corporate India? Because that allows you to open up a lot more markets. Equally, with products coming in, there is a challenge, and there could be challenges in the offing as well.
So clearly, you take a sector which has done exceedingly well when we opened it up to. So I'm going to talk about first challenge and talk what about the opportunity, right? The challenge is, would these companies come, and what would Indian companies do? This is the fear. But if you look at, I worked prior to this in automotive sector. We opened it up. We had all the MNCs come in, some by joint ventures, some directly on their own. But really, if you look at top 2 companies, which are now the top 2 companies are Indian companies. What happened at that time was a huge injection of technology. What happened at that time was a huge injection of efficiency. What happened at the time was a huge injection in terms of designing. All these capabilities got built out here in India. I think whenever we allow investments to come in whichever space, and which are more efficient, which are having the latest technology, I think we benefit. And Indian firms learn and they grow because they also have access to the same capability which everybody else creates. So we should be really learning from what has happened from sectors which have been opened up, rather than saying, listen, I think if we do these agreements, it is going to be, we will not be able to rise up to the challenge. We are then not betting on our entrepreneurs. We are not betting on our Indian capability. People working in most of these companies are today amongst the top 20-30% of the talent there will be Indian talent. So clearly, I think that we should bet on Indian capability, Indian talent, and Indian entrepreneurship. Now, the benefit of these agreements is that if we have to have Indian companies not just ride on a consumer base of 4 trillion, but on a consumer base of 50 trillion, then we need these agreements. We need an agreement with the largest economy in the world. We need an agreement, second largest economy in the world, which is Europe. And I think they are complementary in the fit. We get access which is equal to or better than the peers who are exporting there. That is good enough for us. We can even take zero from them. We will be able to compete even if we give up at zero. That's what Indian industry feels. So clearly, I think these agreements are important. What we are saying is, please don't get into a situation of tariff number which is higher than what the peer set who already exports there. As long as it's equal, we are absolutely fine.
Just to close things out, we're talking about a situation where there's a significant opportunity as you presented. And I think, at least from an observer's point of view, Mr. Mukundan, there seems to be a greater acceptability globally for that Made in India sticker now, right, or the tag. In terms of private capex, though, we've been speaking about this for some time. The fact that a lot of companies are operating at 75 plus utilization, right? And there's a need to create more capacity, particularly if more markets are opening up. What is the sense that you've gotten in your conversations?
So we've had a data which has been compiled, and this is not from CI, it is CMIE, which is publicly available data, and we've been tracking the numbers. The commitments 2 years ago were 5 lakh crore, then it was 7 lakh crores, 9.7 lakh crore in the current year. That's the commitment of capex investment. And if you take the 4 largest sectors where capital investment is already going in on the ground, all of them, the smallest is 65,000 crore and the biggest is 80,000 crore. And the 4 sectors are automobile, metals, construction, and chemicals. That's it. So if 4 sectors are already investing, I can run through the entire list, but I'm just giving you numbers. So the point about private sector investment is is crowded in by public sector, not crowded out, crowded in. So we had a phase of 3 to 4 years where public sector led the way, but once the infrastructure, once the efficiencies were set in place, I think the private sector has come in now. I think you will see the results. Some of the quick ones you've seen already, in the sense the service sector grows the quickest and the fastest, so you see all the GCC investment, all the story. But I think many of the investment which went in 3 years ago will see the light at the end of the tunnel in the coming years. So you'll see all the products coming into the market. So companies have done what they could, and they would continue to do what they could. The second layer of benefit for us is that, every sector where we have opened up exports with what we call as the early stage of value addition. I'm not calling it low value addition, I'm calling it early stage of value addition. When you talk about mobile phone, semiconductor, I think it'll first start with just putting pieces together for the finished
foundation.
Because you create the demand. And once you have a volume, then other things will follow in terms of, the chips, the PCBs, the whole issue related to all the components, intermediates, and then finally it'll get into what I call the metals and fibers and the basic material which comes in. So I think that movement also is underway. So you will see that as we get plugged into global supply chain, as we get plugged into the growth of, not just serving Indian market, but the global markets, and as we build capabilities to serve them. China took 3 years to build the capability to serve the world standard in its mobile phone journey. We have been able to do that in 12 to 14 months in most of the plants. One MNC has it, one Indian company supplies to an MNC, they have it, but both the story has been the same. So we have been fairly quick in absorbing the technology. It is the 5th generation of the Japanese, or let's say the American cars, which actually got to a point where it became world class. Actually, the 3rd generation of Indian cars have actually hit that spot already. We are now seeing both of Indian manufacturers, international manufacturers, almost head to head in terms of many places reaching the quality standards which you are to reach. But the competition in future is going to be from only our northern neighbor. It's going to be tougher. The space is not going to be yielded easily. So that's why we need more reform to become bigger and bolder.
I'm sure that we're going to speak about that in due course, but it's been an absolute pleasure. I think exciting times ahead, both for you, Mr. Mukundan, as well as for corporate India.
Thank you. Thank you so much.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to get you up to speed in terms of everything that has happened, be it markets as well as news and updates. But first things first, let's talk about markets then. The street loss team in the final stretch, benchmark indices ended near the day's lows, with the Nifty slipping below the 24,000 mark and the Sensex also tumbling more than 1,000 points, as well as late session selling really gripped the Wall Street. Let's also talk about risk aversion that swept across the Wall Street today in terms of the sectoral indices as well. You did see that reflected as well. So most sectoral indices, in fact, ended in the red, with metals and IT leading the losses, while pharma stood out as a rare pocket of resilience amid the broader market sell-off. And like I mentioned, it's actually the metal stocks that were trading with quite some cut coming in, as you can see on your screens as well, about 5% knock coming in on a couple of counters. Let's talk about what's happening here, because it's a combination of falling commodity prices and market-specific factors that weighed in on the sentiment. Steel rebar prices have corrected sharply in the month of June. You do have aluminium as well that has hit a 3-month low as well, and peace stocks in the Middle East that's raising hopes right now in terms of some of that supply really coming back up to normal. So add to that a stronger dollar, profit booking and technical reversal, and you're looking at a confluence of factors that you can see reflected in that shade of red on your screens as well. So the sector's recent momentum has clearly cooled. In that shade of red on your screens as well. So the sector's recent momentum has clearly cooled. Let's move on and talk about Vedanta, that was in focus after a large block deal saw around 7.3 crore shares change hands at about 292 rupees a piece, translating into a transaction worth nearly 2,100 crore rupees. While the deal does not alter the company's operations or fundamentals, its size and the likely involvement of a promoter entity have really caught investor attention, and the transaction has sparked questions around promoter intent, capital allocation priorities, and what the move could really signal going forward in terms of shareholders. Let's also move on and talk about a stellar run-up in terms of AI-linked stocks that's screeching to a halt right now. Shares of several Indian companies tied to the artificial intelligence story and even the data center ecosystem seem to be taking a breather just now. Some bit of recovery coming in terms of black box that seems to have bucked the trend, but it's largely some of those stocks really tracking the weakness in global tech names. Caution is creeping into the AI trade as investors really reassess valuations and trim exposure to high growth, high expectation themes. Let's also talk about pharma stocks that got a shot in the arm after reports that the US FDA has reached out to India's Drug Manufacturers Association to identify companies capable of supplying cancer medicines to the US. Now, the development has really fueled hopes when it comes to a potential export opportunity coming in for some of the Indian drug makers that you see reflected on your screens. All of them were gaining, by the way, upwards of about 1%, 2% as well, for some of those names linked to the expectations really of incremental business. Let's move on and talk about Tata Motors that has drawn up ambitious blueprint in terms of the FY28 as well, and I'm talking about Tata Motors CV on the back of this sharp focus really coming in on the back of scale, profitability and even returns. The automaker is targeting somewhere close to a 40% share of the domestic commercial vehicle market, double-digit EBITDA margins and strong free cash flow generation as well. So you do have the Iveco acquisition as well that's expected to close by the second quarter of FY27. Also seen opening up new geographies when it comes to this particular company, with an accelerating EV transition then and a target of somewhere close to 30 to 35%. In terms of the ROCE post the deal, you do have Tata Motors that's really positioning itself for its next leg of growth. Let's also move on and talk about Firma SGS that's in focus on the back of strengthening its global ambitions with a strategic manufacturing partnership with a Japanese company. So about a 3% uptick really coming through when you talk about this counter as well. And the two companies are going to be setting up a state-of-the-art electronics manufacturing services facility in the country focused on serving Japanese clients. Now, under the agreement, Firma is going to be holding up to a 60% stake in the joint venture, while Kaga is going to be owning up to 40%. Now, in terms of the partnership, it's expected to enhance the company's manufacturing capabilities, but also deepen its access when it comes to the Japanese customer ecosystem.
Let's also move on and talk about GHV Infra that has strengthened its order book with a fresh 200 crore contract, in fact, coming in terms of a railway infrastructure project in West Bengal. Now, when you talk about this order, it's expected to be executed over the next 14 months, further deepening the company's presence when it comes to the railway infrastructure segment. And the win is also improving revenue visibility, underscoring continued opportunities when it comes to India's railway modernization and infrastructure build-out. Moving on, then let's talk about GPT Infra that is entering a new phase of growth with its first HAM road project win also coming in, and the company has bagged somewhere close to a 600 crore Jodhpur bypass project, marking its debut when it comes to the hybrid annuity model space as well. And now, at the same time, GPT Infra is also transforming into an integrated infrastructure EPC player, mind you, with its entry into railway signaling, a strong order book, and also recovering execution that's expected to support growth going forward. Moving on, then let's talk about brokerage notes then. In terms of Investec that has initiated coverage when it comes to something like a Vishal Megamart with a buy rating. The stock, of course, was not doing all that much, but the initiation note is quite important on the back of the target price of 144 rupees. They're also going ahead and calling the company an outsized opportunity in value retail, and the brokerage is seeing a clean double-engine growth story as well, underpinned by strong same-store sales growth as well as aggressive store expansion. So that's something that they're looking at. Also flagging some of the expected revenue and earnings that's going to be compounding strongly going forward. Believes the stock's valuation remains attractive given its growth prospects. Let's also move on and talk about Citi that has initiated coverage on Meesho as well with a buy rating. Now that counters up and away in trade with that 8.5% uptick coming in, and you do have Citi highlighting the tech-led value-focused e-commerce story here. The brokerage is also believing that the company's marketplace approach in fact offers a very distinct strategic advantage, enabling scalable operations while keeping costs low as well by reducing seller expenses and improving affordability. You do have the company really creating an accessible, infinite store for mass market consumers, positioning it well to capture the next phase of e-commerce as well, growth in India, and that's something that Citi is really talking about as well. Moving on, then let's talk about the IPO of Waterways Leisure Tourism receiving a muted response on the first day of bidding as well, with subscription levels remaining subdued across investor categories. And despite operating in the niche river cruise and tourism segment, investor participation was cautious amid mixed market sentiment and valuation concerns. The issue is going to be remaining open for subscription over the coming days, with market participants closely tracking some of the demand trends that are important here. And on to some business news, then. A major shift may be underway when it comes to global energy markets. The US has granted Iran a 60-day waiver to resume some international oil sales, offering Tehran an important economic lifeline. The move is coming in as Washington and Tehran report encouraging initial progress in peace talks as well, with both sides establishing a communication channel when it comes to maritime traffic through the Strait of Hormuz. And when you talk about just the negotiations themselves, they're set to continue in Switzerland this week, so keeping markets really focused on the prospect of more Iranian barrels returning to global supply. Moving on, then, let's talk about the AI boom that is now facing a green reckoning. The United Nations is pushing for greater transparency, asking tech giants to really disclose the true environmental cost of their data centers, from water usage to carbon emissions and land footprint. Every metric is now under the spotlight. The message is clear here: scale must come with sustainability. Now, the UN is also urging AI companies, in fact, to shift towards 100% renewable energy by 2030, even as data center demand explodes globally as well. So that really is the word coming in from the UN. Moving on, then, let's talk about the AI revolution in terms of another angle coming in, creating new opportunities but also rewriting the employment playbook. Now, Oracle has shed about 21,000 jobs globally over the past year, around 13% of its workforce, as it pivots more aggressively toward AI. Now, the company is saying that it's deploying AI across its operations, and that has already led to staff reductions and could result in even more going forward. Oracle's move really mirrors a broader trend, in fact, across big tech, where companies are really cutting thousands of jobs, even as they spend billions building the infrastructure powering the AI age. Moving on, let's talk about macros then. Britain's economic engine is losing momentum. The UK services sector shrank in June at its fastest pace since January 2023, with the PMI sliding to 48.7. The sharp miss, in fact, versus expectations is signaling weakening demand and raising fresh concerns as well over the country's growth outlook. And on to some national news then. Union Minister George Kurian has resigned from the Union Council of Ministers following the completion of his tenure as a Rajya Sabha member. Now, you do have President Murmu also accepting his resignation according to an official notification. Kurian, who served as Minister of State in the NDA government, demitted office after the end of his parliamentary term. Moving on then, let's talk about the monsoons. Mumbai has officially welcomed the southwest monsoon, with the IMD in fact declaring its onset over the city. After days of anticipation, widespread rainfall really brought relief from humid conditions and marked the formal arrival of the rainy season. In fact, the IMD has forecast continued showers over the coming days, with authorities urging residents to really remain cautious in low-lying and flood-prone areas. Authorities have stepped up action following the deadly fire in Lucknow's Aliganj area that claimed 15 lives. 4 government officials have been suspended for alleged lapses, while 4 building owners have been arrested. As investigations into the tragedy really intensify at this point in time, officials are examining possible violations of safety norms and building regulations that may have contributed to this particular incident. Moving on then, Guwahati is no longer expected to host Japanese Prime Minister Sanae Takaichi during her proposed India visit in July. Now, the development is coming in after earlier plans for a summit-level meeting between PM Modi and Takaichi in Assam's capital. While the India-Japan annual summit is still expected to go ahead, officials are now believed to be considering an alternative venue when it comes to high-profile bilateral engagement. And a severe hot wave sweeping across Europe has claimed at least 18 lives thus far, with France among the worst hit countries. In fact, authorities reported that multiple heat-related fatalities, including children who were left inside a parked vehicle. Several regions have recorded unusually high temperatures, prompting health alerts, school closures, and even emergency measures as Europe really grapples with another extreme weather event. And on to some sports news then. The race for the Golden Boot at FIFA World Cup 2026 is heating up, with Messi and Mbappe and Erling Haaland emerging as the leading contenders right now. Messi's goal scoring for Argentina, the clinical finishing for France, and Haaland's goal scoring exploits for Norway have set up a fascinating battle among football's biggest stars. With the tournament entering a crucial phase, every goal could really prove decisive in the chase for the top scorers award. Moving on then, let's talk about Messi, who's become the outright highest goal scorer in FIFA World Cup history, surpassing the long-standing record during Argentina's latest World Cup outing. However, the historic milestone was accompanied by controversy, with debate really surrounding one of the goals that contributed to the record-breaking feat. Despite the discussions, Messi's achievement in fact further cements his place among football's greatest ever players. France booked their place in the round of 32 after winning what is being described as the longest match in FIFA World Cup history. In fact, Kylian Mbappe also starred with a crucial brace, as Les Bleus also overcame a stubborn challenge in a marathon contest that stretched well beyond normal playing time. The dramatic victory not only secured qualification but also really added another memorable chapter to the tournament. Moving on now, let's talk about a major IPL transfer development. Rishabh Pant is set to rejoin Delhi Capitals after reportedly agreeing to a significant pay cut in another high-profile move. Spinner Kuldeep Yadav has been traded to Lucknow Super Giants, reshaping the squad dynamics ahead of the next season. The move, in fact, is marking a major shift when it comes to team strategies as franchises begin preparing for the upcoming IPL campaign. And as we wrap, Info Edge shares surge after the company really showcased scale and performance of its startup investment portfolio in its latest shareholder communication. We also quizzed the founder as well, Sanjeev Bikhchandani, on what does the investment really do in terms of the other businesses, what does it really bring in for the company as well. Let's go across and listen into a slice of that conversation.
from the business that InfoEdge does, right? What percentage of your revenues, what percentage of the profitability are you seeing will come in from the investments that you're making versus the core business?
See, in investments, you don't make a profit until you sell. Because you have a book value, you have fair market value, it hopefully appreciates. But till you sell, you don't realize the profit. Right? So this is not a business where you earn profits every quarter, every year. You may not earn for, you may not earn for a decade. So the cash flows, that are money that's coming in, will usually be the operating businesses, which is Naukri, 99 Acres, Jeevan Sathi, Shiksha, with some lumpy income coming in sporadically when you sell an investment, when you exit an investment. So it's hard to predict. So InfoEdge fundamentally has got 4 businesses, which is jobs, real estate, matrimony, and education classifieds. And now there's a 5th business, which is investments. So it's one of 5 businesses, investments.
Correct. It's one of 5 businesses, and the returns that you get in that one of 5 investments, whenever they do come in, could be probably deployed, to the other businesses as well that you're mentioning. However, what is it for the shareholders? Because
the other 4 businesses don't really need a capital infusion because they're profitable or getting to profit pretty soon.
Correct. But okay, so what is it for the shareholders? How do the shareholders gain?
It is an excess cash, which the surpluses that Naukri generates, some of that goes into investing in startups through our AI. Right? Shareholders gain because hopefully these companies become valuable. So like Zomato, Policybazaar are listed, there's a market value. We own roughly 12% in each. That gives us some market cap in our own valuation.
Okay, so Sanjeev, the question then is, because I'll tell you why I'm asking you this is, we were just doing a piece on InfoEdge where one of the comments on Twitter or something came up is, okay, these are the kind of investments that InfoEdge has made. Good amount of benefits that have come in terms of returns. Now, is this something which will be distributed to shareholders or not in the form of dividends, buybacks, whatever policy that InfoEdge would have? What would you want to tell shareholders over here? Because from a stock price perspective, the stock is kind of down 30% in the last 1 year. So that's, and that's a valid point from the investor as well.
See, like I said, till we exit an investment, we don't realize cash to distribute to shareholders from that investment. Right? But if that investment has a market cap or a valuation or an FMV, that usually gets reflected in some form or the other in our stock price. Right? Now, our job is to do our job, which is run the operating business as well and invest well behind good founders doing good stuff. And if we do that well, if we get growth back into Naukri, which we are hopeful of next 2-3 quarters, if we get, continue to grow fast in 99 Acres, which is happening as we speak, we think that the operating businesses will be valued higher 2-3 quarters from now than they are today.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Acquisitions in the US are complex. There are workforce regulations, regulatory compliances, and lots more. And as with any acquisition, there are obviously the cultural challenges that one has to think of. So when Aurobindo acquires Lanet or has gotten the permission for acquiring Lanet or clearance for acquiring Lanet, it begs to question the management on what happens next. And to answer that and more, we have the top tech of Aurobindo, Mr. Swami Iyer, the CEO of the US business, and Mr. S. Subramanian, the CFO of Aurobindo Pharma. Gentlemen, thank you so much for taking the time out. This is Neeraj here. And I want to start off with you, Swami, about the rationale here, right? Because you are not a small player by any stretch of imagination. So what does Lanet bring to the table? Does it bring customer relationships? Does it bring manufacturing capability? Does it bring regulatory clearance, plants, or is it something that Lanet does which Aurobindo couldn't have done on its own?
Thank you, Nirav. Thank you for the opportunity. I really appreciate this. And to answer your question, a very short answer would be all of the above except the last one. Now, just to go back to what we said, we are the number one company in the US in terms of prescription volumes. And Lanet is a perfect, nice addition in strengthening our non-opioid controlled substance portfolio. And this, you can say, is a push from Aurobindo's side towards this therapeutic segment. And in addition to this, Lanet has a large manufacturing facility which would increase our footprint in the US. And this would help us in establishing a better market share in the US and for domestic manufacture, which is a priority for the present government, and possibly look at some CDMO business. Incidentally, I also want to mention that we have made some progress in getting some awards from a leading customer in the CDMO side, and we are very upbeat on this. So this is, like I said, to answer your question, very simply, it's all of the above.
Some numbers, please, Swami. Would you be able to tell us if by virtue of doing this, will you be able to surpass last year's EBITDA for the US business or for Auropharma as a whole? Is it possible? Can you talk about it?
It's a little early for us to go into the exact number, but like I said, we are very upbeat about what we have seen so far, and we think we can expand our EBITDA substantially, including the margin, because we are acquiring certain niche products. And don't forget that it's not just what we are acquiring now. They got an excellent portfolio, mostly with the partnership. And I also want to tell you that one of the DPI product, which is the dry powder inhalation, which is Advair, we'll be launching that sometime soon through Lanet partnership. And this helps us enter this business of inhalation. You also may be aware that we have got a manufacturing R&D and manufacturing facility in North Carolina, and we expect to launch some product from there. This would be our first entry into inhalation business, but I can tell you this is not the last, and we will strengthen our presence there.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome. You're watching The Bottom Line and I'm Gargi Shetty. Over the next 30 minutes, we'll decode the biggest developments shaping markets, geopolitics and the global economy. Let's begin with the headlines of the day. Oil prices continue to retreat as diplomatic progress between the US and Iran raised hopes of additional supply returning to the market. Brent slipped towards $77 a barrel as traders priced in sanctions relief and a possible easing of Middle East supply risks. As supply chain resumes after peace talks, MEA confirms that 11 India-bound ships have crossed Hormuz, including 3 crude oil tankers, and 13 Indians were killed in a massive blast at Qatar's Ras Laffan LNG complex. Exclusive sources tell NDTV Profit that airlines may roll back fuel surcharge by Q2 end or early Q3 as crude cools sharply, paving way for fare relief and competitive pricing across domestic routes soon. Market slips sharply in the last hour of trade. Nifty ends around 23,800, giving up nearly 330 points from high point ahead of its weekly expiry. Infosys and Wipro are top losers in the Nifty. Broader markets outperform benchmarks and investors remain on edge as US futures slip too. RBI issues FAQ on FCNRB deposits, clarifies on NRI funding norms. Banks can lend against FCNRB deposits. Lean mandatory swap window open, boosting overseas inflows and forex stability. Trade diplomacy is gathering peace in New Delhi. US Trade Representative Greer meets Finance Minister Nirmala Sitharaman after meeting Commerce Minister Piyush Goyal as both countries work to close gaps and advance an interim trade agreement. As El Nino looms, Union Agriculture Minister Shivraj Singh Chauhan says that we must not wait for a crisis to strike, urges advanced planning, calls for preparedness to safeguard crops and food security across the country. BCCI announces first major trade for IPL 2027. Former captain of Lucknow Super Giants, Rishabh Pant, takes a stunning 12 crore rupee pay cut to rejoin Delhi Capitals. Kuldeep Yadav has been traded to LSG. President Draupadi Murmu presents Padma Awards during second round of civil investiture ceremony. Mammootty, Alka Yagnik, R. Madhavan honoured with Padma Bhushan. For our top story today, crude prices continue to cool off as diplomatic progress between the US and Iran helps ease fears of supply disruptions in the Middle East. Now, Brent crude is trading at near $77 a barrel, while the WTI has eased to around $73 a barrel, extending the sharp retreat from the high seen during the peak of the regional conflict. Sentiment has been boosted by signs of normalcy returning to global energy trade. Iran's top negotiator has said an agreement has been reached with the US for the release of $12 billion in frozen Iranian funds, while Washington has temporarily eased sanctions to allow Iranian oil and petrochemical exports until August 21st. Now, adding to the optimism, US President Donald Trump claimed that a record 19 million barrels of oil have passed through the Strait of Hormuz in a single day, calling it a sign that energy flows have normalized and that the world is now a safer place. However, geopolitical risks have not completely disappeared. Israeli Prime Minister Benjamin Netanyahu has reiterated that Israel will continue operations against Hezbollah infrastructure in southern Lebanon. Meanwhile, a tragic industrial accident in Qatar's Ras Laffan has cast a shadow over the region. India has confirmed the death of 12 Indian nationals in the explosion, with several others injured. The government says it is working with Qatari authorities to identify the victims and facilitate the return of their mortal remains to India. Let's listen in to what the MEA spokesperson had to say.
आज तक 10 भारतीय जहाज, भारतीय पताका के साथ वाले जहाज पर्शियन गल्फ में, खाड़ी में अभी हैं। 2 हमारे जहाज वहां इधर से उधर गए और 10 उधर से आने हैं। 11 हमारे जहाज जो भारत की तरफ आना है वो 17 तारीख से, जिस दिन एमओयू हुआ है उसके बाद से 11 जहाज भारत की तरफ रवाना हुए, तो हॉर्मुज पार करके। इससे आपको स्थिति साफ पता चलता है कि क्या वहां पर स्थिति बनी हुई है।
And viewers, in a major relief for air flyers, exclusive sources tell NDTV Profit that airlines may take back fuel surcharge sooner than planned. Danish is here with more details on this.
Sources have told NDTV Profit that the airlines may take back the fuel surcharge earlier than they planned. And let me remind you that in the month of March, after the Middle East crisis began, we saw that Indigo, Akasa and Air India Group, they introduced a fuel surcharge, which basically means that you have to pay more to fly either on domestic but either on international. But what sources are telling us is the fact that the deliberations have begun. They are looking at the timeline, whether they should withdraw the fuel surcharge in Q2 or towards the end of Q3. So the airlines are deliberating on that right now, but the airline industry is also on a wait and watch mode. While we are seeing that the global crude oil prices have cooled from an all-time high, but if we talk about the A1 jet fuel prices, and that is the ATF that I'm talking about, even those international prices are still almost 1x up in comparison to the pre-war level. So the airlines are right now deliberating and are also on a wait and watch mode, and if things are in their favor, then the airlines may roll back the fuel surcharge that they introduced in the month of March.
And India's LPG sourcing pattern is seeing a sharp shift, with imports from the US set to hit a record high this month. Over 6,35,000 tons have already arrived in June, accounting for nearly 65% of total imports. Now, the surge comes as supply disruptions in West Asia amid the ongoing conflict have tightened availability from traditional suppliers. The UAE, which was once India's top source, has seen shipments drop sharply to around 90,000 tons. Since March, the US has steadily emerged as India's dominant LPG supplier, reshaping the country's energy import basket and highlighting the growing impact of geopolitical risks on fuel sourcing. The street lost steam in the final stretch. Benchmark indices ended near the day's low, with the Nifty slipping below the 24,000 mark and the Sensex tumbling more than 1,000 points as late session selling gripped the Lal Street. Let's go over to Parth for a more detailed analysis.
So Nifty has closed in red, down by over 1.2% today. 41 out of 50 stocks in the index closed in negative, with Infosys and Wipro being the top losers of the index, both down over 3% today. The broader markets have, however, outperformed the benchmark index, with Nifty Midcap 150 closing in red, snapping its 7-day gaining streak, down almost 1% today, led by New India Assurance and National Aluminium Company. New India Assurance was down almost 8%, while National Aluminium also saw a downtick of 6% today. On the other side, Nifty Small Cap 250 also snapped its 7-day gaining streak, down by over 0.5% today, led by GSPL and Aegis Vopak. GSPL was down 7% today, while Aegis Vopak saw a downtick of 5.5%. All of the sectors have ended in red except Nifty Pharma. Nifty Pharma was in fact the top gaining sector today, gained almost 1% and hit a new all-time high. Piramal Pharma and Gland Pharma were the top gainers in Nifty Pharma. Piramal up over 6.6%, while Gland Pharma saw an uptick of over 5% today. Nifty Metal on the other side was the top losing sector, with achieving the lowest level since April 2026, down over 3% today, led by Vedanta and Nalco. Vedanta saw a downtick of 8%, while Nalco saw a downtick of 6% today. Moving on to the sectoral trends as well, Nifty Metal has snapped a 2-day gaining streak, while Nifty FMCG was down for the 3rd consecutive day. Also, Nifty Pharma was ended in green for the 4th day in a row as well.
Right, thanks for that, Parth. Let's also have a look at how the money market has fared. The rupee closes at 94.74 against the US dollar, which is 0.1% down. The domestic currency remained under pressure through, and the session settled near the day's low, amid a stronger dollar and heightened demand for the greenback. Now, rising crude oil prices and a cautious global risk sentiment also weighed on the rupee as investors track developments in the Middle East and their implications for energy markets. Now, market participants will continue to monitor oil prices, foreign fund flows, and global currency trends for further cues. Now, the RBI has announced a fresh set of measures to boost foreign currency inflows and support the rupee. The central bank has introduced a swap facility for FCNRB deposits and certain external commercial borrowings, while also allowing banks to lend to NRIs against their FCNR deposits. My colleague Piyush now joins us for more details.
That is correct. The RBI has issued a FAQ on for banks to get clarity on how they can raise FCNRB deposits. The RBI has said that banks can give a loan or issue a bank guarantee against an FCNRB deposit when it raises money from an NRI. The RBI has also said that the bank can lend money overseas to the depositor and put a lien on the deposit. The deposit will be logged as collateral until the whole loan gets repaid. Now, the question was, will the RBI swap cover both the principal and interest rate hedging cost on these deposits? So RBI specified it will only provide hedging cost for the principal amount. It will not be, the swap facility is not covering the interest that the bank has to pay to the depositor. And there is also some operational clarification that the RBI has given, and the RBI has importantly specified that banks can offer differential interest rate to different FCNRB deposits subject to certain guidelines. This is, the RBI has a set of guidelines with regard to deposit rates they have to follow for FCNRB. All the banks have to follow that as well. Now, another question was whether banks can offer a normal FCNRB without using the swap facility. So RBI has also clarified that yes, apart from swap, they can use normal FCNRB deposit as well. They can raise them because swap facility is available only for deposits from 3 to 5 year tenure. The RBI has also said that the borrower can raise ECB for more than 5 years. There is no restriction, but the ECB must be only for 5 years. The swap facility essentially, the ECBs first must have the average maturity of at least 3 years, and the swap can run up to a maximum time period of 5 years. After that, after the 5 year period, the swap facility will not be there. So these are essentially the clarification that the RBI has issued. Back to you.
Right. Thanks so much for breaking that down for us, Piyush. And viewers, switching gears now, Niti Aayog has pitched for a dedicated model chapter on pharmaceuticals to be included in India's future free trade agreements. According to its quarterly trade watch report, the proposed framework would act as a blueprint for trade deals, laying down common provisions on regulatory reliance, GMP inspections, and streamlined approval processes across partner countries. Now, the aim is to reduce compliance costs for Indian pharma exporters and improve regulatory predictability in key global markets. Now, while several existing FTAs already include pharma-related clauses, the report notes that on-ground benefits have often been uneven. Niti Aayog has recommended that this model chapter be consistently adopted across future FTAs that India negotiates to strengthen the country's pharmaceutical export competitiveness. And staying on FTAs, India and the United States have held ministerial-level talks to push forward negotiations on an interim trade agreement. US Trade Representative Jameson Greer met Finance Minister Nirmala Sitharaman and Commerce Minister Piyush Goyal in New Delhi as both sides work to resolve pending issues. The two-day India visit will see a conclusive agreement to the trade deal by next month. Rishabh is now here with more details on this.
What you have is a very set of crucial talks that are ongoing in New Delhi. From the latest visuals, what we're understanding is that Jameson Greer was at Vanijya Bhavan, which is the Commerce Ministry here in New Delhi, and him and Sergio Gore then left shortly after their initial round of talks. But what are given to understand is that these 2 days you'll have continuous negotiations between India and the US delegations. Of course, the higher level political leaders will not sit through the entire spread of the negotiations, but it will be the chief negotiators and other officials that will take forward this US trade deal. What we're essentially picking up is 99% of the deal is done, just that 1% is left. So this current round, the primary objective is to sort of add the final finishing touches to this deal. And for India, it will mean securing some sort of a tariff differential advantage over other manufacturing economies like Malaysia, Indonesia, Vietnam, China, Bangladesh, and others. What India will also look forward to is to gain preferential market access into the United States market, a very, very large market, the biggest trade deal that India will ever sign. And that's why these deals have been taking a long, long time. So that's what we're picking up. These talks are expected to go on till tomorrow. What we understand is that there might not be any sort of a takeaway tonight by the Indian Commerce Ministry, but we'll have some details tomorrow is what we're picking up.
Thanks for that, Rishabh. And in a fresh development, the Enforcement Directorate has raided Rajesh Exports across Bengaluru and Mumbai after SEBI order flagged alleged financial misstatements. It alleged that Benami share deals and overseas investments are under the lens. My colleague Shrimi is now joining us on the phone line for more details. Shrimi, just for my understanding, why are these raids being conducted and what has the ED found so far from the raids?
So clearly, the searches based on the SEBI inputs, because you know that Rajesh Export has been under SEBI scanner, and in fact SEBI alleged that there is some sort of misreporting as far as their accounts are concerned, and that too amounting to 15 lakh crore. That's a huge amount. But now the development is much, the ramification and the development is much more bigger, because clearly the Enforcement Directorate is crucial. And as per their preliminary findings, ED have uncovered a Benami transaction in the shares of Rajesh Export with more than $20 million siphoned out of the country through such dealing. So that's huge. The second important finding is that they found a significant mismatch in gold inventory, with physical stock allegedly around 40% lower than the quantity recorded in the company's book. Third important finding is that the adjustment of nearly 3,000 crore in trade receivables against suspicious gold import, the delivery of which is now under scrutiny. So they are probing these, all these findings under FEMA, Foreign Exchange Management Act, where the investment exceeds 1,000 crore in African gold mines, and that also not reflected in the accounts of company subsidiaries. So huge red flag is coming from ED, and it's a developing story. We'll get you more as the searches progress.
Right. Thanks so much for breaking that down for us, Shrimi. At the Infosys AGM, Nandan Nilekani, the non-executive chairman of Infosys Management, said that there is still a clear gap in AI development across large enterprise clients, and that the focus now is on closing that gap through implementation and scale. He also added that AI will not replace IT firms like Infosys, but will instead reshape how they operate. Listen into his commentary on that.
AI deployment gap in a large enterprise clients is real, and closing that gap is where the work is. AI will not replace companies like ours. It will amplify those who move with purpose and adapt with speed. The AI revolution has made legacy modernization urgent in a way nothing else has, and clients are moving to retire the technical debt accumulated over decades. The preference will be to build versus buy for software. All this creates even larger opportunities for us.
Now, here's an interesting trend emerging from the startup world. It turns out that for many founders, the journey from profitability to personal fitness may be more connected than we think. Once the business stabilizes and the pressure of survival eases, many entrepreneurs appear to shift focus back to their health and fitness and personal goals. My colleague Nimit takes a closer look at this curious pattern.
In a corporate world where a lot of stress often takes precedence over your personal development, health and hygiene, a lot of these leaders are now transforming this corporate growth into their own personal journey stories for health. Firstly, we're going to see the man of the hour, Kunal Shah, who's taken his health journey to another level. After turning a first quarterly profit in 2026, Kunal Shah reported has lost 35 kgs. As somebody on their personal journey myself, I don't think that is a small feat, and this again is not the only Indian leader to do so. If you look at the next person that we're going to show you, is the man who personified food delivery in India. Dipinder Goyal has lost 15 kgs, and when he did it was when he turned his first quarterly profit in Q1 of FY 2024, showing how the balance between turning a profit and professional milestones leads people to often de-stress and then finally work on themselves as well and build out a apart from them, we're going to move to some international examples now. Of course, we all know who this man is, and you can recognize him from before and after photos. His first profit milestone was an annual profit in 2003, and after that he went on a revolutionary journey, and you can see how he presented before and how he presented afterwards. Acquisition of Whole Foods, ironically, changed his diet and lifestyle, and because of that he's become a different person now, going on a very structural and key journey. If we move to the other person, of course, Airbnb. Now this person is very interesting because he was a professional wrestler and he was a professional bodybuilder. Now as a bodybuilder, he felt left out of the Silicon Valley world, but then he to put his health on a back foot, built one of the largest companies in the world, and once he did that and turned a consistent profit in 2023, you can see the transformation that he faced. And lastly, we're going to look at one of the biggest founders of this generation, Mark Zuckerberg. And as you can see from that Harvard graduate that he was there, in 2023, after having record margins, he got ripped, and he did a lot of MMA, which personally I respect a lot. MMA is a real sport, and it takes a lot to do that, and he finished a 5K run in under 20 minutes. I average about 32. So that's awesome. And that's the story for you about how physical journeys can meet professional goals, and you can stay healthy and profitable at the same time.
Thanks, Namit, for that very interesting breakdown. And next up, Mundra Airport's newly built terminal was officially inaugurated today, marking a major milestone for aviation connectivity in Kutch. Jeet Adani, director of Adani Airport Holdings, say that the airport is connected with Mumbai, Delhi and Surat too. And key approvals for Mundra Airport are already in place. Let's listen to what he had to say.
We see that this will open up a significant amount of connectivity and interface from Mundra, our Karma Bhumi, to the rest of India. And I know a lot of people who live here and work with us are extremely excited. And we look forward to further growth and further increasing connectivity across from Mundra to the rest of India. As of now, we are starting with not a very heavy schedule. We have a couple of flights connecting Hindon, Goa, Surat, Bombay, and we'll be starting Ahmedabad soon as well. We see there's three kinds of connectivity that is required. One is our own internal connectivity, where our stakeholders, our own employees, our partners, they would be forming a significant part of this. The other part of the connectivity or the demand that is going to come out is going to be some amount of tourism travel, because Mundra as a city also has generated significant wealth for its citizens, and we believe that there's going to be some level of demand to most of these destinations. Just keep in mind that today for someone from Mundra to even go to Mumbai was like a 2-stop journey, and having a direct flight now is going to be extremely easy for them, or they have to drive up to Bhuj and then take a flight. The third part is going to be some level of tourism travel, because there's a lot of cultural sites around as Manvi Beach. So we see that some amount of tourism will also will get activated from here.
Viewers, has the American dream lost its shine? Well, my colleague Deepak spoke to Karthik and Astha, who moved back to Bengaluru after spending more than 15 years in the United States. They discussed why they left behind the American dream and returned to India to build their startups. The couple also talks about immigration challenges and the opportunities that drove their move back home. Let's have a look.
Many of them say there are serious concerns now about facing racism or race, especially Indians face this a lot in the United States. The H-1B visa, we've seen how that has really snowballed. And then comes the green card. You said you've been there for 17 years.
Correct.
Did you manage to get, close to getting a green card?
I was like, it was just hilarious because I think we're still up Qatar mein hai. Like we're still in the line. I think his priority date is what, 2015 something. Mine is 2020. And just to say that, like, the allure of a green card lost, it was not very important for us.
Anymore,
yeah. Because the thing is that, like, we reached a point where we got the exposure we needed. We made the career. Like, I know that this is going to be very different for young, students who want to explore and learn more about their careers. But for us, we were at a stage that we had gotten what America had to give to us at the moment.
Now on to a very interesting update coming in from the sports world, and you can call it a blockbuster IPL twist. The BCCI has confirmed that Rishabh Pant is heading back to Delhi Capitals in the first big trade of IPL 2027, taking a stunning 12 crore rupee pay cut to rejoin his old franchise. In return, spin ace Kuldeep Yadav moves to Lucknow Super Giants, a deal that could completely reshape both the teams for the season ahead. Thanks for tuning in today on The Bottom Line, viewers. That's all the time we've had today, but stay tuned to NDTV Profit for more news and updates.
हाथ बढ़ाना साथी रे जिंदल साथी सील साथी रे अरे सॉलिड इसकी फील है जिंदल साथी सील है तो असली स्टेनलेस स्टील है क्वालिटी में दम है साथी रे बिजनेस करेगा ग्रो साथी रे टाइमलेस इसका लुक है साथी रे और जिंदल साथी
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडियाज लीडिंग प्रोड्यूसर ऑफ स्टेनलेस स्टील।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and KYC is the show where we get you one of the hottest companies where the people discuss is there any alpha to be made or not. We get for you mid caps, small caps, and a whole list of other stocks from the universe. But today there is a very interesting company. Guess करके बताइए ये कौन सा कंपनी है? मैं आपको थोड़ा hints देता हूँ. First hint, it's a Pune-based technical textiles company. I'm sure you know the name, but there are a lot of these group companies which are listed, more than 4 or 5 I think. It was established in the year 1976. One more hint for you, and that is the stock is up 31% from March lows. And the last hint, try to guess it, I'm sure you are very near to it. It supplies sport nets to Wimbledon. Wow. That's an interesting fact. Try to understand which company I'm talking about. I'm sure the first name you must have guessed by now, and the confusion might be there in the second name. It's of course Garware Group Company. It's Garware Technical Fibers. But why are we calling this technical textiles company? क्या बात है इसमें? First question definitely is going to be on the overall business outlook and the benefits from UK FTA. That is why we are getting in the textile companies and also the technical textiles. That's the story we should be looking out for. The demand trends and the client confidence. What does that suggest? Is there any volatility at play from the abroad clients? The pricing power of the company, more price hikes, will that be taken? It's an old company. They have a very good name in the markets, and that's why the pricing power comes in. Inventory levels, will it be on the higher side as per what the customers have requested? That's the key question to be asked, especially in the first quarter. Middle East issue, is there a delay in the domestic dealer offtake? That's also we'll try to understand. And of course, some problems are there in the industry, but in that case also the market share picture, does it maintain it? And if it maintains it, it's a benefit of consolidation comes in at play. And this is very interesting geosynthetic business. And I'll try to make you understand also that this is a quite technical company, but very simplified way we'll explain it. We'll have Shujal Rahman, he's the CEO at Garware Technical Fibers, to give us the entire viewpoint and the outlook for the business and the industry ahead. चलिए अब कंपनी के बारे में बात करते हैं. Let's try to understand about the company, the key details, what you should be knowing about. Of course, this is a technical textiles company from Pune, established in the year 1976. A lot of collaborations have happened. I see the history in the company's website. Now they have applied in sports, fisheries, aquaculture. They provide high tensile nets, ropes and ancillaries. It is a little bit of technical, but I'll simplify it for you. Shipping, agriculture coated fabrics and geosynthetics. Basically geosynthetic is nothing but the slope wires which are there so that the rocks don't fall, and of course across various different types of lands. Also, let's move on and understand a little bit more about the company. They have of course 2 facilities, in Y and Pune, largely Maharashtra based company. And also most of the manufacturing setups and ancillaries are here itself, but they are marketed in more than 75 countries. Company mein R&D is very strong, and that is why they have a good pricing power. I'll give you a lot of details about the positives of the company, but you need to hold on. You need to wait a little bit. They have almost 101 patents filed and 29 granted. That is where they get that global exposure. 20,000 SKUs are there, which is pretty impressive when it comes to different categories. Now, speaking of categories, let's try to decode. लेकिन ये company बनाती क्या है? That's of course markets also at times don't understand that, but we'll try to simplify it for you. Aquaculture. There are cages, mooring ropes and netting solutions, and this is very much important, especially for salmon fishing and also different types of fishings, and all these ecosystem products, high margin products the company makes. So this is a niche category product and a niche industry.
sports nets business. They have tennis, football, baseball. The nets which we see for the baseball, of course, the goalkeeping, nets we talk about, and of course the tennis. They supply to Wimbledon, Roland Garros, you name it. It's an Indian brand which is hidden in plain sight of the global events, especially in the sports. So that's a proud moment as well. But value added, niche bhi hai, value added products bhi hai. They have ropes, fabricated slings, and high strength polyfins. Of course, the applications are across various industries. Third important product is geosynthetics. That's where the company has stated the growth is coming faster. This is nothing but the slope protection, especially in road, railways, airports, and ports. This is very much, you could say a very strong kind of a product so that the rocks don't fall in case of tunnels. But enough of the products. Let's try to understand where is the revenue coming from. Of course, domestic revenues are slightly lower. It's roughly 40%. But look at that, the international exposure, that is where the street is quite bullish on. 60% of this revenue is coming from this segment. So this is the overall revenue breakup I would like to point out for the company. But the question remains is, what are the positive factors for Garware Technical Fibers? What may work for the company? The first one, it's debt-free and the company is having a strong pricing power. यानी कि raw material price अगर ज़्यादा बढ़ा है तो company जो है price hike कर सकती है. They command a good bargaining power in the industry they work in. A high return ratio industry, of course, compare that with technical textile and a normal textile. If you get them together, that's what we see, the company has a better alpha. Strong commentary has come in from the management, especially for the new product rollout. They have good R&D setup also, and they're always looking out for niche products. So that is how you build a moat across the decades of your existence. And interestingly, I have found the valuations attractive also, because of the volatility seen in the export business. Also, the government is pushing really hard for technical textiles. This is a very important point. So you should note it down if you are a budding analyst. These are something you should be looking out for. But not everything is rosy, and that is why at KYC we get in the both sides of the coin to give you a very balanced outlook. What may not work for the company? The inventory levels, they might remain higher in the first quarter. The customers have also said, hold on to your inventories. There is a lot of volatility, and because of that, adjustments, especially on the accounting, can be there. There is a very less analyst coverage. I just checked, only 2 analysts from domestic broking houses are tracking it. So definitely there needs to be more product discovery, and the markets also haven't actually factored in, the strength which the company has. So it might be having a little bit of valuations when it comes to a normal textile company. So we need to get that in KYC, that by technical textile and normal textile, polyester and cotton are different things. But the KYC ratings is not different. We always have a proper format for it. This includes income statement, balance sheet, cash flow, return ratios. We see what's happening with the business. Also the shareholding, how that pattern has moved around, street cred, different timelines. We try to understand, has this company made money for you or not? Valuations, interestingly, the company doesn't have much peers, so I'm going to compare that with the only valuations front for the company itself. And of course, we have outlook also. That's one of the most important rating to track. The first one, let's get in, is of course the income statement. Income statement, it is dismal. Why? Of course, the numbers are strong, but is it growing or not? And if it doesn't grow, the street won't reward. And this is what's happening. Single digit growth aa raha hai aapka revenue, EBITDA, PAT mein. So that is where a little bit of concern comes in. And if we pull up the Q4 numbers also, largely it was a mixed set of numbers. And that is where a little bit of concern comes in, because the numbers have to follow. If the number follows, the EPS goes up, of course the market gives you a value, despite of being in a niche business or a category. And largely margins were stable, a slight dip coming from FY24, FY25, it was 20% plus, and then it's slightly going down to 19%. So no much variation. It's a very stable business model, but the street needs growth. That is why I'm going to give this a thumbs down when it comes to the income statement. Now let's move on to the balance sheet and see what's the story here. Largely, it's debt-free. That's a very good point. At times, people call it conservative thought process, but nevertheless, if the balance sheet is maintained, it's a good sign for the future moves. Reserves are pretty decent. Cash balances have also gone up, and largely it is maintained very nicely. So I'm going to give this a strong thumbs up. So we spoke about the income statement, we spoke about the balance sheet, but come over, let's try to understand the cash flow segment, what has happened, and the company has been able to, for the FY26 numbers at least has been pretty decent, a good conversion, and this is the rate to look at, that's roughly 81%, and the net cash flows is decent, it's at 73 odd crore rupees, but nevertheless, it's a strong way of, keeping the working capital ratios in check. So there is a little bit of conservatism at play, but it benefits also, especially for the analysis which we do on a backdated basis. That is why I'm going to give this a strong thumbs up to the cash flow segment. So after these three ratings, we come to the ROC numbers, and this is where if you compare that with a normal textile company, which might be commoditized, even though it's going through a structural change, look at that, this has been maintaining 20% plus ROCs for textile company, and remember it's a technical textile company at play. So I'm going to give this a strong thumbs up when it comes to the return ratios. Apart from return ratios, it literally looks like a mirror image. March 2024 का shareholding pattern देखिए, promoters, FIs, DIs और public, कुछ नहीं बदला 3 साल में. Look at that. This has been pretty much same, no major changes happening. So all the shareholders are holding. Nobody's selling a lot, nobody is buying a lot. So we need to wait and watch. So as of now, it's a neutral rating when it comes to the overall shareholding. But let's talk about the street cred. Has the company made money for the investors or the traders? That's the key question. So I pick up 4 important data points from March lows. Like everyone else, most of them, companies trying to do a recovery, the stock went up 31%. But still, what peak numbers we saw in 2025, that is still, it's down almost 19%. अगर एक साल की बात करें तो stock जो है 9% जो है गिरा हुआ है. But the biggest complaint, if you're holding it for the long-term investor, for the last 5 years, the stock hasn't done much. Only 20% return has come in, and that is where a little bit of concern starts coming in. So definitely we'll try to understand more about it, but that's of course the next rating. It's a negative right now over the valuations, because stock में इतनी गिरावट आई है और of course earnings भी largely flattish रहा है. The valuations have turned attractive. The current valuation, this is the 12-month forward P, comes in at 31 times, and if you have a peak valuations, that came in at 46 times, and that 5-year average, if I talk about it, that comes under almost 30 times. But if you analyze that totally, the valuations are cheap. Now if the valuations are cheap, I'm going to give this a strong thumbs up. So 7 ratings are done. Let's talk about the 8th rating, and that's of course the outlook, what the company is going forward. This is very much important. Improved visibility is coming in the salmon aquaculture business, so that's pretty much interesting, where the nets are being, the demand for the nets are picking up. USA sports nets business, those orders are coming at high rates. The market share has been maintained. Company has stated that in the 4th quarter's presentation. The value added ropes business, of course there was an acquisition, and the company claims that the ROC and the EPS numbers are accretive. We need to understand by when this integration comes in. That's the key question. And also the high growth rates. This is a geosynthetic business. We call it the slope protection. That is where a bullish commentary is coming in. But in short term, there are inventory adjustments. Raw material costing का जो impact था Middle East से वो भी आने वाला है. So a lot of short term volatility would be there at least for the next 1 to 2 odd quarters. But let's see how the company comes up from this bad situation. So it's a neutral rating, I would say, when it comes to the outlook. But apart from the outlook, let's try to understand कि KYC rating के report card में company को कितना मिला है. This is an important data to check. So we revise that. Concerns on the growth, revenue, PAT, EBITDA, but balance sheet cash flow management is pretty strong. And for a company in technical textile, getting a good return ratios and maintaining it for so many years is a good sign. Shareholding, nothing has changed. Street cred, however, despite having niche business, a decent ROC numbers, it hasn't made a lot of money for the investors. So last 5 years, just 20%. Valuations, that's why it becomes quite attractive. Long-term outlook is strong, but of course the short-term outlook, there will be volatility. So the total KYC rating for Garware Technical Fibers comes in at roughly 5 out of 8. It's largely neutral to slight positive when it comes to our average rates which we give, or the average ratings which we give in KYC show. But we'll try to understand the entire story, and of course we'll get in from Shujal Rahman. He's the CEO of the company, but there's some interesting tidbits about him. He has held leadership roles from Seat, Mondelez, Marico, Apollo Tyres. So he has seen a lot of corporates and different segments as well. He's the chairman of Pune zone at CII as well. That's a prestigious position. And also education coming in from Harvard Business School and Aligarh Muslim University. So pretty interesting, history coming in from Shujal. But just to get everything in perspective, let's ask the first question itself, getting him with us. And Shujal, the first question I would like to ask you, especially, first of all, good afternoon, and it's always a pleasure to have you at NDTV Profit, is the business sentiment. How is the business sentiment looking like, especially with so much volatility in your export business right now?
Thank you, Sharath, and thanks for having us on the show. I think the last 3-4 months we have seen the Iran war and the play out of that. For us, the impact was on raw material. It increased by about almost 70% in 12-13 days. Fortunately for us, we are a company which is in the value-added segment, and our products are innovative, and many of the products have patents. So we are able to pass through the raw material hikes to our customers. Obviously, there is a lag. As we speak, what happened was in the month of March and April, we had concerns about raw material availability. So, we were able to stock up raw material, and you would see in the March balance sheet also that there's stocking up in raw material. And that's the reason why you mentioned a while back that the inventory has increased. Another reason for us where the inventory increase was due to the transit. What happened was in March, many of the material was to reach to our subsidiaries in Norway or in Chile, which obviously are 60 to 75 days transit from India. They couldn't reach because of this geopolitical issue, and obviously inventory, which is GIT, also increased, which was basically confirmed orders. So that was the impact we had last year. This year, so far, as we speak, things are looking okay. Raw material is still holding on; it's not dropped. Supply is, as of now, not a concern of raw material. Many of the orders which we were expecting have also come, and things are looking good for quarter at this stage. Right.
That means the supply chain issues have normalized going ahead. And also, if you look at it, the way the momentum is building up for the value-added products, you also deal in the niche segment. That is where a little bit of strength also lies. But I want to ask another angle to it. Recently, of course, the India-UK FTA was completed, and a lot of new industry opens up for your company also regarding the products which you have been talking about. Shujal, I just want to understand, what incremental benefits can come in for Garware Technical Fibers.
Actually, when the FTA was announced, 5 days back, I was in UK only, and we met some customers. So obviously, there's a benefit for us. There'll be some duty impact benefit which will be there for us, but the bigger benefit will be for our customers.